We're certainly not back to where we were before the war started, but $83 on Brent, that is something that the markets will in the short term adjust to. Drinks makers also in focus. We'll watch LVMH and any other makers of French wine, liquor, champagne, because US President Donald Trump has told the New York Post in an interview that the US will have no choice but to impose 100% tariffs on French wines if France doesn't drop its digital tax against US tech companies, Guy.
Yeah, it's interesting, the likes of what's just happened with Anthropic. Okay, here we go. Time for the market open. It's expected to be strong. Anything kind of energy related is going to be a story this morning. Airlines, chemicals, what's going to happen with the actual energy stocks. There's a metal story in the market as well this morning that we need to focus on too. Broadly, we're expecting a decent outperformance to come through from Germany. London may underperform a little bit. Shell BP could act as something of a drag today. So the stock 600 is up by 0.5%. The FTSE's up by, let's call it 1%, climbing towards that number. We're expecting more than that out of Germany. France is going to be interesting. It does have that luxury story maybe to factor in, so it's up by 1.33% this morning. The IBEX is up by 1.4%. The AX only up by 0.9%. We await the DAX. That could be the outperformer this morning. It's certainly maybe most exposed to the energy narrative. Tom.
Top of the list right now in terms of your sectors, travel and leisure gaining more than 2%. Basic resources with copper, iron ore, gold and silver all rallying in the session, up close to 2% as well. Banks performing again well as you see yields dropping across the curve and bonds bid. 1.9% is the gain then right now for banks, almost 2% gain there. A similar picture for basic resources. On the downside, three sectors, only one by a significant amount, known as energy, currently down almost 3%. Healthcare utilities essentially flat. Is energy, there's a clear outperformer in terms of the underside, at least losing 2.8% right now. The underperformer coming through from energy as expected. Top of the list right now, travel and leisure gains of more than 2%, basic resources and banks as well.
Yeah, interesting. You mentioned the AEX up by only 0.9%, and that interesting in the context of its strengths in technology. Well, ASML is stronger, banks are stronger, so it isn't a problem with tech, but it is the Shell exposure, of course, and others like SBM Offshore that is weighing on the AEX a little bit. So also London then up by 0.8%. Still no DAX just yet. Still waiting for the DAX to open up. But the Stocks Europe 600 then rising 0.9% to a first record high since February 27th.
So do you buy Europe? Is that the trade this morning? Is Europe... Certainly Europe is one of the most exposed to the energy trade.
Yeah. Is
that the obvious place to go? It was interesting that in Asia it was tech that actually delivered that. And to your point, ASML up very strongly. If you come in this morning and you're kind of risk on, sitting down at your desk, your PM, you're kind of risk on, where do I go first? The obvious trade maybe, and it's kind of the easiest line of sight would be to tech. But it'll be interesting to see how quickly it broadens out.
Okay, I'm going to unashamedly steal that question and put it to Banu Baweja, Chief Strategist over at UBS. Banu, so what is the strategy today? Do you buy Europe because it was beaten up? Do you buy tech because, you know, we've been loving tech even through the war? What's the focus this morning?
Just before I answer that question, I just want to say, look, 27th of February is when sort of the kinetic phase of this conflict began, right? In fact, the oil market started taking notice on the 26th of January when the USS Abraham Lincoln moved into the Persian Gulf. We've had, on any measure, 3.5 to 4.5 months since then, and the markets have passed a major test, right? I mean, if the Hormuz Strait is going to be shut for 3.5 months and the oil prices sort of peak at 120 and then settle at about 80.
That's success.
That's success. That's a major test passed, right? If this genuinely holds, we don't know that as yet. But hard data hasn't weakened considerably so far. Soft data has been weaker, but hard data hasn't. Look at earnings, right? I mean, it's certainly better than any of us around the table would have thought, right? Again, it's been helped by AI. Now let me answer your question. yes, in the very near term, the sectors that would have been hurt the most with high energy prices will obviously benefit, and I think consumer cyclicals will rip. Banks, as Tom said, are going to do quite well, and this will bring people to Europe in the near term, right? But I think that's the near-term trade, right? And the reason I think it's only a near-term trade is because it's not like Europe's in distress. You're still expecting 16% earnings growth. You were, through the Straits of Hormuz being shut, 16% earnings growth in Europe. And if there's any place where data has deteriorated, it is in Europe. In the US, in fact, data has accelerated. So the US economy is doing just fine. Much as even earnings expectations in the US are quite high, they are more likely to be realized than in Europe. So I do think there's a reasonable chance that Europe does very well in the near term, driven by sectors such as consumer cyclicals, driven by sectors such as financials. But I think that's a one-week trade more than a 3-month trade.
Okay, a few things to ask you about there then, but I'll go back to where you started your response there, Banu, because maybe we didn't do justice to the moment in the sense that we have learned a lot. It is a big day then. So does it speak to the fact that the world is less energy intensive than we thought it was? Does it speak to diversity of supply and the changing role that the US plays in the global economy? The fact that we have come through in the conditions that you describe?
All of the above. It speaks also to China's role, right? Because one of the most important reasons why oil prices are not much higher is because Chinese have been buying low and not buying high, in fact selling high in a certain way. And because Chinese imports for oil pretty much collapsed through the course of March and April, also including in May, compared to last year, is one of the reasons why oil prices really didn't spike. So I think China's role is absolutely crucial. And if you look at the importance of AI to global spend compared to the headwind coming from the energy markets, AI was much more important, right? So the hyperscaler capex was much more important. So I think there were a few things that the market got extremely lucky on. China not buying oil was one of them, but also I think the most important event in our times really has been this AI capex spend, which is basically going to go 6 times from 2023 to 2028, and that keeping earnings going, right? I'll just give you a stat. If you look at US GDP, there's nothing really to see in the sense that it's about 45 percentile of a long-term history. It's close to its average. You look at US earnings, they're close to 93 percentile of history. Right? So earnings have really gone away from the cycle because some sectors like semiconductors, which are very cyclical, have become completely acyclical. So all of the points that you made, they are absolutely relevant. The oil market is much more dynamic than it used to be in the past. People are not hedging in futures, people are hedging in options, so they're really buying insurance rather than active hedging, so it's not creating that demand. Then there's China. But the market's luck or intelligence have done quite well.
So, Banu, you think this is a 1-week window for upside for European stocks? What would make that more sustainable? What would need to happen to make you more constructive? Before we get an answer from you, we're going to see live pictures from Joint Andrews base, of course, in the US. President Trump there, about to board Air Force One, on his way to Evian, of course, in France for that G7 summit, of course, being led by President Macron. There he goes into Air Force One. Oliver Crook, who's on the ground for us, pointing out that he may have a bit more of a spring in the step on the back of this, at least interim deal, if it holds, with Iran. So we're going to be watching the personal chemistry as well as what the president's own agenda is, of course, on the ground. We know some key AI leaders will be there as well. Banu Wajid, let's bring you back in at this point. On that question of what Europe would need to see to make you more constructive beyond a 1-week window of potential upside, what would you have to see?
The secondary answer is that you need to get TTF and crude, TTF, the natural gas price, and crude back to the kind of levels that you saw prior to the conflict. We're still considerably higher, right? The primary answer, the main answer, is that tech, semiconductors, needs to stop being the only show in town. Right? I mean, again, if you look at emerging market stocks have done quite well, but if you remove Korea and Taiwan, emerging market stocks are down 5% since the beginning of the conflict.
The AI story needs to stumble for Europe to catch up.
I would argue, yes, because unless the AI story stumbles, there's no reason for investors to make a beeline for Europe. You need to see the AI story relative terms stumble. I'm not saying you need to go into a sort of an AI recession, but you certainly need to see a significant broadening of capex away from AI into other sectors as well. And Europe needs to benefit from that. Global trade needs to improve. Energy prices need to fall further. So the center of attraction really has to shift away from the US towards Europe. So I think this is not as much a European point as it is a US point. Europe's doing okay. I mean, ECB has taken down its estimates of growth. ECB has taken up its estimates of inflation. I think the Fed is going to do the same thing this week, but ECB has had to do that in a much more dramatic fashion than the Fed is likely to do. The US economy is on an upcycle, but again, it's not about the economy, it's about the earnings, and earnings are driven by hyperscaler capex. That needs to moderate, and in fact, that enthusiasm needs to go to other sectors for Europe to be in play on a more sustained basis.
What slows AI down?
Supply constraints more than demand constraints right now.
Right.
Electricity, for instance, power. It's quite important for the AI trade that, in fact, it is not demand for capex that's slowing down. It is, can you actually manage that capex?
Yeah.
And there are 2 or 3 constraints that one could possibly think of. One is financing, which doesn't seem to be a constraint either in the equity market or in the credit markets. Both markets seem enthusiastic. They're falling over themselves to get access to this paper, whether it's equity or it's debt. The other constraint is power, which may be a more serious constraint. So that can slow capex down. If you're hoping to deliver X and you only deliver 0.8X, the markets may be disappointed. So what we need to, and going back to Tom's point, what we need to worry about is if you think about the AI enablers, right? So this is not just semiconductors, this is also utility companies, electricity generators, and so on. If the second derivative of their earnings growth, if their earnings revisions begin to plateau out and start coming off, that, I think, is going to be quite important for the market. That's important for the momentum trade, which is one equity style which has worked extremely well. That's important for the S&P as a whole, and then that's going to be important for the rotations away from the US to the rest of the world. If that trade is in primacy, if that trade is front and center, it's going to be very hard for investors to focus on the other trades.
Is the AI trade an inflation hedge? Because there seems to be this belief that equities are now the best inflation hedge that there is out there. And if you assume that equities are the best inflation hedge, the biggest component of equities is tech. So therefore, can I assume that tech and the AI trade is also an inflation hedge? Because there seems to be a few missing connections within that narrative.
That only goes so far, Tom. Guy, that's because if we had not got this interim deal, MOU, whatever you want to call it, and if oil prices were still close to 100, this Fed could have compromised the momentum trade, and the momentum trade is semis.
Yep.
Right? And so it's hard for me to then argue that it would have been an inflation hedge, because inflation to be compromised. Again, we've dodged that bullet. So it is quite a big day, after 3.5 months of Hormuz being shut and oil still at close to 80 and the markets where they are. Again, such a big week for central banks. All of them would be breathing a sigh of relief that oil prices are coming up. Again, let's see whether this is sustained or not. Yeah. But nonetheless, this seems to, hopefully we're at the other end of this conflict.
But Paddy, what do we learn from SpaceX, and what do we anticipate then from the wave of IPOs that are coming to the market?
Yeah, I think the view that once you get these big IPOs, this is the top of the market. Again, we've seen that sometimes in the past, and I think the market takes that as a rule of thumb, but I think it may be a little bit simplistic. We really have to sort of get into the weeds of how much are we going to get in terms of IPO supply, plus the secondary equity listings, and then net that out from the buybacks, which are still very strong. Not just strong, they're getting stronger. So the buybacks this year could be about 1.5 trillion. So even with all the IPOs, sort of the mega caps, plus all the secondary listings, you could be looking at continued negative equity supply, at least through the course of this year, right? And so that could be to the tune of about 300 billion. So in itself, this is not a big cause of concern for me. So it's often said you build the tallest building and you know this is where the crisis is going next. You have the biggest IPO, you know that the market is at the top. These are rules of thumb that don't always apply. I think they're slightly vague rules. But what worries me is, as I said to you, at what point does AI enabling companies, their earnings revisions cannot be positive forever. And if you look at where earnings expectations are and where valuations are, the last time together these were this high was in 1999. Right, so it's the earnings that worry me. I think the market is all too willing to take the supply of equity right now. If earnings revisions begin to change, whether it's because of supply or it's because of demand hyperscaler, when earnings revisions begin to plateau out and the second derivative becomes negative, that's when we have to worry about the trade in the US.
Bonner, great to see you. Thanks for stopping by to see us this Monday morning. Bonner Wager, UBS's Chief Strategist. Thank you very much indeed. Call 6. Let's take a look at some numbers, give you an idea of what is going on with the single stock story, and what we find ourselves with is a fairly positive picture. It's interesting that ASML has backed off its earlier highs. That trade is certainly retreating. Schneider's looking pretty good though. LVMH is actually up really nicely on the back of this momentum we're seeing this morning. You are seeing weakness in defense names. You are seeing weakness in some of the pharma names. You are seeing weakness as well, clearly, in some of the energy names this morning, but the airlines are having an absolutely cracking day today. So airlines up, oil down.
Yeah, and we're clearly benefiting the airlines from what we're seeing in terms of oil price. To your point, I mean, the biggest loser right now across some of the major energy players, and they are all currently underwater, essentially, in terms of the pricing action, is Equinor, which is down 5.4%. At least that's the one that really stands out to me. Neste is down 5%. Amongst the larger names, Total is falling 4.5%. You're seeing BP with losses of 3.6%. And Eni and Repsol also down between 4 and 4.5%. So yes, the losses are there as we see Brent and WTI at around the $80 mark.
Let's have a quick check-in on some of the other sectors that we've mentioned could be in focus, and luxury was one of those, because we've heard President Trump talking about the possibility of putting further taxes on some of the drinks makers. That story does not seem to be sticking to the stocks today, being outweighed by optimism perhaps around consumer stocks on the basis of what's happened in the Middle East, and maybe that makes for an easier environment for some of those consumer-facing companies.
It's interesting that that's where it's standing out, though, this morning, that consumer story, we've heard talk of it, is doing so well right now. Coming up, we'll come back to all of these narratives. We'll figure out exactly what is happening in these markets and take the temperature in some of the key sectors. Airline stocks, certainly having a very good day today as we see this potential deal between the United States and Iran. We'll discuss the details of that, what we're learning, how it's going to progress towards Friday, and we'll discuss what it means for some of these key sectors. All of that upcoming. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Okay, with oil prices down about 5% on the back of the announcement around this interim deal between Iran and the US, of course, major oil companies are falling on the back of this news. Lower oil and pressure on the stocks of some of these major players, including the likes of BP, Shell, Total, of course, and Eni over in Italy, all down between 4 and 5%. Let's get more and bring in Bloomberg's Will Kennedy. Will, what do you make of the pricing action to be expected? Is there further downside? Is this a rational reaction to what we're seeing out of the Middle East?
Yeah, it's a fairly moderate reaction to something that will change the dynamics of the oil market completely, and I think that probably reflects the fact that until traders see the boats actually leaving the Strait of Hormuz in numbers, there will be skepticism about whether this will hold, the precise terms, how much oil Iran is going to let flow through the Strait. So although we're down a lot, I think there's some element here of traders reserving judgment, and it's possible that if this deal does hold and the Strait does open, that we may see oil fall further from here.
Yeah, I mean, how long is it expected to take then, Will, for the supply picture to recover? And I guess there are a number of components to that question. It's sort of physically getting 600 or so vessels out of the Strait. They're not all energy, perhaps, but getting those out. Then there's also getting others in, and then there's rebuilding any of the infrastructure that's been damaged. I mean, that sounds like some of it takes a long time.
It will take a long time for shipping and oil markets to get back to normal, but given the economic incentives, the oil industry tends to do pretty well and go pretty fast. I normally defer to my colleague Javier Blas, and he wrote a very good column last week about how that it could be quite a bearish scenario and that oil probably will come back quickly. And on top of that, I would layer one of the big events that we saw during the war was the UAE leaving OPEC. And the UAE is going to be trying to get as much oil onto the market as possible. It's no longer constrained at all by OPEC policy. And in response, it's likely the Saudis will also try and produce as much oil as possible. So not only would the Straits opening be a big market event, we should see it in the context that we're likely to see maximum production from all the producers in the Middle East quite quickly. So we should prepare, we shouldn't diminish the hurdles, but we should prepare for oil to come back quite quickly.
Well, great stuff. Thank you very much indeed. Bloomberg's Will Kennedy. Let's talk about how this looks from the airline perspective this morning. The stocks are certainly flying higher. Benedict Campbell, our managing editor for Aviation Space, joining us now. In terms of what happens now, clearly energy costs come down. That's going to be a big factor in terms of pricing through the summer and probably clears up maybe autumn, winter as well. What do we see over the next few days as well? Do the Gulf carriers come back? How does the market shake out as a result of this?
Good morning. Well, I can only echo what Will said just now, that this isn't going to happen overnight. There will be a bounce back, and you're seeing it first in the stock reaction. But for all things to sort of come back and go back to normal, that will take a while. Just to remind people, our viewers, we've had massive dislocation in the market. We've had fuel surcharges. We've had the Middle East carriers essentially on the ground for weeks. We've had Western airlines like Lufthansa, like Air France, pumping capacity back into Asia, where they'd lost a lot of business over the last couple of years to these Middle East carriers. So whether all that will snap back in a short period of time is really doubtful. Also, what does it mean for the consumer? Consumers have gotten used to fuel surcharges. They've gotten used to higher ticket prices. Don't expect those to come crashing back down to earth anytime very soon. So yes, it's good news for the airline industry because fuel is such a big expense of their overall bill. But again, this is nothing that's going to happen over a short period of time. And then, you know, the current agreement is brittle. It's preliminary, and we'll have to see just exactly how stable things are.
Okay, so there'll be some time involved in this and maybe some caution from the industry, Benny. And we've seen some routes, of course, cut on the back of the higher prices and the disruption in the region itself. What are we seeing in terms of, what do you think the appetite is for airlines to put additional routes back in, maybe over a longer period of time?
Well, this was a bit of a moment for the industry to maybe take stock and look at what works and what doesn't and which routes they might want to actually get rid of. It's always, I wouldn't call it an excuse, but it's a moment where they can reflect and look at, okay, do we have some red-eye, some morning routes? Do we have some sort of secondary and tertiary routes that haven't ever really made a lot of sense, and now's a good time to take them out? So don't expect those to come back anytime soon. There is a moment of reflection, as I said, in the industry. What it means for the Middle East carriers will be very interesting to watch. These are companies that have suffered a great deal in the last couple of months. We caught up with Tim Clark, the president of Emirates, a week ago, and that's an airline that's only about at sort of 70% of previous sort of business. So those 30%, they'll want to get those back. And the question is, how do they do that? Do they do that through price cuts? Do they aggressively put additional capacity into the market? So that'll be one part of the industry to watch. And then to see how do the likes of Lufthansa, of IAG, that's British Airways, of Air France, and in the US, how do they respond to that?
Benny, thank you very much. Benedict Camel there, Bloomberg's managing editor for aviation and space. And one of the things we didn't get a chance to mention there, guys, around what this means for Middle East carriers, because they've clearly been under significant pressure over recent weeks. The fact that they haven't been able to fly their usual routes, or the ones they have flown have been very low load factors, I understand. So this is going to be a relief for them.
It's interesting, actually. Etihad told me the other day that they thought their load factors were relatively high. Some of the bigger carriers in the Gulf, like Emirates, as Benny was just mentioning and talking about there, plus also Qatar, maybe slightly lower. Qatar's been putting some of its aircraft kind of into the desert effectively, parking them, storing them. It'd be interesting to see how quickly those come back. But the fear is there's a price war coming out of the Gulf to try and get some of that capacity back. And that is maybe what Air France, kind of IAG are talking about at the moment as well.
Certainly something to watch. 8:26 then here in London. We will come back and talk to Karen von Hippel, a distinguished fellow and former Director General at the RUSI, the Royal United Services Institute. President Trump is off to the G7. We watched him leave the United States earlier on. We'll talk about that G7 agenda next. This is Bloomberg.
Is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Bloomberg this weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg this weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Happy Monday. This is the opening trade. We're 30 minutes into today's session. Risk on the back of this at least interim deal between Iran and the US. European stocks at around record highs right now after gains of almost 2% on Friday. Further upside today then on that relief around the geopolitics. Across the benchmark, gains of 1%. The UK and FTSE 100 is a relative underperformer, down 0.7, up 0.7, but far below the kind of gains we're seeing in other parts of the market. So gains for 0.7 for the FTSE 100 is the energy piece that is proving something of a drag, but again, still positive for the FTSE 100. The DAX is getting a full 1.8%, and gains of 118 points over in France. The CAC currently up 1.4%. Guy.
Okay, 485, 483 stocks are up, 113 are down. That's basically tells the same story as Tom. What I want to add to the story that Tom is telling is this volume number. There is a very large amount of volume going through the market this morning, unsurprisingly, as the market pivots to this new reality of the Strait of Hormuz being open. We don't know how it's going to be opening yet. We don't know the details. We've got differing and conflicting opinions coming from either side. Lots of things still to be decided. But at the moment, the knee-jerk reaction is buy stocks. Risk on. 87, 88 is the volume number. Let's show you some of those gains and where we are seeing them this morning. The airline sector, unsurprisingly, is where we're seeing some of the biggest gains. Joseph Ferrari was here just the other day talking about the narrative that he sees going forward from here in terms of oil prices. He's the boss of Wizz Air. That stock is up by nearly 9% this morning. We were worried that actually tariffs could act as a bit of a break on the luxury sector this morning. That's not happening. LVMH is up nicely as well. Tech overnight out of Asia, very strong. Initially, ASML was very strong this morning. It's faded that move a little bit. So maybe the tech trade not as energized as it is elsewhere around the world here in Europe this morning. Downside, unsurprisingly, some of the big names are lower this morning. But are you going to get more volatility in trading? Is that going to be a boost to the names like Shell? Initially, though, again, the knee-jerk reaction is sell. Total, Shell, both softer this morning. And the shipping group, Maersk, is also softer as well, which I think is interesting, too, in terms of what we are seeing here. Capacity potentially coming back in. Do you reopen all of these routes? Does that bring shipping rates crashing to the ground? A.P. Møller-Maersk is down by 3.53% this morning, Anna.
Here's what else we're watching then this morning, Guy. The UK Prime Minister Keir Starmer has confirmed plans to ban children under 16 years old from using major social media platforms. Just moments ago, Keir Starmer said it's clear a full ban is the right choice. He hopes legislation can be passed by Christmas. The move follows a similar law being passed in Australia. Ukrainian cities, including Kyiv, came under Russian drone and missile attack this morning. Kyiv Mayor Vitaly Klitschko said apartment buildings in several parts of the city were set ablaze and 140,000 households left without power. The attack happened just hours after Vladimir Putin and Donald Trump held a phone call. Trump also spoke separately with the Ukrainian President Volodymyr Zelensky. And oil is slumping after the US and Iran agreed to an interim deal to end their months-long war. President Donald Trump said in social media posts that he was authorizing the, quote, toll-free opening of the Strait of Hormuz. Iran's deputy foreign minister confirmed an agreement has been reached, but said the text would be published only after the signing event in Switzerland. Tom.
Well, with that interim deal agreed, President Trump is now on his way to meet with heads of state at the Group of 7 Leaders Summit in France. Bloomberg's chief Europe correspondent is already there, Olive Crook, joining us from Evian in France. Ollie, what is the mood likely to be on the back of this interim deal then as G7 leaders gather there?
Yeah, I mean, it's really quite a day for G7 leaders to gather, and we should say it's not just G7 leaders. You have leaders from across the world that are also attending some of these meetings on the sidelines. A huge amount of news flow over the weekend, and of course, I think for all the leaders, it will be a question of pressing the President of the United States. Everyone is relieved that there is a deal. Now they would quite like to know what is actually in the deal. How are you going to enforce it? What does it look like over the fullness of time? For the Europeans, of course, there's always been that effort to try to come to the rescue in some way, to help in some way the United States. They did not want to be involved militarily, but we've heard from the very beginning from Emmanuel Macron that Europe does have a role in the day after. It seems now that the day after is soon upon us, so the question is, what will the European role be? There's been obviously a lot of discussion about a potential demining mission led by the French and the UK, some of the European powers. Will that be enough for the President of the United States? We should say the leaders of Qatar, the UAE, Egypt will also be here. These are people that will be very much involved in the architecture of this deal sort of going forward. But of course, at the bilateral level, for a lot of European leaders, the personal relationship with Donald Trump since his last visit to Europe, and we should say his last visit to Europe was focused on basically trying to acquire Greenland, has really degraded. You have Giorgia Meloni's had some spats with Trump over the last couple of months. Obviously, Friedrich Merz very publicly said that Trump was getting humiliated over Iran. So these are some of the problems on the bilateral level. Of course, for Emmanuel Macron hosting this meeting, this deal is sort of great timing. He's also wanting to push the AI agenda, this idea of AI nationalism you've been talking about all morning. We have the CEOs of all the sort of major U.S. AI companies that will be here in France. And of course, for Emmanuel Macron, a personal victory, his one-on-one dinner at Versailles at the end of the summit on Wednesday night, potentially an opportunity for the President of the United States to get some interior decorating tips from Louis XIV.
So many ways to go with that one. Ollie, thank you very much indeed. I think he's already got a few tips. Ollie Crook at the G7 in Evian, France will be back, obviously, throughout the morning, keeping you updated with what you need to know from that meeting. Karen von Hippel, Distinguished Fellow and former Director General at the Royal United Services Institute, joining us now. Karen, good morning. Is this G7 now going to be dominated by what comes next when it comes to the Strait of Hormuz, how Europe plays a role? How did the narrative change, do you think, overnight?
Well, I think to a degree, I think Tom was correct in using that term interim, because we just don't know what the deal looks like. We haven't seen it on paper, and they won't be signing it until Friday. And by then the G7 will be over. So I think a lot of discussions, as your correspondent just mentioned, about demining, about policing the deal, etc. But really, at the moment, the deal really only talks about cessation of hostilities. U.S. will lift the naval blockade, and of course, the Iranians will allow ships to get through. But it's not going to be the floodgates are open because of the demining and other challenges. So it's early days, really.
In terms of what has changed and how this G7 needs to adapt, we never thought the Strait of Hormuz could be closed, but we live in a world increasingly where choke points matter. And I'm just wondering how the G7 should think about how we now, the kind of that more evolved state that we are now in.
Yeah, it's a great question, because, of course, this is an own goal by Donald Trump. Prior to the initiation of this war in Iran, it wasn't an issue. So it's sort of this whole new field of geoeconomics. Now other countries know that if they have control over a narrow strait, which shipping goes through, that they can use that potentially for their own leverage, if they need it. The other area, of course, the other own goal by Donald Trump was when he slapped huge tariffs on China, 145% or so, and they said, fine, no critical minerals for you. So now the Chinese know they can pull that out of their pocket. So we're dealing with a new era of geoeconomic threats that didn't exist before, and I hope that the leaders will be talking about that. The problem really is that Donald Trump doesn't like doing things in groups. He likes doing things on his own. He doesn't really like attending these kind of summits. He typically leaves early. And so it's going to be a challenge. I think, Macron has done all he can to keep him there and has designed it around trying to ensure that Donald Trump doesn't leave early. It's hard to say what will be achieved.
Yeah. Karen, the spending on defence by European countries, by G7 countries, clearly this was an area of focus after developments in Ukraine. But what's happened in the Middle East over recent months, just adding to that narrative, perhaps. But it isn't just how much money you spend, it's what you spend it on. How quickly do you think is that conversation amongst G7 European leaders evolving about what you spend that money on?
Well, good question, because I didn't see defense specifically listed on your list of issues to be discussed, although Ukraine is, and defense spending in Ukraine is a huge challenge. I think you can divide the Europeans in particular into two groups. There's the Northern Europeans, Scandinavians, the Baltics, the Poles, probably now the Romanians, and probably Germany, who understand the need to spend more, are already spending more, facing the threat. And then you have everybody else, the Brits, the French, the Southern Europeans, who are not as convinced about spending money, even though they have, of course, all committed to the 5% by 2035 goal for NATO, and 3.5% on direct defense issues. In some ways, the challenge for these European countries is going to be the ones that are not convinced about spending or having challenges spending it, is they need to convince their public of the importance of defense and why trade-offs will be necessary, and the trade-offs are likely to be in social welfare spending. And that could usher in the far-right parties if the public and various parliaments go against that kind of a trade-off. So it's a real challenge, I think, in some of these countries going forward.
Right. So, Karen, do you think we need more vocal leadership about the threats? Which kind of threats do you think would get the message to hit home most effectively?
Yeah, that's exactly what we need. We need a discussion in the publics of all these countries that are maybe less convinced about the threats and the opportunities. So the threats, look what the Russians, have been doing in all of European countries over the last 10 or so years, all sorts of sub-thresholds, cyber attacks, interference in elections, cutting cables, a huge range of attacks by the Russians that really do interfere with our economies and our security. And that's been going on for a very long time, but then also the opportunities for increased defense spending. I mean, you have a lot of investment in advanced technologies and dual-use technologies. You're going to be investing in education. You're going to be investing in innovation and research, and that's good, actually, for most European economies. You don't really hear that part of the discussion, in any of these countries. And I think leaders need to be a little bit more forward-leaning and get out there and, get on the front foot and explain why they need to spend more on defense.
Karen, I wonder how G7 members ex the US should be thinking about AI as a strategic asset. These AI leaders will be on the ground, interestingly. So AI becomes increasingly geopolitical. We know that Dario Modi from Anthropic is going to be there. We know that Sam Altman from OpenAI is going to be there, and many others. At a time when we have export controls now on Anthropic's most recent models, what should the G7 response be to that ex the US?
Yeah, I mean, it's a good question because, of course, there's all these questions about AI sovereignty. They don't want to be too reliant on the United States. They want to be developing their own capabilities. And so that'll be quite interesting to follow that conversation and see where it goes. And, of course, the U.S. won't want them to be doing that. They will want them to continue to buy, into the U.S. companies. And so, yeah, I'll certainly be watching that space as well.
Yeah. Canada's Prime Minister, Mark Carney, has talked about the need for other G7 members to have their own frontier models. When you think about the interlinks between AI and defence, kind of what is top of mind for you right now?
Yeah, well, it's not just Canada. The Europeans are talking about that too, investing in their own capabilities. Pretty much defense spending now, the real focus is advanced defense technology, and we're seeing it played out in real time in Ukraine, of course, but also in other conflicts. Certainly with the Iranians, their use of drones. None of this stuff costs a lot of money in terms of the drones, but the drones are using AI in most of these conflicts. And so I think the focus will be on how do we determine where our investments go versus these very large platforms that take sometimes decades to get going. So I do think there needs to be a fundamental rethink of defense spending in all of these countries, including in the United States.
Karen, thanks very much. Thanks for joining us. Karen von Hippel, the Royal United Services Institute of RUSI Distinguished Fellow and former Director General. 8:43 in London. We'll get back to the markets shortly. Oil prices sink following the interim deal between the US and Iran. But what next for the Strait of Hormuz? We will wade into that conversation. We'll discuss. This is Bloomberg.
Is there anything that humans today can do? Yes. That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to the opening trade. We are 47 minutes into your Monday session. Risk on across these equity markets with, of course, this interim deal between Iran and the US. You're also seeing the dollar down, yields down, bonds are bid, and you're seeing a rally for the likes of gold and silver. Across the equity space, then, that is the top line move. 1% across the benchmark. Very strong session coming through over in Germany. Autos getting a big lift. Every sector bar 3. The biggest losses coming through for energy, of course, with about a 5% drop when it comes to oil prices. So the DAX up 1.7%, 1.4% the France again over in the CAC current, and the FTSE 100, the relative underperformer, but still gains 0.6%. Energy is a bit of a hold on the upside for the FTSE 100.
Yeah, so markets very much reacting to news flow in the Middle East. The interim agreement between the US and Iran aimed at reopening the Strait of Hormuz is expected to be signed then in Switzerland on Friday. And President Trump has said that the waterway will reopen the same day. Let's get more then with Bloomberg's Stephen Stapczynski, who's been poring over the details of what this means for the shipping industry and the energy space. Stephen, how are ship owners and traders then taking this deal? How are they responding to it? Are they all racing to get out through the strait already, or waiting till Friday, or very much more skeptical?
There's no race quite yet. We're certainly in a wait-and-see sort of situation. I think for a lot of ship owners and exporters of fuel, there are a number of things that have to be guaranteed. One, is the passage safe? Will Iran allow ships to go through without paying a toll, like Trump has said? Will they allow ships to go through on the Omani route as well? And then on top of all of that, you have to make sure that all the parties are happy and feel comfortable with the situation. I'm talking insurers, not only just the ship owners, but also the captain, the people on the ships. There are a lot of stakeholders, actually, with every vessel. And it's not so easy to just open the floodgates and let them through.
And that's just one-way traffic. Will ships go back into the region knowing that there is still a risk that we could see this deal fall apart at any point and the strait reclose?
I mean, absolutely. I think one thing that you have to take a look at is that, ADNOC, Aramco, Qatar Energy, all of these companies that export energy, a lot of them actually subleased, they subchartered their vessels when this conflict began. And so those ships are servicing other areas. They're in other parts of the world. So even if they did think a deal were happening and it was all done and there was safety in the strait, it would take a while to get all those ships back anyway. So it's challenging to just move all those vessels back, which also indicates that this isn't something that's going to happen overnight. This isn't a quick fix. Just because there is a peace deal, and if there is safety in the strait, it will take a while for the vessels to return and for the oil and gas to flow back to normal levels that we saw in February.
And Stephen, of course, there's been damage done to some of the infrastructure in the Middle East. In terms of production capacity, how quickly can they get that revived?
That's the magic question, and I think it really depends on what country, what facility you're looking at, because there are some places that they weren't damaged, or they were damaged and that damage was repaired. There are some producers who are able to quickly bring back their output. But if you look at, for example, Ras Laffan, the Qatar's LNG export plant, the world's biggest LNG export plant, it was hit by missiles by Iran in March, and 17% of its production capacity was damaged. It will take 3 to 5 years for that to come back online to full capacity. So the thing is, yes, you can bring back a lot of this output over the next couple months. There is the capacity that can come back online, but getting back to 100%, getting back to the pre-war levels, it isn't a matter of months. It could potentially be years, depending on what product you're looking at.
Okay, years potentially to get back to full capacity or pre-war capacity. Bloomberg's Stephen Stapczynski, thank you for that breakdown. Continuing, of course, to monitor flow through the strait, and we'll see what happens on Friday. Let's look ahead, meanwhile, to what else we're watching throughout this week. The G7 Leaders Summit begins today in Evian in France. We've seen President Trump getting onto Air Force One, heading in that direction. Tomorrow, we're going to get the Bank of Japan's rate decision. Central banks really front and centre this week as well. On Wednesday is the Fed's rate decision. Kevin Warsh holding his first press conference as Fed chair. And on Thursday, pivotal moment in the UK with a by-election in Makerfield, Greater Manchester. We're also going to get the BOE's rate decision. And on Friday, UK retail sales figures with a touch on the health of the UK consumer.
Let's talk about kind of where we are this morning. Risk on, definitely, certainly the narrative. If you look at the distribution of outcomes, they've definitely shifted to the right. We're going to get a reopening of the Strait of Hormuz. Don't know what it's going to look like, but in theory, it's going to reopen. That seems to be enough, doesn't it, Skylar?
Yeah, I mean, absolutely. That's what the market's focusing on. Obviously, you have a 60-day negotiation period still. You have all these questions around nuclear.
They matter. They don't matter.
But they don't matter to markets, right? Because the market cares of whether or not gas and energy is flowing through the strait and whether or not you can return to some kind of normalcy there and how that feeds into the economy and markets.
And how much does it change what we're going to hear from the Fed, do we think, this week?
I think this is the issue,
We'll never
right?
know, I guess.
We'll never know. But also, if you look at the Brent curve, that end of 26 pricing has been very sticky around $80 a barrel. Now, spot prices aren't that far from $80 a barrel now. So if you stay around this price, you still have commodities that are very much elevated relative to 2025 levels. You've had over 100 days where prices have been even higher than that, and that does have an impact on the economy and inflation. You had CPI out of the U.S. at 4.2%. That's almost double the Fed's target. And, you know, as inflation was going sideways, they could be unduly dovish, but it's much harder when inflation is rising. And, you know, that's not going to change very quickly despite the strait potentially being open as soon as Friday.
Do you think markets need Kevin Walsh to emphasise Fed independence and the legitimacy of this institution?
I don't think they need it at this point because the pricing tells you they believe in it, right? So if you look at what the market's telling you, it's saying that they're going to hike and that's going to maintain inflation-fighting credibility. There's this belief that the board as a whole is now in control. You have Powell still there, and so you'll have some hawkish dissents. I do think, though, if you have an unduly dovish Fed in the form of Walsh, which I don't think is the base case. I think the idea is that cooler heads will prevail. But it matters a lot for the market because if you lose that inflation-fighting credibility, then risk assets have a much harder time. The dollar doesn't do as well. And the bias you can see from the economic momentum is for higher yields still. So whether or not, you know, risk assets are still happy depends on how dovish that Fed is.
So the market wants the hawkishness, believes the hawkishness. Do you think Kevin Walsh will be happy with the hawkishness that's priced in or come out trying to change the market's thinking in some way?
Yeah, I mean, this is the hard bit, right? We don't really know what's going to come from him in terms of we've got mixed messages on the impact on productivity being disinflationary from AI, but you've seen very clearly that there's an inflationary impulse in the fact that you're having to buy so many commodities to build out this infrastructure. At the same time, we don't know what's going to happen on the balance sheet. Potentially we get, you know, some kind of shift in communication, so maybe we don't get dots anymore, and then you have a less clear Fed trajectory. So I think there are a lot of questions. I think it's quite early to push back on that hawkishness, especially with inflation being so high. He's kind of gotten a win in the fact that we've had this inflation being very high because it becomes clear what the policy direction should be. And at a very minimum, you'd expect not to cut.
Is this a world that we now are in this Monday morning where we see a broadening away from tech? Is that because everybody told me that that's going to happen?
Yeah, I mean, certainly today, I think you can get a broadening away from tech, right? The market's quite optimistic on the growth outlook. You're not getting as much of a negative input from commodities anymore, and so you're going to look elsewhere, right? Yeah. Like the stuff that lost quite a lot when Iran still happened is doing much better today, and that's across assets. Like Stocky's the currency that's done very well today, and that's the one that was hurt most. So that rotation is positive for a broadening, but I don't think that you turn away from the tech trade entirely. And I'll say part of that reasoning is you're not in euphoria yet, so you're not at the bubble bursting yet. You still have this excitement over IPOs. Yeah. And I'll say the SpaceX rise was actually quite encouraging in the fact that you got something that was a little bit above average on your first day, but it wasn't stratospheric. It wasn't this like very worrying .com IPO return.
Banu Baweja made us, at least encourage us to look at the relative resilience around oil. Do we need to also remind ourselves of the relative resilience of global economies to these kind of shocks and corporate earnings as well, corporate resilience?
Yeah, I mean, absolutely. I think you need to also be mindful of where that relative trade is in terms of the U.S. economy is going to do much better on the back of this. You're going to have higher inflation and, you know, more inflation persistence because that growth is high, whereas you still have a negative growth impact that's feeding through for Europe and the U.K., and to what extent that feeds into prices and companies we need to watch quite closely.
Okay, European stocks near record levels right now. Skylar, thank you very much indeed. Bloomberg MLive strategist Skylar Montgomery-Koenig. That is it for the opening trades. We continue, of course, to monitor the market reaction to this interim deal, and we're on the ground at the G7. a very decent session so far, up 0.9% across the benchmark. US futures pointed to gains of between 1 and 2%. The pulse is up next.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
What happened was you were up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The U.S. and Iran announced a deal to end the war, but it won't be signed until Friday, suggesting some aspects are yet to be agreed. Oil sinks as President Trump says the Strait of Hormuz will be opened toll-free, but ship owners call for more details on what's been agreed. Anthropic blocks all access to its most advanced AI model, Mythos, after an unprecedented order by the U.S. government to keep it out of foreign hands. Now, there is quite a lot going on. Happy Monday, everyone. We've just started the week. We've seen a global relief rally fueled by stocks and bonds, while oil tumbling to a 3-month low after the U.S. and Iran actually agreed to halt their war and reopen the Strait of Hormuz. Look, the agreement really paves the way to end a conflict that has already claimed thousands of lives, disrupted the global economy, and driven volatility across financial markets. You can see Brent crude 83.31 and Eurodollar 116.06. If you look at the European markets map, again, this has really been filtering through what we've seen in the U.S. because the agreement paves the way to end a conflict that has now claimed thousands of lives, disrupted the global economy, and driven volatility across financial markets since the end of February. And on the back of that hope that actually the oil price will be a little bit lower, the CAC on the DAX down between 1 and 1.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, oil has fallen to a 3-month low after the U.S. and Iran announced an interim deal to end their war and reopen the Strait of Hormuz. Now, officials from the two countries are set to meet in Switzerland on Friday to formally sign the agreement, but no text has been released by either side, including on the fate of Tehran's nuclear program. Now, for more on all of this, let's bring in Bloomberg's Abir Abu Omar. Abir, good morning. So no text released by either side. Do we have an idea of the terms of the deal?
Good morning, Francine. Not a lot of details emerged from the MOU. What we know is that what President Trump said and what we went by, and that is that the MOU, once signed on Friday, as you had mentioned earlier, is going to reopen the Strait of Hormuz immediately. That will follow a period of 60 days where technical negotiations will go underway. And that mainly includes discussing Iran's nuclear program. That is one of the U.S.'s biggest goals in entering this war to begin with. Now, some of the things that we understand or don't have a lot of clarity on is, for example, the $24 billion of blocked assets, also the oil sanctions on Iran and some other key details. But again, we don't have clarity on what exactly are the concessions that are part of this MOU. And look, just overnight, when this deal was, or when this agreement was reached, both sides started giving conflicting statements about what concessions might have been part of this MOU. And so we carry this this back and forth yet again between Iran and the United States. But for more clarity on what will actually happen, we have to wait to see what happens on the sidelines of the G7 meetings later and the signing ceremony that will be hosted by Pakistan in Geneva on the 17th. One key sticking point in all of this, Francine, and that has emerged into the early hours of this morning, is Israel, which maintains its incursion in Lebanon. We've heard from some Israeli officials, including Defense Minister Israel Katz and also Ben Gvir, that said that they maintain their presence in Lebanon and that they're not bound by this MOU that was signed between Iran and the United States. So something to keep an eye on there.
So, Abir, what's been agreed on the Strait of Hormuz?
Right. The effective opening, as soon as the deal will be signed, the Strait of Hormuz will immediately be opened, according to President Trump. He did say overnight again that part of the delay in actually getting to this deal, and if you remember, we were supposed to see this deal coming to fruition on Sunday, his birthday, but we saw some delays. Two parts led to that. One, the bombing of Beirut by Israel. The other thing was that they needed to figure out what exactly was the state of the strait and the mines that we spoke about over the past few months about Iran mining the Strait of Hormuz. But effectively, the deal will see the reopening of the strait immediately, and then the trickle down of ships through the waterway will happen in the aftermath of that.
Abir, thank you so much. As always, Bloomberg's Abir Abu Omar. Now we're joined by Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight, also author of a new book called Mad World, which is published in September. Tina, you'll have to have like 5 rewritings, given the world is so mad. It's going so fast.
Not at all.
Right, by now.
Everything's going according to the framework we laid out.
Okay, so what's the framework for the MOU? What happens from now until September, actually, with Iran?
I think the first thing to say is that this outcome is probably the best that markets can hope for. There are many, mysterious elements of the deal, but for the first time, Trump has announced that a deal was imminent, and the Iranian state news agency didn't contradict him. I think we've also seen that the president has been able to hold oil prices down just by saying 39 times that there was going to be a deal. So, it is how diplomacy works, to agree to a framework, but diplomacy with Iran is slow, technical, painful, and they tend to outfox their opposite number. But in the very short term, opening the strait to traffic is what the market wants to see.
So how do you define this mad world? I mean, there's competing forces, but what's the kind of overall framework that you look at?
Firstly, that geostrategy, rather than just geopolitics, is now a superpower for leaders, and it's not just about the downside risk. What I really want to do is reframe the way that we think about global affairs and global drivers, because what we see everywhere is competition. Geopolitics is what countries do to project power over borders. Iran, by that framework, has been able to monetize the Strait of Hormuz, strengthen its position, actually get frozen assets released to do something that wasn't an issue to start with. So it has been able to use its much more limited set of cards than the United States had to its advantage. And so understanding that geopolitics is driving state behavior in an era of enhanced competition and having a knock-on effect to shipping and waterways and global trade and supply chain rewiring, that's what I talk about in the book.
Tina, going back to what's going on with Iran, are we going to have a deal that is good enough that will last, or is there a danger that we have to come back to this deal time and time again?
Here's the kind of game theory element that I'm concerned about. It's quite clear that neither side wants to be in full throttle state-to-state conflict. So it's good news that we have this outcome. But to have diplomacy that's not backed by force doesn't have a very good track record. And the Islamic regime in Iran can count on the fact that President Trump won't want to turn the dial back up on full-scale escalation between now and midterms. So that encourages what we call cheating in international relations terminology. It means that the U.S. can carry a big stick and threaten force, but Iran knows that the U.S. won't want to go into war, and Israel is the loser in the current outcome.
So what does Iran gain? I mean, does it still have, to some extent, control over the Strait of Hormuz?
It has, I would say, a loaded gun that it can point at the global economy anytime it wants. I have said for a long time, I think Iran ends up being able to monetize the strait in some fashion. There was interesting language coming out of Oman about perhaps there needed to be a fee for ecological consequences. It's very easy to imagine. So in that sense, monetizing a major global chokehold and normalizing that is one of the big outcomes here. They also, the Iranian regime in Iran has eliminated, or its competition has been eliminated. The hardliners are in charge. The idea that they give in to domestic demands for reform after those major domestic protests in January now is much slimmer. They're going to be a much tougher neighbor to deal with. And you can see that Qatar, the UAE, Saudi, et cetera, are all now having to get very pragmatic in the way that they deal with Iran, because they're not leaving.
Tina, when you look at the $25 billion in frozen assets that could be unlocked, what will this be used for?
Well, this is a huge question. I mean, Iran says that this is their money. The state has been run down completely after 47 years of sanctions. But it's safe to assume that some of it will be used to fund their proxies, which again are not part of this deal, and to continue to strengthen their position. So they end up in a better place than before the war between this constellation of factors. They are holding more cards than they started with.
So what happens next with China? I mean, does China weigh in? Does China actually want some kind of deal so that they get oil, which they need so badly?
Well, China very interestingly boosted its inventories before this conflict and has been able to weather this storm. Now, there was a kind of a reflexive, view in Washington after the Venezuela actions and then Iran that the U.S. had pulled this kind of judo move. That's what Secretary of the Treasury, Scott Bessent, said, and or jujitsu, I think he said, to 1-2 punch on China's two sources of cheap energy. Doesn't seem to be bothering China, and China has been playing this geostrategy game that I talk about in the book much longer and better, so that it has both strengthened its renewables and its clean and green energy, as well as its portfolio of suppliers. So China also can watch and wait.
Tina, thank you so much. As always, Tina Fordham there, founder and geopolitical strategist at Fordham Global Foresight. Now, let's also look at SpaceX. SpaceX shares have jumped as much as 7.7% in pre-market trading, set to extend gains after rallying on its debut on Friday. So coming up, Anthropic cuts off access to its most powerful models after a U.S. government export ban. We'll look at the impacts on the global tech sector. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible. Bloomberg Surveillance. We're talking about it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Anthropic has disabled access to its most advanced AI models, including Mythos, following an unprecedented order by the Trump administration to keep the technology out of the hands of all foreign nationals. Let's get more from Neil Campling, our Bloomberg senior strategist focused on tech. Neil, so first of all, what does this actually mean for AI deployments from other companies?
So this particular restriction is just related to Anthropic Fable 5 and Mythos 5 models, which have recently been launched. Anthropic's arguing that other companies have deployed models that hold similar risks, but the White House so far has had these restrictions only on Anthropic and not to other models. So that's important given the growth that we have in terms of the adoption of these AI technologies currently. And I suspect that Anthropic will be looking to make these vulnerabilities fixes very quickly to ensure they can maintain their own momentum. But AI is so pivotal to the growth of the overall US economy and the global economy that really we need, I expect, that you'd have as few restrictions as possible over the long term. But clearly where there are vulnerabilities, and the risks that they pose in being used by bad actors, then the fixes need to come very quickly. And so far, there's no sign of other AI models being faced with similar restrictions.
Yeah, Neil, I mean, we need to talk about SpaceX, but I have so many questions about Anthropic. How dangerous is this model? Because we also had something which, kind of captured my imagination last week when then one of the Anthropic, founders or top guys said, we also have to try and limit it because it's dangerous. And then with the U.S. government, you kind of start wondering, what are we exactly looking at?
Yeah, it's difficult to know when the company themselves have been downplaying the concerns. They called it that there were minor vulnerabilities, but of course, any kind of vulnerability can be a risk if it's used for the wrong purposes. And on this particular occasion, it appeared that the issue was because the government became aware from a third party saying that there was a method of bypassing, of jailbreaking the models. So these systems are so powerful that they need to be continually updated and ensured that these efforts to jailbreak can't happen. So it's difficult to know exactly what the safeguards are, but Anthropic have also come out and said that the safeguards are so strong that some users have complained that they're too strong. So we need to, I think, keep a very close eye on what happens in the next few days.
So, Neil, SpaceX shares closed 19% higher on Friday after its IPO, again pre-market today. How long can it sustain this momentum?
It's a $1 trillion question or so, should we say. I mean, that the way the market reacted to the world's biggest ever IPO and a significant amount was encouraging. The stock did well on the day and is looking stronger again in the pre-market, as you mentioned. I think maybe the most encouraging sign is the stock didn't go either halve or double on the day itself, but it actually sets the scene for a really great outlook as far as the estimates for new offerings. And JP Morgan estimate that there's probably $1.5 trillion of IPOs, secondaries, and offerings coming over the next 2 years. And that's even accounting for buybacks in terms of the size of market liquidity. And that compares to $12 trillion of shrinking from the US market from buybacks alone over the last 20 years. So it's very good in terms of liquidity and the IPO momentum looking for the equity market.
Neil, thank you so much. As ever, Neil Campling there with the very latest on SpaceX and Anthropic. Now, investor focus, of course, has now returned from SpaceX back to Earth, somewhat. European stocks have hit a new record high on news of the deal to end the war in Iran. Now, bonds have rallied. Oil has fallen. With us now, Karen Ward, EMEA Chief Market Strategist at JP Morgan Asset Management. Karen, as always, thank you so much for joining us. Feels like we're competing with these different forces, which politicians and leaders do every day, and the market is doing the same. Where does AI sit in this? Because it's like, I guess the markets have now all embraced AI, but there are many question marks.
Oh, absolutely. I mean, when we spoke last month, I said to you that ultimately nobody can know whether these AI stocks deserve their valuations. I don't know. Bill Gates doesn't know. Sam Altman doesn't know. The reason we don't know is because we still need to understand how much AI is going to change the world. How much is nominal GDP going to expand where? What is the use case? What is the productivity and profitability? There are so many uncertainties about that. I mean, you're covering Anthropic. That's a government intervention to perhaps scale back the impact in the short term, at least. So the way we've released our outlook today, what we're saying is you need access, therefore, to the tech story. The questions you should ask yourself as an investor is, how much of my overall portfolio do I want to be linked to this AI theme? And then the second question you ask yourself is, within the theme, where am I least prone to vulnerabilities? So what we believe is that that's where the sort of inputs, the semis, the memory producers, whoever wins the AI race, they're going to use those same inputs. So you want to be exposed, be careful about how much. The AI-related theme is 50% of the S&P. It's 50% of EM. Is that a number you're comfortable with? Question number one you should ask yourself. And then where within that are you happiest taking your exposure? So that's the way we're going about handling the uncertainty.
I mean, do you look at AI capex spending, which are rising and therefore also fueling a little bit of growth in the U.S. with U.S. consumer, or is it corporate adoption, the kind of fault line of where you see whether these models can actually make money?
That's it. That is absolutely it. That's the ultimate question on how big is the pie going to be? How much are companies finding they can transform their own productivity and their own profitability? The consumer is a vulnerability if the story breaks, because we know there have been these fabulous wealth effects in the US because the S&P's up double digits 3 years in a row. So if the story faltered, it's going to have ramifications through the broader US economy. But the fundamental question is, what are all those CEOs out there in the world saying about how this is transforming their business?
Karen, how do you look at this new potential deal between the US and Iran? Again, many question marks, $25 billion of frozen assets potentially unlocked. Does it hold? And is the market right to cry like, hallelujah, we're over it?
Yeah. I mean, thankfully, we released our outlook today, written on the premise that we were going to have the strait reopened. I mean, Francine, to me, the most important number has always been 80% of the oil that comes out of the strait goes to Asia. And China's domestic economy is weak. China will not allow, I don't believe, Iran to sustain a closure of the strait. So I expected a deal to be reached. It does look like it's constructed in such a way as to create incentives for both sides to stick. And then I think it's going to get really interesting where oil goes to. I mean, who would have thought 83 today already on, this early stage of a peace deal, still questions about Iran and Hezbollah. So I think it could be really interesting. Maybe we see oil at 70 in the next couple of weeks. And that's going to be then really fascinating for the stock market, because the whole rotation we saw last year by sector and geography, that got halted on February the 27th. So, the idea that the market has looked through the Iran conflict is wrong, actually. The narrative shifted completely. So it's unwinding now. You're getting that rotation, that broadening. Look at European stocks this morning. If oil keeps coming down, which it could, because some of the news out of this is, OPEC weakening further, Iran actually potentially being able to sell its oil not in the black market, in official markets. I think you're going to have these Gulf states thinking, I want to monetize my oil at these kind of prices as fast as I can. So maybe that supply comes on and takes oil down, in which case we've got a huge tailwind.
And so does that change also the trajectory for central banks? And actually, could they cut?
Absolutely. I mean, I think so I've always said they won't hike this time. Now, the ECB did do 25 bips last week. They clearly felt that they needed to, as Christine Lagarde says, react to demonstrate the reaction function. But, this is a very different economy this time around. So I think the central banks now are on hold, all of the majors. Bank of Japan still needs to keep moving. But yes, there's still, even this morning on this news, there's still hikes priced. And I think they're going to come out. And therefore, that's going to be good for fixed income.
Across the board, or is it treasuries versus, what are gilts doing in this kind of environment?
More in Europe, I would say, is our preference, and actually gilts. Now, you might think we've got the Makerfield by-election coming up and all those uncertainties there, but that's very fully in the price. I think most investors are fully well aware that Andy Burnham, the prospective candidate to take the premiership, if that's what he goes for after the by-election, has said government shouldn't be in hook to the bond markets. Now, he said that many months ago. I suspect we'll hear a very different tone if he is taking office, but that risk, that uncertainty, I believe, is already in gilts. So I think the news incrementally is going to be better for European bonds.
So if Andy Burnham is the next prime minister, do you see a kind of dislocation in UK markets? Could you see a market event like we saw with Liz Truss, or will this team be much better prepared?
You would hope lessons have been learned. I mean, and I think, we don't know. We really don't know what an Andy Burnham government will look like, what his priorities are, whether that's going to be, you can paint a picture where a new leader comes in, they have better control of the party, so can use the majority to actually do some tough stuff. They may talk a fiscally credible narrative, which actually tackles some of the spending issues in the UK in order to invest more. You can paint a positive picture, whereas I think the market is focused on the potential negatives. So that's why we think there's an opportunity.
Karen, overall, when you look at fixed income, we talked a little bit about equities. Is there a part of the market that you think we're ignoring that will really benefit from the Strait of Hormuz being reopened and the fact that inflation worries may be something of the past?
I still think Europe is undervalued. I think that the perceptions are that Europe is just structurally incapable of delivering corporate earning growth. And I think that's wrong. I think we've had a horrible cycle. I think we've had very restrictive policy, whether that's government or regulatory policy. And I'm hearing a really different tone from Brussels and an urgency to get growth going. So to me, that's where there is too much pessimism still priced in a broadly optimistic market.
Karen, thank you so much, as always, for joining us. Karen Ward, EMEA Chief Market Strategist at JP Morgan Asset Management. Coming up, Russia and Ukraine continue to target each other's energy infrastructure. We discuss the impact of all of this with the Chief Executive of the Ukrainian energy company, DTEK. That's a little bit later, and this is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. and Iran announced a deal to end the war, but it won't be signed until Friday, suggesting some aspects are yet to be agreed. Oil sinks as President Trump says the Strait of Hormuz will be opened toll-free, but ship owners call for more details on what's been agreed. Plus, Anthropic blocks all access to its most advanced AI model, Mythos, after an unprecedented order by the U.S. government to keep it out of foreign hands. So oil has fallen to a 3-month low on hopes that the Strait of Hormuz will reopen, easing a supply crunch that has rattled global energy markets. Well, we're now joined by James Herron, Bloomberg Senior Editor for Energy and Commodities. James, thank you so much for joining us. Now, I don't know whether the market reaction to oil has been on, but certainly at times it has been surprising because they've been overly optimistic about an agreement. But this time, it looks like we do get something.
Yeah, or at least we've entered the next stage of this whole issue that's been going on. And given how long the ceasefire lasted and how much shooting there was in the ceasefire, I don't think anyone's assuming like everything is over now, everything's back to normal. But there is optimism, but a lot of caution out there.
Yeah. So, I mean, first of all, why was the market always optimistic about a deal?
I think the assumption certainly that underpinned futures prices was that things would get so difficult if there wasn't a deal, if this dragged on till September, that eventually the two sides would be forced to come together. And that appears to have been the right bet at this stage, even given all the caveats we still have.
So what is priced in now? We had Karen Ward of JP Morgan who is saying, look, there's a belief in the markets that, you know, the oil price could even come down to 70 if there's, you know, a little bit of cheating on some of the OPEC side because they want to sell more oil than actually is allowed by the quotas. If Iran also starts selling, not on the black market, but actually openly.
Yeah. I think the market is certainly pricing in like no crisis now, no inventories running out, the kind of thing that we were talking about a couple of weeks ago when it looked like a deal was really far away. But it's also pricing in, I think, the caution that shipping companies have come out this morning saying they're very hesitant to just start sailing through already. So there's definitely a bit of a balance there between the positive and the negative.
I mean, it's interesting because the market seems to be, you know, running away with optimism. But as you say, a lot of companies and vessel owners will just want to be a lot more cautious about this.
Yeah, I think that's true. And obviously, even if the price does go to 70, that's still $10 above where we were before this whole mess started, you know, sort of back in January before the war broke out. So there's still a bit of a premium in there. And I think what we may see is that premium will remain for much longer because even after the shipping flows resume and the oil is flowing, you have all these inventories that we've been running down that need to be refilled. You know, gas price is a different story because obviously Qatar's LNG plant has been damaged and will take a long time to repair. So I think we're looking at quite a long tail of a premium embedded in energy prices as a result of this crisis, you know, for months, if not years to come.
James, thank you so much. James Heron there from Bloomberg. Now, with that interim deal agreed, President Trump is now on his way to meet with heads of state at the Group of Seven Leaders Summit in France. Well, Bloomberg's chief Europe correspondent, Oliver Crook, joins us now from Evian in France. Evian, just like the water, Ollie, it is also a place, and it's behind you. So will there be a sense of relief at the G7 that this deal has finally been agreed?
I think there will be a very great sense of relief for the G7 leaders and other leaders that are convened down here in Evian over the next few days to meet with a number of people, including, of course, President Donald Trump. I think they'll also be quite eager to learn what is actually in the deal, when it takes effect, what all the parameters are, and that'll be one of the main focuses for the European leaders here. And I think for them also, they have to part in this whole conversation. You'll remember from the very beginning of the war, we've heard it repeatedly from the president of France who's hosting the meeting, Emmanuel Macron. He says that Europe really does have a role in the Strait of Hormuz the day after. We are now dawning somewhere near the day after. The question is, what will the European role be? What is sufficient for the President of the United States? We know the Europeans have already offered a demining mission led by France and the United Kingdom. Will that be enough for the President of the United States? And of course, there's a lot of questions about the bilateral relationships among a lot of the European G7 leaders and the President of the United States. And a number of them have really degraded over the last few months. You think of Giorgia Meloni, the Prime Minister of Italy. Trump was very upset, obviously, with the Pope. She defended the Pope, upset with her for not allowing the United States to use Italian bases in their strikes in Iran. And of course, probably the biggest degradation between Chancellor Merz, the Chancellor of Germany, and the President of the United States, Donald Trump, in which Merz, you know, a few months ago said that basically the president was being humiliated, and then Donald Trump said he was going to withdraw troops from Germany. So these are all the sort of things that are in the background. And we should say other attendees of this meeting, we have the leader of Qatar, the UAE, Egypt. These are people that will be absolutely critical in the architecture of whatever deal we get with Iran and the sort of path going forward. And of course, for Emmanuel Macron, this is an opportunity for him to bring everybody together. Of course, now with this deal gives a little bit of renewed energy for this summit. We should also say he's also very pleased to host the President of the United States in Versailles on Wednesday night for dinner.
Ali, the Ukrainian President Volodymyr Zelensky is attending. What can he hope from the G7 talks?
Yeah, so I think that right now, after this sort of this phase with Iran and this potential peace deal between the United States and Iran, there's a real question of what the president's appetite is going to be in terms of his engagement for Europe. So that has to do with the sort of troop deployments of NATO. But of course, what level of commitment does the United States want to have on trying to bring the war in Ukraine to an end? As you'll remember, in the presidential campaign, Trump had said very frequently that he would end the war in about 24 hours. That proved obviously very, very complicated over the last few months. Could you see a renewal of a American engagement here. That will certainly be the effort of the president of Ukraine while he meets in some of the talks with the president and some of the other European leaders. But there's also not just a question of that. There's also a question, if you do have diminished hostilities in the Gulf, there's all this question of American hardware that has been diverted away from European allies, potentially could make its way back to Ukraine. So, of course, Zelensky will be here trying to sort of restart this sort of conversation. And, of course, we should say Zelensky and Putin both spoke separately with the president of the United States yesterday on the president's birthday to try to make a breakthrough. And as you've just been reporting, Francine, there have been a number of strikes across Ukraine. So not really a particularly positive signal from the president of the Russian Federation, but, of course, will be front and center for the European leaders here in Evian.
Ollie, thank you so much. Oliver Kruther, our Bloomberg chief Europe correspondent. Now, Ukrainian cities, including Kyiv, came under Russian drone and missile attack this morning. It came hours after Vladimir Putin and Donald Trump held a phone call while the mayor of Kyiv said apartment buildings in several parts of the city were set ablaze and about 140,000 households were without power. Meanwhile, attacks on energy infrastructure in both Ukraine and Russia continue. Well, I'm delighted to be joined by Maxim Timchenko, the chief executive of DTEK, Ukraine's largest private energy company. Thank you so much for joining us. As always, I know we speak regularly every 6 months to get an update. It seems that, first of all, a lot of the hostilities against Ukraine, especially Kyiv, have really intensified. What does that mean for energy security?
So as you just see all these images coming from Kyiv in the morning, I think this is sign of real desperate situation for Russians. They cannot succeed on military front line and they attack civil infrastructure, energy facilities. They try to make our life as hard as possible. We survived last winter. It was the hardest winter of the history of independent Ukraine. We managed to restore more than 70% of destroyed generation. It was blackouts for 20 hours a day, but we've made it. And today, I can say about Ukraine that we are not in survival mode, rather we are in building mode. So we're investing in Ukraine.
Does it make, I mean, this, I guess, desperation is what you think and you see from Russia. Does it make them more dangerous? Does it make it, this point in time more make these Russian attacks, especially on infrastructure, a lot more unpredictable?
I think that Russians crossed all red lines already. And I think that nothing can surprise us as Ukrainians. We just need to learn more lessons after each attack and become stronger and be ready for the next attack or next red line to be crossed by Russians.
Can you talk to me a little bit about your assessment of the damage inflicted actually by Russia's attacks, especially in the Odessa region, which is extremely important because it's, as a port route for Ukraine?
We have daily attacks on our grid and our infrastructure. Talking about our generation facilities, 70-18% was destroyed for 3 times already, and we recovered. And the same I can say about any energy company in Ukraine. So we keep fighting. We know how to deal with this critical situation, and now our immediate priority is to be prepared for the next winter season. We know what to do, we know how to do. We're very much thankful to our partners. Air defense is extremely important because energy workers, energy people know how to recover, how to install equipment. We need air defense. And then we will be ready to face new challenges.
You also construct these so-called large batteries, right, which are used for a number of cities across Ukraine that feed houses. What progress have you made there?
Yeah, that's exactly just demonstration of my message that Ukraine is one of the largest investment case in the world. Right. And even not after the war, but now. Our company, DTEK, and basically by decision of owner of this company, Rinat Akhmetov, we invested 2.4 billion euro during the war. And the recent project is battery storage, which is one of the largest in the region, not even in Ukraine. We built it in record time. You cannot find any other place in Europe where you can build 200 megawatt battery storage project in 12 months from development stage until commissioning. So in 3 months, we will commission the largest wind park in Ukraine, 500 megawatts. So this is just examples that Ukraine is investable now And those investors who realize this potential, start doing something now, they get all the returns after the war.
But so, for example, for the large batteries, which I understand are used really in Kharkiv, which is Ukraine's second largest cities, will they also be used in Kyiv to the same extent as Kharkiv?
No, absolutely. Battery storage in all these facilities, they bring a lot of resilience to the system, energy system. That's why for us, extremely important to build more, to commission before next winter. And as I said, every attack gives us the lessons how to make our energy system more resilient. This is what we are doing.
I mean, talk to me a little bit about some of the gas supplies. So you faced attacks also on gas facilities. How much?
Yeah, it was quite intensive attack starting from 2025 and continue until now. We lost 15% of our capacity. And as I said, we today talking about the tech, we recovered full capacity and we continue investing in upstream, in more gas production. And in general, those who knows potential of Ukraine, they can realize that Ukraine will be one of the major contributors to energy security of Europe. Having so much gas storage facilities, wind potential and all other factors, which makes Ukraine one of the most important partner for Europe in terms of energy security. And a good example, Strait of Hormuz. So, and next door, Ukraine, with the second largest gas reserves after Norway. Investing in Ukraine now is investment in energy security of Europe.
Are you confident that your facilities will be able to withstand more Russian attacks if they become more sophisticated?
It's hard to forecast. You know, when you have attack of 800 drones or 100 missiles, none of air defense system can give you guarantee that you'll be fully protected. But the most important for us to be prepared, to have good planning, and to recover fast after each attack. And we know how to do that.
Talk to me, I mean, you go back to this idea that actually, you know, of course, energy security in Ukraine also helps the rest of Europe. What has the Strait of Hormuz debacle taught you, this war between the U.S. and Iran?
Yeah, that's exactly an indication that that situation and different routes of supply of gas is very fragile. And of course, if you develop your own resources, and Ukraine is part of Europe, then it makes you much more reliable channel of supply of these resources. And as I said, today we do a lot in terms of integration of our energy markets. I think that the energy industry will be the leading industry in European integration of the whole economy of Ukraine. And by technical connection of our grid, by the way, it's happened after only 3 weeks after full-scale invasion. We connected technically. Now we connected our markets. Now investors feel in Ukraine more and more like in European countries in terms of regulatory environment, in terms of regulators and all other factors, making Ukraine more attractive. That's why our message is come to Ukraine, build in Ukraine, and export back to Europe, making more sufficient and more strong in terms of energy security.
Do you think that will only happen after the war is over?
It's happening now. All these examples of the projects we realize and other companies coming, I think that foreign investors should realize that first mover advantage is something happening now. And it's not necessary to bring all your capital. Come to Ukraine, understand how it works, learn from us. And basically what we are saying now is that probably it's better to learn with us rather than from us, investing jointly into Ukraine.
In light of these recent attacks in Kyiv, what's the outlook for the winter?
So our energy system is stable. So in some hours we even do export of electricity. All energy companies at full speed in winter preparation. We are getting more and more supplies of equipment. We build a stock of equipment. We move more closely with our air defense forces. We hope that our partners will bring more ammunition for air defense, and we'll be ready. And as I said, how strong will be the attack? What kind of damage will be? It's hard to predict. The most important for us to be ready for the worst outcome.
Maxim, thank you so much for joining us. That is Maxim Timchenko there, the chief executive of DTEC, with a deep dive on, of course, Ukraine, infrastructure, and energy. Coming up, voters in Switzerland reject a proposal to cap the population at 10 million, but concerns over high levels of immigration remain. We'll have plenty more on that next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
The conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, voters in Switzerland have rejected a proposal to cap its population at 10 million. Warnings about the economic damage the radical measure would cause ultimately outweighed concerns about immigration. Well, the cap was rejected by 55% of voters. Well, joining us now from Zurich is Zoe Schneeweiss, who leads our coverage of Western Europe economy. Zoe, such a pleasure to speak to you. So it was a relatively tight vote. Doesn't that really underscore the strength of populism in Switzerland?
It does. Here, if you look at the numbers, 1.5 million people voted to install this population cap. That's double the number the right-wing party, the Swiss People's Party, or SVP, got in the last election. That means this has broad appeal. 45 to 55 in the end does look like a clear rejection, but if you think that the Swiss People's Party only got about 29% at the last election, that is a huge jump.
So what are the implications going forward for the policy?
So implications on policy is a bit of a tricky one. Switzerland is one of those concentration governments. That means that the Swiss People's Party, while it does campaigns like this, at the same time has 2 of the 7 ministers that lead this country. So on immigration itself, I'm not sure what they actually can do. Swiss rules already are fairly stringent. The main focus for everyone now will be the EU vote. The deal, Switzerland isn't part of the EU, but has this big bilateral agreement with the EU, and that will need to go to voters in 27 or 28.
Zoe, does this threaten the new deal on relations with the EU Switzerland will vote on next year or 2028?
Yes, exactly. It will. There is one can see from Sunday's vote that 45% of Swiss people have no issues with rejecting free movement of people and EU deals. So not that we can see that not that much campaigning would need to go wrong for this when these votes come up, for then those 45 to actually move up and to become the majority. So this is something, and we should be seeing a lot of pro-EU campaigning from the other parties over the next year or so.
Zoe, thanks so much. Bloomberg's Zoe Schneeweiss there with the very latest, of course, on what's happening in Switzerland. Now, investors are dialing back expectations for Fed interest rate hikes following news of a deal to halt the Iran war. Let's bring in Ven Ram, our MLive strategist. Ven, thank you for joining us, as always. Kevin Warsh debuts as Fed chair as the FOMC meets this week. So what are we looking out for?
Morning, Francine. I think that the markets are looking for a very dovish reaction function from Kevin Warsh, given all that we have heard in the run-up to his ascension as the Fed chair. But I think that what the markets are underpricing is the risk that he could be hawkish rather than dovish, at least at the very start of his tenure, because of the implications of the Iran war and what we have seen happen with gasoline prices in the US. And of course, they've nudged to almost $5 a barrel. So I think that, you know, he's traditionally a governor, a Fed chair, who's been hawkish in his previous interactions with the Fed. So I think that, you know, that's the risk that the markets are underpricing. Also being underpriced by the markets is what his communication style is going to be. I think that he's not a Fed chair who wants to communicate an awful lot with the markets. He's probably going to be more like a Greenspan than like a Powell, I think. And I think that, he may very well do away with the dot plot and the summary of economic projections. He's told us that he's not a big fan of those forms of communication. So I think that on the whole, we are going to see a very surprising Fed meeting this week. And I think that if you look at the rates market, Francine, I think that the rates volatility market is very complacent to these risks, and they may very well get a jolt after the Wednesday meeting.
Mm-hmm. So what can we expect from the BOJ tomorrow?
Well, I think that the BOJ is widely expected to raise interest rates, but the question is how far they need to go, Francine, from here, because even at 1%, the rate will be trailing the neutral rate even before the Iran war began, which was 150. So I think that, you know, for them to get to 150 is going to be a long trek ahead. And mind you that the neutral rate has probably shifted higher after the Iran war. So I think that they need to go a long way here. And if they kind of underwhelm the markets with the guidance that they're going to go at a glacial pace, I think the JGBs will sell off, and so will the yen.
On Thursday, it's the turn of the BOE event. What are you expecting there?
Well, I think that, you know, the end to the war, at least the putative end to the war, is going to bring them some respite. But I think that even so, the markets are thinking that given the inflation damage so far, I think that they may need to raise rates. At least they may need to raise rates at least once in the cycle, in the remainder of the cycle. That will align them close to the Taylor rule rate, which sits at 410. So I think those are the expectations from the market. And I think that we may see some of the more hawkishly minded BOE officials veer towards that posturing.
Ven, overall, I mean, when you look at the Bank of England, how tricky is it to also take account into all of this political uncertainty?
Well, that is the big question, and I think that, you know, there is going to be political uncertainty through the autumn, and I think that, you know, that is an uncertainty that the BOE has to live with, and I think that any changes in the reaction function will come in the last quarter of the year rather than in the third quarter, because I think very little will be known about the complexion of Downing Street, and much less the Chancellor, before the end of September, really.
Ben, thank you so much. Ben Ram there, our MLive strategist. Now, a couple of things we're looking out for today. Of course, let's take another look at SpaceX, and this is pre-market. Shares have jumped as much as 7.7%. SpaceX is set to extend Friday's 19% gain. That had given the company a market value of about $2.1 trillion at the close last week, following its record $75 billion initial public offering. And then a global relief rally is driving stocks and is driving bonds higher. Oil tumbling to a 3-month low after the U.S. and Iran agreed to end their war and reopen the Strait of Hormuz. Now, it does seem that the agreement between Washington and Tehran paves the way to end a 3-month conflict that, of course, has claimed thousands of lives and upended financial markets. Euro dollar 115.99, Brent crude at 83.10. Coming up, Kathy Wood, the chief executive of ARK Invest, will be on Bloomberg ETF IQ. That's at 5:30 p.m. London time. Up next, it's a Bloomberg Brief, and this is Bloomberg.
About to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Are you a different president from your father?
I have to be. It's a different time. There's fundamental lessons that I still hold close to my heart. But in terms of the practical things that you do, very few of those things apply any longer.
How is Mom?
She's
in her 90s.
Yeah, but I always say she's 95 years old. She didn't get the memo. She doesn't believe she's 95 years old. And she's still very active. I mean, I still get calls from her, and she says, you need to do this, you need to do that. And she doesn't let her age hold her back.
Does she try to advise you, even as president of the Philippines?
Constantly. And, you know, I always learn something new with my mom. In my family, she's the real politician. And she's a natural. My father was an intellect. He was a statesman. And we always said that he lived in his head. You know, he was very, very, very deep thinker. That's where I learned. My mother, on the other hand, she has this uncanny ability to connect with any kind of person. Any person she runs into in the street, kings, presidents, anyone, her childhood friend, she doesn't know how to fight. She's very bad at conflict.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Interim deal. The U.S. and Iran reach a deal to reopen the Strait of Hormuz. It does leave key sticking points, though, for the next stage of talks. Global relief rally. Stocks gain, bonds also. Oil falls to a 3-month low after the U.S. and Iran agree to end the war. And traders brace for a big week in central bank decisions, with the Fed voting on rates under new Fed Chair Kevin Warsh. Let's get a check on markets around the world now. Here's Winnie Su for the latest from Asia. Winnie.
Good morning, Vonnie. A very happy Monday from Asia as investors really cheer for that interim deal between the U.S. and Iran, and also the prospect of the Strait of Hormuz reopening. Now that lower oil prices really supporting MSCI Asia here, up about 3%, taking its 2-day gains to the biggest since March 2022. You have the Nikkei 225 here at another record, while the Kospi index is also up by about 5%. Now, interestingly, we are seeing some of the underperformers, the likes of Southeast Asian stocks, really also outperforming the major benchmarks here as well. Now, we take a look at the currency space because they are also strengthening on the back of a weaker U.S. dollar. You have the South Korean won strengthening as investors continue to buy South Korean stocks, while the Japanese yen here also edging slightly higher ahead of that Bank of Japan decision meeting tomorrow. For now, we are still expecting one rate hike to come.
Indeed, Winnie, thank you so much. Winnie Su there. Now to London for a look at Europe. Here's Justina Lee. Justina.
Good morning, Vonnie. Now, there's one story across European markets today, and one story only, and that is the prospect of a U.S.-Iran deal and lower energy prices. Now, we start with the bond markets here. UK gilt yields kind of falling, 8 basis points ahead of that BOE decision this week as traders start to price in maybe just one more rate hike from both the BOE and the ECB coming this year. And now, when it comes to the stock market, in the U.S., we're used to saying stocks have been looking past the war. But in Europe, where stocks are a lot more cyclical, we're seeing a big reaction today. And, especially in those automakers, and that's why we're seeing even stronger gains in Germany's DAX index. And we flip the board here. That's helping the Stocks Europe 600 mark another all-time high. Of course, we've been saying that for the S&P 500 for a while, but finally we're seeing that too for Europe, Bonnie.
All right, Justina, big week for central bank decisions. Also, that deal that is supposed to be signed Friday, it has oil, at least prompt month futures, down. So as you can see, WTI below $80 a barrel. We have Brent crude trading down 5.5%, just around $82 a barrel. And December contracts also much lower, and we're seeing this relief rally across the board. If we look at futures, you can see S&P futures, Nasdaq futures, Russell futures going to power the indices higher today, it looks like. Now, in terms of records, we haven't seen them for the S&P cap weighted or the Nasdaq 100 for a couple of weeks, but we did see on Friday a record for the equal weight S&P and also the Russell 2000, so we're still at that record territory. In terms of bonds, we're also coming down on yields, so down almost 5 basis points on the 2-year and almost 4.5 basis points on the 10-year yield. That will ease pressure potentially a little bit on the Federal Reserve Chair Kevin Warsh. Of course, there is the potential that there will be a hike next week, but at the same time, or at least talk of a hike, at the same time, it does make him more liable to be able to hold without any criticism. All right, let's get to some guests that we have this hour. We have Sam Riggle of Sunrise Energy Metals joining us shortly. And then Kelsey Barrow is also going to speak with us, JP Morgan Asset Management, to discuss the market impact of the US-Iran deal. So officials then set to meet in Switzerland Friday to formally sign an interim agreement to reopen the Strait of Hormuz. Let's get more now from Bloomberg's Abir Abu Omar in Dubai. Also, we have Bloomberg's Oliver Crook on the ground at the G7 in France. Abir, let me start with you. We don't have a text released by either side or anything like that. So what do we know about what's actually in the deal?
Good morning, Vonnie. So for now, what we know about this MOU that is set to be signed later this week in Geneva is that essentially both sides have come to the table and they've agreed that the MOU will be signed. We don't have much clarity on the details in the MOU. Now, what we know is that the Iranian side has come out and said that those details will emerge after the signing takes place later this week on the 17th of June. But what we know for now is that the Strait of Hormuz would be reopened immediately upon the signing of the agreement, and then that would follow a period of 60 days where more technical negotiations will take place between Iran and the United States. And now those technical negotiations are aimed towards mainly one goal in particular, and that is Iran's nuclear program. Now, President Trump had said earlier that the negotiations will take place in this 60-day period, and then if agreement on the nuclear program comes to fruition, then great. If it doesn't, then either an extension of that ceasefire will take place again, or we could see a return to military escalations in Iran. So while this MOU, as we've been calling it, the interim deal, is a step towards a positive direction, it's definitely not, it doesn't ensue anything certain. We could see a return to hostilities. And just one thing to point out here is Israel. Israel's actions in Lebanon do continue. We've heard from multiple ministers in Israel. That includes a defense minister, Israel Katz, and also the national security minister, Ben Gvir, that came out earlier this morning and said that the deal between Iran and the United States, Israel is essentially not bound to this MOU, and that it will continue its actions in Lebanon, and that essentially they need to stop the hostilities by Hezbollah in southern Lebanon. So that is one element to watch out over the next few days and before the deal is signed. And Vani, just hours before the two sides have come to an agreement, Israel had struck suburbs in the capital of Lebanon, Beirut. So that escalation in the Israeli action as well is something to keep an eye out over the next few days. Meanwhile, the Strait of Hormuz, for the time being, is still effectively closed. We await and see the trickle of ships through the waterway once the deal is signed.
Ollie, let me ask you how this changes the calculus, if anything, at the G7.
Yeah, I mean, I think this is fundamental to the conversations that will happen here at the G7. This deal, of course, everyone will sigh a great deal of relief here, but they're also going to be very curious on what is actually in this deal. What is the timeline here? And also critically, what are some of the roles that some of the American partners can play, potentially in the Strait of Hormuz, potentially in the architecture of a deal? And that is going to be, I think, front and center here for when Donald Trump arrives here a little bit later this evening in his conversations with G7 fellow leaders. Of course, since the very beginning of this war, you've heard it from the host of this meeting, Emmanuel Macron, the president of France, who said that there will be a military contribution by the Europeans the day after, when you have a ceasefire. Now it seems that we're closing in on this ceasefire. What effort will that be? How will the Europeans be involved? We've talked about these sort of demining missions that the Europeans could be involved with, led by France, led by the United Kingdom. But we also got a statement from the E3, the sort of three big economies here within Europe, saying that they would actually also be a part of sanction relief with the United States if these sort of benchmarks and these sort of milestones are reached by the Iranians. So this, of course, will be the big focus. We should say that the leaders of Qatar, the UAE, and Egypt will also be here. These are people that will be, of course, fundamentally involved in the architecture of this deal sort of going forward. And, of course, no trip to Europe would be complete without a tariff threat. And we got that from the President of the United States. He's saying that he's going to threaten France with 100% tariffs on wine if they continue to move forward with their proposed taxes of American tech companies. We also have the CEOs of AI firms here, as we have these sort of reports about AI nationalism from the United States. So a really packed agenda here, Vani. We'll be watching it very closely. And I think for Emmanuel Macron, really an opportunity to put on display his relationship with Donald Trump, and of course putting forward that dinner, that invitation to President Trump, which I think he knew would be irresistible to the President of the United States, dinner in Versailles on Wednesday evening, and again, potentially getting some more inspiration for the Oval Office from the Louis XIV big castle there outside of Paris.
Yes, indeed. Ollie, thank you so much. Oliver Cook there, and of course Bloomberg's Abir Abu Omar. Oil sinking following that interim deal between the US and Iran. Let's bring in Ven Ram, Bloomberg MLive macro strategist. Then the deal gets signed Friday. We don't have any details except for the fact that, you know, oil is going to start transiting presumably immediately, but we don't know how long it will take to get those barrels back to market. Is this an appropriate market response?
Well, I think that the market response has been measured, Vonnie, and insofar as that is being measured, I think that's valid because, you know, after all, we've got a deal. Whether or not it holds and whether what the fine print shows on Friday, we'll see. But I think there is grounds to be optimistic here. But as I was saying, the markets are measuredly optimistic, which is what makes me even more enthusiastic about the way the markets have taken to it. If you look at the rates market, Vonnie, I think that, you know, the rally has been rather mild. And, you know, investors are thinking that, you know, some of the major central banks will still have to raise rates despite the end to the war. And that is notable in the pricing for the ECB and the Bank of England, and also the largely unchanged for the US as well. So I think that the markets aren't running away with the script. So I think that gives a lot of hope that, you know, this rally can continue, provided the details on Friday bear out that optimism.
Yes, and that we get to Friday without any hiccups. Can I ask you about yields? Because we're pricing in just about 16 basis points of a hike now by the end of the year. That's down, you know, from a full rate hike by the end of the year. Does this take the pressure off Kevin Warsh, or will he still sort of feel like the CPI data shows a little bit too much inflation pressure?
I wouldn't be surprised at all that if Kevin Warsh came in and said, look, we need a period of temporary higher interest rates before we are able to lower them. And that is the risk that the markets haven't cottoned onto, haven't priced at all. And I think there is that distinct element where Kevin Warsh, we have known him to be hawk in his previous avatars, and I think that he can be hawkish regardless of what Trump wants, and says, look, we need to contain inflation first before we get down to cutting rates. And you know what is going to make it even more tricky is that he doesn't want the dot plot, he doesn't want the summary for economic projections, he doesn't want the Fed's he doesn't want the guidance. So he could very well do away with all those three factors, which means that rates volatility will uncork, which is a factor that the markets aren't pricing in yet.
No, indeed. In fact, the MOVE index is at a multi-year low. Ben Ram of Bloomberg M Live, thank you so much. Now to other top stories trending on the terminal this morning. The US government has ordered Anthropic to disable access to its most advanced AI platforms for all foreign nationals. This after discovering it's possible to, quote, jailbreak the guardrails of the Fable 5 AI model. The order is the most significant incursion by US officials into an AI company's operations. Anthropic called it a disproportionate response and said the move could, quote, hold all new model deployments for all frontier model providers. Shares of SpaceX higher again in the pre-market after its blockbuster Friday trading debut. Shares climbed as much as 7.7%, pushing it on track to extend Friday's 19% gain that gave the company a $2.1 trillion market value. Its strong debut boosting the IPO prospects for Anthropic and OpenAI. UniCredit and Commerzbank escalate their takeover battle, with both companies accusing the other of distorting information and appealing to the German securities regulator BaFin to step in. The dispute centres around whether tendered shares accurately reflect investor support for UniCredit's roughly $44.6 billion bid for Commerzbank. Coming up, Sam Riggel, CEO of Sunrise Energy Metals, talks China's control of the rare earth supply chain as G7 leaders gather in France. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about. Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
I'm Bonnie Quinn in New York. rare earths, also on the agenda at the G7 Leaders Summit in France as countries seek to reduce dependency on China. China accounted for around 70% of rare earths mined last year and controls 80 to 85% of the supply of scandium. Sunrise Energy Metals pledges to mine enough scandium to meet global demand as part of its Sisterston Scandium project. Sunrise Energy Metals CEO Sam Riggle joins us now. So, Sam, just to let everybody know, scandium is used in everything from, defense and aerospace components to bicycle frames and literally lacrosse sticks and even revolvers, as I understand it. Is your mine up and running? At what point will you be actually taking scandium out for use?
The mine is not up and running yet. It's under construction. So it's one of the most advanced critical minerals development programs or projects today. And we hope to be producing first scandium from the mine site in the middle of 2028. It is not an easy material to mine. While it's in the Earth's crust in lots of parts of the world, it's very hard to find this material in high concentration. And in this part of New South Wales, we have some of the highest grade scandium in the world. So we're rushing as quickly as possible to get this project to market.
And what's the projection for when you will actually make revenue from this, Sam? I know that your stock has appreciated literally 2,900% over the last year, but in the last couple of years it has traded in the pennies because that's what happens with miners, right? Investors are scared that there's going to be dilutory, equity raises and so on. Does this stave that off for now?
This is a relatively capital-light project to build, and we have principally China to thank for the interest in the stock over the last couple of years. China's extreme export controls on scandium in particular is what they consider to be a dual-use item for both civilian and defence purposes, really woke the market to understanding how critical this metal is. You pointed to the fact that it's used in all sorts of applications, bicycles, revolvers, but also on key pieces of infrastructure and technology like semiconductors, solid oxide fuel cells that are building the power generation infrastructure to power AI, advanced defence alloys that are used in 3D printed components and cannot perform and cannot reach the sorts of strength and durability that are needed from other alloys. These are the markets that scandium services, and without scandium, it's not tried to say that we would be back to a 3G world tomorrow if we didn't have scandium available for the semiconductor industry, for example.
Absolutely, and I know you just invested $5 million in a company based out of UPenn called Agni Semiconductor. It's half its $10 million seed round. It's a fairly new semiconductor company, and you're looking to own about 30% of it eventually to make sure you have a client, I guess, downstream, right? Why would you need that if scandium is in such demand by so many industries?
Well, a couple of things. One thing is that this technology is extraordinary, what the Agni team have developed. They've developed a non-volatile memory built not on transistors and capacitors, but on ferroelectric diodes. So the ability to pack memory together into a very compressed package that doesn't need constant electrical current feeding it promises enormous potential, particularly for AI infrastructure where real energy bottlenecks and constraints apply. The second part, obviously, is that it is a technology that depends on scandium, much like wireless communications chips do. And the part that really interests us there is that we need to start building out not just the upstream part of this supply chain, we also need to start filling the gaps down to the end user. And we're making some really strategic investments at the moment to ensure that not only will we be providing the raw materials to supply to US, European, Japanese, Korean customers, but that at every point in that supply chain where products need to be converted into something else, we have the ability to provide that service.
Now, the rare earth deal that President Trump made with Australia, is that what made this investment possible and even attractive? What else does it allow you to do?
Oh, look, it was certainly a big catalyst for the support of this project and the impact on, I guess, the share price you saw over the last 18 months here. There is very strong support coming out of the US at the moment. And as we saw last year at the G7 meeting, which is currently being held, the discussion was very much focused on how do we incentivise enough new Western capacity to address our supply and demand issues. And that was very much focused on how do you liberate capital to do that. The discussion this year is going to be quite different. Once you accept that Western supply will be built, the issue then very quickly becomes how do you make it sustainable over the long run? And in many industries, if you build new capacity in the West but continue to allow China to control a lot of these markets, these businesses will not be around for long. It will be sunk and wasted capital. So there needs to be a lot of thought put into the policy settings that will allow Western nations not only to build these mines efficiently, but also to ensure that they can play on a level playing field over the long run.
Well, Sam, we're looking forward to seeing what comes out of the G7. It's a fascinating rare earth, and looking forward to watching your progress as well. Sam Riegel of Sunrise Energy Metals. Coming up, we'll look at what energy executives are saying about the reopening potentially of the Strait of Hormuz. A look at what else is making headlines in your front page news next.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal is reporting executives in the oil industry have been sounding the alarm over dwindling stockpiles. For 15 weeks, the US and other countries have been having to dip into oil tanks, salt caverns and strategic reserves to make up for the millions of barrels trapped behind the Strait of Hormuz. Now, with stocks nearing critical levels, the speed at which these barrels can return to market will determine the trajectory of energy prices. Next up, the New York Times on the UFC cage match at the White House Sunday night for President Trump's 80th birthday. The crowd included the tech and media billionaires Mark Zuckerberg and David Ellison. Knicks owner James Dolan also in attendance. And the Washington Post reporting on a skydiving plane crash in which 12 people died in Missouri, 65 miles south of Kansas City. The Post says the plane failed to gain altitude on takeoff, then hit the ground at a steep angle. The pilot and 11 passengers on their way to spend the afternoon skydiving were unable to evacuate. Aviation officials will investigate the crash. Coming up, Kelsey Barrow of JP Morgan Asset Management as the peace deal in the Middle East fuels a relief rally. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Interim deal. The U.S. and Iran reach a deal to open the Strait of Hormuz, but it does leave key sticking points for the next stage of talks. Global relief rally, stocks rising, bonds also gaining, oil down to a 3-month low after the U.S. and Iran agreed to end the war. And traders basing for a big week in central bank decisions, with the Fed voting on rates under new Fed Chair Kevin Warsh. So we're back at early March levels on oil, with Brent crude, the front month contract, below $83 a barrel. WTI just sticking around the $80 a barrel mark. The oil market apparently waiting for an actual signature and very much the details on how and when the strait will reopen and whether it will be easy to pass through, when shippers will feel comfortable sending their ships back through. But it looks like the oil market is pricing in some relief, at least right before potentially we came to critical levels on those reserves. We're seeing it across asset classes. Futures pointing to really nice gains this Monday morning for the S&P, the Nasdaq 100 and the Russell 2000, which itself hit a record on Friday, as did the equal weight S&P. We've been seeing a little bit of rotation, obviously. It's been a couple of weeks since we saw the cap-weighted S&P and Nasdaq 100 hit a record, but even that phrase alone is quite surprising. We did still hit records for those in June. Now, it also bears looking at the bond market because, of course, we have that Fed decision this week, and yields are much lower this Monday morning once again. So we're down to 404 and change on the 2-year, 444 in the 10-year, and well below that mark that we had seen last week with the 30-year at 494.34, taking out some basis points of potential hikes priced in before the end of the year. So U.S. and Iranian officials meeting in Switzerland on Friday to sign an agreement to end the 3-month war and reopen the Strait of Hormuz. That's the current situation. Let's get more from Bloomberg's Abir Abu Omar in Dubai. Abir, no text released. What do we know so far about what's actually in this memorandum that is apparently going to get signed by everybody?
Good morning, Vonnie. So perhaps we know a little bit more detail over the past 30 minutes since we last spoke. Fars news agency, that is state-affiliated media in Iran, is citing a person familiar with the matter, saying that Iran is not going to charge any fees in the Strait of Hormuz over the 60-day period that will take place after the MOU is signed on Friday. So if you remember, Vonnie, we had spoken over the past couple of months about Iran working on this mechanism with Oman to be able to issue fees to tankers going through the Strait of Hormuz. Now, what this report is suggesting is that this fee is not going to be implemented over the next 60 days. What happens afterwards could very much be a fee that is implemented. It's not clear how the U.S. is going to respond to this or whether this is part of the wider negotiations that will take place. But just to go back on the MOU itself and what details there are, we don't have a text of it yet. We know that we're going to get a text after the interim deal is signed later this week on Friday, June 17th in Geneva. But what we know about it, very little. It's that the Strait of Hormuz will be reopened immediately with the little caveat that I just provided to you, and then the 60-day period of a ceasefire that is extended upon the arrival of the 60th day. Both the U.S. and Iran will be negotiating Iran's nuclear plans and its nuclear weapon plans, according to the United States side. And then if that sort of goes into effect, then that is good news for the United States. If it doesn't, then both sides could agree to either extend that 60-day period for more, or we could see a return to hostilities. President Trump did say that if both sides do not get their concessions met by the end of that ceasefire period, he could go back to militarily get involved in Iran again. That is most of what we know. Some of the other things that we had spoken about multiple times, the blocked assets, the oil sanctions, we don't have much clarity on that yet. But once the MOU is released, we'll get to understand just a little bit better what the both sides had agreed to overnight.
Do we know what role Israel is going to play or how that will proceed? At one point, Iran had said this will not be signed if Israel continues bombing in Lebanon.
Yeah, so that's another thing that is unclear, Vonnie. We've heard from multiple Israeli officials since the agreement was reached this morning. That includes Israel Katz, the defense minister, national security minister, Ben Gvir, and also Smotrich. Those are hardliners in Israel. And all of them were pretty much against the deal that is being signed or the deal that is taking place right now. All of them saying that the incursion in Lebanon is not going to stop. Ben Gvir saying that essentially Israel is not binded by this MOU between Iran and the United States, saying that the hostilities by Hezbollah have to be responded to and that Israel has to sort of tackle those. And so it's quite a good question when we talk about Israel. You mentioned that Iran had refused to come to the negotiating table earlier in the negotiation phase unless Israel stops its hostilities against Lebanon. So we don't know what exactly will take place. President Trump himself said that Prime Minister Netanyahu had been quite difficult in this whole negotiating phase. So another sticking point that we'll have to wait and see how it takes shape over the next week or so, Vonnie.
All right, Abir, thank you so much for the update. That's Abir Abu Omar in Dubai. Joining us now is Kelsey Barrow, Fixed Income Portfolio Manager at JP Morgan Asset Management. Kelsey, do we have a little more clarity today than we did, let's say, Thursday or even Friday?
Perhaps a little bit more clarity. I think people are probably waiting to see the text of the agreement to really understand what's going on. What I've noticed looking at the bond market is the reaction yields are lower today, probably less so than I would have expected given the move in oil. And I think some of that has to do with the other event risks that are coming up this week, particularly the Fed. So if you were just to look at the level of oil and try to map what the 10-year yield should be based on the relationship since the start of the war, the 10-year yield should probably be closer to 420, 430 than 440. But as we know, since the war, a lot of things have happened. We've had better labor market data. We've had the hotter CPI as a result of higher energy prices. And as a result, you've had higher real yields. And, there is still an event risk to get through here, which is, I think, why, the rally in 10-year across the Treasury curve today is maybe a little bit more muted than what you would have expected, given that we have reached this deal.
Well, that said, we also got inflation data last week that might have cheered investors just a little bit. It could have been hotter, right? We didn't see that much of a pass-through from oil gains, for example, or the war, if you like. Does that take the pressure off Kevin Warsh, or is he still looking at potentially wanting to convince people that a hike is necessary at some point?
So I think that this meeting has really come together for him. Our expectation is that he's going to be able to keep the committee fairly in line. In fact, for the first time in a while, we may have no dissenters because I think the committee has already really coalesced around a consensus, which is the Fed needs to stay on hold and we need to remove the easing bias within the statement. If they do those two things, I think really most of the FOMC right now is on the same page.
The deal here, assuming it does get signed on Friday and nothing derails between now and then, really does sort of help that process, right? If oil gets back on the market, we're not likely to see at least inflation continue to rise, or are we? Are there other things in the economy that might cause inflation to continue to rise?
Yeah, so when we looked through the CPI data last week, we really did feel that the majority of the stickiness in core inflation is still a function of supply shocks rather than overheating demand. So last year, it was the tariffs. We're actually seeing signs that the tariff inflation is really starting to burn off in terms of the impact on the data. And now, of course, we have the energy impact, which impacts core inflation primarily through airfares, which is considered a core part of CPI. But when we look at the broader inflation picture, particularly the two things that we're more focused on as it relates to the demand side of the inflation picture are wages and shelter. Wages continue to moderate, and that's interesting, particularly because we have seen a reacceleration in growth, in job growth, for example. And shelter inflation continues to remain fairly well behaved. And so to us, that's a sign that despite the fact that the labor market has improved more recently, job growth has reaccelerated, and that has reduced the negative left tail risk associated with a much weaker labor market. It still looks like we're generally in balance, in equilibrium. This isn't a labor market that is really producing a lot of inflation heat that the Fed has to be concerned about at this point.
So we're seeing a rally today. Do we continue to see that throughout the week if we get, the removal of the easing bias, but nothing else, particularly from the Fed?
Yeah, so there's two things really at this point. We have the Fed. We also have retail sales this week, which I do think will be interesting because we are still trying to assess how the consumer is managing higher gasoline prices. Now, hopefully, the peak in gasoline prices is now in the rearview mirror, but we have seen pressure on real incomes, the savings rate, real disposable incomes, and we want to see how the consumer is handling that. But I do think relative to what is priced into the market, which as I look this morning, it's still about a 75% chance of a rate hike by the end of the year. I do think that if we were to get the Fed on hold, remove the easing bias, but within the dot plot, still show a bias towards cuts in the out years, that would be considered a bit of a relief for the market. And as long as the MOU deal continues to be in place, we could rally throughout the course of this week.
Marvin Lowe of State Street last week told us that on the balance sheet, the ship has sailed for the Fed. It'll be difficult for Kevin Warsh to actually downsize the balance sheet or right-size it, as he's presumably going to characterize it. What do you think at JP Morgan Asset Management? Is the balance sheet going to be a problem?
So we think that the balance sheet is about as small as it can be, given the environment that we're in. So, you know, they've gone through a balance sheet normalization. They had to stop that in December because, you know, the way that we like to look at the balance sheet is looking at the size of the balance sheet relative to GDP, and that's around 20% right now. And it can't get much smaller than that, just given two things. One, the economy has grown, so the balance sheet should always be growing in size, regardless of if you're doing QE or not doing QE, just because of the growth in currency and circulation. And then also you have banks, large banks, which hold reserves at the Fed. As long as they are required to hold those reserves at the Fed, that is another reason why the banks, the balance sheet stays large. So we're not seeing any real concerns there. You know, I do think that one thing that the Fed is doing behind the scenes that maybe people have forgotten about is continue to normalize the composition of the balance sheet by running down agency mortgages and reinvesting them back into treasuries. I'm sure that's something that Kevin Warsh is supportive of, but in terms of wholesale shifts to the balance sheet right now, don't see that as a base case.
All right, Kelsey, cannot wait to see what happens on Wednesday and how it happens, right? How he's going to address the public. Kelsey Barrow of JP Morgan Asset Management joining us this morning. Now to other top stories trending on the terminal. Former Fed Governor Stephen Myron is set to return to his former hedge fund. Axios reporting that he'll be returning to Hudson Bay Capital as senior strategist. He spent about a year at Hudson Bay before joining the Trump administration. UniCredit and Commerzbank escalate their takeover battle, with both companies accusing the other of distorting information and appealing to the German securities regulator BaFin to step in. The dispute centres on whether tendered shares accurately reflect investor support for UniCredit's roughly $44.6 billion bid for Commerzbank. New York City officials are ramping up preparations for a ticker tape parade on Thursday, celebrating the Knicks' NBA championship win. It's set to kick off at 10 a.m. Eastern near Battery Park and travel north along a section of Broadway known as the Canyon of Heroes before ending at City Hall. It'll be the first ticker tape parade in Knicks franchise history. Coming up, Anthropic shutting down Mythos following an order from the U.S. government. We'll get the details. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Anthropic shutting down its most advanced AI models, including Mythos, following an unprecedented order by the Trump administration to keep the technology out of the hands of foreign nationals. Bloomberg senior market strategist Neil Campling joins us now for more. Neil, what exactly is the threat here? If it's a threat in terms of cybersecurity, is it just foreign nationals whose hands it should be kept out of?
Good morning, Bonnie. So it appears that what's happened is that a third party, so I presume a client of Anthropic that was using the new tools, which were the advanced models, Fable 5, Mythos 5, found basically that they became aware of a method of bypassing, which is known as jailbreaking the models. So in other words, a way of effectively getting around the safeguards that Anthropic had actually put in place. So it appears that the government were made aware of this ability to bypass these safeguards. And now we have this situation where, as you mentioned, we have this export control in place, a directive in place. And it means that we now have, under national security concerns, that the company have actually had to disable access for foreign national employees as well as all international usage. Now, this is it's a dramatic standoff between the company and the administration. And Anthropic themselves had actually said that the safeguards they felt was so strong that many users had complained that they were too broad and too restricted. So it's an interesting turn of developments, given that these new tools had only been in the marketplace for 3 days.
Is this government turning regulator, or is it government turning punisher, Neil?
It's an interesting way of analysing it. I suppose the fact is these tools are so powerful and we don't know exactly their capabilities in many senses. So I don't think the government wants to restrict the overall usage of AI too much, because if we look at the impact of AI on the growth in the US economy, the trillions of dollars that are being spent on building out the infrastructure, technology and AI are crucial to the whole growth of the US economy and actually propping up a global economy. So I don't think they want to be too restrictive, but at the same time, they probably also want to ensure that the tools are obviously set for viable standards, and also to be used in the best interest of the US government and the US corporations as well.
Neil, can I ask you about SpaceX? So shares obviously closed 19% higher on Friday. I do want to point out that was not from the first print, though. That was from the IPO price of $135. The momentum looks like it might start to continue again today. What is the verdict on the street?
I think the verdict is that, given this is, as you mentioned, the biggest IPO ever and a huge amount of stock that came to market, the fact that the IPO went well, and by that I also mean that it wasn't volatile in that the stock didn't halve and it didn't double. It seemed to be well received by the market. It's reacting again well today. And actually, interesting article on the Terminal today called "In the Big Take" talking about JP Morgan estimating of $1.5 trillion of equity issuance coming to the market in IPOs and in secondaries over the next 2 years, suggesting that there's a lot of appetite and good consumption of that liquidity coming into the marketplace. So it's definitely a healthy reaction, I think, from market and investors for sure.
Yeah, as long as conditions remain the same, I guess that could be true. Neil, thank you so much. Bloomberg's Neil Campling. Coming up, we'll get you set up for your trading week with the G7 and central bank decisions on deck. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead for you for this week. Obviously, the G7 Leaders Summit in France kicks off today, and we're anticipating some kind of a signing at that on Friday. We get rate decisions as well this week from the BOJ on Tuesday, the Federal Reserve on Wednesday. That's the first, obviously, under the new Fed chair, Kevin Warsh, and of course for the BOJ, the market anticipating a rate hike. And on Friday, the US and Iran will meet in Switzerland to formally sign that deal to reopen the Strait of Hormuz. Let's get a look at some pre-market movers now. SpaceX is higher in its first pre-market session, up 6%. Now, bear in mind, we opened on Friday at 150, up from the IPO price of 135 by 11%. The high print on Friday was 176.52. So we're opening potentially below that today. Nevertheless, a good start for the second day of the SpaceX trade. Robinhood markets as well benefiting from that, and record amounts of traffic on Friday after SpaceX's debut is benefiting to the tune of 3.5% pre-market. And Paramount Skydance also had a little bit of news over the weekend. The deal with Warner Brothers Discovery cleared by the Department of Justice, and Paramount is up 4%. All right, let's take a look at your macro picture going into this Monday with a little bit of enthusiasm potentially for this memorandum of understanding that is presumably going to be signed on Friday. All the parties are in agreement about that right now. So WTI down 5.6%. We're at levels that we saw around the 10th of March. And it's the same with Brent crude. We're just below $83 a barrel, so down 5.2%. The further out contracts are also much, much lower. We'll see how fast ships will actually start transiting the strait and when shippers will feel comfortable letting their crews go through. But for the moment, it's risk on around the world. Let's take a look at futures. Pointed higher across the board. We have NASDAQ 100 futures particularly pointing to a gain of 2%. And the Russell 2000 hit a record on Friday, as did the equal weight index for the S&P. Not the cap weight index. We haven't seen a record for the cap weight index since June 2nd, all of 2 weeks ago. And then in the bond universe, you can see that as well. Also the fact that this takes the pressure off the Fed a little bit on rate hikes, so the possibility of a rate hike is now at about 16 basis points priced in, as opposed to 25 basis points priced in before we got the news of the war. We have the 10-year yield at 4.4453, and we're well down now from our highs of 5.02 and change last week. We're at 4.9454 at the long end. That is it for Bloomberg Brief. Surveillance continues the conversation next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We're at the beginning of a new frontier here.
This is a broad-based demand for capital. SpaceX orbital AI infrastructure is a venture capital style bet that's being treated as index fund mature and certain.
The Musk premium is extremely significant. It's critical.
Speculation is alive and well. Expectations are very high, and this really sets up the stage for disappointment.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York City. Welcome to Bloomberg Surveillance. Oil plunging as the U.S.-Iranian truce is consolidated right now. Stocks and bonds surging ahead of world leaders gathering in France for the annual G7 meeting, and investors looking for guidance from a new Fed chair, Kevin Warsh, at Wednesday's Fed meeting. For now, very much risk on, at least in here in orange and blue, and Marie Hordern, as the U.S. and Iran lower the temperature. It seems like everyone is cheering this morning.
Yeah, everyone's cheering, especially the markets, when they look at what's going on in terms of Iran. And obviously in New York, in terms of what's going on for the Knicks, we'll get to that later. I'm back from San Antonio. So you're saying that it's very much risk on, U.S.-Iran lowering the temperature. The question I have is for how long? Because we are getting very different reports from Fars News Agency in terms of what they see this deal going forward and progressing, in terms of what the White House sees it going forward. What the market cares about right now is that likely those 600 tankers that are trapped, potentially they're going to be the ones that get out first.
Yeah, the idea is that the Strait of Hormuz at least is going to be open for traffic at least as of Friday, and then potentially for 60 days as they deal with some of the hairier issues. In the meantime, the G7 meeting really is going to be the place where all of this is announced and celebrated, including some of the attendees that are not part of G7, the Middle East, as well as some of the tech founders. What exactly is going to be coming out of those meetings?
I think what we want to look forward to into the G7 is how much these allies line up with the United States in helping to reopen the Strait of Hormuz. Remember, NATO said by July, as long as there's a peace agreement, we are going to be sending vessels. Well, it looks like now the UK, Italy, some of these countries are saying we are going to help the United States. Remember, the Iranians mined the Strait of Hormuz. You have to clear those mines and give the confidence to these captains on these ships to take that journey to traverse the Strait of Hormuz and not be attacked.
In the meantime, oil prices are plunging, and you can see a real kind of sense that maybe this is over. If you take a look at equity markets surging around the world ahead of what is going to be a massive week, up 2% on the NASDAQ futures, up 1.5% on the Russell 2000, and the S&P up 1.2%. When you take a look at the bond space, this is what's underscoring the idea of potentially a broadening out in the equity space, plunging, more so actually, frankly, in Europe than over here in the U.S. But the 10-year yield down 3 basis points. The 2-year yield down 4 basis points. Now just one rate hike being priced in for 2026, 4.04%. And the why behind it has been the oil space. You can see oil prices plunging to the lowest levels in more than 3 months, down more than 5% on Brent and WTI. In a sense, and Anne-Marie, you were talking with some of the people who are most involved in this, including Chris Wright, the Energy Secretary, talking about how there already are a lot more barrels flowing through than many people had expected.
Yeah, on Friday in Houston, Chris Wright said 7 million barrels a day are now flowing to the Strait of Hormuz. That's where they see the flow. Then I spoke to the Chevron CEO, Mike Wirth, and his team sees it more as about 3 million barrels a day. JP Morgan has it right in the middle at 5 million barrels a day. But what we do know is that there was about 2,000 vessels that are trapped. It's closer now to more than 600 and 1,000, according to Kepler data. So vessels are getting out. The question, of course, is going to be how long until we get to the exact flow we had before this conflict began.
Yeah, and get the barnacles off some of these ships that can get going. Jonathan Farrow is off this week, conveniently, as World Cup heats up. Coming up this hour, Cameron Dawson of New Edge Wealth will be joining us as markets rally on news of a U.S.-Iran peace deal. Rocket Lab President and CEO Peter Beck on space as the new AI frontier, and Leslie Falconio of UBS predicting a hawkish turn at the Federal Reserve. That meeting is on Wednesday. We begin this hour, though, with stocks pushing higher and crude sinking as the U.S. and Iran reach a tentative deal to end the war. Bloomberg's Abir Abu-Ammar joins us now from Dubai. Abir, what's the latest in terms of what actually has been agreed to that will go into a place on Friday?
Good morning. So look, what we know as of now is that this MOU is going to be signed on the 19th. That is Friday at the sidelines of G7. We don't have a lot of clarity on what exactly are the details in the MOU. What we know so far is that it will ensue the immediate reopening of the Strait of Hormuz and then be followed by a 60-day period where more technical negotiations will take place with the goal of getting the Iran nuclear program on the table, essentially, and that is what President Trump said will be negotiated. Now, some details have been coming out over the past hour or so from Fars News Agency on the Iranian side, saying that for this 60-day period, Iran and Oman are not going to be charging tolls for the tankers and the ships that are going to be going through. Now, if you remember, over the past couple of months or so, we've been discussing this mechanism that Iran was negotiating with its Omani allies to start charging tolls once the strait reopens. Now, Iran does say that for this period it is not going to do that, but afterwards that may very much be the case. It's unclear what the U.S. response to this mechanism will be. We still have to wait and see what the exact details in this interim deal are going to be, and it is going to be released after the signing takes place in Geneva on Friday. But what we know for the time being, again, is we have the immediate reopening of Hormuz. We have the 60-day ceasefire. Once that comes to fruition, if the nuclear program is negotiated, that's good news for the U.S. If not, they could go either way. They could either extend the ceasefire further, or President Trump did threaten to go back to military strikes against Iran. Now, some of the concessions that we've discussed multiple times over the past couple of months, that includes the $24 billion of frozen assets, the oil sanctions, the lifting of those we don't have much clarity on yet. Overnight, when the deal was, or when the agreement was reached, both sides have started very quickly coming out with diverging statements about what concessions were actually reached. And so we still have a little bit of lack of clarity when it comes to what the U.S. agreed to and what Iran, in turn, had agreed to. So everything hinges on that signing ceremony that will be hosted by Pakistan later this week in Geneva. So we wait and see what happens there.
Abir Abu Omar, thank you so much for being with us and all of your reporting. Here's a view from Wall Street. Cameron Dawson of New Edge Wealth writing, after a small pullback to trend, the market mood is still resoundingly risk on despite real risks. This uptrend should be respected. Cameron joins us now for more, and I believe you wrote that even before the agreement was signed.
Yeah.
This seems like a different moment, and the market is treating it as more real as some of the other inroads into a peace deal. What's so different this time around?
I think what is different is that there seems to be at least some confirmation that there is some kind of agreement moving forward with Iran, and that is certainly breathing life into areas of the market that have lagged since the start of the war. If you look at the non-S&P 500 AI trade, meaning those areas that don't have any exposure to AI, they're only up about 1% since the beginning of the war. Compare that to AI, which is up 47% since the start of the war. So we know that this market has been able to make new highs because of the AI trade, with a lot of other areas of the market left behind. So it's those left behind areas that have the most potential, of course, for some kind of catch-up trade, some kind of bid, as we see a broadening out potentially in some of this kind of relief in the rotation.
How much is this really tied to the idea that it takes heat away from the central banks to have to be sort of punitive and raise rates in the face of inflation?
I think that that is a big factor in all of this, because if we looked at the upward pressure on oil prices that fed into gasoline prices, fed into diesel prices, all of that created that upward pressure on inflation, upward pressure on interest rates, and expectations for a more hawkish Fed, or potentially more hawkish Fed. So it's those areas of the market that could see the greatest potential. Look at the things like financials finally trading back above their 200-day moving average on Friday. You saw the equal weight S&P 500 hit a new high on Friday, so maybe markets are omnipotent and they were kind of sniffing out some of this as we saw the broadening come back. But that certainly can relieve some of the pressure in areas of the market that had been, again, left behind.
The devil's in the details, though, and that's where this deal is going to be incredibly challenging, between what the Iranians have on their red lines and what the White House has. Does the market not care about that longer-term deal, given the fact that this does look like we're going to have the Strait of Hormuz open?
I think the market just cares about how much oil is moving through the strait. Whether or not what that deal looks like, the market, I think, doesn't care as much. And it will then focus on what is the impact to gasoline prices. We have the daily average national gasoline price that's about just slightly above $4 a gallon. Do we see that continue to fall going into a period of peak driving season? Because again, it's gasoline, it's diesel prices that feed into inflation prints. And as we saw inflation on a headline basis reach very high levels and possibly eye-popping levels last week in the data, and even core inflation move higher, that of course what was putting pressure on the Fed to potentially hike. But now those rate hike backs for the full year this year look to be at just 72% of the chance of a hike by the end of the year.
Yeah, this morning, national gasoline is just over $4, $4.06, which is kind of insane given the fact the Strait of Hormuz is still closed. Is there any scarring, though, that you can see continue from this episode?
There's certainly going to be scarring because we know that infrastructure has been damaged. And so the other question is, should you have a premium on oil prices given the fact that if Iran is allowed to charge a toll, does that effectively give them some kind of hegemony in Middle East oil flows that suggests that we can't go back to pre-war levels of oil prices, which just would keep that upward pressure and on gasoline prices as well. So I think that is the big question of how much markets are willing to look past some of that infrastructure destruction as well as continued risk in order to push oil prices even lower.
As you mentioned before, the market moved on. The market really has looked through a lot of this and looked to the areas that are potentially immune to a lot of this, which is the existential spending on artificial intelligence and including space. And we've seen the SpaceX IPO continue to outperform. It was up some 19% from the IPO price on Friday. Today, you're seeing it pop another 5% in pre-market trading. Is this healthy? Does that give you a sense of calm and ease, or does that give you a sense of concern?
I mean, it's been a full party on Garth kind of risk on moment for this market because it's not just SpaceX. It's, of course, what we've seen in unprofitable tech, up over 60%. And given the fact that how overbought some of these areas got back just a couple of weeks ago, and they had a little bit of a correction, pulled right back to their 50-day moving average and kept on rallying, that certainly shows you that risk appetite is completely alive and well. I think the question we have for the AI trade going forward is that if you look at the people spending the money, the hyperscalers, these are the people that are fueling the rallies in these infrastructure trades. Names like Microsoft, Oracle, Meta are all trading really heavy. They're down some 20, 30% off their prior highs. If you continue to see the market effectively punish them for spending all of their cash flow and also other people's money with debt and equity market raises, could we be in a scenario that as we look to 2027, there's less upside to hyperscaler CapEx forecasts simply because the market is not rewarding them anymore?
Can you see a time where you actually are unprofitable at a place like Microsoft or, say, Amazon?
Not unprofitable, but certainly free cash flow negative. And that's all because of the way the accounting works, given the fact that they're able to spread out the depreciation of these hyperscaler, of this CapEx over a longer period of time. Also, don't forget they're getting a boost from accelerated depreciation because of OBBB. That's effectively allowing them to get the tax benefit of spending all this money as well. So you do have names like Amazon that are now free cash flow negative because they're spending so much money, and that is showing up in the share prices. And I think a really big question as we go into 27 is the street is expecting to see growth in CapEx of another 20 to 50%, depending on who you talk to. However, that's on a basis of 80% growth this year. And you're already starting to see the market push back a little bit on those CapEx increases. Look at the way that Oracle is trading. So all of this AI CapEx infrastructure trade is based on this idea that hyperscalers will continue to increase their CapEx forecasts. If they don't do so, that would be the area or the opportunity for disappointment.
Cameron Dawson, you're going to be sticking with us, which is a wonderful thing. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. The U.S. and Iran reaching an interim agreement to end the war and reopen the Strait of Hormuz. Officials from the two countries will meet in Switzerland to formally sign the agreement on Friday, setting the stage for 60 days of negotiations on the fate of Tehran's nuclear program. SpaceX shares are trading higher in the pre-market following its Friday debut that vaulted it into the ranks of the world's most valuable public companies. Today will mark SpaceX's first full trading session. It gained 19% on Friday. The New York Knicks are NBA champions. The city will hold its first ever ticker tape parade for the team this Thursday. Mayor Zoran Mamdani saying he'll hold a ceremony at City Hall where his administration will present the Knicks with keys to the city. And that is your Bloomberg Brief. Lisa.
All right. AMH.
First championship since 1973.
Go ahead.
I was there.
I mean, you're just
I saw
waiting for
Patrick
it.
Ewing. I saw everyone. It was actually incredible. And it really was the sixth borough of the night because honestly, it felt like 75% of the stadium were Knick fans.
All right.
Everyone knew it was going to be
Usually,
Game 5.
okay, Philadelphia, when they said Philadelphia is a stretch, but you start talking about San Antonio. That said, it has been an amazing moment where even a Yankees fan and a Mets fan can come together.
This is why it's so incredible for New York.
And have enthusiasm for New York
Everyone
City.
could coalesce around the Knicks. You could be a Jets or Giants fan, Mets or Yankees, but everyone will love the Knicks. This is so incredible for New York.
Maybe the Mets can actually stage a comeback now. Up next, the AI race on the global stage.
We're leading China. We're leading everybody in the world with AI, and we want to keep it that way. We're totally leading the AI race and the artificial intelligence.
America is going to win it.
Tyler Kendall joins us from the G7 summit in France next. Plus, more with Cameron Dawson of New York. This is Surveillance.
Your script? Hello? Your script?
I will show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The collective cheer you hear is New York City celebrating the New York Knicks, as well as people looking to a possible truce between the U.S. and Iran. Right now, you can see markets around the world collectively sighing relief that maybe, just maybe, we'll start to see oil and all the other commodities flowing through the Strait of Hormuz. S&P futures up 1.2% in pre-market trading. You can see the euro gaining versus the dollar, and this is sort of a collective dollar weakening as everything else starts to broaden out and see the potential gains from a less constricted Strait of Hormuz. 10-year yields lower by about 4 basis points, 4.44% ahead of that Fed meeting on Wednesday. Crude is the big driver, down 5.7%. $80 for WTI. We are talking about the lowest levels going back to March as people take a look at how this market can right-size after a number of months on the sidelines. Under surveillance this morning, the AI race on the global stage.
We're leading China. We're leading everybody in the world with AI, and we want to keep it that way. We're leading everybody, and I don't want to do anything that's going to get in the way of that lead. We're totally leading the AI race and the artificial intelligence.
America is going to win it.
Here's the latest. Executives from the largest AI companies, including Anthropic, OpenAI, and Google, all heading to France along with the world leaders for the G7 summit. The gathering comes after Anthropic shut off access to its most advanced AI models in response to a U.S. government order. Bloomberg's Tyler Kendall joins us now. Looking beautiful in France. Tyler, it looks like it's a lovely scene there. I'm just curious from your vantage point what the significance of some of these tech leaders being at this G7 meeting really means.
Well, Lisa, this face-to-face meeting between these tech CEOs and G7 leaders is going to be just as much about the potential opportunities around AI, but also the potential risks, because this move by the Trump administration regarding Anthropic marks what's considered to be the most significant move to date by U.S. officials in regards to any AI company's internal operations. And the Commerce Department outlined in this order and threat of an export ban that Anthropic needed to take this action until the U.S. can bolster its own national security apparatus. As people familiar with the matter tell us, that top company executives are now engaging directly with Washington, increasing that dialogue to try to address some of these specific security concerns, because Anthropic says that it believes that the government took this action amid concerns that you could essentially bypass some of the guardrails regarding Mythos. But they added that they think that the U.S. is going too far. They say that this is a disproportionate response, adding in part, quote, "We believe this is a misunderstanding and we are working to restore access as soon as possible." But Lisa, it is definitely sparking the conversation here on the ground. And since we're at the G7, we've actually heard from at least one G7 leader so far, and that's Canadian Prime Minister Mark Carney, who said that the Trump administration's move just underlies and underscores relying too much on only a handful of AI tools. So I think this meeting is going to be a lot about cooperation, but also about that competition.
How unusual is it, Tyler, for corporate executives to join in the G7 meeting and have such a prominent place in it? I believe we've lost Tyler. I hope you enjoy your stay in a lovely France that we're completely jealous of. Tyler Kendall, thank you so much. Cameron Dawson of New Edge Wealth still with us. Cameron, how much are you looking at some of the regulation and some of the crackdown, particularly when it comes to Anthropic, as a path forward for what other tech companies can expect?
Well, I think it's interesting when you think about how people are starting to use some of the Chinese models, not because of security, but because they're simply cheaper. And we were in this environment where people were token maxing and kind of ignoring some of the high costs of the US-based models. But now all of a sudden companies are waking up and saying, oh my gosh, this is a lot more expensive, and even sometimes more expensive than the human versions. And I think the other thing that's really fascinating is that empirical research put out a chart that looked at the amount of code that's being written by AI, but then the amount of code that's actually being deployed by AI being much, much lower. So it's suggesting that as much as there's these security concerns, there's also cost questions for companies as they think about how much they're going to rely on AI to replace humans.
Do you think this is also a signal that the Trump administration is going to have a bit more of a heavier hand when it comes to regulation? Because at first it was, let the models rip, let the competition go, and now it seems like they're really pulling that back. These are some of the biggest export controls we've ever seen.
Yeah, not only to have a heavy hand in regulation, but then also potentially take a stake in the companies in order to have kind of this both sides of things. Look, I think it's obviously this technology has the potential to be very dangerous, which is why there was a stop on some of the rollout of it. And so it suggests that there needs to be regulation. The question as well is, will there be regulation on the state level as well? That's been something that's been debated. So, clearly this is an arms race. The question is, does this matter for markets in the sense that will this stop or slow down any of the spending that's been so important for what's been driving markets higher?
What do you think it means for the upcoming Anthropic IPO?
Well, goodness, I mean, I think that it's a great question, and I don't think that there's necessarily any way to handicap it. The question is, will the market still be willing to look through the fact that they are burning a lot of cash? And I think the key metric to watch for the Anthropic IPO is if you continue to see the huge acceleration in revenue. You've effectively had revenue go from $9 billion at the start of the year to nearly $50 billion today because of the adoption of these models. So if any of this regulation slows the adoption of the models, does it necessarily or potentially slow the growth in the revenue, which of course would be a negative as they were trying to issue shares of a deeply unprofitable company?
We're talking about regulation. We're talking about the potential crackdown with huge controls put on Anthropic's latest and greatest model, the Fable and the Mythos. There is a question around the use of social media for kids under the age of 16 over in the United Kingdom. I'm looking this morning at the AI-related names in the market, pre-market trading. Amazon shares up 1.5%. You could see Alphabet up more than 2%. Meta also rising. There isn't a sense right now that really there is any concern. Is it considered a good thing because it will allow them to create a moat around themselves and it will create a more difficult scenario for anyone trying to be a competitor?
Yeah, look, I mean, these are effectively monopoly businesses. At least their legacy businesses were monopolies. And so if you have regulatory moats that make it harder for new people to enter into this market, it means that it's just far easier to defend your monopolies. I think the thing with AI to remember is that AI effectively is a competitive force that could disrupt these legacy monopolies. And that's the really big question of how these companies continue to spend, because they're spending all of the cash from their legacy monopolies in order to compete in AI. But the question is, will there be one ring, one model to rule them all, which means that not everybody will get the return on invested capital that the market would like in order to justify this degree of heavy capex.
Cameron Dawson, wonderful to see you and kick off a really busy week with you. Cameron Dawson of New Edge Wealth. Ahead of that Fed meeting on Wednesday, and as markets really look to a potential truce between the U.S. and Iran, as reopening the Strait of Hormuz and allowing oil prices to once again be something on the back burner. Coming up, Rocket Lab President and CEO Peter Beck, as the space sector gets a boost from the SpaceX IPO. I promise there won't be too many bad jokes about blasting off and going to the moon. Plus, Yahira Anand with your morning movers. That stock extending gains after its trading debut. This is Bloomberg Surveillance.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is enthusiasm, yes, but it's tepid enthusiasm for the potential for some sort of truce between the U.S. and Iran. It could reopen the strait as soon as Friday and get ships going through. Some 600 tankers and other ships are waiting on the sidelines to go through, possibly more that have had their transponder off. When you take a look at markets, they are up. You do see a rally across the board, but not necessarily as much as you might expect. Over in the U.S., S&P futures up 1.25%. The NASDAQ doing better, up more than 2%. The DAX up 1.25%. Again, you would expect it to be more if you truly believed that oil prices would go plunging down. And then you could see the Kospi closing out up 5.2%. So that levered trade over in South Korea getting the boost that the NASDAQ is getting as people can go back into the tech trade. When you take a look at the bond market, you can see that a lot of central bankers are getting a reprieve. In the U.S., heading over to Wednesday with Federal Reserve Chair Kevin Warsh taking his first time at the podium for this press conference. Yields lower, exactly what he wants to see. Two-year yields down 4 basis points to 4.04%. Definitely giving a reprieve at a time where a lot of people are saying, how is he going to toe the line between President Trump and potentially markets looking for a very, very different outcome?
Well, this is a gift for Kevin Warsh, and it really kicks off the Warsh era where he's going to be answering a lot of questions. A little bit easier for him, saying, well, actually, we are seeing potentially the reopen of the Strait of Hormuz, so we can maybe look through earnestly this oil shock, because prices, and we see that on the board, are dropping. You have WTI at $80 a barrel today. Of course, devil in the details. Fars News Agency is already saying that, okay, the Strait of Hormuz will be open for this 60-day extension, but then after that, they're going to toll for things like safety, navigation, environmental services. That's what the regime is saying. The President of the United States is saying we will not accept a toll. Arab countries will not accept a toll. So this is the start of a deal, but it's going to be messy.
Yeah, you can see those oil prices falling to the lowest going back to the beginning of March, really, down 5% on WTI. $80, an $80 handle after getting up close to 100 just a couple of weeks ago. Brent at $83.05. 3 hours away from the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Well, as SpaceX heads to its first full trading session as a public company, we are seeing shares getting a lift up nearly 5.5% in the pre-market after its blockbuster debut. And helping to fuel those gains are some comments from Elon Musk over the weekend saying that SpaceX could generate $1 trillion in revenue by 2031. That would be a dramatic leap from the $19 billion it generated in revenue last year. Meanwhile, as you said, we are seeing a risk-on mood across markets after the U.S. and Iran said that they agreed to a deal to end the war, and that's helping to fuel gains across the semiconductor industry, but especially in the higher beta names like Micron and SanDisk. Micron jumping 7.3% in the pre-market. And at the same time, as you said, since this deal does include the reopening of the Strait of Hormuz and oil prices are moving lower, that is helping to lift the airline stocks with names like American, United, and Delta all rising in the pre-market on expectations that lower jet fuel costs could help margins, and also this idea of people being more willing to travel with the war over and prices potentially coming down. Lisa.
Thank you so much, Yahira. On our radar this morning, the U.S. and Iran reaching an interim deal to halt the war and reopen the Strait of Hormuz. Officials from both countries will meet in Switzerland on Friday to formally sign the agreement. A 60-day window has been left to negotiate issues around Iran's nuclear program, as well as some other thorny things that have been sticking this deal for a while. UK Prime Minister, meanwhile, Keir Starmer, announcing a ban on social media for children under 16.
Social media is making children unhappy.
It's making it easier for bullies to harass and abuse them. And it could even be harming their mental health, exposing them to content that is dangerous, because that's what grabs the attention. It's designed to be addictive.
The ban will be implemented next spring and follows a similar type of ban that we have seen in Australia. Meanwhile, the U.S. government taking an unprecedented step to rein in artificial intelligence, ordering AI giant Anthropic to suspend access to its most advanced models to keep the technology safe from foreign nationals. Anthropic pushing back on the decision in a statement. So this, to me, is a really interesting conundrum because on one hand, they've been coming out and saying we need more regulation. On the other hand, Anne-Marie, we have seen them really talking about the potential for this to impede their ability to do business.
They seem upset and annoyed with the administration after they've basically been begging out in the open, regulate us, regulate us, regulate us. Well, guess what? The Trump administration said we're putting on export controls. We think this is too dangerous. And now they have a problem with it. The political story has an incredible tidbit that Anthropic seems to be pushing out on. But the administration attempted to reach Dario Amodei, but they were told he was, quote, unavailable because he was attending a wellness retreat. One of the senior administration officials from the White House told Politico, spokesperson for Anthropic rejected this, saying it's absolutely false. I thought that was an interesting tidbit. You couldn't get a hold of your CEO because he's at a wellness retreat when this is potentially one of the most pivotal moments for this company.
Well, it also underscores this sense of unease right now because things are moving very quickly. A lot of money is being raised, and people are wondering exactly what it's being used for, whether it truly is dangerous and essential in equal parts both, or whether it is just an extreme capital raise, which is why people are watching SpaceX as something to potentially be a foreshadowing of what might come with Anthropic and OpenAI's IPOs later this year. SpaceX shares rising in the pre-market ahead of its first full day of trading. Space sector peers are also getting a boost from its record-breaking IPO. Joining us now, Rocket Lab President and CEO Peter Beck. Peter, thank you so much for being with us. You have been a public company for quite a while. You two are getting something of a boost from this. What do you think people have gotten wrong about investing in space until now when they're starting to pay attention?
Yeah, well, I think space is kind of an interesting opportunity. I mean, it's relatively new to the market, and we listed a few years ago now, and really are probably the only pure play space company at scale here on the public markets. So, it's great that when SpaceX lists, it brings a lot of eyeballs and interest and good research to the sector. So I think net it's a good thing for the whole space industry.
Does it make you concerned that the competitive draw from SpaceX will be overwhelming for Rocket Lab?
No, I don't think so. The reality is that, SpaceX is a space company, but it's also very much an AI company and a bunch of other things as well. But Rocket Lab is, a very, very squarely focused, pure play space company. And, as I said before, it's, I think it draws investors into the sector. And when they go looking, Rocket Lab is really the clear number two with respect to, launch frequency and those kinds of things. So no, I think I'm not too worried about that.
So do you find yourself complementary to SpaceX, or are you in direct competition with Elon Musk?
Oh, in some cases in direct competition, but also very complementary. We are an end-to-end space company, so we're the second most frequently launched rocket, US rocket in the world, behind SpaceX. So the rocket bit of it is competitive, but 2/3 of our business is building satellites and spacecraft and supplying merchant components to the rest of the space industry. So in that sense, not really a competitor at all.
How do you expect to fund growth in the future, given how expensive launches are?
Yeah, well, I mean, we're one of the things that we've been extremely good at over the years is we've been very, very capital efficient. So, Rocket Lab was born from a tiny little town at the very bottom of New Zealand. So it wasn't born with the backing of large capital resources. So we've always had to be super scrappy and very very efficient with our capital, and that continues. But luckily, in saying that, over the 20 years of Rocket Lab's history, we've never struggled to raise the capital we need to be able to do the things that we also need to do. And, in the public markets, we're obviously that gave us access to a larger quantum of capital, and we've been able to grow, as you can see, very, very quickly in the last couple of years.
Peter, can you lay out what the business case is for the space economy? And this comes at a time when, as you mentioned, SpaceX has a lot of different competing factors. They have, of course, the question of launching into space, but also AI and also connectivity. Is it a national security issue? Is it getting to Mars? How do you see the space economy evolving as central to the economy here on Earth?
Well, that's a funny thing because, it's hidden infrastructure. So, nobody can really see the satellites apart from a whizzing star in the sky and a nice clear night. But the reality is that just about everybody's lives all the time is being influenced and touched by space. Whether you order a pizza and it arrives at your door, well, actually, that was all space enabled through the GPS constellation. And whether you're thinking about getting married on a day and you look at the weather and that's all coming from space. So space is kind of one of those things that it's like water in the pipes, that it's hidden infrastructure and people don't realize just, how much they use it. But in saying that, the growth in the industry is tremendous because it used to be just the domain of governments. Space is really well and truly now the domain for commercial enterprise. And that democratization of space is what you've seen just grow tremendously over the last sort of, few years.
Are you worried that right now the amount of money being raised will dampen enthusiasm for this sector over the next few years if there isn't the same kind of outperformance as some of the capital raises seem to be promising right now?
Yeah, well, I mean, that's a fact. I mean, it's all about execution at this point. And, once again, that's been something that we've been well rewarded for is execution. So, yeah, of course, if you raise large quantums of capital and then don't execute, then people don't look very favorably upon you. But I guess, for us, we've been able to hold that execution. So, and been rewarded, but it is a risk in any fast-growing sector, and there's always people that promise a lot and might not be able to deliver.
Peter, how far are we away from real data centers in space?
Well, there's a few technical issues to solve, but the physics is sound. It can be done. I'm not really worried about the technical issues there. I'm more interested in the pure economics of it all, because if you think about data centers, it requires a couple of major things to happen. Reduction in launch costs and scaling of a number of technologies. And that's going to be in direct competition to, the cost of electricity down here on Earth. So, I think, I don't think it's a sure thing that all data centers are moving to space. I think there absolutely will be some for strategic and defense reasons. But I think we're also, it's a bit of a bake-off between, how quickly can those, those orders of magnitude and change and cost reductions occur in space versus down here on Earth.
Peter Beck of Rocket Lab, thank you so much for being with us. That is the Rocket Lab president and CEO as we look at a SpaceX IPO that seems to be getting enthusiasm in post-market trading. That is a key question. How much is this a promise to create infrastructure that might be above and beyond the sort of space economy that, as Peter said, is like water in how we operate?
Yeah, he says it's basically so much of what we already do now is basically relying on the infrastructure we have in space. When it comes to data centers, though, I know you've been interested in this. Maybe it was the tone of my question. He's like, no, for sure it's real, but for him it's about when it actually could be profitable and make sense to start doing that in space. But that is the path. That is the direction of travel right now.
Yeah, that's certainly something that Elon Musk has raised many times over. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump urging Israel to stop its attacks on Lebanon and saying there should be no more strikes by either side, including Hezbollah. Trump saying this could be the beginning of a long and beautiful peace. Switzerland has rejected a proposal to cap its population at 10 million people as concerns over economic damage outweigh worries over immigration. In a national ballot on Sunday, 55% of voters opposed the measure, 45% backed it. President Donald Trump marking his 80th birthday Sunday by hailing an agreement to end the war in Iran. The announcement coming hours before a birthday celebration with a UFC fight on the White House South Lawn. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. You weren't at the UFC fight.
The spectacle, the brawl on the South Lawn. I was not in attendance for that. I chose the Knicks.
It's just the week of sports, really, whether it is the Knicks, the World Cup, or the UFC fight. Up next, Fed Chair Kevin Warsh on deck.
The Fed clearly has a pretty complicated dynamic that it's facing.
You do need the Fed to turn away from this easing bias.
Most Fed officials, of course, are going to be fine leaving rates as they are.
The safest thing the Federal Reserve can do politically and also economically, I think, is just to do nothing.
Leslie Falconio, UBS, joining next amid a week of central bank decisions. It's not just the U.S., it's also England, it's also Australia, it's also the Bank of Japan and beyond. This is Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Last week it could have gone either way, and a lot of people were pretty skeptical of some of the discussions of a truce. Today, not so much. You're seeing stocks around the world rally in the face of an expected truce to be signed on Friday between the U.S. and Iran. U.S. equities up 1.5%, 1.25% now on S&P futures. NASDAQ up 2%. Russell 2000 up 1.5%, really coming from the space in yields, where you can see yields falling across the board, most notably at the front end of the yield curve ahead of that Fed meeting on Wednesday, down almost 5 basis points to 4.04%. Giving some reprieve to Kevin Warsh as he steps to the podium for his first FOMC meeting press conference. And this is all really predicated off the move in oil. Oil prices plunging more than 5% around the world. WTI down 5.25%, $80.41, the lowest levels going back to the beginning of March. A real question here for how central banks are going to look at this at a time where inflationary inputs are coming from myriad places. Under surveillance this morning, Fed Chair Kevin Warsh on deck.
The Fed clearly has a pretty complicated dynamic that it's facing.
My gut is that the new Fed chair, what they'll try to do is do no harm in June.
You do need the Fed to turn away from this easing bias.
Most Fed officials, of course, are going to be fine leaving rates as they are.
The safest thing the Federal Reserve can do politically and also economically, I think, is just to do nothing.
Here's the latest. Fed Chair Kevin Warsh gearing up for his first policy meeting with markets, expecting the central bank to hold rates steady. Leslie Falconio of UBS writing, we expect the June meeting to include removal of the easing bias. We think the Fed is likely to turn more hawkish in the near term. Leslie joins us now for more. Leslie, great to see you, and we will get into it in just a minute. What form do you think this press conference is going to come in? Do you think that it will be the typical display and explanation of the deliberations, or will it feel different in a new Warsh era?
I'm not sure it's necessarily going to feel different per se. I mean, Warsh has to really focus on the power of persuasion, but I think in this meeting, you have sort of that, emphasis on most, if not all committee members believe this is they're going to remove the easing bias. They're obviously not going to cut. They're going to keep the higher for longer. And even those that are more hawkish members like Hammack, I don't think no one's going to say, okay, we should be hiking right now. So that hawkish outlook is really just because they're going to remove the easing bias. They're probably going to take out the 2026 cut. But our expectation is that the next move is still a cut and not a hike. We're just pushing that out into 2027.
Leslie, do you think that the drop in oil prices and the potential truce between Iran and the U.S. will materially lift the desire from markets to see a hawkish tilt from this Federal Reserve?
Well, what's interesting about that, Lisa, is that if you look at even prior to this agreement, right, we had oil falling, inflation expectations were coming down, both in the long end and in the short end. But even as oil fell, two-year yields were still rising. And they were still rising because the market was pricing in that almost 100% chance of a hike in December 2026. Now, what's happening now is oil prices are coming down, but the market's removing those hikes now. And because of that, the two-year yield is coming down. So we can't say with certainty, what's going to happen with this agreement because we don't have enough details yet. But one thing that the market is pricing in today is that it's taking out those hikes. And because that yields are coming down more than even what you're seeing in the decline in oil, because again, those inflation expectations were coming down prior to the agreement.
So based on what we hear from the White House and Iran, and also what the market is telling you, do you just think they're on hold for this year?
I do think they're on hold for this year. I mean, unless there's some, fat tail event that we're not seeing, but, we just don't see that. I mean, growth is obviously much stronger than what people expected. I've never heard the words resilient and uncertainty so many times in the same sentence as we have these past 3 months. But listen, growth, it has been resilient, and so has the consumer. You're looking at 2.6% in real for the second quarter. We have retail sales this week, which is supposed to be above consensus. So that growth component, is hanging in there. But the issue is how that labor market really starts to play out. And yes, we saw a strong number, but you can't take one number with complete certainty. So I do think they're just going to sit back, exercise that option that they have and just sort of wait and see and have the data come in before they shift, probably in the first to second quarter of 2027.
Do you think Kevin Warsh just sits back and doesn't decide to play connect the dots and decides to not put a dot on the plot?
Yeah, that's a great question. And actually, I'm not sure because there's two things to that. One, it wouldn't be unprecedented, if he didn't. And if he didn't, he's sort of standing by his conviction that he doesn't believe in forward guidance. But again, at your first meeting to not sort of, show your opinion in those dots, I mean, what Warsh has to worry about is a power of persuasion, right? So to not put a dot in there, I don't think would necessarily be the best move. So honestly, I don't know. I think that he does. But unless he really wants to stick to his conviction regarding forward guidance or the lack of forward guidance he wants to see going forward, he simply steps back.
I love it. To dot or not to dot, and the idea of will he put his dot on that plot?
Well, it would be a little scandalous, almost to Leslie's point. He'll be making a real statement his first meeting, deciding to not put a dot there. And then what does that say to the rest of the committee when he's trying to persuade them towards how he thinks about the world and the economy right now?
Leslie, we were talking about how it's not just the Federal Reserve. We're getting meetings from the Reserve Bank of Australia. We're getting the Bank of Japan meeting, potentially to hike rates. That's what the market is expecting. You have the Bank of England. You have the Riksbank. You have a whole host of different other central bankers that have to make a decision. How much does Kevin Warsh set the tone for them?
Well, listen, I think that we've obviously seen, divergence come to convergence, right? Because, if we go back to February for the U.S., we were actually on more of a cutting cycle while everyone was still sort of like in that hiking path, given that they focus, especially in Europe, on that one mandate, which is price stability. But now you're seeing a bit more convergence into how people are thinking. I think that it's expected that they, as you mentioned, that the BOJ, hikes, same with the BOE. I think going forward, what's going to be interesting is to see how much, pass-through these supply shocks actually have. If these are not demand driven, so we really need to see what the input will be, and if in fact inflation does stay that much higher for longer, even though it's not expected and it's just supposed to pass through.
Does it concern you how strong you've seen capital markets in the face of higher interest rates, higher oil prices, and a lot of uncertainty?
It's incredible how little the spreads have moved in both high quality, say, agency MBS or IG, and even in high yield. You still have a lot of dispersion in the high yield market, but they have really stayed in a very tight range. Now, granted, we have that, we talk about that wealth effect and that compounding wealth effect that we've seen since 2022. We have over $8 trillion of cash on the sidelines, and the yields are very, very high, right? This is a yield-driven investment type of environment. This is not a risk premium type of drive. So I'm surprised how well that they have stayed sort of contained, but financial conditions remain loose. The capital markets remain open. We're still seeing, growth do well as earnings. But I do get concerned a little bit, given the fact that right now people are really investing for the yield and not necessarily what they're being compensated for.
Leslie Falcone of UBS, thank you so much for being with us. Ahead of a huge week for the bond market, given what we're going to be getting from central banks around the world, most notably Kevin Warsh, and a lot of the enthusiasm, at least in the bond market today, with yields down 4 basis points to the front end of the yield curve, comes from what's happening in the oil space at a time when this market is cheering a potential truce between the U.S. and Iran. But clearly there's still some skepticism about what this actually means and how much oil volumes can get back to where they were before.
And there should be skepticism in terms of the deal, because we're hearing a little bit of different details from Iran than we are from the White House. And of course, we want to see the text. After they sign it, we should see the release of the text. But the Iranians are saying that, yeah, the Strait of Hormuz will open, but then we're going to have a tolling system. They're demanding things that this White House has said were red lines. So potentially it's going to be a little bit messy down the road. Mike Wilson of Morgan Stanley was writing, expects some more choppiness in coming weeks, but reiterates that he thinks these markets could push higher.
Yeah, that's what we're seeing this morning, although really the enthusiasm still focused on the tech sector. Coming up in the next hour, Seth Carpenter of Morgan Stanley, Henrietta Trey's of Veda Partners, Noah Weisberger of BCA Research, and David Tinsley of the Bank of America Institute. From New York, this is Bloomberg Surveillance. Good morning.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The Fed clearly has a pretty complicated dynamic that it's facing.
It's more and more apparent that we're not going to get a rate cut anytime soon, but I also don't think that we're going to hike very quickly either.
I think they're just on hold indefinitely. I think the hurdle to hike is a lot higher.
Cuts are off the table for the balance of the year.
Right now, looking through is looking as clear as mud.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks and bonds both rallying as the Iran and U.S. reach a truce. World leaders gathering in France to kick off the 52nd G7 summit. Oil prices, meanwhile, plunging, given a reprieve to a new Fed chair, Kevin Warsh, who takes the podium on Wednesday. This morning, it really is being driven by oil, with the WTI down more than 5% on the idea that maybe, just maybe, the Strait of Hormuz will open back up.
And that's what's pushing these markets actually to rethink potentially hikes this year. And it's a gift really to Kevin Warsh as he begins his era at the Federal Reserve this week. Of course, there's a lot of excitement about potentially the Strait of Hormuz being opened, but the devil's going to be in the details. Already the Iranians are saying we'll have this 60 days, the strait will be open, but then after that, we're going to have a tolling system with Oman. And then, of course, the nuclear negotiations begin. The JCPOA took 20 months. This is going to be very technical, and it's going to take a very long time, and potentially this is where it's going to be messy, because there are still red lines that they do not agree on between the White House and Tehran.
This is a massive week for geopolitics and markets. If you take a look at what's coming up, you have the G7 meeting taking place in France. That's going to be for the next few days. You have a slew of central bank decisions. It's not just the Federal Reserve on Wednesday. It's the Bank of Japan, the Reserve Bank of Australia tomorrow or overnight, Bank of England, Swiss National Bank, Norges Bank, et cetera, et cetera. And then, of course, Fed Chair Kevin Warsh. You have economic data coming to the fore with jobless claims and retail sales. And then, of course, on Friday, you have the likely signing of these two deals. It is the confluence of all of these factors coming together and underscoring a real question, AMH, which is how much has the inflation in the system really come from the oil price versus other factors in the economy, such as the other part of the G7 meeting, which is the tech leaders that are all there.
Yeah, it's pretty incredible, the names that are going to be there. Most importantly, the Anthropic CEO, I believe, is going to be attending this G7 in France at a time where we are seeing very big export controls on two of their systems from this administration. So how the United States, how Europe, how the G7 collectively may work to regulate these AI models coming at a critical time before their massive potential IPOs on Wall Street.
Yeah, right now what you're seeing in markets is a lot of enthusiasm for a potential deal, but not as much as you might expect. This is a market that is curbing its enthusiasm for what this actually means before it sees more details. Also because a lot's already been baked in, up about 1.25% for S&P futures. You can see dollar weakness across the board. The rest of the world getting a boost. Euro up about 0.4%, 116. 10-year yields lower by 4 basis points, 4.44% ahead of that Fed meeting. And crude leading the charge, down more than 5% with an 80 handle on WTI. WTI, the lowest levels really going back to the beginning of March. Can we reverse all of the gains from the conflict at a time where we still haven't seen oil truly flowing freely through the Strait of Hormuz? Coming up this hour, do not miss this. Seth Carpenter of Morgan Stanley with markets awaiting Kevin Warsh's first meeting as Fed chair. Henrietta Trey's of Veda Partners with the U.S. and Iran agreeing to halt the war in the Middle East. And Noah Weisberger of BCA Research warning that SpaceX's historic debut could spark some concerns for future IPOs. We begin this hour with stocks and bonds rising after an interim agreement between the U.S. and Iran was reached. The breakthrough coming ahead of Fed's June meeting, the first under new chair Kevin Warsh. Seth Carpenter of Morgan Stanley writing this: while the tariff impulse appears to be nearing completion, sustained disinflation ahead depends on the resolution of the conflict. We expect the Fed to hold rates unchanged. Seth joins us now here in studio, which is a wonderful thing. Hey, good morning.
Good morning.
So is this enough for you to think that the inflationary pressure is probably going to be on a downward trajectory, or is there something else at play here?
So probably. How's that for an economist answer?
Yes.
Look, the path to a Fed rate hike, in our view, was never going to be just about inflation, and absolutely not just about oil-driven inflation. So historically in the U.S., oil-driven inflation, it pushes up headline, but not that much typically pass through to core. This time could have been different. We'll still have to see how everything plays out. But we were thinking if the Fed was going to hike, it would be a combination of inflation, especially core inflation, staying sustained, staying above 3% or so, and the underlying momentum of the real side of the economy broadening out, firming up, keeping going. And if we look at, say, the last several jobs reports, something that we haven't been talking about so much with oil prices being front and center, they've shown that the fall in hiring bottomed out. Things are starting to pick up again. And so I think the real key here is going to be, where is that underlying strength in the economy, and is there more inflation momentum outside of oil prices? We know that the pass-through from tariffs has essentially run its course. That's going to be a disinflationary force. Is there actually that much more fundamental, broad-based inflationary pressure to overcome that tariff disinflation?
On a certain level, doesn't lower oil prices help the idea of broadening out and strength that could potentially feed some of the other parts of inflation that can make the Fed uneasy?
Well, I mean, it is a bit of a double-edged sword that way, because if consumers in general feel freer to spend, they have more disposable income to spend on everything but gasoline, then just maybe there's a bit more resilience then to that aggregate demand. So I think that's a real risk. We just have to see how all of this plays out. And I have to say the agreement's been announced. We haven't seen things signed. We haven't seen the increase in the flow of oil actually happen yet. We haven't got to that critical point where there has to be an agreement on all the rest of the tricky details, as you were saying before. So I think it's too soon to have any conviction that we know exactly where things are going.
What would it take for you to have conviction? What do you want to hear out of this agreement where the two sides agree on?
Oh, well, I think I just want to see the actual flow of oil happen. And then I think there are a lot of questions that happen after that. What happens to the rebuilding of inventories around the world? If people were happy with their stock of inventories before this conflict started, are they going to look at that level and go, in case this ever happens again, we need to have an even bigger inventory, in which case you could see a much greater surge in demand once things start flowing? We'll be looking at natural gas. How long will it take for the flow of the supply of natural gas to filter out around the world? The rebuild of inventories in lots of places there, that's pretty seasonal, can be pushed off for a while. It can't be pushed off forever, and we know that there was some damage sustained to Qatari production, and so I think there is a question about where will the market settle out once we have a clearer idea of supply and demand coming together.
How do you expect the new Fed chair to talk about all of this?
Very cautiously. I don't think there is a lot for Kevin Warsh to get out of being overly definitive here. It is a very fluid situation, and so him acknowledging that, I think, makes it easier. He's been clear that too much forward guidance is probably not a good thing, and if ever that statement was true, it is right now, watching all the different paths to come together. Coming into this year, we were pretty constructive on the underlying momentum of the economy, and then everything, the whole discussion was overtaken by what was going on with oil markets. I think we really do need to have some really close focus on that underlying momentum before they can decide is policy really in the right place?
It is Monday, which means it's Merger Monday. And it comes at a time where, despite some of the uncertainty, we've seen capital markets incredibly robust. Fox, the latest news, Fox is planning to buy Roku for $160 a share in a cash and stock deal. Goes on to say that Fox expects the deal to close in the first half of 2027, and Fox will retain, I believe, about a 73% control of the combined company. This comes after the SpaceX IPO. It comes ahead of a whole host of deals that people are expecting. You see bankers incredibly enthusiastic talking about how this might be a record year, a banner year in all sorts of different areas. How much does that potentially affect the Federal Reserve in how they look at markets, how they look at financial conditions, how they look at whether they truly are restrictive?
I mean, I think that's a great question, and this could be part of the shift in personnel and thinking with Kevin Warsh as chair. I would say in standard academically trained economists, somebody like Ben Bernanke would look at everything that's going on with mergers and see that as a result of the economy and other things going on in the economy. Kevin spent a lot of time talking to investors, talking to people in markets, and so could think of that overall sentiment, that this wave of M&A and that sort of thing as part of the sentiment that's going on that might be driving some of the momentum in the economy. I don't think it's going to be a watershed where it's sort of going to be all in one direction or the other, but it does come down to, at times like this, where you're trying to get the signal, tease out the signal of where the economy is going. Do you lean a little bit more on some data? Do you lean a little bit more on other data? I think that's part of what we need to learn as we see this turnover in leadership at the Fed.
How much is AI driving some of the inflationary impulse, given that they are able to raise trillions of dollars of capital and invest it in assets that seem to be endlessly increasing in prices?
I mean, I think there we're seeing lots of measurement questions coming up. There's this discussion of so-called chipflation, but even within that, the question, has the BLS always got things right between software chips in terms of the price indexes? I think the real key here for the inflationary side of things is more that overall momentum in the economy. It is undeniable how much CapEx spending there is going on from AI, and I think that's leading to things like more construction. That's leading to a lot of imports for the chips and things like that, but it is helping to sustain the momentum of the economy. And for me, the real staying power for the inflation isn't going to be our chips prices going up. It is going to be, is that momentum in the economy with a fairly low unemployment rate, is that the thing that's going to sort of keep inflation, core inflation, at 3% or higher?
Something I was thinking about this weekend, especially as a number of the tie-ups start coming to the fore and companies get bigger and bigger. Are more consolidated companies, bigger companies, good for the inflationary backdrop or bad for the inflationary backdrop? Do they have greater pricing power, or do they have greater efficiencies of scale that could potentially lower prices for consumer?
Yeah, I think all of the above could be true, and at different points of a business cycle. Right now, our sense is that we're getting back to a point where there's going to be a little bit more discipline with respect to the ability with all of those sorts of things, with pricing power, and so I think we are looking for some disinflationary pass-through over time, primarily as tariffs have run their course, but we think overall we're going to settle back down to a little bit more stable inflation.
Seth Carpenter, always wonderful to see you. Thank you so much for being with us this morning. Seth Carpenter there of Morgan Stanley. And as we were just mentioning, there is, of course, mergers on Mergers Monday. We have Fox buying Roku for $160 a share. The tie-up continuing with this trend that we've seen, which is media consolidation so far in 2026.
Yeah, and their streaming devices, of course, helped usher in the era of digital home entertainment. We did report on this on Friday, that they were looking to potentially sell to a bigger media company, and their shares were up. Fox is down this morning, but Roku shares rose as much as 24% on Friday. So the market certainly likes this in terms of what Roku is doing.
Yeah, right now we're seeing a whole host of other transactions being announced as well. It all comes amid a backdrop of strength in markets. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Senator Mitch McConnell was admitted to a hospital Sunday morning. According to a spokesperson for the senator, he is, quote, receiving excellent care. No details about his condition were made public. McConnell, 84 years old, will retire when his current term ends in January. A shake-up in the media space. Fox is buying streaming and devices company Roku for a deal valued at $160 per share. The deal values Roku around $22 billion. It's expected to close in the first half of 2027. President Donald Trump threatening 100% tariffs on French wine unless President Macron eliminates France's digital tax on U.S. tech giants, including Amazon, Apple, and Meta. The threat coming ahead of this week's G7 summit in France. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, reaching a peace deal.
We just made a great settlement of the war with Iran. They've all approved the deal. Everybody's approved the deal. Now we'll get it finished up, and hopefully that'll be done.
Henrietta Trey's of Veda Partners joins next. This is Bloomberg Surveillance. Good morning.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Enthusiasm this morning as there is a truce reached between the U.S. and Iran. You can see stocks and bonds rallying across the world with a sense that maybe the Strait of Hormuz actually will open. A lot of thorny details to get worked out. Nonetheless, the stated aim is to get the Strait of Hormuz back open as soon as Friday, up about 1 1/3% on the S&P ahead of the open. You've got dollar weakness. You've got euro strength, 116 up about 1/3%. And you can see yields plunging around the world, although off some of the earlier lows, down a little bit less than 4 basis points on the 10-year, 4.4%. And the whole reason why is because of the story in crude, where you see a 4.4% plunge in WTI down to $80.26. Under surveillance this morning, reaching a peace deal.
We just made a great settlement of the war with Iran. They've all approved the deal. Everybody's approved the deal. Now we'll get it finished up, and hopefully that'll be done. They will not have a nuclear weapon. They've agreed to that.
Here's the latest. The U.S. and Iran saying they have reached an interim agreement to reopen the Strait of Hormuz. President Trump stating that the strait would reopen effective on Friday. Bloomberg's Tyler Kendall joining us from Geneva ahead of the president's expected arrival for the G7 summit. Tyler, how much is this agreement overshadowing everything at the G7 this year?
Lisa, it's definitely dominating the conversation, and that is because, of course, the Strait of Hormuz impacts all of these allies that are gathering here in Europe. But we still have a lot of big questions, as you alluded to, on exactly how this deal is going to be implemented, though people familiar with the matter do tell Bloomberg News that Qatar is set to host both U.S. and Iranian delegations this week to try to hammer out the final details to get a potential signing ceremony over the line and done this Friday here in Switzerland. broadly speaking, neither of the sides has released the finalized text of what is in this memorandum of understanding, but the contours we've been tracking at this point for weeks, including that the ceasefire will be extended by 60 days, and we would see the Strait of Hormuz and the U.S. lift its naval blockade prioritized. But when it comes to how Iran feels that its role is going to be in terms of the Strait going forward, we had new reporting this morning from Iranian state media that the Strait will remain toll-free for the first 60 days, but then Iran plans to impose some sort of fees related to navigation, environment, and insurance services. And then, Lisa, another big sticking point here is what is financial relief going to look like for Iran? A senior administration official who briefed us before we got here on the ground told us that those financial benefits would accrue over time, but it is based solely on whether or not Iran upholds its part of the deal. We need to see what that finalized memorandum of understanding really looks like.
Bloomberg's Tyler Kendall, thank you so much. And Anne-Marie, this has been a real question going forward. How much will some of the other countries be involved? Because one of the criticisms at the outset of the war was that the U.S. was operating in isolation or not necessarily in concert with them. This time around, how much is the truce involving some of the other nations at the G7?
Oh, a lot. I mean, a lot of these G7 countries, I mean, no one got a heads up, which was an issue that bothered European allies. Now, of course, they all want to see the Strait of Hormuz open, especially those in the United Kingdom and across continental Europe because of how much higher they are dealing with energy prices. And they're saying there seems to be some willingness to go help the United States. For some countries, though, they're going to want to see more work being done on Israel and Lebanon as well. So this is the start of what is going to be a messy few months as they work out the details of this deal.
Yeah, pretty heated exchange between Bibi and President Trump over the weekend. Henry Trey's Aveda Partners writing the 60-day extension of the ceasefire with Iran is the last best chance for, quote, stimulus from Washington before the election. Henrietta joins us now. A more skeptical take, but this is what a lot of people are looking at in terms of the political backdrop and how that's influencing when this decision was being made. Why do you say the last chance at stimulus?
Yeah, first of all, investors are really looking for the president to do something to juice the consumer before the election. I get that question a lot. People are thinking outside the box. Are we going to get a payroll tax holiday? Are we going to get a gas tax suspension? And Congress left town last week, and they're not coming back until the 23rd. There are, by my count, 16 legislative days between now and the August recess. And effectively, we're then in the end of September. So if there's anything that's going to happen, we've run out of time for a reconciliation bill. There is no bipartisanship to be had, as I'm sure y'all are very aware. And so if you were going to do any kind of stimulus, it needed to be in a third reconciliation bill. And Senator McConnell and Senator Collins kicked that to the curb last week as well. So this is as good as it gets. You know, if crude stays down in the $80 range, that's great, but this is the most relief that consumers are going to see pre-election.
Speaker Mike Johnson also called on Republicans to act on Social Security reform before the midterms. What is going to do the midterm election for the Republicans? Because that's not exactly going to work.
No, that is not even remotely going to work. And also, you can't touch Social Security via reconciliation. So you need to get bipartisanship. And when I talk to either Democratic staff on Ways and Means or Republican staff in Senate Finance, they are actually unified in the view that nothing is going to happen. Whether that's housing, whether that's crypto, Social Security, another reconciliation bill, we've got what we're going to get.
When it comes to the Iran deal, potentially Congress would have to okay some of the lifting of these sanctions, and this goes back to what happened with the Obama era and the JCPOA. Do you see Congress giving a green light if this administration were to lift sanctions on Iran?
That's such a fascinating dynamic. Lindsey Graham is very adamant that Congress needs to approve whatever this deal is, but all I think of is the USMCA. There's also a very adamant view amongst Senator Wyden, ranking member of Senate Finance, that the president needs to go through Congress in order to reaffirm the USMCA or even to withdraw. And the administration totally disagrees. So when you speak with the trade negotiators in Canada or the trade negotiators in Mexico, they'll tell you that there's a disagreement between who they talk to on the Hill and the White House. And I think the takeaway from the last 18 months or whatever is the president is going to do what he wants to do, and he's not going to ask Congress for their approval of this deal. Yes, you will need it for sanctions relief, but they have other ways to get around it. You've seen them go to foreign nations and say, we'll unfreeze some assets that are held overseas. They'll find a workaround. I do not expect Congress to get to yes on any deal.
This is the reason why I find the attendance of the G7 meeting so interesting this year. It isn't just the G7 leaders. It is also Middle Eastern leaders that want to have influence over this deal in certain capacities. And it's also the leaders of technology companies, including Anthropic, that are discussing some of these issues that have been percolating to the fore with all of the leaders who are going to be in those rooms. What do you make of the recent crackdown on Anthropic in particular over in the UK on social media, and the fact that these leaders are going to be in that room over in France?
Well, it's just another opportunity for the EU and NATO nations to have a completely different view of how to tax United States tech companies, how to regulate United States tech companies, what they can have access to or not. And I think it kind of gets to the point you were making earlier, Anne-Marie, which is they get a say here. You're not doing this in a vacuum. The EU nations, NATO nations, they don't want to communicate with Iran and have the strait be closed and have to coordinate to get through the Strait of Hormuz. And that is what the United States has created. And with Anthropic and tech issues as well, these are parts of all the trade agreements as well, whether there's taxation possibilities, and that puts tariffs back front and center. And of course, July 23rd, we need to have that whole conversation all over again.
Specifically with Anthropic, do you think this is the first salvo in a true crackdown or a true enforcement push when it comes to the AI build-out from President Trump and this administration?
Yeah, I think we're just at the very start of AI regulation. Right now, the way I think about it is pre-election and post. Going between now and November 3rd, the United States public and therefore the political parties are just going to talk about affordability. Immediately thereafter, all the new surge of lawmakers, of which there are 63, I think, they are AI focused, they are regulation focused. They're going to start with the consumer and children and use that to carry a much heavier regulatory weight that I think will be the topic of the 2028 election.
Were you surprised on the export controls on Anthropic that we had over the weekend, given the fact that this administration, for the most part, wanted to let AI companies have intense competition and really let the sector rip?
It seems very extreme. I know that the industry is treating it very extreme.
In D.C. And he wanted guardrails with the DoD. So it's very interesting that now Anthropic is putting out statements that they're upset about it. There's a nuance to this as well. There is reporting that 2 days before the model's public release, the Amazon CEO raised concerns to the White House about the ability to bypass the model's guardrails. So as other people in the industry raising the alarm, raising their flag to the White House and saying this might be more dangerous than even you expect.
Yeah, the idea is that Mythos was unlimited release to just a number of companies. Fable was released more widely, and people figured out a way to get around those safeguards that were put in place to have wider distribution of Fable 5. We'll be talking about this, plus SpaceX coming up. Noah Weisberger of BCA Research warning about that SpaceX IPO, saying it could spark some concerns for future deals. Plus, Yahira Anand with your Morning Movers. Fox Corp announcing plans to buy Roku. The consolidation in the media sector heating up. Fox shares lower by 12%.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
It's been an on-again, off-again exercise when it comes to a deal between the U.S. and Iran. Headlines swaying markets one way or another. This morning feels different. And I think you can get that sense in the moves in equities, in the moves in bonds. Let's start with stocks. You can see a general enthusiasm, not necessarily a guns a-blazing, oh my goodness, this is really it, but a sense that, yes, there is resolution. And you can see this being led by the Kospi, which has been the biggest leader in times of volatility on the way up and on the way down. It closed up 5.2%. In the U.S., it also is those more highly beta-like stocks like the NASDAQ, up 2.2% with enthusiasm around big tech. But you're seeing the broadening out, too, with the Russell 2000 and S&P futures up about 1.5%, the DAX up 1.4%. When you look into the bond space, you could see yields falling dramatically across the world. In the U.S., you could see yields lower by about 4 basis points on the front end to 4.04%. Ahead of that Fed meeting on Wednesday, Kevin Warsh getting perhaps a bit of a reprieve if they do believe that oil has been the main driver of inflation. And it really is all about oil. When you take a look at oil, it is down about 5% globally. You can see that on Brent, down 5.2%, WTI down 5.6%. We're talking about the lowest levels that we've seen, AMH, going back to early March.
And it's kind of crazy given the fact that at this moment the Strait of Hormuz is still technically closed. What is interesting, though, is we have seen more vessels and product get out. On Friday, I was in Houston. Secretary Wright told me about 7 million barrels a day the administration thinks is getting out. The Chevron CEO is a little bit more conservative. He says he thinks it's more like 3 million barrels a day. And that was before the announcement of this deal. So this deal is not just signifying that the Strait of Hormuz is going to be open, but already we saw actual movement before that, which is why the markets are really welcoming all of this news.
And of course, we also have Merger Monday with a whole host of being deals announced. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Well, we start off with SpaceX. Shares are rising nearly 5% in the pre-market as it heads into its first full trading session as a public company after its blockbuster debut. And it's getting a boost from some comments from Elon Musk saying that SpaceX could generate by 2031 $1 trillion in revenue. That would be a dramatic leap from the $19 billion in revenue it posted last year. And as you were mentioning, it is a risk-on mood market this morning after the U.S. and Iran said that they agreed to a deal to end the war. That is helping to fuel gains in the higher beta names in the market like Micron and SanDisk. Micron is up 8.2% now. And as you said, some Merger Monday deal news this morning. Fox is falling 13% in the pre-market, while Roku just started trading minutes ago. It is up 2.3% after being halted for this news that Fox has agreed to buy the streaming platform, and it will have a roughly $22 billion valuation. This gives Fox access to 100 million households. And as you mentioned earlier, it's the latest sign of media consolidation, with just last week the DOJ approving Paramount's deal to take over Warner Brothers. Lisa?
Thank you so much, Yahaira. On our radar this morning, the U.S. and Iran reaching an interim agreement to reopen the Strait of Hormuz and halt the war. Officials from both countries will meet in Switzerland this week to formally sign the deal, which is expected to happen on Friday. Meanwhile, top Anthropic personnel meeting with the White House after the Trump administration limited access to Mythos. The government ordering Anthropic to disable access after discovering it's possible to bypass the guardrails of the Fable 5 AI model, which is the one that was released more widely. And Elon Musk out with a bold prediction for SpaceX. The Tesla boss not only expecting his rocket company to bring in $1 trillion in revenue by 2030, but anticipating surpassing that figure by 2031. As a reference, SpaceX brought in just under $18 billion in revenue last year, a pretty high bar to cross given how quickly he expects to ramp up.
Definitely. This is an individual who people believe in him and he believes in himself, but look how different, for some context, where he thinks the revenue is going to be versus Goldman Sachs and Morgan Stanley. So Goldman had estimated SpaceX revenue would exceed $470 billion in 2030. Morgan Stanley projects $330 billion. This is according to a Wall Street Journal report earlier this month. And Elon Musk is like, absolutely not, $1 trillion.
$330 billion, $1 trillion. Staying with SpaceX, shares extending gains after Friday's blockbuster debut, seeing Elon Musk's company close to a valuation over $2 trillion, adding confidence in the AI boom. Mandeep Singh of Bloomberg Intelligence joining us now. Mandeep, what's your take on this in terms of the possibility to grow revenue?
Well, you have to really believe in the space economy to think that they can get to 1 trillion. And what I mean by that is not just, on the compute side, what they have done with Anthropic and Google, which has added, almost $26 billion in annual recurring revenue. But that's lower margin. For me, the most attractive part about SpaceX is, their ability to launch rockets and the Starship vision that they have laid out, where they could put almost 100 tons in terms of, the vehicle that they're launching into space and keep reusing it like we use, aircraft. So from that perspective, the vision is quite powerful, but they have to execute on that and show that orbital compute will be a reality. And that is what will get them to 1 trillion in revenue. It's not going to be XAI Grok or XAI rental, compute rental revenue. It has to be that Starship launch being successful and their ability to, put things into orbit where orbital compute will be a reality.
Who is SpaceX's biggest competitor? Is it Blue Origin or is it Amazon, Microsoft, Anthropic, and OpenAI?
I mean, on the model side, it's clearly, the companies that you mentioned. But in terms of the space launch, I think that's where they have real IP. They are far ahead of everyone else. And if they have laid out this vision of orbital compute, they've shown that with Starlink, that connectivity is a reality, the satellite connectivity, and they've been able to monetize it. It's just the orbital compute part, because it requires much higher payloads. You want to see whether they can actually launch 100 tons and that, vehicle is reusable and they can monetize it at a rate that, NVIDIA and all these companies are doing it with terrestrial data centers.
Mandeep Singh of Bloomberg Intelligence, always love getting your insights, especially now at a time of unprecedented IPOs. Noah Weisberger of BCA Research writing, we expect the IPO wave to be a headwind to forward returns and multiple expansion, likely not a catalyst for a sustained bear market. Noah joins us now for more. Noah, great to see you again.
Thank you very much.
So let's start there. In terms of a headwind, why do you see it as a headwind, and why does the market not necessarily see it that way, at least not yet?
So at least not yet. There's a lot of other things going on today. In particular, all eyes on the bond market. In my view, like the June mini pullback, I think was a bond issue or an inflation issue. So let's put that aside. Over the longer term, what seems to be a really interesting push-pull relationship between the markets, multiples, and IPOs. The historical pattern is that the market rallies, multiples expand. That leads to a pickup in IPO activity. So even if we didn't know about OpenAI and Anthropic and SpaceX, we'd think IPO activity should be picking up anyway on the back of the market's own dynamic. But once the big IPO waves come to market, historically, that tends to then mute forward returns and mute forward multiple expansion. So that's a historical pattern that forms kind of the baseline for my own expectations. The hard part is that the current wave of IPOs, as we see it, is probably 1.5 or 2 times bigger than previous peaks. So that's a historical pattern, but we're kind of out of history.
Part of the reason why is because typically if you have big IPOs, it drains capital from other places. So people have to reallocate away from certain names. This time when we ask people about that, they say, well, there's just lots of cash. People can keep going into some of these names without having to sell some of the other tech gainers. What's your take on that?
So 2 thoughts there. One, from like a supply-demand perspective. Right? At the end of the day, this is supply and demand for things. The things are shares of stocks. We've seen a bit of a reduction in the supply from other places. Buybacks, a little bit less than in the past, but they're still subtracting about 1.5% of market cap on an annualized basis. Net issuance is negative, so that side looks okay. Not nearly enough to offset the big supply we're seeing from the IPOs. But then in terms of the demand, the easiest demand to keep track of is on the passive side. So the people who have to follow an index, when the stocks get added to the index, they have to sell. And even for OpenAI, which is being added to a smaller index, we're talking about less than a percentage point of market cap and like a 1-to-1 relationship between what we can see in terms of the passive reallocation and the passive monthly inflows. So the passives are sucking up lots and lots of cash dollars, and that should help to mitigate some of that forced selling, if you will. So that doesn't seem to be a red issue, but that is kind of where this happens.
You think the broader risk is rotation when it comes to these massive IPOs?
Yeah, so that was the other, I think the big issue is that I think people do have, I thought your question was great about what is SpaceX, like who are its competitors?
All of the above, right?
All of the above. And certainly when we get to OpenAI and Anthropic, one of the things that we've been noting when we've been looking at the AI trade is that about 1/3 of some of these hyperscalers, 1/3 of their income is now other income, which is essentially their exposure to some of these pre-IPO names. So investors already own some of this exposure from a risk perspective. Do they want it in a pure play? Would they rather just own the stocks themselves? Do they want to own the correlation to it? And that I think would be interesting to see. Do you want the pure play or do you want the derivative?
How are you thinking about what the United States did in terms of the export controls on Anthropic over the weekend?
So I think that is beyond the IPO issue. I think that hints to where the political landscape is going. So we have a populist era that seems to be entrenched, whether it's a Republican administration or a Democratic administration in 2028. We have a sector that's in the middle of a super cycle. We have companies that are, the analogy to me is the integrateds in the railroad integrateds or oil integrateds a century ago that are generating great profits. So I think there will be ham-handed ways that politicians will look to rein that in.
If it's so dangerous and so good, they had to pull it back. Is that almost bullish for the Anthropic IPO?
So it does tell you there's some great models out there that get added. I think we're still learning how these add into software companies, how they get integrated into the system. And so we still think there's a runway, even for some of the popular parts of the market. I think some of the near-term dynamics maybe broaden that out, and there are some rotation risks, I think, from the IPOs themselves.
Just to build on Anne-Marie's point there is a theory that this actually is really good for Anthropic, in part because they don't have to spend as much money on these really intensive programmings and this really intensive large language models that eat up a lot of energy, and they can put it toward other things, let alone prevent others from potentially competing. How much are they looking to Washington for that type of guardrail to give them a leg up in the competitive dynamic, but also when it comes to just where to focus their energies, the idea of actually disseminating it in a useful commercial way rather than some of the hopes and dreams about intelligence?
Right, I mean, I think that's an interesting pivot where, and we'll see when they come to market and they have to actually face quarterly reporting. I mean, I think that's the other element of the IPO cycle, which is it speaks to the quality of these companies that they want to face that scrutiny, but it does give them the ability to operate like not a hopes and dreams company, as you say, and maybe does that trim the multiple a little bit? I don't know. If you have a strong growth profile that's not, that's, I don't want to say slow and steady, that's high and steady, I think that attracts capital and attracts a multiple, which is where we are now.
Just want to finish with, aside from Knicks and World Cup discussions over the weekend, a lot of people were wondering who came into my orbit, what's the deal with SpaceX? Is it a bubble or is it the sign of an incredible future to come that we just aren't envisioning?
I mean, that's what the price to sales would tell you it is, right? I mean, it's like 95 times versus even the other expensive companies that are already in the index are much, much lower. It is exciting to speculate about that. I don't think I'll get to Mars in my lifetime, but the one thing I will say is across his portfolio of companies, Elon Musk is able to really think in ways that didn't seem possible prior to him thinking it. How much are you willing to pay for it, and how much vol do you attach to that? Those are hard questions that the market will answer for us now that we have it, another one of his companies in the public.
Noah Weisberger, wonderful to see you. Thank you so much for being with us today. That's Noah Weisberger of BCA Research. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Former Federal Reserve Governor Stephen Myron returning to the private sector. Axios is reporting Myron is going to Hudson Bay Capital Management. He says he looks forward to helping clients navigate a, quote, dynamic economic environment. Steven Spielberg's Disclosure Day won the weekend box office. The movie grossed $44 million in ticket sales in the US and Canada. The film, about a cover-up by the US government of the fact that aliens have lived on Earth since at least 1947, ranks among Spielberg's best openings in history. The 2026 FIFA World Cup officially in full swing. The United States men's national team kicked off group play by defeating Paraguay 4-1. Elsewhere, Germany and Sweden delivered massive blowout wins, while Spain begins their quest this afternoon. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. And just a note, you can see that the World Cup games are really heating up, and Jonathan Ferro is off this week. Just want to point out correlation, not causation, but, you know, that could be something one could infer.
It's very true, and Brazil played this weekend. I don't even know why we're doing World Cup. It's just the start of World Cup. We should be basking in Nick's glory right now.
I think you are basking. There is quite a bit of basking going on
I'm still
here.
on a high from San Antonio. It was just incredible.
You could feel it through the entire city. Up next, we're going to be talking maybe about the Knicks, but also consumers holding strong.
We only have a couple more months of savings with the consumer before you start to see that consumer start to break down. We're not talking about a very bearish consumer outlook. There are still elements of strength. We are not talking about a complete collapse.
David Tinsley of Bank of America Institute joins next. This is Bloomberg Surveillance. Good morning.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving sometime.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The lift to markets has continued throughout the session. You could see enthusiasm for the possibility of oil once again flowing through the Strait of Hormuz. Although paring back just some of the earlier gains a touch, S&P futures up 1 1/3%. You could see the euro gaining versus the dollar. Dollar weakness pretty much across the board, except for maybe over in Japan, which is interesting, ahead of the Bank of Japan meeting later tonight into tomorrow. And 10-year yields lower by about 2 basis points, taking back some of the declines that we had seen earlier, 4.46%. Oil prices still down more than 5%. You can see New York crude WTI at $80.37. A question here about how much this will give a boost to the consumer under surveillance this morning. Consumers holding strong.
We only have a couple more months of savings with the consumer before you start to see that consumer start to break down. We're not talking about a very bearish consumer outlook. There are still elements of strength. We are not talking about a complete collapse. You're going to get more resistance going forward on passing through these additional price shocks to the consumer.
Here's the latest. A U.S.-Iran agreement to reopen the Strait of Hormuz set to further boost consumer outlook after sentiment rose last week for the first time in 3 months. The Bank of America Institute Consumer Checkpoint showing resilience despite the war, with total card spending rising 5.1% year over year in May, saying spending momentum is remarkably robust. Underlying spending remains firm across both goods and services. Joining us now is David Tinsley of the Bank of America Institute, who's been running the numbers. David, can you talk about just where the resilience is coming from that has been maintained throughout the entire conflict, even before this truce was reached?
Yeah, I mean, I think it's pretty remarkable the way the consumer has powered through this period of high gasoline prices. You know, when we look at our data, card spending, total card spending is up about 5%, but even leaving gas aside, it's close to 4%, multi-year highs. Within that, it's travel, it's restaurants, it's retail, electronics, for example, general merchandise. All of those areas are areas of overall strength, I think.
At the same time, David, you note that this is coming on cards, on other methods of borrowing. You're seeing the savings account dwindle quite considerably, and wages really haven't kept pace. How long can that continue?
Yeah, I mean, I think that's sort of a fair point. I mean, what we are seeing, and I think this is a promising sign actually, is that lower and middle income households' wage growth has picked up in our data over the last couple of months. So lower income households in the Bank of America data was around 1.5% their wage growth a few months back. In March, it was up at 3.5%. So I think if that trend continues, which translates to a narrowing in the K shape between consumers, then I would be, relatively optimistic that for sure, as the savings come down a bit post refunds, there'll probably be a cooling in consumer momentum. But the degree of that, I would be, fairly optimistic on.
David, are you seeing consumers having to tap credit at the moment?
Well, that's the kind of headline, isn't it? But when we look at our data, the share of spending that's being done on credit as opposed to debit is pretty much bang in line where it was last year. And that's true across all income cohorts too. So, maybe just at the margin for some. So one of the things we note in the report is that the share of households who are only making the minimum payment on their credit cards, that's risen. But funnily enough, so has the share of households who are paying off the full balance every month. So it's a very kind of nuanced picture. Most people are fine, but that's not to say there isn't a little bit of stress in the tail, if you like.
So, David, where's the pushback coming from? I hear what you're saying, but sounds like a very resilient consumer. At the same time, every single survey or poll I look at shows a consumer that's frustrated right now.
Well, one of the things we see in our data is that for low and middle income households, their spending growth is ahead of their wage growth, and that wasn't true last year. So they are feeling stretched. Right now, they've got the refund checks to draw upon. Potentially, they could put a little bit more on credit. So there is, I think they feel tension, and one of the ways that's translating into their spending choices is through, trade down, which we've discussed at length, trade down in groceries, trade down in restaurants, etc. But I think going, into sort of the second half of this year, and I suppose just to say the World Cup's a thing as well, isn't it? This will probably boost spending somewhat over the summer months. As we go through all that, then maybe at the end of this year we'll see a cooling. But I feel that the data is saying that slowing needn't be too abrupt.
David, you said something really important, which is that wage growth was starting to pick up, particularly at the lower end of the income sphere. Is it starting to catch up with inflation?
Yeah, I think that's probably true, just about. So our lower income wage growth is around about 3%, roughly where inflation is. Obviously, different households face different rates. Lower income households probably face, in all honesty, a slightly higher rate of inflation. But it is just about meaning that they're keeping their heads above water now in terms of price rises.
Does that signify to you that the worker is getting increasing leverage when it comes to negotiations at a time where people really are looking to that as a tell of how pervasive some of the inflationary forces could become?
Well, one of the very tricky things right now is whether this apparent strength we've seen in the labour market over the last few months, in payrolls, also in our own payrolls estimate has been rising very strongly. When we look at that data, it does seem to be focused more on the lower income end, which kind of complete the story of a sort of lower income recovery. But at least some of that hiring seems likely to be related to the World Cup, for example. A lot of it's in leisure and hospitality, etc. So I think critical is going to be how the labour market shapes up post-World Cup and whether we see some pullback in terms of the very strong jobs growth we've seen in the data.
David Tinsley of the Bank of America Institute, thank you so much for being with us. And I will just make a note that we actually are losing staff as a result of the World Cup. Jonathan Farrow out this week, potentially to go watch. He will be coming back next week, so it's not so we're losing him permanently.
But you know what? A viewer writes in. You know what else is this week? The U.S. Open, the golf.
Ooh, that's
Shinnecock, I believe, in the Hamptons.
It's
so where is Jonathan Farrow this week? It might not be football, as he would say. It could be the golf, which he loves.
Burning minds want to know. Look, this is really the ultimate question for so many different people, which is how much can wages start to pick up to allow people to absorb the costs more easily? You're already seeing some of that trading down, and clearly it's a concern. It's been coming out in both polls as well as consumer sentiment.
Yeah, you see a consumer that, frankly, is just cranky. They do not want to keep paying these higher prices. And how many times have we been on this show and people said, well, they have the tax refunds? I feel like the tax refunds have been spent multiple times since January of this year.
One person who's not cranky is Anne-Marie Hardern, who is really still basking in the glow. Coming up in the next hour, Liz Thomas of SoFi, Dave Dassey of Goldman Sachs, Kathy Bostancic of Nationwide, and Greg Bowdle of BNP Paribas. This is Bloomberg Surveillance. Good morning.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
We're at the beginning of a new frontier here. This is a broad-based demand for capital. SpaceX orbital AI infrastructure is a venture capital style bet that's being treated as index fund mature and certain.
The Musk premium is extremely significant. It's critical.
Speculation is alive and well. Expectations are very high, and this really sets up the stage for disappointment.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks and bonds rallying as the Iran and U.S. Reach a truce. World leaders gathering in France to kick off the 52nd G7 summit, and oil prices plunging, giving a reprieve to a new Fed chair, Kevin Warsh. Everyone's in a good mood, including Anne-Marie Hordern in her blue and orange, as people take a look at the possibility that maybe, after months, we can put this conflict to bed.
Yeah, putting the conflict potentially to bed, at least getting an extension of the 60-day ceasefire. And Iran is agreeing that the Strait of Hormuz will open. The details after that are going to be incredibly challenging. Already Iran is saying there's going to be some sort of tolling that will happen between the Iranian and Omanis. That is not going to be acceptable to this White House or Arab allies. And on top of that, what happens with sanctions reliefs? What happens to oil waivers? Will frozen assets be lifted? What happens to nuclear? Will there be a reconstruction program that Iran is calling for? This is where it's going to be a little bit more messy because you have red lines that just don't align between Tehran and Washington.
And honestly, I think markets are sniffing this out to some degree, given that it isn't necessarily clear. You aren't necessarily seeing the broadening out and the outperformance coming from pockets that you would expect, say, Germany or France and those markets there. You are seeing the outperformance continue from big tech following the SpaceX IPO. And as you do get these G7 meetings taking place with the likes of Dario Amodei and other tech leaders joining them to discuss what could potentially happen, a question here about what their role will be, given that we've seen a bit of a percolation of regulation coming to the fore.
Oh, massive percolation in terms of export controls that the administration put on Anthropic models because they are concerned with this getting into the hands of adversaries and potentially some customers that would would use it negatively. I think part of this G7 and why the French president invited these tech leaders because they want to be educated. And at the same time, they want to get on the same page with the United States on how they're going to deal with these AI companies.
This is going to be a massive week because you have, of course, G7 going on in France. You have the World Cup ongoing. You have Anne-Marie still basking in the Knicks win.
We have a parade on Thursday.
Yeah, we have a parade
New York
on
will be
Thursday.
celebrating.
Putting that aside, we also, of course, have a slew of central bank decisions really headed off by the Fed on Wednesday. Kevin Warsh, it is the first time as Fed chair that he will be at this meeting and setting the tone. We also get decisions from the Riksbank, the Bank of Japan, Reserve Bank of Australia, BOE, S&B, Norges Bank, et cetera. At the same time, we get some data. We get initial jobless claims as well as retail sales. And then on Friday, we've got this deal signing. It all comes together with this confluence of how do central bankers respond to potentially inflationary pressures from oil abating, but potentially inflationary pressures from other places picking back up.
Well, I think for Kevin Warsh, and you nailed it, this is kind of a gift for him. He's going to be able to say, well, we're waiting for the administration to sign this deal, and you've already seen how oil prices have dropped sharply because of this. We are at $80 a barrel for WTI. That is a lot lower where people would have thought. I think also something else potentially helping the Fed, and this is what I spoke with Secretary Wright with on Friday in Houston, and the Chevron CEO, Mike Wirth, there are more barrels getting through the Strait of Hormuz right now. Some vessels are turning off their transponders. Clearly, the United States is helping transport some of these, protectively helping them transport out of the Strait of Hormuz and through the Gulf of Oman. So you are seeing potentially that story become a lot easier for the Fed to say, at the moment, we're going to be on hold when we can look through this in the future.
Right now, people are in a good mood, at least if you base it on where the markets are trading this morning. People, meaning Emory, up 1.3% on the S&P futures, NASDAQ futures up 2.2% with an interesting follow-on from SpaceX, those shares flying. Russell 2000 up 1.75% following the bond market rally that you're seeing around the world. Yields lower as oil prices come in, particularly at the front end of the yield curve. As Anne-Marie was saying, really taking pressure off Kevin Warsh and some of the other central bankers, 4.05% on the 2-year. When you take a look at what we're seeing in the oil space, you are seeing some of the lowest levels on oil prices that we've seen going back to the beginning of March before the conflict really kicked off, with New York crude WTI trading with an 80 handle. Coming up this hour, Liz Thomas of SoFi as a global relief rally lifts markets. David Dassey of Goldman Sachs on investing in the booming sports sector. Maybe we'll talk about some of the sports that have been dominating the weekend. And Kathy Bostancic of Nationwide looking ahead to Fed Chair Kevin Warsh's first rate decision. We begin this hour with stocks gaining, oil falling as the U.S. and Iran agree to halt hostilities. Liz Thomas of SoFi writing this: we are still in a bull market. Investors are still hungry for growth opportunities, and companies are still willing to spend to create it. Rotations can be healthy, but they are rarely smooth. Liz joins us now for more. Liz, great to see you. Thank you for being with us. Let's start with the concept of lower oil prices and whether that portends some sort of rotation into the areas that haven't been gaining, i.e., everything other than tech, or whether this really just causes people to double down on the AI trade.
Well, I think it supports the rotation that we started to see on or around June 2nd, when we started to see the pullback in many of those big tech sectors, semiconductors in particular, and a lot of the stocks that had done so well in the 3 to 4 weeks leading up to that point. So I think lower oil prices and lower inflation expectations, with emphasis on the word expectations, is going to fuel, hopefully, more of a rotation into some other places. That being said, obviously the SpaceX IPO and the excitement that we saw around it, the hype around it, and frankly the success of it on Friday is driving a lot of a rebound in tech stocks today. And what we'll probably see for the remainder of the week, barring any big surprises from the Federal Reserve.
Are you surprised that we aren't seeing a greater rally on the heels of the truce that was announced between Iran and the U.S.?
Well, I don't think we've really had a chance yet. So it's possible that once the market opens today, and if we get confirmation that this will actually reopen the Strait of Hormuz, because we still have to wait a few days to see that that's going to happen, I think towards the end of this week and even leading up to it, if things continue to fall in place, we will see relief in certain areas that have been struck by inflation fears, and we'll probably start to hear commentary about businesses being less concerned about inflation. But I want to make a point that I alluded to in the first statement, is that the Federal Reserve is concerned with inflation expectations. Yes, of course, they look at the data as it's reported, which is backward looking, but they are also very concerned with expectations and making sure that those expectations remain anchored. So oil prices coming down certainly helps that cause and makes Warsh's job on Wednesday slightly easier than it was without this peace deal.
Yeah, it brings down the temperature just a little bit. At the same time, Maersk is saying at this stage no changes to their operations. Then the announced agreement is welcome, but they need to wait before they start moving, some of these vessels through. What is going to be for you the most important aspect of this deal to learn, and you think potentially could be very bullish for the market?
Well, when you look at what's most important, I think the obvious answer here is that the strait is reopened, that oil starts to move closer to a volume that it was pre-war. Yes, there have been some more barrels moving through the strait, but not nearly what the world needs. And there have been now 15 weeks of an oil supply disruption. It doesn't necessarily start flowing and reach its final destination very quickly. So that's why I'm sort of hedging the commentary, because it's going to take a while for that supply to come back online. And there will still undoubtedly be some disruption in prices, some disruption in operations for certain businesses, Maersk being an example of a business that might be disrupted by that, at least in a short-term period. So I think companies are being careful to hedge their commentary as well and make sure that they're allowing for what still could last as a price disruption for a couple months to come.
As the market, though, starts to put this behind us, and they almost have been for a few weeks now, what's going to be the biggest risk for you going into year end?
The biggest risk here is that we hear some sort of commentary from tech companies that they're slowing down CapEx. I don't see that coming as a likely scenario, but regardless of a rotation in the market and cyclicality that might return, this market is still very dependent on the AI trade, and particularly now at this phase, on the AI trade proving productivity, proving earnings, and proving that it can start to reach into other sectors and increase productivity there. So not just benefiting the tech sector. And that's one of the reasons I've been talking about healthcare, this still being a good entry point. Healthcare has seen decent returns since that June 2nd time that I talked about, where technology started to pull back, but I do think healthcare can do well through the end of the year, looking forward to that productivity gain. And it serves as a defensive growth sector, particularly in a time when midterm elections are coming up.
Liz, how concerned would you be if there was a hawkish shift at the Fed this week on Wednesday, despite the expectation that Kevin Warsh will try to take the most dovish approach to maybe dropping the easing bias?
Well, with one hike already priced into the market, I don't think that there would be too much of an overreaction in the market. I think that the Fed will do what they can to leave flexibility in the statements, much like Jerome Powell did on different occasions, trying to leave the door open to we will react however we need to given the data. I think there's actually a higher chance that Kevin Warsh has already been expected to say something hawkish, but he comes out and actually says a few things that are more dovish. The other thing that I would be listening for on Wednesday is for him to make note of the fact that it's not just interest rate policy that they plan to affect. He has been very clear that he wants the Fed balance sheet to be lower, and there is a chance that maybe they use some of those tools rather than interest rates to affect the market. So that may even be seen as a dovish comment if people start to price out the idea of a rate hike.
Liz Thomas of SoFi, thank you so much for being with us this morning ahead of a very busy week. Citigroup's Andrew Hollenhorst dropping this note on the issue just as we were talking, saying this: the planned reopening of the Strait of Hormuz and ensuing drop in oil prices will remove upside risk to inflation from energy prices as a reason to pursue more hawkish Fed policy. Together with last week's cool core CPI reading, Chair Warsh can make a dovish case at this week's FOMC, leaving eventual rate cuts still on the table.
If it's a dovish case, does that mean that basically they keep the easing bias? I mean, is that basically what Citi would think, that they were able, given what's going on, could they keep the easing bias? I'm sure everyone else on the FOMC is there.
Liz's point, though, is an interesting one. We already have one rate hike baked into the market through the end of this year. Potentially, the trade here could be more on the dovish side if there isn't necessarily some sort of support on the committee to get a sense that a rate hike truly is on the table for later in 2026. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The U.S. and Iran reaching an interim agreement to end the war and reopen the Strait of Hormuz. Officials from the two countries will meet in Switzerland to formally sign the agreement Friday, setting the stage for then 60 days of negotiations on the fate of Tehran's nuclear program. Target naming Isaac Mizrahi as its first creative director at large. The company says Mizrahi will advise its design teams, mentor young talent, and identify new partnerships. The New York Knicks are NBA champions. The city holding its first ever ticker tape parade for the team this Thursday. Mayor Zoran Mamdani saying he'll hold a ceremony at City Hall where his administration will present the team with keys to the city. And that is your Bloomberg Brief. Lisa.
They already have the keys to the city right now. Vonnie, thank you so much. Okay, Anne-Marie, go ahead.
It's just amazing. I think there's one stat we didn't talk about this morning, which was Jalen Brunson's 15 points in the fourth quarter, which I saw live in San Antonio, which was the 6th borough on Saturday night. And the only other individual that's ever done this, according to ESPN, was in 1998, and that was Michael Jordan. And obviously everyone knows he's the greatest of all time. So Jalen Brunson is an absolute New York hero. And he did it. He did what he said he was going to do. Yeah. Against everyone saying he couldn't do it. And there was one New York Knicks radio broadcaster that had this line that honestly grown men were crying at. No lead is too big, no guard too small.
And right now, a lot of people are cheering the legacy that Jalen Brunson left with his father as well. Up next, we're going to be talking about this more and the investment opportunity behind sports, because people are willing to pay a lot to come together and to have these experiencing. We're going to have the morning calls plus Dave Dassey of Goldman Sachs on investing in the sports sector, given what we saw over the weekend. Not just the Knicks, also we have the World Cup, also we have the U.S. Open, all of that coming up next. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Space is kind of an interesting opportunity. It's great that when SpaceX lists, it brings a lot of eyeballs and interest and good research to the sector that used to be just the domain of governments. You know, space is really well and truly now the domain for commercial enterprise. And that democratization of space is what you've seen just grow tremendously.
That was the Rocket Lab president and CEO Peter Beck after the Monster IPO, a record allowing SpaceX to become nearly a $2 trillion company. Another company making news this morning in the tech sphere is NVIDIA, coming out with its first bond sale, first high-grade bond offering going back 5 years to 2021. The shares are off some of the earlier highs. They had been up significantly more. Now they're up 1.6%. They're planning to sell this particular series of bonds in 7 tranches with maturity spanning 2 to 30 years. This according to a person with knowledge of the matter. It follows a slew of different bond offerings from the likes of Alphabet and Amazon as everyone tries to load up and build out to try to win in this race for AI. Time now for the morning calls. First up, KeyBank upgrading Rocket Lab to overweight, seeing compelling opportunities across the rapidly growing space sector. Next up, Citi raising its price target on Texas Instruments to $345 from $280, citing recent price increases and tailwinds from data center demand. Those shares up 3.5%. And finally, Needham lifting its price target on Roku to $170, seeing its acquisition by Fox as an opportunity to create more value from Roku's platform across a broader system of devices. Those shares up 1.75%, had already rallied ahead of this on rumors of deals last week. Meanwhile, we are all Knicks this morning. The New York Knicks winning their first NBA title in 53 years, helping send shares of MSG Sports to record highs as the team closes in on a $10 billion valuation. Dave Dassey, global co-head of the sports franchise and investment banking at Goldman Sachs, writing, the sports market continues to grow and the subsequent liquidity is having a positive effect on teams and leagues. Dave joins us now for more. Dave, wonderful to see you. I'm sure it was a big weekend for you as everybody focused on their various sport of choice. I'm curious how much you've seen the investing world change around sports over the past couple of years.
It's certainly been very dynamic, and if you want to truly understand what sports are like, just look at the Knicks this weekend. Look at what happened with the Hurricanes last night. Just the sense of community, the sense of engagement, the ability to really bring a city together, bring a region together. It's very, very powerful. And obviously, with the World Cup going on, we're going to see more of that over the course of the next several weeks here. So it's a great indication of the excitement in terms of what's coming together. In terms of the evolution of sports, it's changed very dramatically over the course of the last several years. We'll talk a bit about institutional capital, which is coming into it. But fundamentally, sports is an asset class. We believe it's a $1 trillion plus asset class. It continues to be very, very dynamic. It continues to grow at a very accelerated rate. And we're seeing increasing pockets of capital that really want to invest in the sector.
You've seen family offices. You've seen others that have IPO'd and potentially have a lot of cash. You have a lot of potential out there for people to get in on this. You talk about there has been institutional adoption, particularly from people looking for an inflation hedge. Can you explain how sports is an inflation hedge?
Fundamentally, as you're right, we're seeing a lot of interest across really three different groups of buyers. But you can aggregate audience. Media rights are growing pretty dramatically, given that sense. It's something people want to be part of. And so, again, it's back to this community. You have pricing leverage, you have the ability to really grow. And for the North American leagues and the many leagues around the world, you do have some level of governance. In essence, salary cap in place where you have some level of control in terms of the costs, but there are many, many different ways you can grow from a revenue perspective. And so we are seeing that as an inflation hedge. You're also hearing this hedge against AI and the ability to, in essence, right? It's real, it's live, it's in person, it's dynamic, it's direct to consumer. And so all these ways that it's not being disintermediated by AI and what we're seeing in so many other sectors of the economy.
If you have an interest to invest in sports, how do you know when to time it?
Well, timing can be a little bit challenging because they're not for sale all the time. We think about sports across three different fundamental verticals. So it's teams and leagues, it's sports adjacencies, which is all the dynamics of companies that grow up around sports. So think gaming, ticketing, data analytics businesses, live events businesses, talent agencies, apparel companies, et cetera. So that flywheel. And then infrastructure. So infrastructure is really stadiums, arenas, and all the infrastructure that goes around it. And we're seeing strong interest from institutional capital
across all three of those different verticals. In terms of the teams, there are multiple ways to get in, and we're seeing really three different pockets of capital that have strong interest. So your typical sports owners, the control owners, the multi-billionaires, the people who can really buy and control those teams. Family offices, these multi-billion-dollar family offices around the globe have a strong interest in sports, both from just an interest and passion in the team, but you're also from an asset class allocation in terms of these are very, very long duration assets. You talked a lot about the Knicks, but many of these teams have been around 50, 75, 100 years. They'll be around 75, 100 years from now. And so the duration of the investment lines up really well. And then institutional capital, more traditional private equity, we're seeing a lot of structured capital come into the sector. And then we're also seeing, in essence, insurance capital, sovereign wealth fund capital. Again, some of this longer duration capital really has an interest in terms of finding its way into the sector.
Well, I'm excited about the Knicks, not just because I was at the Game 5 on Saturday where they won the championship. I heard Dolan speak. Do you think now's the time, potentially, given how Madison Square Garden is trading as a stock, given the fact this is the first championship in 53 years, do you think he would actually sell even maybe a minority stake?
I think it's really hard to comment on any of that, but fundamentally the valuation in the intro you talked about how it spiked up. That's been one of the interesting things is the public companies around sports have traditionally traded at significant discounts to a private market type valuation. That gap has obviously narrowed pretty dramatically with respect to the Knicks and the Rangers. But look, these are really unique situations. There have been millions of Knicks fans for many, many years. I think coming on the back of this championship, the Knicks fans, right, there will be millions more Knicks fans. And as we're first starting to get into this direct-to-consumer opportunity set and better data and the ability to manage these teams more as professional-type businesses, there's significant upside for all these franchises, and certainly franchises in these big major cities that can not only be city brands, regional brands, national brands, but truly global brands. I think there continues to be a lot of upside, and that's why you're seeing a lot of this capital have an interest in terms of trying to get into the sector.
Dave, I'd love your thought on pricing of tickets. We've talked a lot about that on our show, whether it's the Knicks tickets that got pretty intense in terms of pricing or the World Cup ticket pricing. From an investment perspective, would you rather see a building in the fan base and sort of the popularization, or would you rather see just maximizing the financial opportunities at different events?
I think it's a combination of both, right? Certainly ticket prices have been driven. You go back to your question around inflation. And so I think each individual team, each individual league is trying to do this in a very dynamic way, which is trying to do both, right? Which is provide a really premium fan experience for those who are in the arena. But I think what's different today than it may have been 5 or 10 years or so ago is this ability as a fan to engage with this content the way you want to. Just look at all the watch parties around New York, around the region. Certainly you look at the World Cup, there are watch parties in cities that aren't even hosting games around the globe. And so fans have an ability to engage in the content, and owners of that content really have the ability to expand that fan base. And then digitally, again, the technology, we're just at the nascent stages of this, but the ability for fans to engage, be on the other side of the world, but feel like they are part of that community and actively engaged in that community is really, really unique, very, very powerful. And I think you're going to start to see sports teams talk more about lifetime value of a fan as the team and the individual get to know each other better, lifetime value of a family, et cetera. It's a very, very dynamic world. We think there's a lot of really exciting growth ahead.
Dave Dassey of Goldman Sachs, thank you so much. Dave Dassey there helping to run their sports effort. Coming up, we're going to be speaking with Kathy Basancic of Nationwide on why the markets may be overestimating odds of a Fed hike. That's next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We do see markets that are embracing the idea of a truce between the U.S. and Iran. We are getting some commentary from Vice President J.D. Vance speaking just moments ago, talking about this truce, saying that the deal gives the U.S. enforcement over the Iranian nuclear program, saying that there already has been traffic going through the Strait of Hormuz. This is something that AMH has been talking about and reported on with Chris Wright. Also says that there has been misreporting about the U.S.-Iran deal, that they hope to release text of the Iran deal later this week.
That's going to be incredibly important because right now what you see is the White House put out what they think the terms are versus what the regime thinks the terms are. Also, the vice president saying he expects Hormuz will be open toll-free in the long term. He expects that. That is not what Iran expects. Iran expects some sort of monetary receipts when it comes to tolling or being able to allow vessels to go through. When J.D. Vance also talks about ships are enjoying more traffic, I spoke to Secretary Wright about this in Houston. He says they see an uptick of 7 million barrels a day. 20 million barrels a day is what flowed through Strait of Hormuz before the shutdown. He says it was coming to around 15 million barrels a day, so he thinks they're about half. I will say, JP Morgan has that number more at 5 million barrels a day. The Chevron CEO told me just after that they see it more like 3 million barrels a day, but it does signal that more product is getting through.
Yeah, which potentially was one of the catalysts for some sort of negotiation agreement to try to structure some of the discussions more significantly. In the meantime, you are seeing a lift to markets. Given the news of this truce, equities across the board rallying, particularly led by tech. NASDAQ up 2.1%, Russell 2000 up 1.7%, and S&P futures up 1.25%. We are 1 hour away from the cash open. Let's get over to Yahira Anand for some morning movers. Yahira.
Hi, Lisa. It is M&A Monday. I saw that Salesforce just announced a deal, but take a look at Fox shares. They are plunging 13% in the pre-market, while Roku is getting a boost on this news that the media giants agreed to buy Roku in a cash and stock deal, valuing Roku at $22 billion. This will give Fox access to more than 100 million streaming households, and it's just the latest sign of consolidation across the media industry. Speaking of, we are seeing Paramount Skydance shares rising 3.5% in the pre-market on a major win, the Justice Department clearing its $110 billion takeover of Warner Brothers Discovery, saying the deal is unlikely to harm competition or consumers. However, a group of state attorneys general led by California is still preparing to block the deal, so there may be another hurdle there. And as SpaceX heads into its first full trading session, we are seeing shares rising nearly 6% in the pre-market after its blockbuster debut, getting a boost from comments by Elon Musk over the weekend that SpaceX could generate over $1 trillion in revenue by 2031. That would be a dramatic leap from the nearly $19 billion it generated last year. Lisa.
Thank you so much, Yahira. Meanwhile, the Federal Reserve preparing for its first rate decision under new chair Kevin Warsh. Bloomberg's Enda Curran joins us now from Washington. Enda, great to see you. A real question about what will be the focus at this Fed meeting. We have, of course, a statement of economic projections coming out of the Federal Reserve. Of course, we'll also hear from Kevin Warsh. We haven't really heard from him, at least not to directly address to the market, since he took this spot. What's in the docket for you?
Well, exactly, Lisa. It's the first time to really hear from Chairman Warsh since he took over the job. I think maybe two threads on it. One is policy, one is politics. On policy, what signal does the chairman send on inflation, especially in his post-meeting press conference? We know they're not expected to change policy, but does he come across as hawkish? Does he sound the alarm on inflation? Or does he try and thread that line, not using transitory per se, but try and calm fears around where inflation is headed, especially on the back of the Iran news over the weekend? So inflation and signaling on that is number one. Then number two, on the political side of it, what signal does he send about change at the institution, at the Fed? Does he spell out a roadmap for the kind of regime change he spoke about in the run-up to get the job? Does he offer any details on that during the press conference, or does he not? So I think plenty to look out for on the policy side in terms of signaling on inflation, and see if he gives us any colour on the political side in terms of what changes he wants to make at the Fed.
And a big criticism by Kevin Warsh of the Federal Reserve back in 2011 when he was leaving the board, but also subsequently has been the use of the balance sheet. Are we expecting to hear anything on that front this week?
It's an interesting one. It was obviously the idea of shrinking the balance sheet, Lisa, was a central part of Chairman Warsh's commentary in the build-up to getting the nomination for the Fed. Since then, though, both from Chairman Warsh himself during his confirmation hearing and people in Fed world, everyone has been kind of making the point that, look, A, there's no urgency in shrinking the balance sheet, and if you were to do that, it has to be done very methodically, very slowly, very cautiously. You have to talk to the market and everything else, sound it out. So if he does give any direction on the balance sheet, it would be a surprise if he leans into some kind of a fast process that catches markets off guard. He will want to take this steady as she goes, and certainly from his very first meeting, which sets the tone for his leadership, he won't want to get markets offside.
Enda Curran, thank you so much, as always, for being with us. We'll be with you throughout the week as we anticipate and then analyze that Fed meeting. Kathy Bostancic of Nationwide writing, we expect no change to the policy rate at next week's Fed policy meeting, and we see the bar for tightening as quite high. Kathy joins us now. Kathy, great to see you. I am curious what you think about this latest move with the truce between Iran and the U.S. and how that factors into the calculus at the Federal Reserve this week.
Well, thank you, Lisa. Happy to be here. So I think this allows oil prices, gasoline prices to continue to ease lower, and maybe even more quickly than we expected, frankly. But I think this takes pressure off the inflation picture, assuming this continues as kind of advertised. And we do see gasoline prices. That's been the main factor pushing up inflation. And we really haven't seen it spill over to other goods and services and the core measure in a large way. Jet fuel, diesel, but beyond that, it's been very focused on energy.
Yes. And people also look, though, at the housing picture, and you actually did see a tick up in owner's equivalent rent. You did see a pickup in housing inflation that otherwise had been going in the opposite direction. Small, 1 month, I know. But there are signs that there are other pockets of inflation, whether it's AI, whether it's the fact that wages are starting to tick up on the margins, a good thing, still not really at inflation yet. But a sense of strength that potentially this could really boost, given the fact that people see consumers' pockets as being relatively flush and willing to be deployed.
Yeah, I know. I think those are all good points. I guess what I see is those lining up to make inflation maybe a little sticky on the downside, but it doesn't mean that inflation is going to stay elevated. And I think that's a key difference. I don't think the Fed is going to be looking to cut rates anytime soon, right? I think they're on hold for a very long period of time, probably into next year. But I just see that bar for raising rates is pretty high. I just don't see broad-based signs that the economy is overheating. There are little pockets. Like you said, we're keeping an eye on owner's equivalent rental inflation, but I don't suspect that we're going to get another 0.3, 0.4 increase next month. I think we may have troughed, right, on disinflation in the rental sector, but it doesn't seem like we're picking up, is my point, outside of energy.
Could they keep the easing bias now?
I don't think so. I think that's
baked
tough.
in.
Yeah, that I think has to go. It's already been, communicated to the markets, and it is the right thing to do, right? It's very.
But it's communicated to the markets by other members, not the Fed chair.
This is true. This is true. So he's boxed in a bit, right? And I think it was based on their real beliefs, the different Fed officials, but in effect, it does sort of box him a bit. I do think he'd have a hard time arguing against that, frankly. And he himself may just want to hold the line against the idea of a rate hike. That's probably where he's going to come in on that.
Who is Kevin Warsh? I know this sounds like, you know,
well, the real
biopic.
Kevin Warsh stand-up.
Yeah, well, I mean, we're talking whether it's Eminem or a biopic, there's this sense that we don't know the Kevin Warsh in his current iteration. We know who he was back in 2011, and we know who he was in the hearings, and those are two different personalities with two different goals about what to do with the Fed.
True, and once you're in that seat, it's a lot different, right? It's a lot more responsibility and things that you have to think about and worry about, and then, of course, some pressure, outside pressure as well. So, but I think he's been pretty clear, at least he's formulated his view that Fed should be communicating less, right? So I'm going to be listening very closely, ironically, listening to his communication to see what he wants to do about communication, right? So that press conference is really going to be quite interesting. And does he submit a dot plot estimate, right? Because he's been against it, right? He, you know, if he wants to stay true to his argument, he shouldn't
I love that you said this, because I feel like people have been rolling my eyes as I've been pushing this. I think it'd be a big deal if he doesn't submit a dot.
I think it would be a big deal, but it'd be consistent with his view, right? That, and it's a sign, right? And even Chair Powell has struggled with the dot plot. I mean, I think we all do, frankly.
I think that everyone says that if we get rid of the dots, it probably is a good thing, considering that it's essentially throwing a dart into a dartboard. That said, there is an issue of how you really display forward guidance, and a lot of that will come, in my mind, what I want to see is, does he lay out artificial intelligence, whether that's disinflation, or some sort of, you know, overarching guide to the way he sees the world and how that will inform his ability to either discuss Fed policy as being restrictive or not restrictive, et cetera. I mean, do you expect that type of statement, or do you think that it's going to fit into the formula of the Jay Powell type of press conference, at least the statement?
You know, I don't think any of us knows for sure how it's going to play out in the press conference. That's why it's going to be so interesting, frankly. You know, he may refrain from getting into too many details because he's sort of suggesting the Fed's been communicating too much. Does that mean even at the press conferences, do we get press conferences after every meeting? I mean, it's just a lot of uncertainty here. And how much detail does he want to go into? As you said, does he really want to dive in his first press conference and talk about whether monetary policy is restrictive enough now or not? And trim mean, right? The inflation trim mean, does he bring that up? There's a lot that we have to watch for.
If there is less Fed communication, does that tighten financial conditions?
It's a great question. Not necessarily. What it does, it could go either way, but it's leaving the markets more to interpret based on the data where the Fed is going. And that harkens back, like when I started, I'm dating myself, well, when Greenspan, right? He would say less is more, right? And the fact that he was obfuscatory, that was a good thing. He accomplished his mission. If you heard him speak and no one knew exactly where he was leaning. So that seems to be where Warsh wants to go back to. We'll see how that plays out.
Kathy Bostjancic, thank you so much for being with us. Wonderful to see you. Kathy Bostjancic of Nationwide, ahead of the Fed meeting and so many other Fed meetings. I mean, do you think that the other central banks, not Fed meetings, but other central banks around the world, do you think they feel like they're overshadowed every time? Yes. The Riksbank, the Bank of England, you know, the Reserve Bank of Australia, you've got the Bank of Japan, and they're going to hike rates. This is going to be action. They're not going to do anything. They're going to hold rates, but everyone's talking about the Fed.
But the Fed is the central bank to the world. What the Fed does matters more than any other central bank in the world. And your last point is really interesting, and Jonathan's been talking about this. If Kevin Warsh decides he's not going to be that active on the communication circuit and going and doing speeches, well, then he risks having others define the direction of travel at the Federal Reserve for him, not himself. And that potentially is going to be a real problem for him.
And if you have more uncertainty around Fed policy, does that naturally create more volatility? Usually more volatility is a restrictive factor on markets. And is that kind of by design?
And I already see the president drawing up, potentially he's frustrated at the end of the year, his new name. You know, it's too late Jay Powell, and I'm sure he's working up what he's going to call Mr. Kevin Warsh.
Worry Warsh.
No, great hair, bad chair. I mean,
ooh,
that's coming.
You're already trying to come up with the memes right now. We're focused on the week ahead, and let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. Big Tech's AI debt binge continues, this time with NVIDIA looking to raise at least $20 billion in its first high-grade bond offering since 2021. Sources telling us here at Bloomberg the chipmaker is issuing a 7-tranche bond sale with maturities spanning 2 to 30 years. The Carolina Hurricanes are your 2026 Stanley Cup champions. Carolina took the series in 6 games after shutting out Vegas 3-0, securing their first title in 20 years. Head coach Rob Brindamore becomes just the 14th person to win the Cup as a player and a coach. Sticking with sports, the New York Knicks are gearing up for a ticker tape parade to celebrate their NBA championship. The parade kicking off Thursday at 10 a.m. Eastern in Battery Park. It will travel north on Broadway to City Hall along the path known as the Canyon of Heroes. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. We've been spending the whole day staring at the Knicks Cup by Anne-Marie. I will just note, though, I am getting some call-in notes about what the nickname could possibly be. Wishy-wash is one that could be. But we're anticipating what will be, essentially.
I think at some point, if the president's frustrated, he's not going to stop what he normally does, and he's going to go after
Were you going to take today off? You were going to take today off, weren't you?
I would have if John was here.
Up next, he's off with World Cup and the U.S. Open. Up next, setting you up for the day ahead, plus Greg Bowdle of BNP Paribas bracing for volatility after the historic SpaceX debut. From New York, this is Bloomberg Surveillance. Good morning.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The path to a Fed rate hike, in our view, was never going to be just about inflation and absolutely not just about oil-driven inflation. If consumers in general feel freer to spend, they have more disposable income to spend on everything but gasoline, then just maybe there's a bit more resilience.
That was Seth Carpenter of Morgan Stanley after a deal potentially will embolden a consumer to keep on spending. A lot of big tech companies are emboldened this morning and just in general when it comes to capital raising. Yes, we got the SpaceX IPO. The debt market still continues to be fertile ground for some of these tech giants to raise money. NVIDIA shares up 1.3%, curtailing some of the earlier losses in pre-market trading, selling about $20 billion, at least $20 billion from its first investment-grade bond offering in 5 years, announcing it this morning. There are 7 tranches with maturities spanning 2 to 30 years. Price talk on the longest tenor is a spread of about 0.9 percentage point above treasuries, which is very, very low. Just to give you a sense, right now, the average spread, the extra yield over benchmark rates on investment-grade bonds is about 0.7%. So that means it's 0.72%. This is close to the lowest level in about a decade. NVIDIA, yes, has a longer tranche, longer maturity than this, selling at just slightly above that. Right now, the market is wide open for these deals.
And for the most part, the market's absorbing it. Investors are absorbing all of this supply. And we've seen this from Alphabet, as you mentioned earlier, from Amazon, tapping every corner of the debt market, going around the globe to find this, to basically finance the entire AI build-out and the compute capacity that these companies are going to need. Of course, I look at this, though, and I start to get a little bit worried about circular financing in terms of all of these companies. They need this money to invest in other companies that are also tapping debt markets to invest in their same companies, you know.
Yeah, it's one big happy investment raising process. Counting down to the opening bell, here's a trading diary for the week ahead. Today, the G7 meeting in France kicks off. Tuesday, we get a Bank of Japan rate decision as well as RBA. Wednesday, retail sales, a Fed rate decision followed by a Fed chair Kevin Warsh press conference. People don't know what to expect. Will he dot or won't he? Thursday, another round of jobless claims, and on Friday, U.S. markets are closed. Of course, there is this deal that could be signed, so maybe Anne-Marie will make her way back to the studio. They're going to be signing a peace deal. She's looking at me in horror. So meanwhile, SpaceX extending gains following Friday's blockbuster trading debut. Greg Bowdle of BNP Paribas writing, when IPOs trade, there is a flurry of activity in the first 2 weeks. The selling flows in equities that we expect over the next month create a risk of high market volatility. Greg joins us now for more. Greg, great to see you.
Likewise.
So how much do you take in terms of signal from the early trading in SpaceX, considering that a lot of people thought that it was priced high and has only gone higher?
I think it was a pretty healthy first day's trading, but when we go back and look at prior IPOs, the range of outcomes can be very wide. First day's trading doesn't necessarily give you too much in terms of signal.
At this point, though, going forward, what are you trying to glean from this particular IPO, given that people said that it would set the tone for Anthropic and for OpenAI, but also for the space economy and also just in terms of how robust markets are?
Yeah, I think we're in an environment where liquidity is incredibly important and gradually becoming drained. So how these kind of capital raises are treated by the market and traded is incredibly important. We have a lot of liquidity events coming up. So obviously we've had the first day of trading. There are a lot of liquidity events for the stock over the coming weeks. How those trade, I think, is important for the broader market.
Which ones are you looking at? What's coming up?
So, I mean, today we get the launch of levered ETFs. So it'll be interesting to see how they affect the trading. Options trading starts tomorrow. We then get a series of index inclusion events, NASDAQ being the most notable, which is over the other long weekend, 4th of July weekend in the US.
It felt like SpaceX really not only hit the bar, they overexceeded. You're putting a little bit of risk out there. You don't think they're out of the woods yet?
Well, I think that when we look at IPOs, historically, you've seen plenty of IPOs trade really well in the first week and then struggle. We look back at something like Meta as one of the last large tech IPOs, traded well on the first day, halved over the coming couple of months, then went up 200%. So my message is very high volatility around IPOs is normal.
The volatility could be a good thing. In terms, at least according to right now, people are looking at volatility. It means buying opportunities. I mean, essentially, that's how everyone has been taking every single dip that we've seen. Why would it be different this time?
We titled our 2026 outlook by the dip in spot and volatility. So far, that's been the right market. It has been a trading market, and you take advantage of these opportunities. I would say...
Is is there actually cash on the sidelines? They can come in and absorb some of this paper without having to sell other assets.
Ultimately, it's impossible to know, but I would say the last 10 days price action shows us that there's not as much as maybe people think. We wrote a note kind of a couple of weeks ago suggesting that the SpaceX IPO would need people to take money out of the market. And when you look at some of the stocks that have underperformed over the last 10 days, some of the stocks that have seen the highest volatility, they are some of the most owned names by retail. So we absolutely think last week, some of the volatility that we saw and the prior Friday was people making space for the SpaceX IPO.
There's a sort of interesting development in markets, which is that even when there is volatility in a specific sector, it's like, you know, the pistons in an engine, right? So when that goes bad, then you have, you know, everything else going up and a broadening out in terms of a trade. Why would it be any different this time in terms of just a ball of money that's washing around and all of this and just sort of shift somewhere else when there's a moment of volatility?
Well, I think in the last couple of weeks it hasn't been, and I think it's been astounding some of the dispersion and rotation that we've actually seen on some of the large down days. Now, the risk to the market is that you start to have some negative price moves and you get higher correlation. That would drive much more explosive moves in market. I think over time, the weight of issuance is something that can potentially drive that.
Are we going to see more of this when it comes to Anthropic and OpenAI coming to market? People having to sell elsewhere to get in there?
I would absolutely expect to see that. I think one of the things that we've said about this is when you look at some of the flows, whether it's the passive buying flows into SpaceX, selling flows from the market, retail making space. None of these flows standalone are actually that large, but it's the cumulative effect of them. So we absolutely think that the higher volatility we've seen, particularly in NASDAQ, which has been quite extreme over the last 7 or 8 trading days, is attributable to the liquidity environment, and we are absolutely going to see more of that this year.
Greg Battle, wonderful to see you. Thank you so much for being with us. Greg Battle at BNP Paribas here with us on Merger Monday, on Deals Monday, on Truce Monday. It seems like a Monday where a lot is getting done. Yes, you have the backdrop of a truce between the U.S. and Iran, fueling a risk-on environment, but also we're hearing deals. It isn't just Fox and Roku. Salesforce is buying an AI customer service firm for $3.6 billion. It seems like capital markets are just wide open with liquidity just being poured in.
It's a massive summer in that sense when it comes to deals that are getting done in terms of the IPOs that are coming to market. And then, of course, good news for this market is the fact that potentially this is a real truce in terms of, at minimum, getting the 600 tankers that are stuck right now in the Strait of Hormuz back to operation and coming through. The details, though, going to be a bit messy down the road.
Which a lot of people are expecting we might learn more from potentially this week when the actual verbiage of the deal is released. And then a 60-day period of further negotiation. We did hear from the vice president earlier this morning about that. And of course, your conversation with Chris Wright, a lot's already getting through.
Yeah, he says 7 million barrels a day. Chevron cautioned it was a bit, they think it's a bit more closer to 3, but the bottom line is there is more oil getting out of the Strait of Hormuz right now.
And there's more liquidity in markets as we see all of these deals really coming to the fore. Coming up tomorrow, Keith Lerner of Truist, Victoria Fernandez of Crossmark, former Fed Governor Betsy Duke, and Torsten Slok of Apollo. As we head toward that meeting Wednesday, we have the FOMC and the new Fed Chair, Kevin Warsh. This was Bloomberg Surveillance. Good morning.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Pushing back towards record highs, 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, stocks surge and oil plunges as the U.S. and Iran strike a deal, but key questions remain to be answered.
And SpaceX may just be the beginning. A $1.5 trillion wave of new stock could be headed for Wall Street.
Plus, Fox's big bet on streaming. The company snaps up Roku in a $22 billion deal.
Well, you're going to have to forgive my voice a little bit. I'm a little raspy. A lot of yelling was had this weekend.
A lot of cheering.
A lot of cheering, a lot of singing. And now it's time to get to business. So I hope everyone is not nursing a hangover this morning. Or maybe I hope you are. NVIDIA this morning, it's up 1 1/3%. It's kicking off its first corporate bond offering in 5 years. It looks to raise at least $20 billion. A bond raise, deals are in this market. You have SpaceX, capital markets alive and well, man.
Yeah, absolutely. And there's cash out there. SpaceX is rising in the pre-market trading following its blockbuster debut. Shares closed 19% higher on Friday and turned Elon Musk into the world's first trillionaire on paper. You can see they're up another 6% in the pre-market to $170.
Let's get back to our top story, though, this morning, Matt. Oil plunging as the U.S. and Iran reach a tentative deal to reopen the Strait of Hormuz. In a Truth Social post, President Trump says the deal is now complete. Officials from both countries are set to meet in Switzerland this Friday to formalize it. Vice President J.D. Vance spoke yesterday on Fox News.
This is the immediate opening of the Straits of Hormuz and, of course, the lifting of the naval blockade that we've had on Iran along with it. The number two thing that it means is that Iran will never have a nuclear weapon, and not just pursue a nuclear weapon, but procure or try to buy a nuclear weapon as well. That's built into this agreement.
Joining us now from Geneva, head of the G7 summit, is Bloomberg Washington correspondent Tyler Kendall. Tyler, we've seen false dawns before with deals. What makes this one different?
Well, Danny, at this point, we've heard from both sides as well as mediators that they are going to get this deal over the finish line. But we know that there are still a lot of details that need to be hammered out. As people familiar with the matter tell us that Qatar is going to host another round of in-person talks between the U.S. and Iran this week to try to finish out, smooth out those remaining details that we need in order to see a signing actually here in Geneva on Friday. Because at this point, we don't have the finalized text from either either side, though they both have expressed optimism, but we still need to get some of those details, including when it comes to the Strait of Hormuz. Broadly speaking, the contours of this deal are the ones that we've been tracking at this point for weeks. The U.S. will lift its naval blockade, and Iran will reopen the strait. But just this morning, we had new reports from Iranian state media essentially suggesting that they're going to keep their grip on the strait. They say that it will be toll-free for this 60-day extension, but then after that, they say that Iran and Oman will jointly issue navigational services. We know that's something that will pose an issue for the U.S. as Vice President J.D. Vance, in an interview earlier today, says that the U.S. believes that the strait will be toll-free over the long term. Matt and Danny, the other big question that we have here is, what does financial relief ultimately look like for Iran? A senior administration official who briefed us before we came here on the ground says that will be dependent on ultimately how Iran responds to this deal, including when it comes to ensuring freedom of navigation in the strait.
You know, Vice President J.D. Vance was saying the important part of this deal was that Iran will never have a nuclear weapon. And although they've always claimed they're not pursuing a nuclear weapon, the New York Times did report they have 11 tons of highly enriched uranium. Does this deal with that stockpile? Does the agreement that he is likely to sign on Friday somehow remove that stockpile from the country?
That is one of the questions we have, whether or not we will see firm commitments around what Iran is willing to do when it comes to potential curbs on their nuclear program incorporated in this memorandum of understanding, considering that this is supposed to be a phased deal. That first you have the reopening of the strait, and then you will have those more formalized discussions on what those potential curbs will look like. We have reporting that on the table is that we could see Iran's stockpile of highly enriched uranium diluted and then leave the country. That is one of the aspects that we are tracking here. The other is the potential that Iran could commit to a 15-year moratorium on uranium enrichment. So these are the things that we have to watch to see if we get any firmer understanding on whether or not these will be commitments actually written down that they are going to strive to achieve in this longer negotiating period, or if at this point those are still up in the air.
Tyler, thanks very much. Bloomberg's Tyler Kendall there in Geneva, Switzerland. Now let's discuss the market impact with Bloomberg macro strategist Michael Ball. Clearly, oil is what you think about. First, we see crude prices drop drastically. The chances that the Fed will hike go along with it, and then equities push back towards all-time highs. Is this all good news for markets?
It buys time, and I think you're absolutely right to say oil is the main narrative again. We all got caught up in SpaceX Friday, but if you looked at Thursday and Friday when markets started to get this better tone coming out of the Middle East, oil was moving the rates markets, yields were again falling, and equities were taking the cue. You were seeing better breadth in equities outside of the AI leadership, which was then giving the indexes the boost they needed beyond just the narrow leadership that had occurred during most of the conflict. So it was a very positive tone. It's continuing on. But again, we have some time here to see what the details are, and as we just covered, there's some differences, and we'll see how that goes. I mean, there's some big differences still.
Well, the other shift for this market is more structural than macro, and it's just the huge amount of equity issuance. Yeah. You have SpaceX, which more issuance will be up as lockup periods expire. You have more IPOs, and JP Morgan has been putting the number at about $1.5 trillion of stock to be added to the market over the next 2 years. Right. How big of a shift is this, Michael?
It's pretty big, and again, when we think about what the buyback pulse is, which is about $1 trillion, but then you take out the dilution from like kind of compensation to employees and shares, it's more like 750. So here we go. We got a year where we're going to get about 750 billion in buybacks, and then we got about 2 years now, 1.5. So let's continue that out. That's about even for 2 years. Massive tailwind for the last couple of years, these buybacks, and that's now being negated by the new issuance. Also, it's going to reaffirm the narrative, and not to get too off track, but like this again is all very reaffirming of where leadership should be, where we're going to get a better proposition of valuation, because if we're getting a lot of actual issuance into high valuation, then the overall index valuation gets skewed the wrong way as well.
All right, Michael, thank you very much for joining us this morning. Michael Ball, Bloomberg strategist. Elsewhere in tech, NVIDIA is looking to raise at least $20 billion in its first corporate bond sale since 2021. Joining us now is Bloomberg Tech co-host Ed Ludlow. And Ed, maybe this was inevitable as these giants look to raise capital. Bond markets are wide open for them.
Yeah, there is a question, though, of why a company so flush with cash needs to do this. I mean, our reporting is that they'll use it for sort of general corporate purposes, refinancing existing debt. it's a spanning 7 tranches, right? 2 to 30 years on the maturity side. But just like FA Go, look at how much cash NVIDIA's got. It's like a little bit of a head scratcher of why they in particular would need to do it. They have a new sort of lean on shareholder returns, as you guys know from the last earnings period. But it is in line with what's happening. You're exactly right. Thinking Alphabet, Amazon, and how they are looking at trying to lower the cost of capital and give themselves strategic options, right? Maybe as BI rights to continue in NVIDIA's case, investing in the ecosystem of AI startups that rely on their GPUs for compute.
I want to ask about NVIDIA because we saw yesterday, or I should say Friday, 555 million shares, 555,555 shares come to market. But in July, in August, when lockups expire, we'll see another, billion shares coming into this market and maybe 3 billion in total by year end. How is that going to affect pricing?
You mean SpaceX, right?
SpaceX, yes.
SpaceX. Well, so the lockup is atypical in the sense that it's staggered. Some of the stock lockup is related to the share price hitting a certain milestone. For insiders, employees, and those that were existing holders outside of the float, it's kind of staggered also to calendar against earnings. But generally speaking, like all the phone calls I took Friday through the weekend, there was this great belief that we put a lot of emphasis on how well the venture capital firms did. They will redistribute to their LPs, and those LPs are endowments and pension funds, etc. And there is this unwavering belief that when they, by the way, when you redistribute from a venture fund, you're just literally handing over the shares. You don't give them cash in lieu of shares. You just say I assign these shares over to you, and they don't think those LPs will sell. They just don't. So that's a psychological thing for the market, but it is mechanically possible. You're absolutely right.
Yeah, the demand supply has been really interesting for SpaceX. Ed, can we end on Anthropic and this news that we got on Friday that the government is limiting their ability to sell the most advanced models to foreigners? Therefore, Anthropic's well, we're not going to offer any of this. Ed, this seems really bad for business. If you are a business using Anthropic and this idea that your model could be turned off at any time, that's not exactly a reliable thing you'd want to incorporate into your company.
Yeah, so basically June 12th, the Commerce Department put an export control on Anthropic and say, for Mythos and Fable, no foreign national use. And Anthropic's response is basically okay, then no one can use it because we can't police this on a case-by-case basis. That the user base is too big. Also, they made the observation many of their employees are foreign nationals, so now their employees can't use it. They're framing this as being a misunderstanding. The headlines of this morning, because this is a kind of in case you missed it story from Friday, there are foreign governments now in touch with Anthropic about it, the UK being one case study. But the technical issue is one that is not yet explained. There's something called a jailbreak, where through a prompt, a certain coding mechanism, you can go outside the guardrails that are put on a model and get it to do things that those guardrails are deliberately put in place to avoid. The issue is that no one's explained the existence of it and the parameters of it. So it's ongoing, but the relationship between this leading AI company, as well as a very prominent IPO candidate, and the US government is back in sort of a south trending direction.
Ed, we look forward to your coverage. Bloomberg Tech co-host Ed Ludlow, his program airs at 11. Later this hour, Sheila Kailu joins us from Jefferies, where she's a senior equity research analyst covering, airlines and space, as well as defense. So we'll talk to her about what's going on with oil in relation to these markets and SpaceX. Let's get a check of what's going on right now on the index level. In terms of futures, we're gaining 100 points on S&P futures, 1.3% the gain this morning. The NASDAQ 100 futures gaining 634 points, the gain of more than 2%. And it's really shows that it's not all about oil, although you can see Brent crude down almost 5% to 83.11 a barrel.
Some of the other movers on our radar this morning, a lot of deal news. Fox announced it would buy Roku in a cash and stock deal. It values the streaming video platform at $22 billion. Fox shares sink pretty rapidly as Roku only up 1%.
Salesforce agreed to buy Fin, a firm that develops AI-powered customer agents, for about $3.6 billion.
And the Justice Department closed an antitrust probe into Paramount Skydance's $110 billion purchase of Warner Brothers. They said the deal is not likely to hurt consumers or competition.
Coming up, we're going to speak with Jay Hatfield, who says the reopening of the Strait of Hormuz could send oil below $70 and the S&P 500 to 9,000 by the end of this year. This is Bloomberg Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. Former Fed Governor Stephen Miron is set to return to his former hedge fund. Axios reports that he'll be returning to Hudson Bay Capital as a senior strategist. He spent about a year at Hudson Bay before joining the Trump administration. He stepped down from the Fed in May, clearing the way for Fed Chair Kevin Warsh to take a governor's seat. President Trump celebrated his 80th birthday yesterday by hosting a UFC fight on the south lawn of the White House. It featured a 100-foot-tall arena and 7 cage matches with notable attendees, including CEO of Meta, Mark Zuckerberg. The event aimed to jumpstart Trump's celebration of America's 250th anniversary. And New York City officials are ramping up preparations for a parade on Thursday celebrating the Knicks' NBA championship win. It's set to kick off at 10 a.m. Eastern near Battery Park and travel north along a section of Broadway known as the Canyon of Heroes before ending at City Hall. This will be the first ticker tape parade in the Knicks franchise history. Danny?
And weirdly, everybody all of a sudden is sick on Thursday and can't go to work. Might be a few of those. Let's get back to markets. Infrastructure Capital Advisor CEO Jay Hatfield is raising his year-end target on the S&P to 9,000, saying lower oil prices following the reopening of the Strait of Hormuz could ease inflation. And he joins us now. Jay, great to see you. A punchy call that's about 21% higher from where we are today. What gets us to 9K at the end of the year?
Thanks, Danny and Matt.
It's great to be back. Well, there's three critical elements that drive our target. The first, you already mentioned, oil prices. In our models, which have historically been extremely accurate, inflation is driven by the money supply and oil prices. Obviously, oil prices were horrible for inflation. We think we'll quickly get to 70. We think people are way too bearish, maybe for political reasons, on oil. They're sort of hopeful that they'll stay high so that the Republicans blow up in the midterms. But if you analyze it, you know, I co-founded an energy company, so I talked to our energy traders. We think OPEC's going to go full out. They need the money, and also the Trump administration is going to encourage them to go full out. If they were going full out before the war, we'd be at about $55. So we're keeping $15 risk premium because, as you reported earlier, this is really just an agreement to agree. And we're a little bit skeptical that they'll actually agree in 60 days, but the strait will be reopened. Oil will be flowing very fast, we think, because of this production. So we get below 70, that starts to flow through to inflation reports. But we also have a new Fed chair. He does this thing called forecasting, not being data dependent. Data dependent means you're a horrible analyst. If I said I was data dependent, I'll recommend a stock when they report earnings.
Just to jump in, I thought Kevin Warsh was the opposite, that he didn't like the forward forecasting and he might be more data dependent.
He doesn't want the dot plots. That's like sort of 19, people disagreeing on what the future is. He wants a official forecast like the ECB does, but a good one that incorporates not Keynesian models, but things like the money supply side elements. So if they have a good forecasting model, they'll and also adjust inflation like we do. But he has his own adjustments. Inflation.
He looks at an inflation measure that takes out 50% of the PCE.
Yeah, we don't actually love that. We'd rather do the particularly dumb ones that they make up, like financial services and shelter. So if you use market rates, you can get that on our website. We're already below 2. CPI is 1.2. PCE is 2. So we think, unlike the prior incompetent chair, he'll actually look at that and make adjustments. And he has 3 members.
I got to push back against saying prior incompetent chair. I don't think.
I think actually I would too. He's massively incompetent.
Okay.
He didn't understand the money supply matters.
So leaving aside your take on Jerome Powell's time with the Fed, what you're saying is you think that Kevin Warsh is going to be able to push rates down, or the lack of inflation is going to result in much lower 10-year rates, for example, right? How low do you think that they need to go for your 9,000 forecast to be?
Well, and critically, we do not believe that Warsh is going to politically jam this, that the data will support it.
The data that he picks.
Properly adjusted. But any thinking rational person who looks at the data would agree with our numbers and everybody else's. We're just using market prices.
Now, having said that, your numbers are higher than every other number on the street, right?
I mean, for the target, yes.
For your S&P target, and I mean, I imagine that your 10-year yield target is also lower than most people on the street, because right now we're looking at 450, essentially 445.
Right.
Where do you think that's going?
Well, so we think right now, irrationally, there's 20 basis points of tightening. That'll go away as soon as that adjusts when the market opens. But we should have 75 basis points of cuts over the next year. And importantly, what drives the 10-year is expected cuts. A lot of times people say, oh, the Fed cut, but the 10-year went up. Oh, there must be some problem. But what happens is the Fed cuts, and then they put all this hawkish commentary and drive up the futures, and then the 10-year trades up. So all we need to do is have those priced in. The 10-year will drop close to 4, and every 25 basis points is an S&P multiple. So we had kept our target at around 8,000 because the 10-year had risen. But if we get below 4, then that justifies our 23 multiple. That those estimates have gone up 12% since the beginning of the year. So we're not being any more optimistic than we were at the beginning of the year. We're just adjusting. And I said the risk is the upside, because if you look at a chart, you can get that on the terminal. It's just straight up. It's like a KT22 in skier. It's just straight up.
Well, a lot of that adjustment,
earnings expectation charts, right?
And a lot of that has been people trying to recalibrate on this idea of the semi-cycle being very different, that they're not cyclical stocks, that they have this now perpetual demand because of what's happening on AI. So that 9,000, keeping in mind where the earnings upgrades have come from, how narrow is the path to 9,000?
Well, it's definitely narrow, but that's just the way the market is, because there's 50% of the market is tech. So you can't ignore, you can't take that out. We're going to have a much broader base rally, so we think financials will do well, consumer cyclical. The market was really kind of ridiculously strong while this war was going on because of these estimate increases. But if you look at that chart and you believe our 23 multiple, you would realize the risk is the upside because you really need to look every day. It's just rising every day.
You're looking at, so for people with terminals out there, SPX index EEO.
And you can click and see just how quickly it's going up. So if I come back or anybody comes back in 6 months, that number is most likely to be up another 5 or 10%. So our target would go up 5 or 10%. So the risk is all to the upside because we're in this earnings explosion. And so it's wonderful compared to the internet boom where you really had no earnings. All these companies were losing money. That's super risky, and you don't want that, and there was eyeballs. And we always try to distinguish our increase in target is based solely on earnings. Back then, if you remember, Henry Blodge and others would be like, oh, our AOL Time Warner estimate is now 3,000. It's because they have more eyeballs or something like that. Yeah, so it's nothing like that. We're just taking the same methodology based on interest rates, oil prices, and applying it. And if, like I said, my guess is if we do the same methodology in 6 months, it's going to be way higher.
Jay, thank you so much for coming in today. I saw your price target increase last night, and I said we got to get him on. Jay Hatfield there from Infrastructure Capital Advisors. He is the CEO. Coming up, we're going to speak with Robinhood's Stephanie Guild as stocks rally hard on the Middle East peace deal. This is Open Interest.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
A couple minutes until your opening bell. A rally on our hands, up 1 1/3% for the S&P, up more than 2% for the NASDAQ after we just barely eked out gains last week. This week, it's about a resolution to the war in Iran. We're going to begin the trading day in just moments with Robinhood's Stephanie Guild right after your opening bell. Stay with us. This is Bloomberg Open Interest.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
All right, we're moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures. We're rallying more than 1%, 1.33% on S&P futures after an agreement was made with Iran, a memorandum of understanding to sign a pact, a 60-day extension of the ceasefire on Friday, Juneteenth. Vice President Vance expected to sign that. Maybe President Trump will, as well as he is over in Europe. Right now, NASDAQ futures up 2.25%. You have a group of maritime holdings companies ringing the bell on the New York Stock Exchange. They're so indescript, but basically they move liquefied natural gas, they move oil, they move everything that we want to get flowing through the Strait of Hormuz. So they're a happy bunch of middle-aged white men there, and another bunch of middle-aged white men here at RRE Ventures. It's a SPAC. There's a few women.
I'm counting
there.
7 in total.
In total from
both
50 bell ringers here.
7 in total. Yeah, we can do better.
We've got a long way to go, baby.
A long way to go. This morning, I am looking at NVIDIA. Look, NVIDIA's rallying with the rest of tech, the rest of the market. That's why it's up 2.25%. They also, though, kicked off their first corporate bond offering in 5 years. They're looking to raise at least $20 billion. This question has come up. Why tap the bond markets if you are a cash-generating machine like NVIDIA? Maybe, Matt, the answer is because you can.
Yeah, absolutely. I mean, Paul Sweeney, formerly an investment banker, now anchoring Bloomberg Radio as we speak, always says you get the money when you can, not when you need it. And it looks like that's what they're doing at NVIDIA. SpaceX rising following its blockbuster debut, the biggest IPO in world history. Shares closed 19% higher on Friday, turning Elon Musk into the world's first trillionaire. They're up another 8% today at about $174 a share. Let's bring in Robinhood Chief Investment Officer Stephanie Guild. And while everybody was eager to get these shares, it was, I imagine, retail mania. What was the week like for you at Robinhood?
It was a wild week. Obviously, we offered it as many other retailers did, but we had we had record volumes on Friday. I will say that. Having to do I don't know if anyone can hear that.
I don't think anyone can hear that. Yeah, there's an air horn somewhere.
In this office is still excited about Saturday night and the Knicks win.
Why not? I mean, that's why I'm wearing blue.
Yes, I love it. And that's why I'm vaguely in orange. I don't know if this counts as orange.
That's definitely Knicks orange.
Yeah, okay, so there's maybe just pure exhaustion everywhere on this Monday, so break out the air horns. How are you talking to clients about the supply and demand dynamics of SpaceX? Because Matt and I were looking at the numbers. You got about 555 million shares issued. After the lockup post-earnings, it's about about 900 and something million. And then through the end of the year, slowly you get availability of something like 3 billion that insiders can sell. That's a lot of shares coming to market.
Yeah, I mean, there are tons of shares. But obviously there'll also be natural demand when it comes to inclusion in indices, which like all the rules, not all the rules, but some rules have been broken for it.
Yes, not S&P notably.
Not S&P, but I think you are going to have some natural demand. I think and everyone is necessarily going to sell just when they get their shares. There are some rules around when they can sell. They have to be sold at premiums. But I do think this is part of a bigger story, which is just that the cash cows are now the cash users, and they are issuing a ton of debt.
Yeah.
If you look at just the 4 hyperscalers plus Oracle, 2 years ago, together they had like $360 billion of debt. Now it's over $650 billion of debt and climbing. And now equity issuance is coming.
Just as you were talking, I got an email announcing the launch of a ETF that targets 2 times daily returns of SpaceX. It feels like the whole kind of casinofication.
Single stock ETFs.
Yeah, I mean, they've been around
it.
forever, but like, I feel like you apply this to SpaceX. And someone from the FT wrote this piece today that was essentially like, there's no crying at the casino. Like, you can't get angry for what you're getting into right now with all this kind of stuff.
I mean, I think the other thing you have to look at is like on Friday we saw a ton of sales from space-related names like Rocket Lab and AST Mobile. Like, they were down a lot on Friday. So there is, there isn't endless supply necessarily from all buyers, and they have to make some moves away from things. And I do think the hyperscalers will be actually you'll get some capital moving away from that for it.
So people selling industry adjacent shares in order to make up, to free up some cash.
They were on Friday, not
SpaceX.
today.
Right. By the way, we had a great story by Lou Wang and Carmen Reinecke about the fact that over the last couple of decades, we've seen $12 trillion in share buybacks. That's really been a tailwind to this equity market. It's like QE for stocks.
Yeah.
And over the next couple of years, I think JP Morgan Chase expects $1.5 trillion of equity available for purchase coming back into this market. So going the other way. Is that a concern at all?
I think it's a concern to me for people who have been sitting in S&P 500 indices for a long time, which has been one of the best places to be invested over the last 10 years. But I don't necessarily think it will be in the future, because the biggest contributors to stock buybacks were the tech sector, the large tech names, and communication services, and they're the ones that are borrowing and issuing new equity stocks. So I actually think like you have to be conscious of this rotation that's happening under the surface, and you can see it in equal weighted VIX, for example, versus like the cap-weighted VIX.
What about on the demand side? So one of the big conversations I had last week at SuperTurn, especially with VC people like Alexis Ohanian, was this idea that SpaceX's IPO in itself is creating thousands of millionaires, and everything from like cafeteria workers and onwards all of a sudden have a lot of cash, assuming maybe they sell their SpaceX shares. But again, his idea was like, okay, now you have even more demand. You have people with more money, and that money can be invested into other things. Does that offset any of the issuance, just the wealth that's being created from this market at the moment?
I mean, this is on paper, obviously, as you said, not necessarily cash, but I certainly think it gives people an ability to feel better about things and keeps perhaps the consumer going, because we know it's already driven by the higher end of the income levels. And I do think it creates some ability to get reinvested, but I mean, you just don't know like where it's going. I just think it's too early to tell where that money's going to go.
Is there a broadening out? I mean, Mike Wilson was out with a note this morning expecting a broadening out from Morgan Stanley. He hasn't raised his target to the 9,000 that Jay Hatfield has. But he was kind of on the same page, right? Do you go and buy the sectors that have lagged? Financials, for example,
I do. I like healthcare. I've liked it for a while. I mean, Eli Lilly's been doing well, but it's a name that we've liked for a while. We've had it in Robinhood Strategies. Healthcare, I think, is a place that should benefit from this broader AI. I do think we're moving towards the application layer, as Jensen Huang says in his 5-layer cake. Financials are part of it, but I actually think more like
those are the two industry groups that are down year to date. On the S&P, all the other 11 are up.
Right, but I think where the opportunity sits is in like more of the stable coin, like who can adopt the stable coin, because I do think that's how AI will kind of run on payment rails through stable coin.
All right, Stephanie, we're gonna have to end it there. So great to see you.
Thank you.
Thank you for joining us. Robinhood Chief Investment Officer Stephanie Gilden, let's get a check on markets about 8 minutes into your trading day this morning. And we are rallying after just barely getting a rally last week thanks to Friday. But shares are up 1.5% on the S&P 500. NVIDIA leads the charge this morning. It has a new debt offering, but in general, it's a lot of the AI names that are doing pretty well. They had gotten beat up earlier last week and to end the week prior. So it's all just part of this rebound. We haven't completely made up of what we've lost on the stocks, but Micron also adding about 10 points to the S&P. AMD, Broadcom. So again, you get a flavor, and the big tech doing well too between Alphabet and Apple. To the downside, also not surprising, you have a lot of energy. ExxonMobil down, Chevron down, 6 and 4.5% respectively. Healthcare, unfortunately, still a loser today, so adding to that year-to-date loss. Looking at the sectors themselves, again, tech at the top and energy near the bottom. It's just the contour of this market. Energy down 4.33%, infotech up 2.7%. Only 4 sectors are down again for an overall gain of 1.5%.
You know what? I'll ask Joe in the control room to go ahead and switch that up to year to date, just so you can see.
Yes, I like that idea.
That we only have 2 losers, and healthcare and financials at the bottom, right? So if there's a broadening out.
Interestingly, I take you to what is the top gainer. It is energy. What happens if we continue to get a drop, to Jay Hatfield's point, of below $70 a barrel? This has been one of the pillars of this year's bull market.
True.
I guess we might lose that, but maybe the broadening out makes up for it.
Exactly. I mean, energy, this isn't the FTSE, you know, so it doesn't matter that much on the S&P.
Yes, good point.
Coming up, the SpaceX rally rolls on after a record-breaking IPO. Jefferies analyst Sheila Kahyaoglu joins us next with her outlook on that, because it falls into her area of coverage now, as well as all of those companies that need this energy so badly and are paying such high prices for it. What happens to the airlines? Sheila's next. This is Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
A check on your markets this morning, about 10 minutes, a little over that into your trading day. A rally on our hands after a big weekend. I'm sure for many of you out there, a big weekend for sport. NASDAQ up 2.5% as Brent crude plummets 5% as a memorandum of understanding apparently will be signed on Friday in Switzerland. All right, let's get some of your top calls, what the analysts are looking at this morning. First up, Citi downgrades Old Dominion to sell, saying that optimism about the trucking industry seems to be reflected in the valuation of the players. Next up, Needham raising its price target on Roku up to $170 after that acquisition by Fox to create more opportunity and value across a broader ecosystem of devices. Finally, KeyBank upgrades Rocket Lab to overweight, saying the sell-off coincides with SpaceX's trading debut was unwarranted. Matt.
All right, SpaceX, speaking of, SpaceX shares are surging in their second day of trading after a record-breaking IPO that vaulted the company above a $2 trillion valuation. Joining us at the desk is Jefferies analyst Sheila Kayaglu with coverage spanning aerospace, defense, and airlines. She's uniquely positioned to break down what's driving frenzy around SpaceX. And I wonder if you'll be covering this much longer, because it's more of an AI company than a space company, isn't it?
Yeah, there's lots going on at SpaceX. It's about, the rocket launches, which coincides with our coverage of Firefly. Not a lot of people do rocket launches. SpaceX is 80% of it. So, there's others getting into it. The Rocket Lab upgrade, we don't cover Rocket Lab, actually, and Firefly are the only 3 U.S. players in that game. And then, obviously, AI is going to be the biggest driver of future revenues for SpaceX, and folks are making the bet that SpaceX could execute on getting the launches in the air, the data centers built, and it all executed.
How does the team even go about evaluating this? To Matt's point, it's like just this, Frankenstein of a company when you have XAI, you have X itself that's also in there, you have the space, you have the satellites.
All the hopes and dreams.
All the hopes and dreams. We're going to Mars, a 29 trillion TAM, whatever. How do you even begin to approach a beast like that?
I don't envy the tech analysts, because I feel like this is their entire coverage.
Yes.
It's like Cursor's worth 60 billion, X is worth X billion. In aerospace and defense, our multiples range in a more legitimate zone, and even that has increased. Lots of IPOs in the space and feeding off of what SpaceX is going to do in the space economy. A name we upgraded today on the sell-off last week, over the last 2 weeks, is Hawkeye. It does signal intelligence in space, so that's a recent IPO over the last month as well. So lots of ways to play space, and valuation is very difficult though, and that's what's fueling some of the retail interest.
It's all so nebulous, right? It's not even really worth talking about compared to something that you have a much firmer grasp over, and that's the airline industry and the oil input. Because over the weekend we got this agreement that there will be a signing of an agreement on Friday that extends the ceasefire 60 days so they can make an agreement for later. But that's going to bring oil prices down, already has, significantly, right? How good is that for your sector?
That's the other side of the spectrum. It's like 5 times, PE is where the airline names trade, 5 to 10 times if they get lucky. Oil is huge. Right now, we're assuming that price per jet fuel is above $4 per gallon for the year. We assume some normalization in the second half, but to see it at $82 a barrel is very good. What I think the key point for 2027 for the airlines will be, and we're hosting a conference in Nantucket today, is how long does the pricing increase? So what we've seen is about 6 airline price increases, give or take, 30% increases through the year to secure, where jet fuel is. Can they continue to increase price? Because airline ticket pricing has been deflationary so far. So airlines are finally taking advantage of it, and they haven't seen a shift in load factors thus far, which is great. So that means the consumer is able to take on that price increase.
By the way, is there just a sentiment shift that could also occur if you get a resolution, especially on paths to the Middle East?
Yeah, there's some just,
There's two stories going on in airlines. One is fear of oil prices being too high and deteriorating demand across the board, not only for jet fuel, airline tickets, but everything in the world, right? Like it becomes too expensive. The second thesis in airlines, which is what's fueling Delta and United specifically, is that you have the removal of low-cost carriers who are irrational players in the market. And when oil is $100 per barrel, they can't fly those flights anymore, so they're removed. So it makes the winners even better, like Delta and United, because it allows them to increase price and it essentially makes them the only players in the game. So Delta and United are the best ways to play this. Americans are far third, and they're trying
in the U.S., right?
In the U.S., and they're trying to get into the network carrier game. But even with the European airlines, Matt, like I know you're focused on them too, we saw Lufthansa cut capacity, but we see Ryanair actually increasing capacity. So the airline situation has been pretty healthy across the board.
But I mean, I only bring it up because we have this idea of energy independence here, whereas they're rationing fuel in Asia, right? So I wonder if you see a much bigger bounce in those names, Asian airlines, European airlines, than you see in U.S. airlines.
You might. I mean, the U.S. airlines have been actually great stocks year to date relative to the commercial aero players. Look at Boeing, look at GE, look at HEICO. They're down on the year, I think, still. So these guys airlines have been good on thesis number 2, that there's only going to be 2 airlines in the U.S. that are going to take a majority of the share. They already represent about 50% of share combined.
I mean, maybe there's no M&A left to be done at this point, but are you expecting anything else?
No, because I think that airline CEOs are of the view, except for Scott Kirby, because he's looking to pick up assets on the cheap, is that there could, if oil stayed higher, there's probably likelihood of more airlines reducing capacity and essentially shutting down operations, so you could buy them on the cheap.
How are you getting to Nantucket?
I'm flying Delta.
Oh, okay.
So it's on them now to get me there.
I thought you were going to say private, you know?
No,
Or one of those little, like, taking off from Westchester and flying, like, JCX or whatever it's called.
Oh, yeah, you get, like, you buy a leg of it or whatever, yeah.
Yeah, JCXs are great. It's private, but it does a lot of private flights in that you could fly with 20 people to routes that are really hard to get to. But, no, Delta's flying there, so I'm counting on them to get me there tonight.
All right, we'll have a great time. Look forward to that conference. I think we're going to have guests from your conference on our air as well. Sheila Kailu from Jefferies talking to us about SpaceX, but also the real stuff. Next hour, we're going to hear from Redwire, by the way. The CEO, Peter Canito, does the infrastructure for companies like SpaceX and other space launches. He joins us at 10:30 a.m. New York time for more insight on the space and defense industry that we all care so much about. Coming up, Fox is buying Roku for $22 billion. We'll have more on that streaming video push next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks to kick off the week. We have massive gains, really. The S&P 500 back up to 75.52, so just 50 points away from a record high again. The NASDAQ gaining almost 3% now to 30,475, itself also near a record high. Take a look at some of the drivers here. Brent crude dropping 5%. That's huge after the U.S. and Iran agree an MOU that they're going to sign reportedly on Friday. The U.S. 10-year yield coming down to 444, 445. NVIDIA rising 2.25%, so that helps every index that it's listed on. It's very heavy, 13%, depending what you're talking about. SpaceX, another 7.5%. Now $173 a share. Salesforce gaining big as well after an acquisition. So in this up market, no one minds if you spend $3.6 billion to buy Finn. Warner Brothers isn't moving much, but just to show you that it's not down because regulators don't mind the merger. Roku is coming off 2.5%. Which is interesting because it's the one getting bought by Fox, which itself is down 20%. So that's a deal that Danny's going to give you more on right now.
Yes, I would say Roku, Bloomberg did have a report that this would happen on Friday, and Roku was up 20% then. So
buy the rumor.
Yeah, buy the rumor, sell the news. And we are selling Fox hard. That's actually on track for its worst day ever. Let's talk about it with Bloomberg Intelligence media analyst Geetha Raghunathan, who joins us now. Geetha, Fox clearly making some sort of streaming play here to you. Does this deal make sense?
It makes a lot of strategic sense, Danny, because Fox is one of the media peers that has really kind of stayed away from streaming. So they have almost 90% of their revenue comes from the linear TV ecosystem, which, as you all know, has been in secular decline. And so this deal, I think, definitely helps them kind of reshape, reset that narrative a little bit, really gives them, that gateway into streaming. So strategically, yes, makes a lot of sense.
Yeah, 100 million users was the milestone they passed this year, right? So Roku, I would have thought of it as an ad play, but it's really the fact that they're buying 100 million users for $3.6 billion, isn't it?
Yes, absolutely. So Roku is really this aggregator in the streaming ecosystem, and that's really what Fox is buying into. Absolutely, they do have a great ad business as well. And if you look at Fox right now, they make about $1.2 billion in digital advertising. This deal with Roku helps them effectively kind of quadruple that. But it's not just that. It's really, as you pointed out, the access into those 100 million global streaming households, which Roku provides, and almost 50% of all U.S. broadband households. So really, it's them kind of being able to now get their content to really where the eyeballs are moving, because with that exposure to the linear TV ecosystem, you have more and more people migrating away from TV and to streaming, and you want to be where, the viewer is.
By the way, is this the biggest competitor to Apple TV in terms of that box, in terms of something you add to your TV that allows you to get Netflix, Amazon, Hulu, Disney, everything?
Yes, Roku by far is the leading connected TV device provider. They have almost close to about a 30% share of the streaming market. So yes, again, not only do you get access into all those, living rooms, but you also get access to very, very valuable third-party data, which then, of course, helps you to do so many things, notwithstanding targeting, monetization from an advertising perspective, and a whole lot of other things.
Geetha, thank you so much for joining us on this. That's Bloomberg Intelligence media analyst Geetha Raghunathan, and Fox buying Roku, a deal valued at $22 billion. Coming up in hour two of Bloomberg Open Interest, Rebecca Patterson of the Council on Foreign Relations, as risks remain around the Strait of Hormuz as we inch closer to a deal. Redwire CEO Peter Canito on his outlook for the space and defense industry. And Ivanhoe Electric CEO Taylor Melvin as copper pops higher on the peace deal in the Middle East. All that to come. This is Bloomberg Open Interest.
Court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The U.S. and Iran reaching an initial peace agreement to extend the ceasefire for another 60 days, end the fighting, and reopen the Strait of Hormuz. The U.S. government will also provide sanctions relief to Iran if it moves to end its nuclear program. With more on that, Vice President J.D. Vance telling ABC.
If we see the Iranians making, for example, taking action to eliminate their stockpile of enriched material, then yes, sanctions relief will follow. If we see the Iranians taking action to allow the kind of verification regime that we need to see to know that they're not going to build a nuclear weapon, yes, sanctions relief will follow.
ABC's Martha Raddatz with reaction from Israel to the deal.
Former Israeli senior military intelligence officer Avner Vilan telling us that it was doubtful Prime Minister Netanyahu would support the deal.
Prime Minister Netanyahu would think it's a bad deal because it gives Iran a lifeline.
Israel's defense minister Katz says Israel will not withdraw from southern Lebanon and that Israeli defense forces will remain without any time limit.
Gas prices have now fallen on average below $4 a gallon for the first time since April. Dangerous heat unfolding across parts of the East Coast.
Forecasters are warning of, quote, lethal temperatures that could reach as high as 110 degrees in parts of Northern California. The extreme heat stretching to Oregon and Washington. The National Weather Service says temperatures will stay elevated overnight, offering little relief.
That would be the West Coast, says ABC's Hannah Battah. Powerful storms pummeling parts of the Midwest again this weekend. Flash flooding in Waco, Texas shut down I-35 for hours. Britain will ban children under age 16 from using social media apps, including Snapchat, TikTok, and YouTube. Meta, parent company of Facebook and Instagram, is warning such a blanket ban could push kids into more dangerous, unregulated spaces. This is ABC News. World Cup beginning not so great for England.
The English soccer squad made a cross-country trip from Florida to Missouri and had much of its equipment sent by truck. When the trailer was opened up in Kansas City, team officials found that autographed jerseys, goalkeeper gloves, cleats, and a World Cup soccer ball were gone. The two truck drivers have been arrested and charged with possessing $18,000 in stolen goods. The English team has recovered most of its gear. Jim Ryan, ABC News.
The New York Knicks waited 53 years for another NBA championship and will get a ticker tape parade in Lower Manhattan on Thursday after winning it. Last night on the ice, a drought that wasn't quite so long ended for the Carolina Hurricanes. Here's ABC's Chuck Severson.
Their first NHL Stanley Cup championship in 20 years, beating the Vegas Golden Knights 3-0.
Going to clinch it appropriately with a total team effort and a shutout. The Carolina Hurricanes have won the Stanley Cup for the second time.
The ABC ESPN coverage. Jordan Stahl crowned MVP.
It's amazing. This is something I've been going after ever since we got the first one. I mean, you want to win it again and again and again. And what a feeling, what a battle.
The game at T-Mobile Arena in Vegas. Chuck Severson, ABC News.
Well, bidding wars for homes may be fading away. New report from Realtor.com says a long-running seller's market could be losing steam. Homes are sitting on the market longer than they have been over the last few years. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. We got green on the screen here for sure. Tyler Kendall, Bloomberg Washington correspondent. She's going to give us what's a little preview of the G7 summit there. So we'll touch base with Tyler as well. Phil Orlando, Chief Equity Market Strategist at Federated Hermes, give us his thoughts on these markets as we move decidedly higher today. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. Salesforce, looking to buy AI customer service firm Fin for $3.6 billion. We'll break that deal down. Salih Yilmaz, a Bloomberg Intelligence Senior Oil Analyst, and Rob Barnett, Bloomberg Intelligence Senior Energy and Commodities Analyst. Give us the latest on oil. We've got oil pulling back really pretty substantially here today, off more than 5%. WTI crude oil sitting right around $80 a barrel. So we'll break that down. So a lot coming up over the next 2 hours. Let's kick it all off with Alexis Christoph.
I'm here for John Tucker.
Okay,
it's
so
musical
cool.
chairs, but here I go. Thanks, Paul and Scarlett. So stocks are kicking off a new trading week with a really nice rally as oil, the dollar, and bond yields slide. This is after the U.S. and Iran said they reached a deal that could reopen the Strait of Hormuz as early as Friday. The S&P 500 up 1.5% or 117 points. Dow Jones Industrial Average up more than 1% or 587 points. So back in record territory there. NASDAQ Composite up 2.5%. That means a gain of 646 points as recently beaten down tech stocks lead the way higher. As for oil, it is slipping with Brent crude down 5.25%, 82.74 the barrel. West Texas Intermediate crude down more than 5.5% at $80 the barrel. It is also Merger Monday on Wall Street. We've got a big deal in media. Fox Corp agreeing to buy Roku in a deal that values the streaming video platform at about $22 billion, including debt. Wall Street doesn't seem too convinced, though, because shares of Roku were down 2.33%. Fox Corp down 19%. But we do have SpaceX adding 8% after its 19% rise in its Wall Street debut on Friday. Bitcoin is rebounding. It is up nearly 4% at 66,326, and that is pushing crypto-related stocks higher. We've got Coinbase up more than 6%, Robinhood rallying nearly 6%, and Strategy up 5.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thanks so much. Appreciate that. Scarlett Fu and Paul Sweeney
live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Scarlett's sporting some excellent Knicks swag here today, so that's good stuff.
I didn't have to buy it in a big rush because this is my son's, and he outgrew it, so I just picked it up. And it fits me perfectly, so.
All right, well,
so that's what sons are good for.
After a certain point, yeah.
Exactly. All right, President Trump has landed in Geneva ahead of the G7 summit there, so we'll have some reporting coming up in just a moment from Tyler Kendall, but that is getting started over there, so we'll see how that plays out. Right now, let's take a look what's happening. We've got certainly green on the screen in a big way. Let's take a look at some of the stocks on the move today. We can do that with Bailey Lipschultz. Bailey, what are you looking at today?
I want to start with SpaceX. Why not? My favorite area of coverage is as far as IPOs and ECM goes. Ticker SPCX right now up about 7.5%. Still not quite to its peak on day one, but interestingly enough, seeing some strength continue today. One thing to just keep in mind when you look at SpaceX, today is the first day of levered ETFs, so anyone buying those in turn is buying the stock and can drive shares higher or lower. Tomorrow we will get options trading, so that could drive some volatility, and later this week and into next week is when we'll start to see the addition to the Russell indexes, and then early next month the NASDAQ 100. So certainly a ride to keep all eyes on, and this does come after Elon Musk seemingly endorsed on X the notion that this company could drive sales of $1 trillion in 2030, which analysts we broke prior to the IPO pricing were penciling in. So alignment, Paul, surprisingly, between the CEO and the sell side. Who would have thought where they came from?
Well, how many banks were involved in this IPO? 23, I think.
22 is what it ended up at.
22, 23, yeah.
So
okay.
We'll get the analyst coverage.
Wall Street has a lot riding on this.
just a little. Well, that's like the interesting thing. It's like 75 billion. Well, with the shoe, closer to 86 billion is a big number, but there's still, a couple trillion locked up that'll come unlocked starting in the next few weeks and months and carrying on through the year.
And this train will keep on chugging along. All right, so we, of course, have some M&A news to get to as well.
Yeah, the fun doesn't stop. Fox acquiring Roku. Fox, ticker FOX, or the A shares FOXA, and Roku trades under its ticker ROKU. About $22 billion. Fox shares, those Class A shares right now, down about 19%, biggest drop ever. While Roku is down about 2%, just got to keep in mind that Roku did rally quite a bit on Friday when Bloomberg reported that they were in some of these talks, not breaking down the sales, but up 20% on that day. So investors giving back some of those gains. Paul, I know media is near and dear to your heart. It does seem like the fact that this is a cash and stock deal, maybe not the immediate buyout and exit that people who back Roku were looking for.
Yeah, exactly. And with the Fox shares trading down, that impacts the value of the Roku. And a lot of folks kind of feel like, boy, this Fox story is kind of working without any kind of noise. Now we've got some noise here. But long term, strategically, it should be a good deal. All right, one more we got.
Yeah, want to look at Fiserv, ticker FISV, right now down more than 6%. Trading at the lowest level since 2016. If you look at that chart on a 1 or 2 year basis, it's quite ugly. This does come after news that the CEO, Mike Lyons, will step down and join Truist. The new CEO was most recently co-president leading their tech and merchant solutions. Michael Burry, interestingly, has been long the stock, basically said his thesis is unchanged, whereas Mizuho Group analyst Dan Dolev calling the CEO transition a surprise, saying the new CEO is highly regarded. I will not attempt to say the new CEO's name because it's not in my wheelhouse. I'll leave that to you guys. But seeing some weakness again, never want to see a surprise transition when it comes to management. If the whole pitch has been a turnaround story, seems like that bit more uncharted territory.
All right, good stuff. Thank you so much, Bailey Lipschultz, with our Equity Movers. And for more conversations like this, subscribe to our Stock Movers Reports, where we give you 5-minute audio reports on the biggest winners and losers in the stock market. That is available on Apple Podcasts, Spotify, or anywhere you listen. Oil prices in focus today. Stocks are flying, bonds are flying, oil prices are down. We have an 80 handle here for WTI and Brent, but you wonder if we're going to get to 70.
Yeah, it seems like it's a pretty good floor, at least for today's trading, sitting right around 80. We kind of had one little trade below 80, but it's sitting right there.
All right, we will keep an eye on that. The president has arrived in Geneva for the G7 meeting, and of course it comes on the heels of his announcing this Strait of Hormuz deal with Iran. We don't have any details of this agreement, but we're told that there's an interim peace deal It was announced on Donald Trump's 80th birthday.
Yep, there you go. Good news.
All right, so let's go now to our Tyler Kendall. She is on the ground in Switzerland right now. Tyler, our understanding is the Memorandum of Understanding will be signed on Friday in Switzerland, but in terms of the details, it's kind of that, not TBD, but we don't know all the details yet.
Yeah, that's the perfect way to put it, Scarlett. At this point, neither side has released the finalized text of what is in this 14-point memorandum of understanding, though the Vice President, J.D. Vance, did indicate earlier today in an interview that the sides are working to actually get those details out before a signing takes place. That was a new development, since our understanding had been that we weren't going to be able to glean any of the details until they actually put pen to paper. We are expecting that to happen in Switzerland this Friday. People familiar with the matter do tell us here at Bloomberg News that Qatar is going to hold another round of talks with a U.S. and Iranian delegation at some point this week to try to smooth the glide path here to actually get it over the finish line. Now, as you alluded to, we know the broad contours of what's included in this. It's going to be a 60-day extension of the ceasefire with a priority given to reopen the strait, and the U.S. will lift its naval blockade. But we have some big questions here, including what happens after those 60 days, after Iranian state media seemed to indicate this morning that Iran still has plans to exert some sort of grip over the waterway. Also, what does economic relief look like for Iran? There seems to be a differing in both sides there on exactly how much money is going to be released and when. And then, of course, Scarlett and Paul, what are those commitments going to look like for Iran's nuclear program? The understanding is this is going to be phased negotiations. Those longer-term talks about Iran's nuclear program will happen after the strait reopens. But we are starting to see some reporting that maybe we'll get some sort of commitments from Iran on what happens to that highly enriched stockpile of uranium and what happens to their enrichment levels and whether or not they agree to a ban on those.
Tyler, you're going to be accompanying the president to the G7 meeting. Have we heard any response from any of the members of the G7 about this potential deal with Iran and U.S.?
So that's an interesting question, Paul, because there's been some reporting that some of these G7 allies aren't too happy with the White House because they themselves haven't seen the actual text of this deal. Though broadly speaking, these allies have applauded that the two sides are moving closer to getting an agreement over the finish line. And we've heard from some allies like the UK, France, and Italy all say that they are ready to release some of Iran's frozen assets and loosen sanctions if that is ultimately part of getting this deal over the finish line. A senior administration official has outlined to us that the U.S. making any such financial relief moves would only come after Iran fulfills its commitments related to its nuclear program. We're also tracking really closely how these allies feel about securing the Strait of Hormuz. We know that there are still substantial risks here, of course, to commercial shipping. The U.S. has previously called on these allies to help reopen the strait. We haven't seen that call met. Now that maybe there's going to be something firmer, we'll have to see how those discussions go this week.
Tyler, one last question to you. We also have Israel not directly involved in this latest round of talks that's led to this interim agreement that allows 60 days to kind of figure out the other details. Where do things stand when it comes to Israel?
So we have some reporting that Israel isn't overly enthusiastic about this deal. The Wall Street Journal is reporting that Israeli Prime Minister Benjamin Netanyahu is trying to get a phone call with President Trump at some point this week to discuss what this is going to look like in practice. It had been our understanding last week that part of this memorandum of understanding, Iran would stop funding its proxy terror groups, including Hezbollah, which of course is the focus of Israel's front in Lebanon against that Iranian-backed militant group. We heard from Israel's defense minister earlier today saying that they are not going to cease their operation in Lebanon against Hezbollah. So Paul and Scarlett will have to see if that could pose a sticking point in these talks, considering that Iran has maintained that any ceasefire needs to extend to that front.
Tyler, thank you so much. Appreciate that. Tyler Kendall, Bloomberg Washington correspondent. She is reporting remotely from Geneva, Switzerland. Will be going with the president to the G7 in France. And right now, we just saw some imagery, some video of the president. Air Force One has landed. Marine One is right next to Air Force One.
Marine One is the helicopter, right?
Marine One is a helicopter,
okay.
And it's right there waiting for him, and then we'll take him to it's a very short little hop from the airport to where the G7 will be in France. Because so, in that part of the world, when I was traveling there, it's just, you can go across the street, you're in France, then you're in Switzerland, and then you cross the street another way, it's just the
hop, skip, and a jump away, basically.
Exactly, so they're there. So hopefully have a good G7 meeting.
Well, the tone is very different now, certainly compared to what it was last week before this agreement.
Right. So again, we have a memorandum of understanding out there, and that is moving markets. More coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets, right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/prediction. predictions. We have got stocks higher across the board on that interim peace deal between the U.S. and Iran that could reopen the Strait of Hormuz as early as Friday. The S&P 500 up more than 100 points at 75.39. Dow Jones Industrial Average climbing 550 points at 51,752, so in record territory there. NASDAQ Composite up 578 points at 26,470. Brent crude is down 5 1/3% at 82.62 a barrel, and WTI crude just dipped below $80 a barrel to its lowest level since before the war with Iran started. The Bloomberg Dollar Spot Index down 0.2% at 1204.56. We've got shares of NVIDIA up nearly 2%. It's looking to raise at least $20 billion from its first corporate bond sale since 2021. Meantime, Salesforce has agreed to buy Fin. That's a firm that develops AI-powered customer agents for about $3.6 billion. Shares of Salesforce up more than 1% on that news. And SpaceX underwriters have officially exercised their over-allotment of shares in the initial public offering, bringing the total raised to nearly $86 billion. Shares of SpaceX right now up more than 7% on top of Friday's 19% gain in their Wall Street debut. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Scarlett and Paul.
Thank you so much, Alexis. All right, let's talk about what this interim peace deal that the two sides, U.S. and Iran, and I stress two sides because Israel was not involved in this at all.
That's right.
As far as we know. What that means for markets, because right now you have stocks rising, you have bonds rising, you have oil prices plunging with WTI sitting at $80 even. Phil Orlando is Chief Equity Market Strategist as well as Head of Client Portfolio Management over at Federated Hermes, and he joins us now from New York. Phil, it is always good to speak with you. So the U.S. and Iran have reached this interim peace deal. They will reportedly sign this memorandum of understanding on Friday, at which point there's a 60-day clock for them to negotiate more pressing and complicated issues like what to do about Iran's nuclear program and sanctions relief to Iran, if any. So we're seeing markets react. Are you worried by the lack of detail that we've gotten so far, or is this enough for investors to kind of run with it?
So first of all, good morning, Scarlett, and thank you very much for having me back on the program. The short answer is that, yeah, I think you've hit the nail on the head here, that there is a lack of detail, and this has been an issue ongoing during this whole process. You know, initially we thought this was going to be a rather limited 4 to 6 week engagement. We're now, up to 3 months or so, lots of fits and starts. But we've got some great news now that it looks like, we've got this thing resolved and we're going to sign this deal over the weekend. And crude prices, WTI, which were $110 a barrel, a month ago, are now down at $80 a barrel, about a 27% decline. And the market is, I think, responding appropriately. But you're quite right. There is a lack of detail here. Is it possible that there's some sand that gets thrown in the gears here at the last second, and we don't get what we think we're going to get? So I guess to some degree, it may be premature to say, okay, we're going to get crude oil back to $55 or $65 a barrel, as we saw, pre-conflict. But this is certainly good news in terms of where we are. It looked like the Iranians had a stranglehold on the Strait of Hormuz. The United States countered that, I think, with a very effective naval blockade. And I think the Iranians came to the conclusion that this was not something they were going to be able to defeat. This was having a deleterious impact on their economy, and they needed to come to some sort of a reasonable compromise to make this go away and try to get commerce flowing again.
Assuming this peace agreement does come to fruition, Phil, where do you think the market's focus will then turn? Because this has been just whipsawing around all of the news of this war.
Well, so the market's focus then will move away from Iran to a couple of other issues that we've thought were going to be sort of front and center over the summer. The first of which is the Federal Reserve, central bank activity. We've got a new chairman of the Federal Reserve. He will be presiding over his first press conference on Wednesday. We've got 3 FOMC meetings over the summer, one Wednesday, one at the end of July, one in the middle of September. We've got the annual Jackson Hole Monetary Policy Symposium at the end of August. So there are going to be 4 significant opportunities for investors to gauge what direction does new Chair Wash want to take the Fed, and are they comfortable with that? The other issue that I think investors will focus on is the upcoming midterm elections. Historically, the party out of favor, in this case the Democrats, regain an average of 27 seats in a midterm election. Republicans have a very narrow lead right now with 5 seats. So investors at some point are going to start to ask themselves the question, if we do get a change in control of the House of Representatives come the midterm elections, what might that mean in terms of a change in fiscal policy, and what might the impact be on economic growth, corporate earnings growth, financial market performance? Historically, those 2 sets of questions, election-related questions and Fed-related questions, tend to result in an air pocket over the summer of the midterm election year. Remains to be seen whether or not that will play out again this year, but I think the market will be paying attention to that now with Iran sort of on the back burner.
Very quickly, Iran might be on the back burner, but did this interim agreement, presuming that it goes through and the 2 sides sign, was this a gift to central bankers? We've got more than 20 central bank meetings this week. The big one, of course, is the Fed with its announcement on Wednesday.
We do not believe that our central bank will be raising interest rates this year. Whether or not central banks in other parts of the world come to a different decision, that's up to them. Our central bank should stand pat.
Phil, thanks so much for joining us. Appreciate it. Phil Orlando, he's Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, joining us here. It's Monday, means we get some Merger Monday stuff happening. We had a little bit M&A in the tech space today. Salesforce to buy AI customer service firm Fin for $3.6 billion. What's going on here in the world of technology? Anurag Rana, Bloomberg Intelligence Senior Technology Analyst, joins us here. Anurag, Salesforce buying Fin. First, tell us what Fin is and why is Salesforce buying it?
Yeah, we were actually lucky. Just a few months ago, we had the founder of Fin on our podcast, and we learned a lot from him, actually. This is really, you could see with AI how capitalism shows up. This was an AI native firm which came up with agents. So think about it this way. You want to go to a chatbot, but the chatbot is not tied to a particular software package. This is out-of-a-box chatbot. It would work on any program that's behind the curve. So if you go to, let's say, a healthcare firm and you're trying to solve some issues or customer service issues, and these guys would help you. And that's what they're buying. I think it's a very smart move on Salesforce's part.
I believe Salesforce has its own AI agent tool, Agentforce. Does this perhaps suggest that Agentforce isn't developing or progressing the way that, or scaling the way that Salesforce wants it to?
I think you're absolutely right. I think this is a signal that maybe Agentforce is only made for the software package that's behind it, which is Salesforce's package. This one is a generic chatbot that can go across the board. So I think that's something that people would need, because they're only not looking at the data that resides in Salesforce, but other areas as well. And frankly speaking, these guys have done a phenomenal job of coming up with their own models, own technology that sits on top of some of these systems of record. I think it's also a defensive move by Salesforce, because one thing is, if people are buying an out-of-a-box agent from Fin or Intercom, was it called before, then down the road, you can actually start storing data in their database, and then the system of engagement becomes a system of record. And that's not a good thing for Salesforce, because that's really their bread and butter. So I think there is a little bit of defensive move as well, but you're absolutely right. I think this would help their Agentforce practice as well.
So, stock of Salesforce is up just under 1% today, but it is down almost 37% year to date. Anurag, Salesforce is, and one of the challenges, as you've mentioned to us before, is some of these software companies, software as a service companies, they just got to show that they can compete against AI or compete in a world of AI. Is this acquisition one way for Salesforce to say, hey, we're serious about integrating AI into our products and offerings.
No, definitely that's the case. So I'll tell you another company that is in that same realm called Sierra. This is from the co-founder of, this company was founded by a guy by the name of Brett Taylor, who is the chairman of OpenAI, who used to be a co-CEO of Salesforce, and he was also the chairman of Twitter. In the last 1.5, 2 years, that company has just taken off. I think the valuation is close to $20 billion. And it does the same thing, out of a box, white label agents that can then interact on the behalf. So it becoming the front office or the front face of some of these apps. And I think with this acquisition, Salesforce can defend itself from somebody like Sierra, who can, eventually come out and start taking market share away for them. So Salesforce, I think, is a good deal for them, that they are more aggressive right at the front of anything AI, and they're not just dependent on their own product agent force.
So, Anurag, just kind of looking ahead, do you expect other enterprise software companies like a Salesforce to come out and make similar acquisitions? If this is defensive for Salesforce, what does it do to other companies, in its field of vision?
Yeah, so this wasn't just in the realm of customer service. We call this a CX agent. And there are like 3 private companies here. Sierra, as I said, $20 billion. It's too big for, to be honest, anybody to buy, frankly, from this point, because Salesforce is the biggest when it comes to customer service right now. There is another company called Decagon, which is, I believe the last valuation was somewhere around $8 billion. But the question is, who's going to actually buy them? Because the natural buyer would have been Salesforce. And the third one was Intercom in that framework.
All right, Anurag, thanks so much. Appreciate that. As always, Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence here, Salesforce, making a small but potentially very strategic deal as it beefs up its AI offerings here. But the software company's still under pressure. They have not recovered. They've been re-rated downward by the marketplace if it's perceived that AI can be a threat to some of those software businesses.
Yeah, and it feels like I like the way that Anurag put it. This is kind of a defensive move. These kinds of companies need to show the market that they're moving forward, that they're making progress, that they're kind of thinking outside the box. They're not relying on what they've built so far, and they got to keep moving ahead.
Yep, it's amazing to see the Salesforce.com. Again, really a strong performing stock since it's gone public years ago. Is down 36% year to date. It's got a market cap of $137 billion. Green on the screen across the board. The S&P 500 up 110 points. That's 1.5%. The NASDAQ doing even better, up 600 points, 2.3%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers studio. That interim peace deal between the U.S. and Iran has investors piling back into stocks. S&P 500 now up 113 points at 75.44. Dow Jones Industrial Average up 585 points in record territory at 51,789. And the NASDAQ Composite rallying 611 points to 26,498. Chip stocks appear to be back in favor, and they're leading the advance today. We've got Marvel Technology up more than 4.5%. AMD up nearly 7%. Oil prices are sliding to their lowest levels since the earliest days of the war, and that is sending energy stocks lower. Marathon Petroleum, ConocoPhillips, Occidental Petroleum, all lower. Brent crude is now at $82.58 a barrel, down 5.5%, and West Texas Intermediate crude down nearly 6% at just below $80 a barrel. Now, on the flip side of this, we've got airline stocks gaining altitude as investors pare back concerns about higher jet fuel prices. So United Airlines, Southwest Airlines, Delta all higher. And shares of Woodside Energy slipping nearly 6% after the oil and gas producer said it was not in takeover talks with Exxon. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, Alexis. And I'm so glad you mentioned oil with WTI falling below $80 a barrel. It's revisiting the 70 handle, Paul. This is big news.
It's big news for people who drive, like John Tucker, who puts on like a gajillion miles every week.
Absolutely. 79.93 is the latest trade here. So I want to bring in our roundtable of experts, our internal experts on oil. We've got Rob Barnett. He's our Bloomberg Intelligence Senior Energy and Commodities Analyst, joining us in studio. Also with him, I'm pleased to say, is Salih Yilmaz. He is our Senior Oil Analyst, normally based in Dubai, right?
That's right.
Okay, and he is here in New York. You guys are going to be traveling the U.S., speaking with clients. So I want to start, first of all, on this idea that oil has come down, WTI now below $80 a barrel. The president had said that when the war ended, when he got some kind of peace deal, oil would drop, and he used a lot of metaphors, but I'm thinking like a rock. And right now we're seeing WTI fall below $80 a barrel. Salih, let me start with you. If we're moving in this direction, are we going to see oil go back to the levels it was before the war began? So we're talking in the 60 handle, or is this, kind of the new normal will be something in the high 70s?
I think the latter. I think eventually it will go down to pre-war levels, but it will take some time. And I think there are a couple of reasons. One, on the supply side, it will take some time to get everything back in order, work through the inventories that have been filled up in the Gulf, get that shut-in production back online. And so on the supply side, that's going to be one of the reasons. On the demand side, we've been depleting through inventories everywhere else in the world. And it's going to take some time, and that's marginal demand kind of supporting prices as well. And thirdly, and very importantly, I think there's going to be a residue geopolitical risk premium on prices. The way I've been thinking about it is maybe since the 70s, we didn't have to think about risk of Strait of Hormuz. We just kind of didn't attach any additional geopolitical risk premium for Hormuz. But now I think we've been reminded that that's a very important choke point. So I think there's going to be a little bit of geopolitical risk premium left in prices that's attached to prices. And for those three reasons, I think there's going to be a higher price floor, if you will, for a little bit longer. But after a while, we may forget again about the risk of Hormuz. And eventually there might be more supply than before. Which may push prices down to below $70 a barrel again, but it's not going to happen, I believe, anytime soon.
All right, Salih's based in Dubai. Rob's based in Jacksonville, Florida. I think it's easier for me to get from New York to Dubai than it is for me to get to New York to Jacksonville. I mean, I have no idea how to get to Jacksonville. Rob, what are our good friends in the oil patch? You guys are going down to Houston tomorrow, right in the center of it all. Has the U.S. energy industry adapted, changed during this war, that maybe they're going to, produce more, refine more, reduce less? How is U.S. producers, how have they adapted?
Yeah, I think the industry is still trying to get its head around what the long-term ramifications of the conflict are. And I think where we sit today, consensus seems to be pricing in a clear, unambiguous peace. And I think that Salih and I would both caution that just look at how it's played out so far. there's a deal, there's a not a deal, there's a deal, there's a not a deal, just constantly. And so I think whether you're in the U.S. oil patch, whether you're in Europe, you've got to be thinking about the resiliency of your business to protect against potential flare-ups like this going forward. So I do think it's going to mark a pretty structural change in how folks approach the business. So quite obviously, that's more pipelines in the Middle East itself, some redundancy there, but it's probably more investment in the U.S., in Canada, in Brazil, lots of other exciting markets there, and it's more investment in renewables too.
Sully, what do you see in the Middle East about the energy patch that folks here in North America may not appreciate, may not focus on, may not even price in?
I mean, I think that point Rob made about redundancy is a really interesting one, because when I talk to the likes of ADNOC, Aramco, especially ADNOC, what they've been telling me is now it's more about redundancy over efficiency. You know, I think this episode showed them how important Stratform still is and how reliant they still are. So on the point of pipelines, you know, they will be building more pipelines that they may not be necessarily using on a given day, but they want to be better prepared. So there's definitely going to be some more capital, I think, by these NOCs, these national oil companies, being diverted into building this extra infrastructure so that they can diversify away from Stratform as much as possible. So this is one of the latest conversations that I've been having with some of the companies there.
Rob, you mentioned renewables, and in this country, under this administration, less support for the development and investment in renewables. Has $100 oil, has that changed that at all, do you think?
You know, it's very interesting. Renewables in the context of the oil market, it's hard to compare, but you got to really look to the gas market to think about renewables. And we have pretty low cost natural gas here in North America. Our friends over in Europe, they pay a significant premium for natural gas. Even in today's market, we're seeing some downward movement there, but they're still paying, you know, multiples of what we're paying in the US. So I think the real story on renewables is going to be, particularly in Europe or even in Asia, we're seeing that. But I would caution, for anyone who thinks is just looking at the headlines here in North America, you would see the Trump administration sort of not acting favorably, but most of the capacity additions in the power sector this year here in the States are going to be some combination of solar, battery storage, and wind.
I wonder when it comes to the U.S., Rob, it's more a case that the president doesn't like wind turbines, but he's okay with other sources of renewable energy. I mean, solar seems to be not something that he's particularly opposed to.
Yeah, I do think we see more friendliness from the administration to solar and batteries. We also see a lot of excitement in the nuclear power space. Now, whether that's going to play out is anyone's guess, because good luck getting a nuclear reactor built in under a decade, but the administration has been placing emphasis there and trying to, you know, accelerate things. But what does it mean to accelerate something that takes 10 years?
Yeah, I like the small modular reactors. That's my game right there. Sully, you're in Dubai. What do we know, if anything, about the damage that's been done to some of the infrastructure in that?
I mean, that's a really good question. The answer is, I mean, in some parts of the Gulf, we know because, I mean, a company like Qatar Energy, the national company of Qatar, did tell us that there was significant damage at the Ras Laffan facility. They said about 17% of the facility has been significantly damaged, and it would take 3 to 5 years to get that back into how it was before the war. You know, I mean, within the UAE, we don't really know as well. I mean, there has been some damage to some natural gas facilities. We know ADNOC Gas, for example, which is a listed company, has told us that they're currently running at about 60% of their capacity, soon to be 80%, but we don't know when that's going back to 100%. So I think that's a good question, and it will take us some time to really assess what type of permanent and lasting damage there may have been.
All right, Sully, thanks so much. Appreciate that. Sully Yilmaz, Rob Barnett, the best hair on Global Wall Street. They're senior commodities dudes. They're energy guys. They're traveling around the country talking to Bloomberg clients about what's going on in the global energy markets. Big movements. And again, we've got WTI crude oil sitting right at $80, down about 5.5%, taking some of that risk premium that had been built up since the war in Iran. We'll keep an eye on that. S&P 500 up 115 points. That's 1.5%. The NASDAQ up 600. That's 2.35%. Big moves in the equity markets today. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. We're streaming live at Bloomberg.com/video. Big movement higher in the equity markets here today. Let's talk healthcare. As we like to do, we do that with Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst. He's over there. He's based in London. No idea where he is today. Sam, thanks so much for joining us here. Johnson & Johnson, I should say, New Jersey-based Johnson & Johnson, J&J, continues to push to expand bispecifics into early-line myeloma. What are they doing in the cancer space there, Sam?
Oh, they're doing quite a lot, Paul. If you look at the piece of research that we put out a few weeks ago, just before ASCO, we predicted that J&J is going to be the largest oncology company by sales by 2030, driven by a whole host of drugs, bladder cancer, myeloma, lung cancer with another drug. And in myeloma, they pretty much own the space at the minute. I mean, there are others who are doing well, but they just have several blockbusters in this space, and other companies are trying to take a piece of that. In this particular case, they have drugs that redirect the immune system to attack the disease. That's been something that a lot of companies have been doing, and J&J has done it really well. They have 3 drugs that do that: Carvykti, Tecvayli, and Talvey. And it's those latter 2 that we just referred to, bispecifics. They get an antibody, one grabs an immune cell, the other grabs the tumor and binds them together. And hopefully the immune cell kills the tumor. And in this case, what they're trying to do is take it earlier and earlier and earlier, because what you're really doing is re-educating the immune system to a degree. And it's possible to get very long survival. Unfortunately, it comes at a little bit of a cost of side effects. So you can't escape that. These really powerful cancer drugs do have side effects, so they have to be used for the right patients. But it's really looking very promising.
So with this push, how much pricing power does J&J have if it's kind of moving so aggressively on this?
I mean, Scarlett, these drugs I've just referred to are selling for something like $300,000 or $400,000 or $500,000 a year. The first one I told you about, Carvykti, is supposed to be a one and done. They take your immune cells, re-engineer them in the lab, and give them back to you. It's supposed to be one and done. And in a lot of patients, you're getting folks that have had Carvykti, for example, 5, 6, 7 years ago and haven't needed another therapy. So you are getting that in most, but some relapse, in which case some of these new drugs come in. So that's $500,000. You could argue, is that a lot? Is that not a lot? But that's the sort of price that these things go for.
Talk to us about Legend Biotech, and I know they're doing something with the non-Hodgkin's lymphoma. What's going on there?
They are. So, Paul, the first thing to say about Legend, what a perfect segue you just did there. They are the inventor of Carvykti. They developed Carvykti. China-based biotech. When they first reported the data back in 2018, most of us did what everybody else was doing, just raised their eyebrows saying, no, this can't be true. 100% of patients responded and cleared their disease. No, this is all made up. Which, of course, a couple of days later, Johnson & Johnson did a big deal for them and created what drug? Carvykti. So now they're in another area, whereas instead of taking these cells out of patients, messing around with them in the lab, which takes several weeks, and putting them back into the patient, you just give them a drug that modifies their immune cells inside their body. That's what Legend has just reported. This time, not for myeloma, for non-Hodgkin's lymphoma. And what you're seeing again is 100% response rates. Now, it's early days. We always worry about early days. We want to see longevity. We want to see these patients who are getting 100% response rate again. All patients are responding, maintaining that response. And that's something that's going to simply take time. And hopefully that will be the case, because it makes it so much easier to do this.
100% response rate is just, kind of the gold
phenomenal.
Exactly. I mean, I'm just shaking my head thinking about it. One thing that kind of surprises me, Sam, is just how much Chinese companies, biotech companies, have how prominent they've become. Their partners or their acquisition targets as well. What's changed in the last decade or two?
You chose the perfect time frame there. A lot of the top biologists have been trained, and that is either in the US or within China. It's not just all people going back from the US or from UK. also within China. They have excellent institutions, and they've been basically training these people and putting their money behind them. So that's where the biotech sector really started becoming a biotech sector, say around 2005. And then it was slow going. And with a lot of government support and a lot of venture capital support, this is where we've got to. And Innovent, one of the Chinese biotech companies, has done 3 multi-billion-dollar deals with European and US large pharma just in the past 6 to 9 months. And it just shows that there's a lot of advantages in China, and pharma companies have realized it, and they want to access that, as well as continuing to do business with the US European biotechs.
All right, Sam, thanks so much. Appreciate it. As always, Sam Fazeli does all the pharma and biotech research for Bloomberg Intelligence based over there in London. And that Legend Biotech, the U.S. Operations are based in Somerset, New Jersey, right near me. I always wondered out there in Bernardsville, Basking Ridge, huge homes on huge pieces of land. They got like horses running around on these things. I'm like, where does that money come from? It's too far away from Wall Street. It's biotech. It's pharma.
Yeah.
And I'm like, really? Those guys are making.
New Jersey's home to so many things, Paul.
And it was also telecommunications, AT&T, Bell Labs, Bellcore. They're all out.
Chemicals, flavors.
Yep, I don't get it. Very good. There's plenty out there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest and Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Brokers studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. There's a lot to go over today. We have an interim peace deal that has been agreed upon, not yet signed. That'll come later on this week. And stocks are flying, bonds are rising, and oil prices are plunging. We're going to check in with Mandeep Singh. He's our global tech research head on the latest in big tech because Anthropic has been ordered to disable access to its most advanced AI platforms for all foreign nationals. We'll dig into all of that. Carmen Reinecke, our Bloomberg Equities reporter, will join us to talk about the $12 trillion stock squeeze that has given way to an IPO market boom. We had SpaceX, of course, trade for the first time ever on Friday, and that stock is higher again for a second day. Shelby McFadden is a portfolio manager at Motley Fool Asset Management. She'll join us and give us her take on the markets. And of course, we also have Geetha Ranganathan because there is some M&A on this Monday morning. Fox is buying Roku at a $22 billion valuation as it looks to consolidate its streaming video offerings. And finally, we're going to check in with John Butler. He's our senior telecom analyst to talk about SpaceX, day 2 of trading, what's in store for the company going forward, especially as we wait for the lockup period to expire. First, though, let's head over now to Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett. Indeed, SpaceX up another 8%. The Dow, the S&P, NASDAQ all advancing, stocks climbing around the world. S&P 500 index right now, best level of the day. Peace breaks out, stocks surge, oil falls right to the numbers. S&P 500 index up 124 right now, 75.55 where we stand, up 1.7%. We do have the Dow higher by 633 points on the Dow, a gain of 1.2%. Tech stocks surging, NASDAQ up 2.6%. The NASDAQ 100 index doing a little bit better, 2.8% higher. All of this with the VIX just above 16 and the SOX stocks, the Philadelphia Semiconductor Stock Index ripping higher now by 4.2%. 10-year 4.45%, the 2-year 4.04%, the 30-year 4.96%. Gold is up 3.2%, 43.52 the ounce. West Texas Intermediate crude, major drop there, down 4.7%, just below $81 a barrel. Barrel of Brent, 83.42. Brent crude down by 4.5%. Phil Orlando is Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. And right here on Bloomberg Intelligence last hour, he told us, yes, it's all good news, but there are still lots of questions.
There is a lack of detail here. Is it possible that, you know, there's some sand that gets thrown in the gears here at the last second, and we don't get what we think we're going to get?
Phil Orlando of Federated Hermes. On a day when oil is moving lower, we do see shares of oil majors selling off as well. ExxonMobil down 3.7%, Chevron down 3.1%, ConocoPhillips right now down by 3.9%, and we'll wrap it up where we began. SpaceX, day 2, up now by 8.1%. Paul and Scarlett, that's a Bloomberg Business Flash.
Charlie Powell, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and on Bloomberg.com as well. As Charlie's just reporting, a strong move higher for stocks here broadly. Let's take a look at some of those stocks on the move today. We can do that with Judy LeGroux. Judy, what are you looking at?
Good morning, Paul. I'm looking at Fox Corporation to start. You know, the $22 billion deal with Roku seems to be on all sunshine and rainbows until you look at the stock price. Fox Corporation, ticker FOXA, is down as much as 19% in today's trading, and it is on track for the biggest drop on record. So I think what is not really being looked at in this story, quite frankly, is the credit aspect of things. And that is what I believe is driving the stock price. Bloomberg Intelligence is reporting that Fox's debt could more than double as a result of this acquisition. So that is really what's making investors nervous. They're looking past the subscriber scale, which is going to grow by roughly 100 million subscribers and launch Fox into being the #3 U.S. TV player in terms of viewership. They're looking past that, and they're really looking at that balance sheet as a result, and that's what we're seeing in the price.
Love the context there, especially as we look at the stock move to incorporate the credit outlook. What's next on your list?
Sure, American Airlines. So as we're looking generally at the macro news around the U.S.-Iran peace agreement and the crude oil prices just really taking a dive as a result, American Airlines, as well as other travel names like United, JetBlue, Carnival, Royal Caribbean, are all up on the day. Specifically, American Airlines, is up as much as 6% on the day, and it is on track to reach its highest price in 6 months. So again, a lot of just response and reaction from the travel sector as a result of the plunge in oil prices, and that's another stock that we're looking at this morning.
All right, SpaceX.
Yes. When have we not talked about SpaceX in the last couple of days? Definitely up around 8% and up 19% on the whole from the time that it appeared, really posted on Friday. So as we look at the first full day of trading for SpaceX, obviously we're seeing that the company raised just shy of $86 billion in its IPO, and reporting today, this morning, underwriters also exercised their option to buy an additional 83 million shares. And as we're seeing, space-linked names are really also moving on this news as well. So Rocket Lab, AST Space Mobile, Satellogic, Firefly Aerospace. So we're really seeing a big lift in SpaceX's first full day of trading, and we're looking at that as well.
Judy, thank you so much. Judy LeGroux is our Bloomberg News reporter here in New York. And for more conversations like what you just heard, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. That is available on Apple Podcasts, Spotify, or anywhere you listen. All right, let's stay with the big tech theme. Judy mentioned SpaceX, and that was a big IPO of last week. Looking ahead, we're expecting Anthropic and OpenAI to also go public sometime this year. I want to focus on Anthropic here, Paul, because there's some big news about how the company was ordered to bar access, foreign access to its best AI models, ordered by the government, in fact.
Yeah, that doesn't seem like a good development for them.
So
particularly if you're thinking about going public.
Exactly. So let's bring in Mandeep Singh. He's our global tech research head here at Bloomberg Intelligence. And Mandeep, just give us some context for this latest news. Anthropic has, it seems like, run into situations where the U.S. government keeps getting involved in figuring out or determining who has access to its AI models.
Yeah, I mean, look, they were labeled as supply chain risks before, and now this happened after they commercially released their Mythos model. Look, I think the concerns are around the ability to jailbreak the model, which everyone talks about as having capabilities that go well beyond the frontier models that we have seen, you know, around coding agents or image generation and those type of things. But the Mythos model specifically has a lot to offer in terms of finding vulnerabilities, which is why all the cybersecurity companies were involved in testing the model under Project Glasswing. And in this case, I think Anthropic just needs to work closely with the U.S. government, which clearly is keen to regulate, you know, Anthropic and probably other frontier models. And I think they're walking a very fine line in terms of really being branded as supply chain risk first and then releasing a model without really getting approvals from the government.
Mandeep, you're going to have to help me out with this one. What does it mean to jailbreak a model?
Well, so in the past, if you look at, you know, something like a Microsoft operating system, there is always, you know, something that can basically give you access to functionality that only Microsoft knows, or, you know, somebody who's really good at coding can figure out how to leverage the kernels or things that are very complex in terms of how to access the code, but can be done. And so in this case, you know, the way Anthropic released that commercial version is they put guardrails around the Mythos model, which is very capable, like I said. So when they release it commercially, they put the guardrails and said nobody can access that type of functionality because we have put guardrails. Well, guess what? What is guardrails? It is a piece of code or some checks and balances that somebody sophisticated may be able to say, okay, this is the prompt by which I can bypass this guardrail that has been put in place. And so something along those lines is what seems to have happened here.
Mandeep, what does this mean for Anthropic's plans to list? Does it affect the timing? Does it make a roadshow more difficult?
I mean, look, this is a company that has grown their annual recurring revenue by 5x this year, almost a $50 billion revenue run rate. So lots to offer in terms of top line growth. I would argue their margin structure is better than SpaceX and or OpenAI for that matter. It's just that, you know, they seem to be going on the wrong side of the government in terms of, you know, making sure they work with the government. They seem to be really taking them on in a lot of ways. And I think overall, they don't seem to have a very good message in terms of, you know, the global deployment of these models. And they keep talking about how the white collar jobs losses will be huge. And I just feel the messaging needs to improve before they, you know, do the roadshow. So that could certainly help here.
All right, Mandeep, thanks so much. Appreciate that. As always, every day I learn just a smidge more about AI.
Yeah, it's a vocabulary that I think we need to get our heads around sometimes.
Yeah. So,
you know,
but Mandeep
need a cheat sheet.
Yeah, he runs the tech stuff for Bloomberg Intelligence. He's helping us out. He's spoon feeding me like I'm a 5-year-old. So I appreciate that. We got a lot of new stock coming into the market. We had SpaceX last week. We were just talking about Anthropic, maybe OpenAI. That's a lot of new issuance. Here's an industry, the technology industry, that's historically bought back stock. Now they're adding stock in the marketplace. Is that a good thing?
Alphabet, right?
And Alphabet,
with
absolutely.
That massive
with that
equity raise,
offering, the biggest equity offering there. It's really a different market dynamic. Let's see how it's playing out with Carmen Reinke, Deputy Team Leader for U.S. Equities, Bloomberg News. She joins us live here in our studio. So, Carmen, what are you and your team thinking about here is about all this new equity issuance coming into the marketplace?
Yeah, well, it was a huge thing kind of coming into the IPO. Some people were worried Friday that, you know, there would be issues sort of with the market's internal plumbing, and that also that there might not be enough demand to really absorb an IPO of this size. You know, it was a record listing, and obviously the first day of SpaceX trading really showed that that was not the case, right? The market, you know, digested it really well. Everything sort of went off mostly without a hitch, and things were pretty good. So that bodes well for some of the other equity listings kind of coming down the pipe, and these other companies like you were just talking about, Alphabet, but also Meta and Oracle that are listing shares to, you know, raise money to build data centers and spend more on AI. So it does sort of represent a big shift. We've seen companies really buying back their stock to the tune of, you know, $12 trillion, really shrinking the total market. And so now we're seeing these companies, some of the same companies, really adding them back.
So I'm glad you bring that up, the former dynamic, because that was seen as supporting share prices as well. This idea that they were taking shares off the market and reducing the share count. And now that you have IPOs coming to list and you have the Alphabets, the Metas, the Oracles of the world selling more shares, does that mean that you no longer have that support for share prices and the market is more at risk of falling?
I think that's a big concern, right? Because when you're adding stock back, it's dilutive, right? And it's not that level of support that shareholders have been getting. So it'll be interesting to see how these companies are then maybe returning value to shareholders. I think they would argue that the spending that they need to do is going to be, you know, great for their businesses. AI is going to change things, and that should elevate stock
accretive
prices.
to earnings.
Exactly. So I think that's the argument going forward, and we'll see if investors can look at that, you know, positively or negatively as sort of those earnings continue to roll in.
I think all this new issuance, you know, it's on the one hand, it's good because public investors get a chance to invest in these great companies. On the other side, it's all concentrated into one industry, and it's not helping out with that broadening out of the market performance. But that's where the growth is. That's where the earnings are, presumably. That's where the investment's going. And I guess, I mean, is there a concern there, Carmen, about they're all tech and they're all kind of AI levered?
Well, looking at concentration risk, I saw a stat this morning. If you're sort of looking at the entire market, and including maybe like media and some of the TMT companies, technology is 50% of the market. That's a huge concentration of, you know, sort of all resting on the future of AI, right? Obviously, people are really bullish on it, but, you know, things can be bumpy. We just don't know how it's actually going to turn out. So concentration risk is definitely an issue. We're also considering it and watching it on an index level. You know, it's just probably a matter of weeks until SpaceX is added to the NASDAQ 100. That's going to change things. And then, you know, the S&P 500 didn't change their rules to allow it, you know, faster entry, but it's still, you know, probably a couple of years. It's not very long term that it could be also added to the S&P 500 and then, you know, sort of bump up concentration risk. I mean, today its valuation is more than about 2 trillion, a little more than that. It's already the top 6 company in the market.
Just like that. Carmen, retail investors play a big role here, and they're not seemingly afraid of concentration risk. They're kind of diving headlong into it, especially if you look at, you know, the popularity of single stock leverage ETFs as well. How much of this is really, you know, retail investors are responding and generating a lot of the demand for all this equity?
I mean, that's definitely a huge component. I think it was one of the biggest days for retail buying in the market, if I would, you know, reading the data correctly.
On Friday.
On Friday, yes. And I mean, we know that there are so many like Musk evangelists. And the thing that I think is most interesting there is if you think of that cohort, they're really happy to buy and hold. They're very long-term investors, where I think sometimes retail is sort of thought of as much more maybe like in and out of stocks or adding more volatility. So that is really interesting. It's definitely a dynamic we're going to watch going forward. On the flip side, though, there was a lot of institutional investment here, and that's really the bulk of sort of like the market support.
30 seconds. Do we have any sense of timing for Anthropic or OpenAI? Is that the fall, I guess?
they're definitely expected by the end of the year, and we'll see. I mean, it will be really interesting to see how fast they might want to get out in front of this market and kind of, yeah.
Yeah, so I don't know. Because bankers are going to be making some nice bank this year as well as investors. Carmen Reineke, thank you so much. Appreciate that. Carmen Reineke, she's a deputy team leader for U.S. Equities, joining us live here in our Bloomberg Interactive Broker Studio. Markets kind of towards the intraday highs of the day with the S&P up 125 points. That's about 1.7%. The NASDAQ's up 678, 2.6%. And the Dow's up 660 points, 1.3%. So some big moves here with WTI crude oil rated $80.50. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks push higher, Dow at a record. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Right now, we got the Dow at 51,866, taking out the June 4th record of 51,561. S&P 500 index, best level of the day, up 129 right now at 75.60. That is a gain of 1.7%. The Dow, by the way, up 1.3%. NASDAQ is surging 2.7%. The NASDAQ 100 index is up by almost 3%. All of this with the VIX just above 16 and the SOX, the Philadelphia Stock Exchange Semiconductor Index, surging now by 4.5%. 10-year 4.46% with a 2-year 4.04%, the 30-year 4.96%. Gold is up 3.2%, 43.35 the ounce. West Texas Intermediate crude still above $80 a barrel, but down 5.1%. We've got Brent 83.06 down by just about 5% now. So bottom line here, stocks climbing around the world, joining gains in bonds. Oil is slumping after the U.S. and Iran agreed to reopen the Strait of Hormuz. Some of the other stories that we're following, just getting word from UK Prime Minister Keir Starmer that Britain will ban children aged under 16 from using a range of social media apps, including Snapchat, TikTok, and YouTube, to protect them from what the government says is harmful content and excessive screen time. Fox is acquiring Roku in a deal that values the streaming video platform at about $22 billion, including debt. Now, shares of both the acquirer and the acquiree are lower. Fox right now down is trading lower by 16.7%. We got Roku down by 0.7%. Again, recapping, stocks push higher. Dow at a record, S&P up by 1.7%. Scarlett and Paul, that's a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming on YouTube. We're streaming on Bloomberg.com as well. As Charlie was just reporting, stocks moving higher today. Looks like we're making some pretty solid movement towards some type of peace agreement in Iran, and that's all the markets need, with oil trading down and stocks higher. Let's talk to somebody who does this stuff for a living. Shelby McFadden, portfolio manager, Motley Fool Asset Management, based down there in Alexandria, Virginia. Shelby, it looks like we're moving towards some type of resolution here. We'll see if it actually comes to an agreement on Friday. Aside from that, what are you looking at in this market? What's driving it?
I think what's driving the market forward right now is going to be the next discussion of rates. And so while we haven't seen a ton of activity around it, and I'd probably argue that in the last year to 18 months, we've seen less and less market reactivity to rates discussions, this is going to be a pretty big one. Because right now it's looking like, I think we're pricing in about one hold and one cut for the rest of the year, which is, that might be right. One hold, one cut for the rest of the year, which previously it was more like a couple of cuts. And that's somewhat optimistic. So the fact that some investors are thinking there could even be a hike is something that I think is driving the market. The next thing would obviously be just that absolute windfall of IPOs that we've got coming for us in some of these really engaging high-tech sectors.
Right. I mean, we've got SpaceX down. We've still got Anthropic and OpenAI to go. But I want to get back to your first point about rates being the next big catalyst. Now that we have this potential deal with Iran and the U.S., is that a gift to central bankers? I recognize that it doesn't really change what the Fed does, because it wasn't going to hike rates or cut rates at this next meeting anyway. But certainly for the rest of the world, it feels very impactful.
Yeah, I would say it could be a gift if it endures. And so the unfortunate truth that we've had is that a number of the negotiations that have appeared to be positive and stalled hostilities have been short-lived. And so if this actually does endure, it could really be a gift. There could be a tremendous amount of economic relief. We know that there are a number of countries in Far East Asia that have been really, really squeezed by the situation with the closure of the Strait of Hormuz. And so this could be great relief if it does actually endure. If not, it would end up being another blip, something we've seen before where we get a couple of days of trading optimism. And I think we're seeing that in the sort of low single digits returns. We didn't exactly see an explosion of positivity out of the markets today. I think that's a reflection of the fact that folks aren't quite sure. They're waiting for details, and they're not gung-ho to go ahead and commit more capital based off of this one catalyst before they know if it's actually a catalyst.
What are we doing in the bond market today, Shelby?
Well, I would have to say that there's probably a little still probably a bit of trepidation. Not entirely sure. When we think about what the central bank is looking at, they have kind of abandoned labor a little bit, quite a bit more focus on inflation. I'm not really seeing any sort of inflection when it comes to long-term expectations. I'm not seeing any sort of dropping down of saying, okay, you know what, I think this will all work out. I think we're still seeing long treasuries express some concern about the ramifications of hot CPI and an ongoing war for the United States. So not really seeing that there's an overwhelming acceptance of immediate relief coming out of the bond markets.
How about the credit market? The big headline we got today is that NVIDIA is the latest company to join the AI debt boom. It's going to sell, according to our reporting, at least $20 billion of bonds today to refinance outstanding debt, among other uses. And you could argue that the among other uses is what everyone's raising debt for, to build out their AI universe. Are you worried about concentration risk? I mean, if you're not investing in this credit yourself, I mean, certainly everyone else seems to have a lot of exposure to AI tech debt.
Yeah, so two things. I'd say one, going ahead and getting that tech exposure, what it tells us about the company is that they are not getting themselves bogged down in the cost of investment right now. They're essentially saying that what we believe we're going to get out of this is worth it, even in this slightly elevated interest rate environment. The second thing would be when individuals or institutions are looking at their portfolios, there is a certain inevitability of the AI trade. It's not going anywhere. And so it's up to us as investors to then tilt our portfolios in a necessary way to manage that sort of risk. And so if you look at the credit markets and you realize, okay, there's a tremendous amount flowing into this one place, you then have to start to think differently about how you're treating alternatives in your portfolio. And you may not necessarily be able to use all the same tools if you don't want to be faced with that same sort of risk. So it really does then come down to an allocation assessment there, because there's not necessarily an ability to change what the markets are most interested in and what's driving investment, because it's these hyperscalers that have the funds and the capital to say, at these levels, we'll still go ahead and issue the debt and make the investment.
Shelby, thanks so much. Appreciate it. As always, Shelby McFadden, Portfolio Manager, Motley Fool Asset Management. All right, let's get back to the AI story, because we talk about the AI story a lot. And kind of one of the things we're learning is that you need data centers. Okay, I get that. I see them being built all over the place. And you need to power these things. So they need to be on the grid, near the grid, all that kind of stuff. And maybe you need some on-site power as well. That's new, but that's the play. So we got some folks looking at that for us, our folks at BNEF. We have one of them here today, Musfika Mishi, Technology and Innovation Associate over there at BNEF. Talk to us, Musfika, about these data centers and how you power them. On-site power, nat gas, all that kind of stuff. How do you do it?
Yeah, thanks for having me. So for data centers, speed to power is everything. And right now, with long timelines to interconnect to the grid, it's forcing them to find alternatives. And these alternatives are happening to be on-site, natural gas-fired turbines and engines, as well as fuel cells. At BNEF, we've tracked about 120 gigawatts of on-site gas power across the U.S. for the next coming years. And for context, that's about a fifth of all of the U.S. gas power capacity that's already operating in the U.S.
What kinds of compromises, if at all, need to be made if data centers are using gas turbines and on-site gas power as opposed to more conventional power plants?
Yeah, the main thing is obviously the cost burden. On-site gas power is increasing the costs of these equipment. In the past couple of years, when a gas turbine plant would have been in the $1,400 per kilowatt range, it's now almost at a $3,000 per kilowatt range. So it's going up by a lot because supply can't keep up with demand. Now, on the engine side, a similar story is also unfolding, where costs were in the $1,500, $1,400 per kilowatt range. It's now climbing up to the $2,200, $2,400 per kilowatt range. So the main thing here, on top of the emissions from the natural gas, is the fact that data centers will have to put down a lot of money to get these things on site.
What companies are doing this? What companies can build an on-site nat gas plant?
Yeah, of course. Well, there's two players in this industry. There are the people that are building the actual equipment, and there are the people that are putting it together on site. So when it comes to the actual manufacturers of the equipment, the main players were usually GE Vernova, Siemens Energy, Mitsubishi, but obviously they're very, very back ordered. So now new players are coming into the industry. You have players like Solar Turbines, which is a subsidiary of Caterpillar, who also makes engines. You also have things like Boom Aerospace, who used to make airplane engines, and now they're kind of coming into this AI data center space because there isn't enough turbines from the traditional existing main players.
So there's a lot of demand, clearly. I'm curious, whether there's sufficient supply to meet this, and if not, how much of a time lag are we talking about?
Yeah, so of the 120 gigawatts of gas power projects that we've tracked, about 50 gigawatts of those don't have a timeline associated with it. What that means is they're saying, oh, we want to build a gas plant that will be X gigawatts in the future, but we only have secure turbines or equipment for maybe 1 gigawatt or 2 gigawatts. So there's a huge pipeline of projects, but not all of them have secured the equipment or have secured the data center off-taker who will be using the power from said gas plant. So there is a solid list of projects that most likely will either be delayed or probably will not be coming online in when it comes time in the next couple of years.
Who pays for this stuff?
That's a very good question. It depends on how you want to structure the system. Oftentimes, it is the data centers who are paying for the whole setup, turbine, EPC, all of the bits and bobs that go into it. Other times, what you have is things like PPAs, where a IPP or an external power producer will build these gas plants, and data centers will just pay them a monthly fee to offtake that power.
Always something with these things.
Data centers, has any come up near you? I mean, what's the mood like for this? I mean, it feels like it's very much turned.
Starting to be a little bit of a backlash, but I mean, we have Amazon distribution centers everywhere you look. I mean,
and there's backlash against that initially too.
Yeah,
so
I don't know. All right, Musfika, thank you so much. We appreciate that. Musfika Mishi, Technology and Innovation Associate at BNEF, joining us live here in our studio. We've got the S&P 500 up 130 points. 1.7%. We're at right near the intraday high, so that's a good thing. On good volume as well today, so that's a confirmation there of the move here. The Nasdaq's up 2.7%. That's almost 700 points on the Nasdaq. This has been.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index, looking at a gain of 132 points, 75.64 where we stand, up by about 1.8%. We've got stocks climbing around the world. Oil is slumping after the U.S. and Iran agreed to reopen the Strait of Hormuz. Again, the S&P now at 75.63, up 1.8%. Dow Industrials are surging 658 points, indeed a record there, up 1.3%. The NASDAQ Composite Index now up by 722 points. That is a gain of 2.8%. NASDAQ 100 Index doing a little bit better, up by 3%. The Russell 2000 Index of small cap shares up by 1.2%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 4.7%, and a VIX holding right around 16, a 10-year at 4.45%, with a 2-year 4.04%. Spot gold up $135 the ounce, up by 3.2%. While West Texas Intermediate crude oil, we've got WTI right now at $80.50 a barrel, down 5.2%. Barrel of Brent, $83.04, down now by 4.9%. Oil trading lower, and we've got stocks rallying. Stephanie Guild is Chief Investment Strategist at Robinhood Financial, and on surveillance this morning, she said, yes, the Iran deal will help unwind the premium that is embedded in crude prices.
I think it makes costs a little bit lower for everybody. All those input costs that were elevated obviously should start to come down. I don't think it'll happen right away because it takes a while to restart things. I saw something this morning where Kuwait will take the longest because they're the most impacted. I mean, obviously the market is forward discounting, so the market will care about it now and today. And you're seeing it in energy prices and energy stocks.
Stephanie Guild of Robinhood Financial, and indeed among those energy names, ExxonMobil down 3.9%, Chevron down 3.6%, ConocoPhillips down by 3.6%. Sources tell Bloomberg NVIDIA is seeking to raise at least $20 billion from its first corporate bond sale since 2021. NVIDIA up today by 3.2%, all part of a broader tech rally. Recapping, S&P up 1.8%, NASDAQ up 2.8%. Paul and Scarlett, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, with our Bloomberg Business Flash. It is Monday, which means there's always an M&A deal or two to go over, and the latest one is one in the media space. Fox buying Roku at a $22 billion valuation. Fox shares are lower. That tends to happen. The acquired down 17%. In this case, Roku, interestingly enough, is also lower, down by 1%. Let's bring in Geetha Ranganathan. She is our U.S. media analyst here at Bloomberg Intelligence. Geetha, let's start first with what is Fox buying when it acquires Roku? What does it want from Roku here?
So what Fox wants, Scarlett, is exposure to digital media. So Fox is one of those legacy media companies that really kind of doubled down on live TV. And if you look at their revenue mix right now, they have about 90% exposure to the linear TV ecosystem. You compare that to some of their peers, even a Paramount Skydance or a Warner Brothers Discovery, which are exposed about 50 to 55%. So Fox definitely one of the most heavily exposed. They've played it pretty safe. So they've stayed away from the really expensive streaming wars when everybody was, spending billions, tens of billions of dollars on content to just kind of get streaming subscribers. They stayed away from that, but they've always kind of been shoring up capital to make this big play into digital, advertising, into digital streaming. And that's exactly what they're doing today with this Roku acquisition. It helps them build up their digital advertising business. And it really helps them win the streaming war in a very unique way because Roku is a streaming aggregator. So Roku gets paid no matter which streaming service wins. And I think that's really a unique benefit here for Fox.
I have to admit, Keith, I'm surprised that the stock is down as much as it is, down 16%. Why do you think that is?
So one thing, Paul, is that this is a pretty big deal. So if you just look at Fox's, market cap, for instance, it's close to about 25 billion. This deal is, the equity value of the deal is about 25 billion. So definitely a really, really a big size deal from a size perspective. And more important, I mean, Fox has always been very, very good in terms of its balance sheet management. They've had, a pristine balance sheet, very low levels of debt, have always committed to, a strong capital returns program and stock buybacks. And I think people are a little bit nervous right now because they are going to be taking on quite a sizable debt load with this transaction, more than $12 billion in debt. And while they've promised to kind of maintain their capital returns, I think the street is still a little bit nervous.
Is there any reason to think that regulators might have any objections to this? And I ask thinking that it's probably not, because Fox is pretty close to the Trump administration. And this is an administration where, friends get good treatment.
Absolutely. I totally agree with you there, Scarlett. I think, the Murdochs obviously have this really close relationship with the president, with the current administration. The only thing that I would raise here is there is a little element of vertical integration. So Fox obviously owns content in terms of, news, in terms of live sports, access to a lot of live sports properties. And with Roku, it's really more of distribution, right? Roku has access to 100 million global streaming households, over 50% of the US broadband households. So that really gives them that whole distribution arm. And so regulators could make a case that this becomes, again, a case like, Comcast, where you have the cable business and you have content. And so, whether there need to be any concessions or whether, regulators are going to scrutinize it a little bit more closely.
This is kind of, I would say, the coming out party, if you will, for Lachlan Murdoch a little bit here. What's the call there? What's the thought there? Is this a management team that can pull off such a big deal?
I think they can. They've been very, very measured, Paul, as you well know, in terms of, acquisitions, in terms of M&A, in just terms of general strategy. But we know that they've always been itching to do a deal. They've done small deals much more quietly, and they've had this very eclectic collection of different assets, but really kind of spreading their bases a little bit. So they went out and they got all of these, stakes in a lot of sports betting assets. Again, kind of identifying all the growth, pockets, if you will. And so I think, this deal, obviously, it's a huge deal. They've considered it over a long period of time, and I think they feel like this, with the purchase of Roku, obviously they do get to supercharge their own advertising business pretty substantially. But then again, they also get economics from any streaming platform, right? Because Roku gets paid, they're pretty much like an Apple store, so they get that 35% cut no matter which streaming service you subscribe to. So I think that, Fox was obviously trying to get a part of those owners' economics as well.
Is there any reason to think that someone else might come in with a higher bid? Could this result in any kind of bidding war?
So we just ran some numbers, Scarlett, and we think that, the Roku, the number is actually a little bit underwhelming. So yes, Fox is paying about a 35% premium to where Roku was trading prior to all of this M&A news. But if you just compare some of the Roku profitability numbers, so just this quarter or just a few months ago, they started disclosing their advertising revenue as well as their subscription revenue. And what was more interesting than the breakout of the revenue itself was the gross margin. So you look at advertising revenue, for instance, it's a 60% gross margin business, which is really, really a profitable business stream, a profitable revenue stream. And then you kind of apply some of the multiples that peers are trading at. I mean, whether it's a Google or a Meta or even a Netflix and Spotify on the subscription side. And we think it's actually slightly undervalued. So maybe almost 30% undervalued to some of where those peers are trading. And I think that's what the market is slightly disappointed about today, both the price as well as the fact that this was not a 100% cash deal. So only 60% of it is cash. The remaining 40% is being paid by Fox stock, Class A stock.
All right, Geetha, thanks so much. Appreciate the analysis there. Geetha Ranganathan, she is the media analyst for Bloomberg Intelligence. Merger Monday, Fox making a bid for Roku. So that's interesting play in the media space here. But again, Fox stock down pretty substantially, down about 16%. That's more than you typically see on a deal. But as Geetha pointed out, it's a big deal. and it won't be free cash flow accretive until the second full year. And it also has a debt component that levers up the balance sheet, so the market's accounting for that. The S&P's up 139 points, that's 1.9%. The NASDAQ up 760 points, that's almost 3%. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Looking at SpaceX, priced at $135 on Thursday night, traded up on Friday, the first day of trading, to about $160, up another 10% today to $177. So just giving it a market cap here of $2.3 trillion. A big part, actually the biggest part of SpaceX today is its Starlink satellite business. Let's break that business down. We can do that with John Butler, Senior Telecom Analyst for Bloomberg Intelligence. He's based down there in Princeton. John, talk to us about their Starlink business. Just put it in context for us. What is it?
So I heard Starlink described as Comcast in the sky, which I thought was pretty amusing, but also pretty accurate. So to start, it was about 61% of Starlink or SpaceX's revenue last year. And, you know, it's mostly broadband. About 60% of Starlink revenue is broadband. They have an emerging, it's very small, but it's starting to emerge, direct-to-cell business. So in 12 to 18 months, let's say, you're going to get terrestrial-like quality over your cell phone. And then the balance of the business is the government business. A lot of people know it as Starshield. They operate this separate but very secure satellite business for the government, and they continue to win big contracts there.
In terms of the satellite business and the launch business and all that kind of stuff, how are they in? Are they the biggest player out there? How many satellites do they have? How do you guys think about that?
They are, Paul. I mean, I'm really honestly blown away by how they've leaned into the vertical integration. So if you look at SpaceX, they have the launch business, they have the boosters, they have the satellite manufacturing capability. So they've been able to put up about 10,000 broadband satellites in Europe. They have 650 direct-to-cell satellites, and they have a new super heavy booster that they're going to move into service in the second half. So they're planning to launch much more powerful both broadband and direct-to-cell satellites once they get that new booster into service. It's called Starship. Honestly, if I owned SpaceX, the thing I would be watching is the commercial availability of that booster.
So this is a big business for them. I mean, but that got a huge valuation. The IPO valuation was just about $1.8 trillion. How much of that is this Starlink business at this point?
So we valued Starlink at around $600 billion. Our aerospace analyst who covers SpaceX put the launch business at around $1 billion. And our AI analyst, Mandeep Singh, values XAI at $350 billion. But if you look at where the excitement is in the story, obviously it's getting a premium valuation based on what I'll call the Musk factor. People want to buy in and have a piece of Elon's vision for the future. But I think a lot of excitement is around that XAI business and the company's potential to really leverage the growth in AI going forward.
So for the Starlink business, how do they grow this business? Is this more satellites in space? Is this signing up more retail and enterprise customers for its broadband? How do they grow the business?
Yeah, I think, as I alluded to a moment ago, Paul, the big swing factor for them is their ability to get next generation satellites in space, which is going to allow them to, it'll really level the playing field in many ways once with terrestrial broadband carriers, once those new sats are in service. So we're looking for subscriber growth to really take a step up starting in the second half this year and then moving into 27 and beyond. And keep in mind, the broadband business for them and the direct-to-cell business is a global business. It's not just U.S. So they have a really big addressable market opportunity out there, particularly in rural and underserved regions. So I expect subscriber growth to really drive the revenue engine for Starlink.
Does Starlink compete against, you mentioned like the Comcasts of the world, the Charters of the world? Do they compete?
They do. I mean, I'm looking at, even here in the U.S., for subscribers to jump from services like fixed wireless access, where a carrier sort of does a wireless link into the subscriber's home. A lot of those people are very attracted to the idea of having a wireless link deliver their broadband. And as Starlink gets their speeds up and their prices down, I think they're going to become a very attractive alternative and begin to win share against competitors, just as you said, Comcast, Verizon, T-Mobile, and to a lesser degree, AT&T.
Interesting. So they're, just going to be an amazing business and lots of capital required. We know that. John Butler, thanks so much for joining us. Appreciate that. John Butler's the senior telecom analyst for Bloomberg Intelligence. He's based down there in our Princeton office. We're all learning more and more about SpaceX. But again, trading higher by about another 10% today, $175 per share. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research, your top stories Global Biz headlines are coming up in just a moment. Markets ripping higher. S&P up 1.9%. The NASDAQ up, I'm going to round up and call it up 3% here today. WTI crude oil sitting right at $80 per barrel. More coming up. This is Bloomberg.
From ABC News, I'm Michelle Franzen. A peace deal between the U.S. and Iran inching closer. The Trump administration says an initial agreement has been reached to extend the fragile ceasefire for 60 days and lead to the reopening of the Strait of Hormuz. Vice President J.D. Vance spoke to ABC News about the deal he says has already been signed digitally.
This is really about walking down a pathway here where the Iranians will be welcomed into the world economy if they do the right thing.
The development comes as President Trump arrives for the G7 summit in the French Alps. ABC's Rachel Scott is in Geneva with a preview.
This is the first time that these world leaders are meeting since the war in Iran began more than 100 days ago. And this possible news of an agreement could reshape the G7 summit altogether. Look, this war caused a lot of friction and tension with our allies. It disrupted the global economy. Thousands taking to the streets here in Geneva in protest. Some of those altercations turning violent.
U.S. markets reacting positively so far to the proposed peace plan. Oil prices beginning to drop along with gas prices. The UK is the latest country to put a ban on social media for younger users. Britain's Prime Minister Keir Starmer today announcing social media restrictions for children under the age of 16. Starmer says he believes big tech is fully capable of making great products while also protecting children.
I do not accept, and I will never accept, that you can't be both pro-tech and AI and at the same time say we must protect our children. In fact, when I look at the brilliance of the innovators in AI and tech, I know very well that it is possible to do both.
The New York Knicks riding high following Saturday's NBA championship win against the San Antonio Spurs. The first time in over 50 years the Knicks have held the title. New York City's mayor announcing the Knicks will be honored with a ticker tape parade this Thursday. Fans will get a chance to celebrate along the Canyon of Heroes in Lower Manhattan and cheer on their favorite team. You're listening to ABC News. Dangerous heat unfolding across parts of the Pacific Northwest.
The Central Valley of California from Bakersfield up to Fresno, heat advisories right through today and tomorrow. Temperatures around 100. How about Chico up to Redding? Highs up to 110 degrees, and the dangerous heat wave spreading into coastal areas of the Pacific Northwest. We're talking Medford all the way up to Seattle, really centered on Portland, Oregon. Extreme heat warnings there, 95 to 100. And temperatures at night, you don't get much relief, only falling down into the 60s and lower 70s. Meteorologist Jeff Smith, ABC News.
The FDA, medical professionals, and the company that makes Benadryl are warning teens and parents about the potentially deadly risk posed by a TikTok challenge.
The viral dare posted to social media encourages young people to take up to 25 Benadryl tablets at once to achieve a euphoric high, even hallucinations. Richard Preston's daughter tried it last week.
She was perfectly fine Sunday. Within 24 hours, she's laying lifeless.
Hundreds of kids have been hospitalized after overdosing on the over-the-counter allergy medication. At least 5 have died since the TikTok challenge was first issued in 2020. Jim Ryan, ABC News.
A new way for the FBI to take on hackers. The agency has built a replica town where law enforcement officials will be trained by simulating real-world cyber attacks. The fake town located in Alabama with homes, a hotel, a courthouse, and 200 servers. An FBI report says there was nearly $21 billion in losses to cybercrime last year. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
There's a deal between the U.S. and Iran to extend the ceasefire and open the Strait of Hormuz, and that provides the backdrop as President Trump attends the G7 summit in France. In fact, right now, he is sitting down for a bilateral meeting with the French President, Emmanuel Macron. Let's listen live here on Bloomberg.
I wanted to say, to commend President Trump for the celebration yesterday and to welcome President Trump and the ministers and his team for being here in Evian for the G7. I think yesterday was signed a very important agreement, a peace deal with Iran. And it's a very important one because first it will fix the nuclear issue. And it's a very important matter for peace for the whole world. And it will reopen Hormuz. It will provide peace in Lebanon. And so we are ready to take our fair share of the burden and be part of the commitment of the international community in order to support this deal. And we will discuss about that together and with colleagues later on. But it's a very important step towards peace, but as well for global economy. We will have the occasion to discuss about the war in Ukraine in order to re-engage together and negotiate a good and solid peace and sustainable peace. And President Zelensky will be with us as well tomorrow. And obviously, we will have the occasion to bring this G7 to speak about a series of issues from rare earths, critical minerals, trade, etc., where we have to build convergence amongst the G7 members. And it will be the occasion for us to celebrate the 250 years of independence for the US. And Versailles is a good place because this is where the King and his Minister of Foreign Affairs at the time did support the US during years, but as well prepared what we called the Paris Treaty in 1783, which was the final point of this war. So it's a great honor and a great pleasure to have you, Mr. President, in Evian and Paris.
Thank you. So, Emmanuel has been a special friend of mine. We've had a fantastic relationship. We've worked on many deals together. I'm very happy to say very signed, the deal's all signed. And the strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened. We got along very well with Iran. It's a different set of leaders. As you know, the first set is gone, the second set is gone. And we found the third set to be very smart, strong, very smart, but we ended up making a deal. I felt badly that we had to go back on the attack for 2 nights, and I thought a third, but we made it before that happened. But I think a lot of great things are going to happen in the Middle East right now, and very importantly, the oil is plummeting down, and the stock market is shooting up like a rocket today, like record kind of numbers. And the oil has taken its biggest plunge, and we're into the low numbers, not quite back yet, Kevin, to the extent, but we're getting close to the numbers we were before it all started. And the main thing is that Iran will not have a nuclear weapon. They fully agreed to that with strong policing powers, and they won't have a nuclear weapon, which is what it was all about, because they probably would have used it if they had it. So we had 2 big moments. When they terminated the JCPOA, that was the Obama deal, the Barack Hussein Obama deal. And when I terminated that, it was very important because it was a road to a nuclear weapon. It was a horrible deal for the United States. It was a deal where billions of dollars was given to Iran. It was a deal where $1.7 billion in cash was put on a Boeing not a 757, I guess, right? But it was put on a big, beautiful Boeing 757. They needed a Boeing 747, to be honest with you, because it was a lot of cash. $1.7 billion was taken out of the banks and given to Iran. And on top of that, tens of billions of dollars was paid. So they tried to bribe them to make a deal, and that didn't work. It never works. And we've done a great job and hopefully it's going to be a good relationship and we're going to get along. And if we don't, we go back to where we started, but I don't think that's going to be necessary. The Iran deal that we made is going to bring a lot of success to the world, because the oil was really clogged up there for a while. He would call me on occasion and say, come on, please, let's go with the oil prices. But the oil is coming way down, so I'm very honored by it. I want to thank you for your help. You've always been a help, and it's an honor to be with you. We had a very good conversation yesterday with President Zelensky and President Putin, and I see maybe we can do something there. I really do. I think they're both open to it. So I'm going to, now that this is finished, we're going to be focusing on that, see if we can get that one done. 25,000 people a month are dying, mostly soldiers, and that shouldn't happen. But I had two very good conversations yesterday. We'll be talking about it. And we had a really exciting, I think maybe one of the most incredible evenings in the history of the White House. We had an evening last night with the fighters, and I was very happy. I called last night, very late last night, to congratulate you, because in the heavyweight division, a French fighter won. I don't know, is that maybe more important than the World Cup? To some people it might be. To some people it might be. You have a good team in the World Cup, very good team, but you have good fighters too. And you're a great country, and it's an honor to be with you. Thank you very much.
Hey, sir, are you going to try to attend the signing ceremony on Friday?
Well, it depends. JD's coming in for it. He was originally going to do it. I'll probably be gone by then. We're having dinner in a day and a half, right? We're going to be staying quite late. So I may be involved, I may not. But JD was coming in for that specifically.
Mr. President, when will the text of the MOU be released?
I think pretty soon. I would say, I mean, I want it to be released because it's a very powerful document. It's not like the Obama document, which was just a terrible document. This is a very powerful document, and I want it to be released. So probably pretty soon. I would say sometime after Friday, because the Strait opens completely. It's open now, but it opens completely. We'll have all the mines knocked out for the most part. We have a lot of lanes right now already.
Mr. President.
So I think sometime in the very near future, yeah.
Mr. President, does the deal involve any sanctions relief for Iran? When would that go into effect?
No, it doesn't. Well, they have to. It's really a behavioral thing. If they do what they're supposed to do, that starts taking effect.
Monsieur Macron, quel engagement êtes-vous prêt à prendre au nom de la France dans le détroit d'Ormuz? Vous avez parlé du porte-avions Charles de Gaulle. Mr. President, what do you expect from France and
well, I would love them to do that. I don't think we're going to need much help because we have an agreement where it's going to be open, and it's toll-free. We had a little argument on that. It's toll-free. So I don't think we're going to need much help, but I don't think it's a bad idea to have a ship or two up here from a few countries. You'd be a great country to do it because you never know what happens, but I think it's going to be open, and I think it's going to be free sailing. We do want to see if we can straighten out the Lebanon thing, because it just seems to just never end. And that's a mini version of what we were doing, and it should not be tough. It should not be tough. So Hezbollah, we have to have a little talk with them.
Je vais juste répondre en français à la question qui était posée en français sur la contribution. Nous sommes prêts à avoir dès demain des chasseurs qui sont sur place et qui peuvent aider aux missions d'observation, et sous 48 heures des frégates qui peuvent évidemment se déployer, et sous 2 à 3 jours le porte-avions avec les frégates qui l'accompagnent et l'ensemble du groupe. Évidemment, tout ça suppose d'être souhaité et demandé par les États-Unis d'Amérique et l'Iran et Oman, c'est-à-dire les parties prenantes de l'accord et les deux parties en particulier autour du détroit.
Hearing the voice right now of French President Emmanuel Macron. If we get a translation, we will provide that for you on Bloomberg Radio. But of course, we did hear from Macron at the onset of this bilateral meeting with President Trump at the G7 summit in France, saying that the peace deal with Iran is important to fix the nuclear issue and that it could reopen the Strait of Hormuz and provide peace to Lebanon. Of course, President Trump also spoke on this deal that was just reached with Iran over the weekend, suggesting it has already been signed, perhaps electronically, as the big signing ceremony will take place in Geneva on Friday. The president, when asked if he was attending, he said it depends, noting that the vice president, J.D. Vance, was planning to go to that signing ceremony. But sometime after that signing happens on Friday, President Trump says, is when we will actually see the text of this memorandum of understanding. We have not seen that yet. And it will be crucially important whether or not it really does contain what President Trump suggested it would there, which would be, of course, a completely reopened Strait of Hormuz with no tolls, as President Trump does not want tolls, and he reiterated that after saying so on True Social this weekend, also suggesting, of course, that there's going to be a full reopening of the Strait of Hormuz, and that next the U.S. will be shifting its focus to Russia and Ukraine, which also will, of course, be something to focus on in this G7 summit over the next few days. So we'll have more on the bilateral meeting between Trump and Macron in just a moment. But let's first check on these markets here on Bloomberg Radio, because they are reacting quite strongly to the news of a deal between the U.S. and Iran. Stocks up, oil down, and Charlie Pellet is in New York with the details.
I got you covered, Kaylee Lyons, and let's begin with what is happening with crude oil. As you correctly point out, oil selling off. West Texas Intermediate crude holding just above $80 a barrel right now, 80.16. It is down 5.6%. Barrel of Brent crude selling off as well, 82.72. Brent down by 5.3%. Oil lower, stocks higher. Stocks, in fact, climbing around the world. Right now, the S&P 500 index up 140 points. 75.71 is where we stand on the S&P. The record on the S&P, by the way, 76.09. 75.71 where we are right now, up by 1.9%. Dow at a record up 707 points right now. 51,908 on the Dow, up 1.4%. NASDAQ higher by 3%. The NASDAQ 100 index up 3.1%. The Bloomberg Mag 7 index surging by 3%. And right now the SOX is up 4.9%. The VIX just above 16. 10-year 4.45% with the 2-year 4.04%. Gold is up 3.1%. 43.52 the ounce. And crude bears repeating just above $80 right now. 80.07 a barrel of WTI crude, down by 5.6%. Kaylee Lyons, that is a Bloomberg Business Flash.
All right, Charlie Pellet in New York, thank you so much. I am indeed Kaylee Lyons here in Washington. We'll have much for you ahead on Balance of Power on this deal between the U.S. and Iran that will be formally signed on Friday, perhaps not with President Trump in attendance, as he was just told reporters while in a bilateral meeting with French President Emmanuel Macron at the G7 summit in Evian, France, that it depends whether he attends, though he does say that he expects the text of this memorandum of understanding to be released after that signing ceremony on Friday. And again, he says the Strait of Hormuz should be fully reopened by then, which is what markets are reacting to today. We'll have much more ahead here on Balance of Power on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all ripping higher. Dow at a record right now, up 732 points, up 1.4%. 51,934, closing in on 52,000 right now on the Dow. S&P also pushing higher, no record, up 1.9%. Currently at 75.74. NASDAQ up by 3%. The NASDAQ 100 index up 3.2%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 5.1%. All of this with a VIX just above 16. Stocks climbing around the world after the U.S. and Iran agreed to reopen the Strait of Hormuz, fueling hopes for an end to the conflict that has roiled global markets. 10-year, 4.45%. The 2-year, 4.04%. Gold is up $125 the ounce to $43.43, up by 3%. West Texas Intermediate crude down 5.6%, 80.12 the barrel on WTI. Barrel of Brent 82.72, down now by 5.3%. We'll have a whole lot more on the oil markets coming up in just a moment with our Mike McGlone, Miami Mike. Right now, the S&P up 143, up by 1.9%. Sources tell Bloomberg NVIDIA is seeking to raise at least $20 billion from its first corporate bond sale since 2021. Right now, NVIDIA shares, they are trading higher by 3.5%. Merger Monday, lots of deal news today. We've got Fox agreeing to acquire Roku in a deal that values the streaming video platform at about $22 billion, including debt. Shares, however, of both companies are declining. Fox Corp down now by 15.8%. We got Roku down by 6%. Recapping, S&P up by 1.9%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Kaylee Lines, that's a Bloomberg Business Flash.
All right, Charlie Pellet in New York, thank you so much. We will get to Miami Mike in just a minute, but we had New York Charlie first, and I feel like I need to congratulate the voice of the New York City subway and all of New York City on the Knicks' victory over the weekend in the NBA Finals. Obviously, half a century in the making. Charlie Pellet, I don't know if you're still there, but were you up celebrating in the streets of New York in the early hours Sunday morning?
Not quite in the streets, but it was nuts. My apartment complex just erupted. It was predictable. I knew it was going to happen. I saw the doorman run out in the streets. He left his position from behind his desk. The neighbors were going nuts, and of course, started hearing Alicia Keys just blaring throughout my apartment complex. It was a great, great, great time to be in New York City. So magical. Congrats to the absolute. And I'm sure you saw the videos on social media, communities throughout New York, all just celebrating, and it was just a wonderful feeling of just bringing the city together. Go Knicks. Congratulations.
Yeah, a moment. We'll see how long it lasts, but very exciting for New York indeed. A wonderful Saturday night for everyone there. And of course, for Sunday in Washington, it was pretty exciting too. We started Sunday evening, which was the president's 80th birthday, mind you, with news from him that there's a deal reached between the U.S. and Iran. Then throughout the course of Sunday evening, we saw the first ever UFC fight on the South Lawn of the White House, complete with flyovers, the Blue Angels, a B-1 bomber, fireworks were included. All the festivities went until the early hours of the morning. And then the president, just a couple hours after that, around 3 a.m. Eastern, boards Air Force One and departs for the G7 summit in France. And in between all of that, he's finding the time to weigh in on other issues as well, not just a deal with Iran, but also a potential deal on Capitol Hill that hasn't yet materialized when it comes to reauthorizing Section 702 of the Foreign Intelligence Surveillance Act, warrantless surveillance power used abroad that, of course, the administration has long maintained is vital for national security and in thwarting terrorism threats. That's why President Trump just weeks ago wanted a clean extension of FISA. He, of course, didn't get one ahead of the deadline. The program is dark right now because Congress couldn't renew it with Democratic opposition to Bill Pulte serving as acting director of national intelligence. Jay Clayton has been nominated to serve in that role on a permanent basis, and the Senate's going to try to fast-track that confirmation this week, which would, in theory, have solved the problem. Throw in a new wrench, as President Trump on Truth Social suggests he will only vote for a FISA deal or sign it into law if it includes the Save America Act. To quote him directly, "I'm against FISA if it doesn't come with the Save America Act full version firmly attached to it." So let's get into this now with Nathan Dean of Bloomberg Intelligence. He's our senior U.S. policy analyst. So he lists in the Truth Social post, Nathan, what it all entails, things like Voters must show ID. All voters must show proof of citizenship. No mail-in ballots except for illness, disability, military, or travel. He's not going to get that, and that means he's not going to get FISA through if he wants it, right?
Yeah, he's going to have to eat his own words at some point because he's not going to get the Save America Act. I mean, look, at the end of the day, to get the Save America Act, you're either going to have to get rid of the filibuster, which Senate Majority Leader John Thune has said you're not going to have to do it, or you're going to have to fire the parliamentarian and try and get it through via reconciliation, which Senate Majority Leader John Thune has said he's not going to do.
Yeah.
And so as that roadblock exists in a Republican-controlled Senate, President Trump is just not going to get the Save America Act. So ultimately, when they get through and Jay Clayton is confirmed, there will come a point where FISA, I think, is confirmed, and the White House is going to have to make the decision, are we going to be the ones that keep this dark, or are we going to accept it? I think ultimately they'll accept it.
Well, he just keeps trying different vehicles to get the Save America Act through. He wanted it in Budget Reconciliation 2.0. Do you expect that this could find other legislation to be attached to, or is it's just a non-starter for the remainder of this Congress?
He's going to keep trying. I mean, look, there are going to be other opportunities. Look, I'm not going to sign the continuing resolution for the September 30th government funding, or I'm not going to sign the highway infrastructure bill. You know, there are going to be other opportunities where he's going to try this, because at the end of the day, look, legislatively, there's not much else out there that he's going to have for the rest of this year. And if the Democrats take the House, the Kalshi market right now is 77%. If the Democrats take the House, he's a lame duck legislatively. And so this is probably the last attempt for him to try and get this through the line. But unless Majority Leader John Thune decides to go forward, it's not going to happen.
Well, as we talk about kind of the narrowing calendar here in terms of the time available for legislative accomplishments, a few other things we've been closely watching here at Bloomberg: the Clarity Act, crypto market structure legislation, housing policy, housing affordability questions that the Senate and House can't seem to reconcile their differences on. What are the odds of both of those things passing before the midterms?
So I'm still pretty optimistic. I think it's about 70% chance that both of those pass before the midterms, but it's got to be quick, because this housing bill, look, you have a bill that passed the Senate overwhelmingly bipartisan that's going up against a House bill that passed overly bipartisan, but yet both parties can't agree. I mean, they're arguing over provisions that most Americans are going to say, or most investors are going to say, not all that big of a deal to us. So I think the House bill sometime passes before the 4th of July if they can figure this out this week. They're squabbling right now. The Clarity Act is a little bit more complex. I do think it passes because I think at the end of the day, the crypto firms want this done before Maxine Waters gets control of the House Financial Services Committee, and the banks want this done because if a bill doesn't go forward, then crypto can play for another 2 years without having regulatory oversight to the point where the banks want it. So ultimately, I think both bills pass, and then that's it. If that happens in July, then I think Congress is essentially shut down outside of kicking the can.
Wow, that's incredible to consider. Of course, there might be a few other things that pop up on the congressional agenda, like, for example, ratification of a deal between the U.S. and Iran. The Senate Majority Leader John Thune has suggested that they should be able to take a look at it. Senator Lindsey Graham wants to make sure the Senate has a vote. How much scrutiny will a deal actually be under? Would there be any risk of it not finding approval in the United States Senate, in your mind?
I'm not exactly sure it's even going to get to Congress.
Okay.
Like, where I'm going with this is that, look, you know, President Trump just said a few moments ago that the text of this memorandum of understanding isn't going to come until after Friday when they actually sign it. And then this memorandum of understanding gets us to a deal that's in 60 days. You know, 60 days puts us out right in the middle of the August recess. And so I'm not exactly sure that the White House has any plans whatsoever to send this back to Congress for their input, because from President Trump's point of view, look, he wants the war over. He's got a solution that he can say the war is over, and then he can start focusing on other matters. You know, Congress can always say, look, Mr. President, we want to have an involvement here, but the power of the presidency is always more powerful when it comes to things like international security and national relations. I'm not sure the White House is actually going to give Congress what it wants on this.
All right, Nathan Dean, Senior U.S. Policy Analyst at Bloomberg Intelligence. Thank you so much, as always. And as we consider that deal or memorandum of understanding between the U.S. and Iran, as we just heard President Trump say at the G7 summit in France, the Strait of Hormuz will be open completely by Friday, in his words, though a U.S. official who briefed reporters earlier today suggested that that opening of the Strait of Hormuz is going to take time because of things like mines, and that they expect an increase in flow through the Strait of Hormuz in terms of energy in 1 to 2 weeks. So let's get into this now as we turn to Miami, Mike, as Charlie promised. Mike McGlone, our senior commodity strategist at Bloomberg Intelligence. So, Mike, if we do ultimately see a return to free flow in the Strait of Hormuz 1 to 2 weeks from now, would you expect it to be the same number of barrels per day as the global economy could rely on prior to this conflict? Is it still going to be a fifth of the global energy supply?
It's going to be less, Kaylee, and there's going to be workarounds. The significance is China basically really cut off its imports. Most of that crude oil goes to China. But the bottom line is we've had a pump in prices, and it's basically added fuel to that excess, that surplus in supply and demand from the Western Hemisphere, mostly U.S. and Canada. It's going to make prices go lower, but that's typically what they do. So what we have going in commodities right now is a pump then dump syndrome. First we had just Bitcoin and natural gas. Now add to that list gold, silver, platinum, palladium, iron ore, and corn. I think crude oil is going to follow, and by the end of the year, certainly this is what Mr. Trump needs, it's probably going to be down in the year, which means below $57 a barrel.
Well, we still have a ways to go if we're going to reach that point, Mike. Right now, though oil is down more than 5% on the day, we're still in the $80 range on both WTI and Brent. So is this going to be a precipitous decline, as the president has suggested? He keeps saying it's going to drop like a rock as soon as all of this is over, or is it more a steady decline in the months ahead that you foresee here?
Well, that's a unique thing about it. The leader of the world's largest energy producer and a net exporter who instituted this conflict in Iran has the power to make it go lower. Obviously, we're going that way. He did not get his full surrender he wanted, but he's doing his workaround, and he has the ability to do that, to make it go lower, partly because all this surplus of supply, this pump in crude oil, was also faced with increased interest rates in the rest of the world. Central banks are hiking, and demand destruction, which means cycle, usually means you go down to a new low. Like I say, the key indication is natural gas. It's down in the year after pumping 100%. It's the same thing it did in 2023. I point out the grains. The grains pumped up, and they're going down. Unless there's a bad weather year in the Corn Belt, those prices are going lower. It's just a normal cycle kicking in.
Well, so as we consider the crude price, Mike, I wonder how quickly all of this also translates into more availability and lower prices for products like jet fuel, for example, where we know there were some acute shortages. Is there a longer lag time there?
Oh, sure there is, but we've also seen the demand destruction, and let's not underestimate invention when there's necessity. So all those prices will go back. I think what's going to happen is they're going to go back to where they started. I give U.S. natural gas as an example. That's the #1 measure of heat, electricity, and fertilizer in the country. The bottom line though is, what does Mr. Trump need as we head towards midterms? And that's why I still focus on that December crude oil future. Right now it's about 74. The cost of production this year is around 55. Typically you have to get below that level for a low price cure. So all that stuff's going to come lower. The key thing is we had that spike in gasoline prices to around $4.50. It's probably going to tickle lower. And the key thing I want people to remember is the #1 thing that makes prices bottom is the lower stock market.
All right, well, the stock market isn't lower today. We're up about 3% on the NASDAQ 100, nearly 2% on the S&P 500. We'll see how long that lasts. Mike McGlone, senior commodity strategist for Bloomberg Intelligence, thank you so much. And we'll have more with our political panel straight ahead on Balance of Power.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil sinking, stocks surging. S&P set for the best days since April. Right to the numbers, no records, 75.70 where we stand right now. We are looking at a gain on the S&P of 139 points, up by 1.9%. But if you want a record, look at the Dow, up 685 right now, 51,890. Dow Industrials up 1.3%. NASDAQ is now surging by 2.9%. The NASDAQ 100 index, full of those big tech names, up by 3.1%. The Russell 2000 index of small cap shares up now by 1.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, ripping higher by 5%. The VIX holding just above 16 right now, the so-called fear gauge. The 10-year, 4.45%. The 2-year, 4.04%. And the 30-year, 4.96%. Spot gold is up 2.9%, $43.40 the ounce, and West Texas Intermediate crude holding just above $80 a barrel, down now by 5.4%. Barrel of Brent, $82.95, drop there of 5%. UFC at the White House is behind us. Next big event in Washington, going to be Fed Chair Kevin Warsh's news conference on Wednesday. Enda Curran covers the economy for Bloomberg News out of Washington. He says Warsh's remarks will be scoured for what's next.
What signal does he send about change at the institution, at the Fed? Does he spell out a roadmap for the kind of regime change he spoke about in the run-up to get the job? Does he offer any details on that during the press conference, or does he not? So I think plenty to look out for on the policy side in terms of signaling on inflation, and see if he gives us any colour on the political side in terms of what changes he wants to make at the Fed.
Bloomberg's Enda Curran. All of this drops at 2 p.m. Wall Street time Wednesday. The news conference, 2:30 p.m. Fed policy makers, by the way, widely expected to leave rates unchanged. Keeping an eye on SpaceX shares. Day 2 of trading. They are up by another 11.2%. You'll recall first day out on Friday, they were up 19.2%. Recapping, stocks higher. Oil selling off. S&P up now by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Kaylee Lines, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Clearly, the equity market taking kindly to the news of a deal between the U.S. and Iran with that stock move higher we are seeing to start this week, as Charlie was just describing, in tandem with a plunge in oil prices. We're down about $80 a barrel on WTI once again. We are seeing the drop in crude that President Trump said you would see when a deal with Iran was reached. The question is, how low can it go? And in time for the midterms, how low will it be? Of course, the president reiterated his optimism around this deal and the reopening of his Strait of Hormuz when he was meeting earlier this hour with the French President Emmanuel Macron in a bilateral meeting on the sidelines of the G7 summit in France, where President Trump flew around 3 a.m. Washington time this morning, about 2 hours after he left or walked back into the White House from the South Lawn after attending the first ever UFC fight on the South Lawn of the White House. If you haven't seen the pictures on social media, now you should look it up or watch Joe Matthews' piece. He had an on-the-ground report last week of the claw at the White House, this massive structure standing 22 feet above the White House to shield the octagon where the UFC fighters obviously had their fights from the elements. And we did think there might be elements in Washington yesterday. There were severe thunderstorms in the forecast. We thought there might be some violent rain. That never materialized. You could have mistaken all of the lights associated with this event for lightning, and the B-1 bombers and Blue Angels that flew over the event probably sounded like thunder, especially when that B-1 buzzed Washington just after midnight when a lot of people were in bed. And then, of course, there was plenty of violence on the stage in these various matches. The headline match, of course, happening after midnight, and fireworks around 1 a.m. capped the whole thing off. It was quite the spectacle. There were thousands of people there, not just President Trump himself and, of course, the head of the UFC, Dana White, but even business leaders like Mark Zuckerberg and David Ellison were in attendance. All of this, of course, taking place on Flag Day and also on President Trump's 80th birthday. He is now an octogenarian president, and perhaps an octogenarian who didn't sleep at all last night unless he caught some Z's on the plane over to France. So let's get into all of this now as we turn to our political panel. Rick Davis and Jeannie Shanzano are with me, both of them Bloomberg Politics contributors. Rick, of course, also a Republican strategist and Stone Court Capital partner. Jeannie, a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. And for our audience on YouTube, you can see that Jeannie is also in her Knicks colors. She's got orange and blue on. I'm imagining, Jeannie, that was really the sporting event you were paying attention to over the weekend. And congratulations to you and your New York on that victory. Did you watch the fight last night? What did you make of it all?
Yeah, parade on Thursday, Kaylee. So it's going to be big. You know, I could not stay up, Kaylee, to watch the fight. I did see snippets of it, and I have to say, it was a surreal thing to see. I mean, to see the lawn like that, we've seen it, and Joe's piece you mentioned coming up for so long, it was quite a spectacle. I can't imagine we've seen anything like that in American history ever. And of course, you mentioned the president getting right on the plane afterwards and flying to France. I think this is part of what the White House is hoping to show. He is a vigorous 80-year-old man who can stay up late for a fight, who can, you know, negotiate an MOU with Iran and then jump on a plane to go to the G7. So I think it's part of their efforts to show that he is vigorous despite being turning 80. So, but it was quite a sight to see last night when I saw the clips played back.
Well, and of course, we should note, Rick, that this whole thing was put together in honor of America's 250th birthday. This is supposed to be part of the celebrations. It wasn't just part of President Trump's birthday. But do you think it accomplished what the White House wanted it to? Was it even really supposed to accomplish anything, or did President Trump just want a front row seat to a fight at the White House?
Well, when you want to throw a birthday party, throw it for yourself and call it a 250th year anniversary of the country, because Donald Trump, I think, sees himself as just as big as the country, and that event last night was just as big as Donald Trump. I did watch a good portion of it. I tuned in at 8 o'clock because I wanted to see how the network launched. Of course, it had been going on for 4 hours. I felt bad for a lot of the folks sitting there in blazers and suits, not exactly the attire you normally wear to a UFC fight. But look, I mean, it was pretty spectacular. I mean, I think that's actually a good term, Jeannie. I love the flyover. First time I've ever seen the Blue Angels and the Thunderbirds together flying in formation. That was really cool. And whether you like it or not, the claw is a sight to behold. I don't know what they're going to do with it after this. Maybe it winds up in Vegas desert somewhere. But it was pretty amazing. And you know, I've got real qualms about the use of the military and things like that in a commercial event like this. But I got to admit, it was pretty entertaining. And I'm not a big UFC fight fan, and I didn't think the fights were really the best part of it. I thought the spectacle of itself was really what sold it. So, yeah, I mean, I was entertained. But this is what Trump knows how to do. He's the best advanced man ever to be in the business.
Well, and it's a good question as to whether or not he might come up with more creative ways to use that claw structure now that they went through the trouble of putting up that giant thing on the White House North Lawn. I guess we'll have to stay tuned on that one. Jeannie, I wonder what you make also of the people familiar to our audience here at Bloomberg that were in attendance for this fight. David Ellison, perhaps not surprising. We see him frequently in the president's orbit around big events here in Washington. But Mark Zuckerberg also getting a few moments with the president on the sidelines here. Is this a ticket you wanted to receive or to buy in order to get some FaceTime with the president at this one?
Yeah, I mean, this was a fighting pit packed with billionaires, people from the cabinet, lawmakers, members of Congress from the Republican side. The president, his entire family looked to be there. And, you know, that's, I think, part of what made it so surreal, because not only having all those people in attendance, but also if you just looked at the cage and you saw the big screens on the side with the advertisements of everything from like cryptocurrency to sport drinks to Bud Light. It was the selling of the presidency, the selling of the White House like we've never seen in true Donald Trump style. Somebody who has, you know, grown up with people like Don King and Vince McMahon and, of course, now Dana White. So this is the president who is able to put these events together. But none of that changes the reality. I mean, one of the things that this was designed to do, in addition to entertain the president on his birthday, was it was designed to appeal to his base. These are primarily young men who are usually either college educated, many not, who turned and supported him in 2024 because of economic anxiety. And he's trying to shore up his base in this way. But there are very few signs that it is going to work when the economy is this bad and they see the president, or at least tell pollsters, that he's broken so many promises. So politically designed to show his vigor and to shore up his base, it may shore up his vigor. I don't know that it's going to shore up his base of young men and have any impact on the midterms.
Well, and to those two issues that Jeannie was speaking about, Rick, economic anxiety, including higher gas prices, and the feeling of broken promises about no new wars specifically, is a memorandum of understanding between the U.S. and Iran being formally signed Friday going to be the anecdote? And is it one that is given in time for the midterms in November?
Yeah, we'll see whether or not it's timely. But look, anytime you can spend a Sunday night sort of working your base, as Jeannie said, with an event like that, sign a ceasefire in the Persian Gulf in order to try and lower gas prices. It's pretty good use of a Sunday. Look, I mean, the president has real systemic issues with the economy that aren't going to just dissolve because the price of gas starts to come down. Should it help some? Yes. And does he desperately need it in order to get into the midterms in a more competitive fashion? Absolutely. I mean, by most judgments, Democrats have a 6-point generic ballot advantage, probably translates into 25 or 30 seats. The president's approval ratings are at all-time lows. My favorite consumer sentiment index, still 40% below the median. I mean, like, these are all hurdles that the president's going to have to overtake. But at least today he can wake up, albeit in France, and know that he's got a better path toward a political solution than he had a couple days ago.
Well, so it becomes a question, Jeannie, of then what people will remember in November, the price they paid at the pump most recently, or the price they were paying for several months because of a war, with what to show for it if we still don't have the text of a memorandum of understanding. What will actually need to be, and if not the MOU, in the long-term deal that will be negotiated over the next 60 days for the American electorate to see it as justified, as having been worth it?
In terms of the 26th election, it's going to have to be a resulting drop in prices: gas, groceries, fertilizer, all the rest. There is also the reality that for many people in his base, and this, if we presume this is a base of midterm election, he needs the base to get out to vote. In going to war with Iran, he broke a key promise to these people. And this is, you can see it viscerally on the social media of sort of right-wing base influencers, whether you're talking about Megyn Kelly or talking about Tucker Carlson, who see the president as having gone to this war, broken a key promise. All of that, I don't think, is going to translate into votes for Democrats, but what it may do is keep the base at home, which is why we see the president with these events last night. But the reality is, I agree with the great Charlie Pellet when he says the most important event for the vote in 2026, he didn't say this, Kaylee, but I'm putting it in his mouth, is what happens on Wednesday when we see the new Fed chair take over and you see all the coverage that you do on those days. What happens there is far more important, I think, to 2026 than what is going to happen in the short term as a result of gas prices going up and down and the memorandum of understanding, however it turns out textually to be written.
Yeah, Kevin Warsh is going to have a tough press conference on Wednesday, I would imagine. We weren't sure if he would give one, but he will be giving one, and we know our own Michael McKee and others will be ready to throw some tough ones at him. And I don't know if they were tough. I feel like with talking of a USC fight today, Rick and Jeannie maybe got some easier questions today. But of course, they'll be back for more in the second hour of Balance of Power. Our Bloomberg Politics contributors, Rick Davis and Jeannie Shanzano, will be with us. And we'll also have a check-in at the G7 summit in France, where we are starting to see leaders arrive for the family photo. Of course, President Trump already met bilaterally with the French President Emmanuel Macron. Now we have the German Chancellor Friedrich Merz, the Prime Minister of Japan, also making their way to gather with the rest of the leaders. We will see them all assembled for a photo. But how united are they feeling around issues, whether it's the war coming to an end with Iran or the ongoing war between Russia and Ukraine? We'll have all of that ahead here on Balance of Power on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
There's a deal between the U.S. and Iran, or at least a deal to make a longer-term one, but we still haven't seen the text. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines in Washington. As President Trump tells the ships of the world to start their engines and that he expects the Strait of Hormuz to be fully opened by Friday, what will all of this actually mean for global energy markets and for our relationships in the Middle East. We'll have the latest from Bloomberg's Washington correspondent Tyler Kendall, who is actually at the G7 summit in France, where President Trump is now. This likely to be high on the agenda. We'll get analysis and insight as well from Evelyn Farkas of the McCain Institute and energy expert Bob McNally, plus insights from Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. But we have to begin with the way markets are reacting to this deal between the U.S. and Iran. The gist of it is stocks are up, oil is down, but Charlie Pellet has further details for us from New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Keep going, because you got it. That's all you need to know right now. Oil selling off big time. Stocks are surging. S&P 500 index on track for its best day since April. Right to the numbers with the S&P. We're off session highs, but still up 137 points. That is a gain of 1.8%. Dow Industrials on track for a record close, up 690, up now by 1.3%. The Nasdaq Composite Index up 756 points on NASDAQ. That is a gain of 2.9%. The NASDAQ 100 index, full of those big tech names, that index up now by 3.1%. All of this with the stocks higher by 5%. The Philadelphia Stock Exchange Semiconductor Index and the VIX now at 16. We've got the 10-year 4.46% with the 2-year 4.05%, the 30-year 4.97%, and gold is up 2.8%, $43.35 the ounce, while West Texas Intermediate crude oil down 5.1%, $80.53 a barrel, Brent $83.26, a drop there of 4.6%. Oil is sinking. The oil majors are selling off. ExxonMobil down 3.6% right now. Chevron lower by 3.5%. ConocoPhillips down 3.5%. And SpaceX, day 2 of trading, the stock is surging another 11.5%. First day out, we saw SpaceX up by about 19.2%. Bottom line here, oil higher, stocks, oil lower, stocks are higher. Again, the S&P 500 index up by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that, Kaylee Lines, is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Oil prices indeed going lower today, but something else that has gone lower, oil stockpiles here in the U.S. as the red headline just crossed the Bloomberg terminal that the U.S. oil reserve, the Strategic Petroleum Reserve, has hit a 43-year low as the Trump administration has aimed at taming gas prices, which of course rose due to the conflict between the U.S. and Iran, and President Trump has been long promising will come back down once the conflict is over. And clearly a step toward that was taken this weekend as the U.S. and Iran have reached a memorandum of understanding to extend their ceasefire and begin over the next 60 days negotiations on Iran's nuclear program. It will officially be signed on Friday. And by Friday, President Trump said, as he spoke with reporters on the sidelines at a bilateral meeting with the French President Emmanuel Macron at the G7 summit in France, that by that signing Friday, the Strait of Hormuz will be fully reopened. It will mean, of course, in theory, that more energy will be flowing onto the global market once again. Whether or not the U.S. is going to be able to access enough of it at a proper price to refill the Strategic Petroleum Reserve is perhaps a question we'll save for later. As for right now, we're still very much focused on the details of this agreement, the text of which the president said should be released sometime after that signing Friday in Geneva. It's one of the things he shared while speaking with French President Emmanuel Macron earlier today, while overall, of course, he was heralding the progress made in reaching this MOU.
We've done a great job, and hopefully it's going to be a good relationship, and we're going to get along. And if we don't, we go back to where we started, but I don't think that's going to be necessary. The Iran deal that we made is going to bring a lot of success to the world, because the oil was really clogged up there for a while.
So for more, we turn to Bloomberg Washington correspondent Tyler Kendall, who is not with us here in Washington today because she is there traveling where the president is at the G7 summit, joining us live from Geneva. just across from Evian, France, where the summit is taking place. So, Tyler, clearly we have some questions about this memorandum of understanding and questions around when we will get the details going forward, whether the president will be attending the signing ceremony in Geneva. But right now, of course, his focus is on this summit in France. How much is it going to be dominated by the U.S. and Iran and the role European countries may play going forward in the Strait of Hormuz?
Well, Kaylee, it really is the central focus at this point of the conversation. You heard President Trump in his remarks earlier alongside the French President Macron say that once the conflict in Iran is solved, finished, in his words, then perhaps they can move on to some other really pressing issues, including, of course, perhaps most notably, the conflict in Ukraine. We do know that Ukrainian President Zelensky is expected to attend the G7 summit and meet with G7 leaders tomorrow. But so far, it really has been all about what is going to happen with this potential memorandum of understanding. We have seen some reporting that some G7 allies have been frustrated by this White House because they themselves haven't seen the full text of what is in that deal. And part of that could be that the two sides are still trying to iron out some of those finishing details that they need in order to see this cross the finish line with a formal signing ceremony slated for Friday. And President Trump did give us some insight into how the U.S. does view where things are going, including that the Strait of Hormuz needs to remain toll-free, amid reporting from Iranian state media this morning that seemed to indicate that the country wants to retain some sort of grip over the waterway even after a deal is reached, saying that after the 60-day ceasefire, we could see Iran still impose fees related to navigational, environmental, and insurance services, according to Iranian state media there. Though Kaylee, a senior administration official, did brief us reporters within the last hour or so and gave us a little bit more details on what could be in this agreement, including a $300 billion fund that Iran could use to rebuild the country. The question of what financial relief is going to look like for the country in this memorandum of understanding has been one of those outstanding points, and perhaps this is giving us a little bit more clarity on where that relief may come from.
Well, and as that clarity emerges and all of this moves forward, Tyler, it seems the president is already signaling that he'll shift his attention elsewhere. In that bilateral meeting with Emmanuel Macron, he suggested he's now going to be focused on Russia and Ukraine. And what a coincidence that Vladimir Zelensky is also going to be in attendance tomorrow.
Right, and we're watching really closely to see if Ukrainian President Zelensky gets an individual bilateral meeting with President Trump. We know that this is something that Ukraine has been pushing for. So far, only on the public schedule is that he's going to attend this meeting with the other G7 leaders. But this comes after, over the weekend, President Trump held phone calls both with Russian President Vladimir Putin as well as the Ukrainian President Zelensky. So it is clear that perhaps there could be some momentum building here after what has really been stalled progress at this point for months. And we did see an uptick in fighting over the weekend, too, with Ukraine hitting a Russian petrochemical facility and a fuel depot, ramping up this war and what really has just been churning along at this point. We know that the G7 allies, Kaylee, want to surge some more additional relief to Ukraine and try to get the U.S. on board to help get some sort of agreement over the finish line.
All right, Bloomberg's Tyler Kendall live in Geneva for us. Thank you so much. And for more analysis now, we turn to Evelyn Farkas of the McCain Institute, where she's the executive director. She's also former Deputy Assistant Secretary of Defense for Russia, Ukraine, and Eurasia in the Obama administration. Evelyn, welcome back to Bloomberg TV and radio. And I do want to get your take on the situation between Russia and Ukraine. But if we could begin with this memorandum of understanding between the U.S. and Iran. At the root of it, it seems really this is an agreement to extend the ceasefire, reopen the Strait of Hormuz, and try to figure out the nuclear program over the course of the next 60 days. Is this a win for the United States, at least for the time being?
I mean, Kaylee, it does look like a win. Obviously, the devil is in the details, and it seems like an extended amount of time for a ceasefire. Hopefully, they will put the, taking apart the blockade as a priority, and they'll put that in the front, in terms of front loading. We haven't seen the details of the agreement, as has been remarked upon already. And so we don't know if there's a timeline for that, but that has to happen first. That will, of course, then pave the way. But the hardest part, of course, will be at the end, coming up with a deal to freeze Iran's nuclear weapons program.
Well, and we know that it was hard labor to get a deal with Iran back in 2015 during the Obama administration and the JCPOA agreement. It took nearly 2 full years to complete. So what realistically do you think can be accomplished in just 60 days, Evelyn?
Yeah, I mean, in 60 days, certainly, again, they can come to an agreement to remove the blockades. They can come to an agreement that there should be freedom of navigation, no tolls. I do believe that the administration will find a way to open up the spigot and provide Iran with some of its frozen assets or some other way to give them an incentive to continue to talk. I think that within 60 days, you could have a nuclear deal, but it depends on how badly the Iranians want to negotiate and whether we withhold enough of the money to make them do so in good faith. Because, it's a tall order. I mean, they have to agree to stop enriching. That's what the United States is asking for, at least for 15 or 20 years. They need to agree to take all the enriched uranium and either take it out of the country or put it under lock and seal. They need to agree to inspections, and then, of course, not opening the nuclear sites. So that's all doable, but it really comes down to whether the Iranians want to negotiate in good faith.
Well, and of course, as we consider these negotiations that still have to play out over a longer period, I wonder how they could be complicated by the conduct of Israel, which, of course, just yesterday, on the eve of what was supposed to be an electronic signing of this agreement, we saw once again Israel strikes into Lebanon in the aim of going after Hezbollah. And the president actually called up Axios and complained about this. I'm going to have to censor the language here a little, Evelyn, but he said to Axios, and I quote, "Why did Bibi have to do an effing attack? I was so pissed off. I let him know he has no effing judgment." And I wonder if you too have questions about Netanyahu's judgment and the way in which it could impact things going forward if a ceasefire in Lebanon is going to be a prerequisite for any longer-term understanding between Iran and the United States.
Right. I mean, look, Prime Minister Netanyahu's judgment is impacted by his objectives, which are not the same as ours, not the same as President Trump's. He would like to continue to, destroy as much of Iran's military as possible, as much of the proxy forces that still exist in Lebanon. His population is angry that there have been attacks from southern Lebanon into Israel, so he has some support for this. And then, of course, we all know that he's on the political ropes, and if the war ends, there will be a reckoning for him for those allegations of the case against him of corruption. Not to mention, of course, all of this started with the attack, coming out of Gaza, engineered by Hamas, which the Netanyahu government did not prevent. So there's a lot for Netanyahu to motivate him, objectively, if you will, in his self-interest to keep this war going. And President Trump, of course, does not want to keep this war going.
Well, and so I guess it becomes a question of whether or not President Trump would be willing to exercise any leverage the United States has over Israel to make sure he stays in line here. Do you think it would actually get to that point, Evelyn? Which pressure is greater for Netanyahu, the domestic one that you were just describing, or the threat of that from the United States?
Yeah, it may have to. But then if you think about what leverage we have, the leverage we have is the assistance we provide Israel in the form of military assistance as well as economic assistance. And, separately from this conflict, on another screen, Prime Minister Netanyahu has been talking about the fact that he no longer wants to take U.S. assistance. And that's another way of saying, I don't want to have to listen to President Trump or any future presidents.
Well, as we consider who is and is not listening to President Trump, I'd also like to ask you, Evelyn, about Russia and Ukraine, because the president said when he was meeting with Emmanuel Macron in the last hour that he had very good conversations yesterday with both Ukrainian President Vladimir Zelensky and Russian President Vladimir Putin. And yes, of course, yet obviously we saw renewed strikes against Ukraine from Russia yesterday, including the destruction of a very important religious site in Ukraine. So as President Trump says, his next focus is going to be Russia's war in Ukraine, that is his priority next. How confident are you that the U.S. can play a hand in bringing that conflict to an end?
I mean, Kaylee, I continue to believe, as I have all along, that the Ukrainians really carry their destiny in their own hands, and they are using the assistance they get from us and our European allies to great effect. I don't know that U.S. involvement in negotiations will change the calculation tremendously unless President Trump starts to understand that Russia is losing, and that then his conversation with Vladimir Putin is one where he says, this has to stop, you have to compromise. Because so far, as you know, the Russians have been unwilling to compromise. But, you know, I can go into all the detail. The Russians are back on their heels militarily, economically, and politically. They've never been weaker than they are right now.
Well, briefly, Evelyn, how weak is Russia right now? What advancements has Ukraine been able to make, and how much of Russia's weakness is due to what Ukraine has been able to accomplish on the battlefield versus just the reality of the financial situation of maintaining this war for over 4 years?
Well, the two things are interconnected, Kaylee. Because the Ukrainians are having so much success, it's costing Russia more in terms of military ammunition, you know, military, of course, oil as well, and then, of course, manpower. And Russia's barely been able to replace the troops in the field. They have a horrendous rate of attrition. It's about 30,000 troops are either killed or injured every month. The Ukrainians now manufacture at least 70% of their own munitions domestically. They are using the leverage they get from that, because no one can tell them how to use them, to attack the Russian petroleum, the oil depots, and the oil infrastructure, military infrastructure in the rear. But then even more significantly, much more recently, the Ukrainians are using drone swarms to attack the logistics convoys, the logistics lines of communications, if you will, to use a military term, that connect the Russian troops across the border with, you know, the fighting, you know, the line of action, but also into Crimea. So this is a real change, because the Ukrainians are taking land back from the Russians, and they are also squeezing Crimea. And Crimea is, frankly, for all intents and purposes, a large base for the Russians.
Well, I'm sure all of this is going to work its way into the discussion at the G7 summit in France this week, as Vladimir Zelensky will be in attendance. Would you expect, Evelyn, in our final moment here, anything really tangible to come from the G7 this time?
I don't, only because I'm not sure that President Trump fully understands yet that Russia's losing. And I'm not sure whether Russia's ready to capitulate in any way or compromise. So I'm skeptical that anything new will come out with regard to Russia-Ukraine, maybe on the Middle East, but not on Russia-Ukraine.
All right, Evelyn Farkas, Executive Director of the McCain Institute, thank you so much for joining us on Balance of Power. And I would note, at that G7 summit, we're continuing to see G7 leaders arriving for the so-called family photo. The EU Commission President Ursula von der Leyen just exited her vehicle and is making her way, being greeted by the President of France, Emmanuel Macron. We, of course, have also seen a number of other arrivals. They will all be getting together for this photo. But will they get together on a message coming out of this summit, whether it's in regard to Ukraine, the Strait of Hormuz, or anything else? We'll have more on that as we turn to our political panel up next on Balance of Power on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks push higher. Oil is selling off. We're very close to session highs on the S&P. Right now we have got S&P 500 index up 140. That is a gain of 0.9%. Stocks are rallying. Oil slumping after the U.S. and Iran agreed to reopen the Strait of Hormuz. Dow Industrials at a record 51,935 now, up 733 points, up 1.4%. NASDAQ higher by 3%. The NASDAQ 100 index up just about 3.1%. The Russell 2000 index of small cap shares is gaining by 1.1%. The SOX up almost 5% right now. That, of course, the Philadelphia Stock Exchange's semiconductor index. The VIX right around 16 with the 10-year at 4.46%, the 2-year 4.05%, and the 30-year 4.97%. Gold up $100. The ounce, spot gold at $43.31, up 2.6%. A sell-off in crude WTI down now by 5.1%, holding above $80 a barrel, right around 80. We've got Brent 83.20 for a barrel of Brent crude, down by 4.7%. Deal news: Fox Corp has agreed to acquire Roku in a deal that values the streaming video platform at about $22 billion, including debt. Shares now of Roku, they are down by 1%, but Fox Corp, it is plunging by 16.6%. And American Express has agreed to buy TripAdvisor's reservation management platform, The Fork, for $700 million in cash, bolstering its operations in Europe. American Express shares up 3.7%, TripAdvisor up by 4.2%. Again, recapping, stocks push higher, S&P up 1.9%, a barrel of West Texas Intermediate crude, 80.47 now, down by 5.2%. I'm Charlie Pellet, Kaylee Lines. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Summarizing the market action today for us perfectly: oil being pushed lower and stocks being lifted higher on this memorandum of understanding between the U.S. and Iran that will be formally signed on Friday. By Friday, of course, President Trump says the Strait of Hormuz will be completely open. The U.S. naval blockade will have ended. And in his words, gas prices should come down. All of it, of course, also provides the backdrop for the G7 summit that is taking place this week in Evian, France. We are watching as leaders arrive for dinner, being greeted by the French President Emmanuel Macron. President Trump himself, of course, had a bilateral meeting with Macron earlier this afternoon, fresh off the plane, fresh off the UFC fight from last night here in Washington. It's been a big 24 hours for the president, who, of course, also turned 80 years old yesterday. But as we consider the geopolitical and domestic stakes here, we turn to our political panel. Rick Davis and Jeannie Shanzano are with me, both of them Bloomberg Politics contributors. Rick is Stone Court Capital Partner and Republican strategist. Jeannie, a Democratic analyst and democracy visiting fellow at the Harvard Kennedy School's Ash Center. Rick, as we consider the optics here of the president coming into this G7 summit with this memorandum of understanding in hand, at least proverbially in hand, it's not actually in hand in terms of the text. We haven't seen it yet. I just wonder how you think that is going to be received by European leaders, knowing that they have been saying, at least the UK and France, members of the G7, have said as soon as this conflict is actually over, they're willing to play a helping hand in making sure the Strait of Hormuz stays free for transit. Is President Trump going to ask them to step up now?
Well, I think we saw in just the short briefing that the president gave to the press with President Emmanuel Macron, he even sort of offered, and we'd love to have some of your ships in the Gulf also. And so, yeah, you can tell that's coming. And I think that, the president has a good case to make in the sense that, he's deployed the Fifth Fleet and many other assets from all around the world into that body of water. And they've been there for a long time. This deployment is well over the norm, and we do need to get some relief to our boys and women who are sailors and service members from the long deployment. Even though it hasn't been a hard fight for the entire time they've been there, they got to be on alert and ready constantly, and the strain must be immense. So yes, the European leaders giving some support to that cause would be a huge leg up, both for the president and for the military. But look, the president has a card to play now. I mean, he didn't have a whole lot of leverage going in. but he can say now that, hopefully the gas prices will be realigned, oil prices will come down. Certainly the indication that the stock market's up in the U.S. should be a good economic indicator of things to come. So it really does give him a lift going into the G7.
And as we're watching the G7, French President Emmanuel Macron and his wife Brigitte Macron have just walked out to the staged photo area. We'll see if the other leaders will join them prior to dinner. Of course, the leader will be focused on most carefully is President Trump himself, though he and Macron, obviously, as we've already discussed, had some time together prior to this earlier today. Jeannie, as we consider the role of Europe here, knowing President Trump heading into this G7 summit has some even more tension in his relationship with European leaders than he did previously due to, in part, the war in Iran. Take Italy, for example. Giorgia Meloni had a very warm relationship with President Trump at the start of his term, but some Italian pushback to the use of bases and airspace, for example, has led to something of a rift. If we see the conflict with Iran resolved in some way, is that also going to go a good deal in smoothing things over in the relationship between the United States and many of these European partners?
Yeah, I think you'd be moving in the right direction, but I think Donald Trump has a long way to go, because let's not forget why our European partners and our NATO partners have been so frustrated, because the United States broke a cardinal rule of our own and something to do with foreign alliances in not even talking to them about what we were going to do. And then, as we just were talking about, him seeking support from some of these countries to help demine and open up the strait. Let's not forget, in April, 40 countries met in Paris, led by the UK and France, to do just that. They all said they would contribute. And what did Donald Trump do? He made fun of France and Britain for that. So, I think there's a long way to go on mending relationships.
Well, and speaking of, President Trump is now posing for a photograph with the Macrons, standing, of course, next to Brigitte Macron and French President Emmanuel Macron. For a radio audience, you can see the president relatively stone-faced as he poses for that photo. As we consider his reception in Europe and the way in which European leaders may receive news of this deal, I also want to talk to both of you about the way this will be received domestically and on Capitol Hill specifically. Rick, we know that Republican Senator Lindsey Graham of South Carolina has been one of the largest, most vocal advocates for the war with Iran. And he actually took to X yesterday to talk about this memorandum of understanding, saying that he was pleased to hear about it and that it will allow the Strait of Hormuz to open. But he obviously wants this to come to Congress. He says, under our law, any nuclear deal with Iran will be sent to Congress for review and a vote. I look forward to reviewing the final product, and I believe it is imperative that the architect of the deal, Vice President Vance, and his negotiating partners be part of the process in presenting the final deal to Congress. What do you make of the casting of the vice president as the architect of this deal? Rick, is Lindsey Graham trying to set the stage here to be able to push back on the deal without making it seem like he's pushing back against the president?
I think he's trying to accomplish a lot of things with that statement. One, healthy skepticism that Iran's ever going to actually agree to a deal. Two, try to restore some congressional power in the process. This Congress has done a lot to sort of abdicate their responsibilities, especially on trade and these kinds of treaty agreements, to Donald Trump. And so it doesn't surprise me that there's sort of a wake-up call and they realize, gee, we got to get in the game here. And I think it's all very appropriate what Lindsey said. But I would say that the gaming of J.D. Vance, right? I mean, you can't help but think, gee, we already are seeing the preliminaries for the 2028 presidential election. I mean, earlier last week, J.D. Vance says he's going to sit down with his wife, talk about the campaign, and then the next thing you know, people start saying, hey, this is the Vance deal. You got to come explain it to us on Capitol Hill. They don't want to hear from, any of the other negotiators. They want to hear from the vice president. Let him take the lead on this. And, of course, we know from the conduct that he's had throughout the course of this is he's been less than enthusiastic negotiator, I would say, when it comes to trying to get a deal with Iran. So all of this is going to make for a really interesting summer. That clock of 60 days is going to run out fast, and I would guarantee you that we'll see a number of extensions to this negotiating period.
Well, we all know how much Washington likes to kick a can down the road, and perhaps we'll see that with this deal with Iran, too. Jeannie, I would love for you to weigh in on J.D. Vance being the architect here. Is that good or bad for him?
I think it is bad for him politically. And of course, a lot of this depends on what happens. And just listening to Donald Trump's remarks in France just a few minutes ago, what did he say is, this thing is over. I'm turning this all over to J.D. Vance. Let him negotiate it. I'm going to refocus on Russia and Ukraine. And then, of course, you mentioned Lindsey Graham's statement. I think it is ironic because we know, at least from some of the reporting coming out about negotiations or talks behind the scenes in the White House and the buildup to the war, this is not where J.D. Vance was at all in this thing. I mean, J.D. Vance was not the one pushing to go in. And of course, now it is all getting dumped in his lap. It is in some ways the role of the vice president. We saw Kamala Harris. She got shackled with the border and immigration, and J.D. Vance is getting shackled with a war that is, almost at this point an unwinnable position for him. Because let's not forget, the night we went into this, Donald Trump said it's going to do 4 things. It's going to get rid of their nuclear program, their missile program, their terrorist proxies, and we're going to have regime change. If what we're hearing is included in this MOU, at least as of now, none of those 4 things are on the table. What he's focused on now is reopening the strait, which, oh, by the way, was open before he started this. So we should be honest that this thing is something that Donald Trump broke. He's trying to fix it. And it is capitulation of an enormous degree to Iran, who has been emboldened by this. So it is an unfortunate situation for J.D. Vance, because what Donald Trump is trying to do is to hand this thing over to J.D. Vance and go focus on things that he thinks he can win on. This is not one of them.
Well, of course, J.D. Vance is not present at the G7 summit, even if he will be dispatched to Geneva for the official signing of this memorandum of understanding. But all of the other leaders are continuing to trickle in for dinner. The Canadian Prime Minister Mark Carney is now taking his turns proposing with the Macrons. It's interesting, Rick, they're not doing a big family photo together. Each leader is being brought in and photographed one by one. Is this a sign of strife already at the G7?
I wouldn't call it strife. A lot of reporting around the work up to the G7 is how basically Europe is going alone, right? They've figured out, don't confront Donald Trump. We don't need another G7 like we had a year ago where everyone was fighting over Greenland. Who's going to own it? Who's going to take it? How's it going to get taken?
Trump left early.
And Trump left early after one day. And so I think this year it's let's just do our own thing.
All right. Rick Davis and Jeannie Shan Zeno with us today, Bloomberg Politics contributors, the both of them. Thank you so much. As the Japanese Prime Minister Takaichi is now taking her turn with the Macrons. Again, they're doing this one by one. Read into that as you will. We'll have more ahead here on Balance of Power on Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher. S&P 500 index holding close to session highs. All of this as oil sells off. This after the U.S. and Iran agreed to reopen the Strait of Hormuz, fueling hopes for an end to the conflict that has roiled global markets. The S&P right now is up 139 again, close to session highs, up 1.9%. The S&P at 75.71. Dow on track for a record close, 51,901 right now. Dow Industrials up 700 points, up 1.4%. Nasdaq is up 790 right now. That is a gain of 3%. The Nasdaq 100 index full of big tech names up by 3.1%, while our Mag 7 index up almost 3%. We're looking at the SOX now up by 5.1%, and the VIX, the so-called fear gauge, holding just above 16. 10-year 4.46%, with the 2-year 4.05%, the 30-year 4.96%. Gold up $103 the ounce. Right now we do have spot gold up 2.4%, 43.21. West Texas Intermediate crude down 5.3%, 80.40 a barrel. Brent 83.02 down by 4.9%. Recapping, S&P up by 1.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons in Washington. Thanks for being with us on Balance of Power today, this day after a memorandum of understanding was reached between the U.S. and Iran, of course, to be formally signed this coming Friday in Geneva. And by Friday, President Trump said earlier while meeting with the French President Emmanuel Macron on the sidelines of the G7 summit in France, he expects the Strait of Hormuz to be completely reopened. He says that is already part of the way there. Listen.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
But how soon does completely open translate into greater energy flows out of the Middle East? Let's turn now to Bob McNally, the founder and president of Rapidan Energy Group. He's also former special assistant and senior director for international energy on the National Security Council in the George W. Bush White House. Bob, welcome back to Bloomberg TV and radio. The president already mentioned one of the issues, the idea that you still need to clear the Strait of mines. We all know the strait could be declared open, but until commercial vessels decide that it is safe to transit and they're willing to take the risk, it won't really be open in the same way that it was before. Set your realistic expectations here for us, if you would.
Yeah, no, that's right, Kaylee, and it's great to be back with you. I think the administration is expecting, and it's reasonable, it's Rapidan's base case, that it'll take through the end of this month before it's really safe and clear for those boats to start moving through Hormuz again. You've got to sign the agreement, you've got to get the insurance in place, and then you have to make sure the channels are clear of mines. There have been boats moving down from Europe and the United States ready to do that, so I think everyone's going to move along, and the market will price in. It is pricing in, arguably. The good news is almost all in, I think, that it's going to happen. So I wouldn't sweat too much that it's going to take a couple weeks for things to pick up. As the president pointed out, and it's fair, the White House and the DOD have arranged to get more boats out than many expected, well over 20 in the last few days and weeks and so forth. So a trickle will become a stream if all goes well, if the MOU sticks.
Well, of course, those are some pretty big ifs, but if it does all go well, if the MOU sticks, Bob, are we getting back to the same amount in terms of barrels per day that existed prior to the launch of Operation Epic Fury, or has this been a kind of fundamental restructuring of the amount of energy that's going to come, if not out of the Middle East entirely for the time being, at least through this particular transit pathway?
It's a great question. The only thing we know for sure about that question is we won't know for many months, many months. First, we have to flush the barrels that are on boats, 47 crude tankers, 71 product tankers, 153 crude product, LNG. They have to leave. And then the empty ones have to fill up storage. Then we have to see are Saudi Arabia, Kuwait, UAE willing to restart their fields? How much damage has been done to their production capacity, particularly Iraq. And so we won't know really for many months if the Gulf producers can get back to their old production levels. Some may try to go higher, like the UAE, which has left OPEC. So great mysteries, great uncertainty on this. The only thing know for sure, we're not going to know next month. We're not going to know in August. Here's what we are going to know in the next couple of months. So, and this is what makes this so fascinating, Kaylee, is that while we're starting up Hormuz, if that works well, we are going to dig deeper into inventories. We are already at 11-year seasonal lows in gasoline in the United States, 29 years seasonal low in distillate, and 43 years just was announced on the SPR. And we're going lower still. That's just the math of this whole working its way through. So we have the Hormuz is good news, but it's going to take a while, months, to really filter into meaningful volumes. Meanwhile, we have to reckon with these stock draws.
Well, so to that point, Bob, if it's going to take months for the volumes to return, as you're saying, is that volume just going to meet like the daily demand? How much of that will be able to contribute to the rebuilding of the stockpiles, not just here in the U.S., but in every other country that has had to rely on its reserves and draw those down to get through this period?
Well, if over the coming many months we can get back to 15, 20 million barrels a day, there will be demand for that crude. Even more demand than before in some ways. China, I understand, is going to want to build even bigger reserves than it had before. Every country in Asia, and I would think some here, perhaps in the United States and Europe, are alarmed by the prolonged nature of this historic disruption, and they're going to be building or increasing their strategic reserves. That means more crude. Asia has been on a crash diet since late February. They have just held their breath and are not eating and not drinking any crude. Well, you can't do that forever. So that demand is going to soar back. And there is a risk, Kaylee, that the demand, this pent-up demand that has been suppressed in Asia, combined with this eagerness to top off and refill and increase strategic reserves, that could get ahead of the pace at which the oil supply from the Arabian Gulf returns to the market. So I think we're getting close to a bottom here in prices. I'll be surprised if we can sustainably go much lower, and there's a lot of reason why prices will go up from here.
Well, how much farther do you expect that they would go up, Bob McNally? Because obviously they didn't go up at the peak as much as many people thought would be the case when the Strait of Hormuz remained closed for so long. What is the upper end of that just demand-driven high range is what you're describing?
Right. Well, assuming Hormuz reopens, as we expect starting in July, it's been our expectation, more or less aligned with what we're hearing. We think Brent can still make another pass above $100 a barrel in July and August as we get into those deep stock draws amidst our high demand season. You know, world demand in the summer goes up by 1.5 million barrels a day. Our exports are also at record levels. And so, you know, it's just a very tight situation. Now, if for any reason Hormuz gets disrupted longer, if we have to go through July or August, then I think oil prices would have to do severe damage to the economy in order to ensure that there's balance, because we'll be at the bottom on inventories. And that is a mid to high $100 price. I don't think it's our base case. If everything goes well, I think we're going to see another spike in the coming months, but then hopefully that'll be it.
Well, and when we consider prior to this conflict, the way that oil market dynamics worked, at least in part, was OPEC would try to manipulate supply in demand. But to return to the point you were making earlier about how quickly we could get back up to the levels we were seeing prior to this conflict in the Middle East, are they going to have the capacity to turn that switch on and off, to dial up supply when they see it necessary, at least for the intermediate term, given the drawdown in inventory and what has been shut in, infrastructure damaged?
If Hormuz opens again, that will liberate most of spare production capacity, which has been held by Saudi Arabia and now UAE, which of course has left OPEC+. But once Hormuz is open, then Saudi Arabia, it's always been the leader, can resume its leadership role of OPEC+ and do that balancing. Now, to your point, they may find that demand for oil is so strong, this pent-up demand that's been suppressed in Asia, and again, stock filling. I hear China's going to want to even increase its already gargantuan strategic reserves. So Saudi Arabia may be in the pleasant situation where it can increase production close to its total capacity. We can have low spare production capacity and still rising prices if you have this pent-up demand for crude. So yes, if Hormuz opens and Saudi Arabia is comfortable with the role that Iran may have, and that's a huge uncertainty in this, what role will Iran have in deciding what goes through Hormuz and at what price? But assuming Saudi Arabia is comfortable with that, it can resume its leadership role of OPEC+.
All right, Bob McNally, really appreciate your expertise and insights. Of course, joining us from Rapidan Energy Group. Thank you so much. This is a conversation that is obviously dominating here in Washington today, but I also want to talk about another conversation taking place in Washington, more specifically, according to sources familiar with the matter that Bloomberg has spoken with at the Commerce Department, as members of the Trump administration are meeting with executives of Anthropic in the aftermath of Anthropic's new models having to be pulled down over the weekend after the administration essentially slapped an export control on Fable 5 over concern that it could be jailbroken by other countries. So let's get more on this as we turn to Bloomberg's Mike Shepard, who covers technology and strategic industries for us. So, Mike, I obviously summarized it at a high level there, but talk to us about the nuances and how all of this unfolded over a very short period of time from when this model was introduced to when it had to be taken down.
Well, it all unfolded very quickly, as you'll recall. Everyone was so focused on the SpaceX IPO all day Friday, and then at 5:21 p.m., they dropped the bombshell on Anthropic itself, sending them a brief directive saying these two models we have found could possibly be jailbroken. And that is at least the understanding that Anthropic has. The company has not yet received a direct explanation, as far as we know, what this specific security concern was. But their understanding is that there could be a way to circumvent, that's what jailbreaking means in essence, some of the guardrails and restrictions that prevent a model from being used for malicious purposes. And in the case of Fable 5, that means that whatever safeguards are in place to prevent it from being used for hacking, like its more advanced sibling, Mythos 5, those somehow could be gotten around. And that was the big concern. What's unclear, and perhaps is the topic of conversation of the Commerce Department today, is what steps would need to be taken to actually remediate that risk.
Well, it strikes me that the administration is willing to take this action after purposefully, in an executive order, not saying that the government has to sign off on these new models. It was supposed to be voluntary, Mike. Are they now essentially saying, actually, no, we need to have say over this?
Well, Kaylee, that's yet another head scratcher from this news that emerged over the weekend. And you will remember speaking with Joe and me in this very studio about that order and about how the administration had stopped short of mandating safety tests of the most cutting edge models for some of the very reasons that they seem to be highlighting today. And also in that model, they insisted that there shall be no licensing requirement to be construed from this order that the president had signed. And the situation is evolving very quickly. And we have to remember this technology is moving so fast that the government, which is never quick to adapt to technology to begin with, is trying to keep up. And we also have Anthropic itself warning of the kinds of risks that were highlighted by the directive it got from the government. Just last week, they said perhaps there should be a governmental system working with developers that will perhaps hit pause on models if they become too dangerous to be contained, just so that they have time to cool down and look at the technology. And clearly, we're in one of those pauses right now, whether or not they knew it was coming to them.
Well, and so when we consider in our final minute here, Mike, Anthropic's response, did Anthropic say you have to take down access for everyone to this model, or did the government just say that you cannot allow people in foreign countries to get access to it? I just wonder if Anthropic took it a step further than necessarily they had to.
One of the reasons they actually had to take it that extra step is because the directive they received was aimed at foreign nationals. But that could include people who might not be U.S. citizens or working here under a green card or other authorization, who may have access to it already. And that is not only in foreign countries, but perhaps somehow connected to the company in other ways. So they felt like they had to go that extra step just to be sure.
All right, Bloomberg's Mike Shepard. Thank you so much. More to come, indeed. We'll see what emerges from that Commerce Department meeting. And hey, as we talk about artificial intelligence, NVIDIA chips power a lot of it. NVIDIA now raising $25 billion or set to from an investment-grade bond sale. Once again, we're seeing all these large companies come to markets to raise more funds. We'll have more on that at 5 p.m. on Balance of Power on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Carol Masser, Tim Stenivek, live here on Bloomberg Business Week Daily. And gotta say, safe to say, too, on this Monday, beautiful morning in New York City. I don't know how you felt when you walked out this morning, but it was gorgeous because it was hot over the weekend. We also have some optimism on Wall Street.
Yeah, we really do. The S&P 500 is set for its best day going back to April, up 1.8% right now. We're going to have more from Charlie Pellet in just a minute. U.S. Treasury's up too, Carol. Oil slumping. The optimism, thanks to enthusiasm that the U.S. and Iran are agreeing to reopen the Strait of Hormuz, it fuels hopes for an end to the conflict that has really taken markets for a ride.
And I feel this is so indicative of what we have often seen. Optimism in the major averages overall, but go inside the S&P 500, not quite an even split. 282 names gaining today, but still, Tim, you've got about 220 to the downside.
Yeah, I kind of heard you looking around a little bit for some gainers earlier, and I'm like, come on, markets are up 1.8%. It's got to be everything.
Yeah, exactly.
And it's not.
All right, it isn't everything, but we're going to talk about really a lot of macro issues that are shaping the trade. We've got a lot of macro things going on this week. And of course, we've been talking about what looks like some movement forward when it comes to the U.S. war in Iran. We did see the U.S. and Iran agreeing to reopening the Strait of Hormuz, so fueling hopes for an end to the conflict that has roiled markets and has gone on, safe to say, longer than everyone anticipated. Now, President Trump weighing in on it earlier from the G7 summit of world leaders that is underway in France. He said some things. He did so standing beside French President Macron.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
All right, that, of course, was President Trump earlier, sitting beside French President Emmanuel Macron at the G7 meeting of world leaders underway as we speak. Now, the war and an end to it, as we keep saying, is top of mind. But, Tim, I want to say, and we had some caveats last Thursday and Friday, that we have been here before. The devil's always in the details, and there's some very important key issues that have yet to be worked out.
Yeah, including enrichment of uranium and what to actually do with the nuclear material. Also, a former fellow at the White House's President's Council on Economic Advisors of the 3 Ds from the Iran war.
All right, we're going to get into that. Plus, day 2 of trading for the SpaceX company, of course, publicly, or went public, I should say, on Friday. We continue to see that stock soaring. David Bauer, head of equity capital markets over at JP Morgan Chase, they were one of the lead underwriters on the IPO, joining us along with Bloomberg IPO reporter Bailey Lipshaw. So we've got a lot coming your way. We're going to talk macro, we're going to talk Fed, we're going to do it all.
All that and more over the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much, Tim and Carol. Carol mentioned SpaceX up right now by 17.1%. Got to keep in mind that IPO day last Friday, it was up 19%. So to underscore, SpaceX rocketing higher, up now by another 17%. Do want to begin with a couple of headlines. Right now on the Bloomberg, NVIDIA set to raise $25 billion from an investment-grade bond sale. NVIDIA shares, they're pushing higher now. NVIDIA up by 3.2%. And Centene is going to be offering buyouts to most employees to cut expenses after membership in its health insurance plans dropped steeply over the past year. Centene shares, they're trading lower now, down by 3.8%. Stocks so higher, we are off session highs, up 127 now on the S&P. That is a gain of 1.7%. The Dow up an even 600, up now by 1.2%. NASDAQ up 3%. The NASDAQ 100 index doing just about the same there, up by 3% as well. The MAG 7 index up 2.7%, with the SOX up 5.1%, and the VIX now just above 16. 10-year 4.46%, with the 2-year 4.01%. We've got the 30-year 4.97%, and just want to correct on the 2-year 4.06%. Spot gold up $102 the ounce, 43.22 the ounce, up 2.4%, while West Texas Intermediate crude down 5.2%, 80.45 a barrel. Brent crude 83.15, down now by 4.8%. Recapping, stocks higher, S&P up 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that's a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, President Trump brought a thread of positive news as he arrived in Europe earlier today for a Group of 7 meeting. The president, however, Tim, still facing plenty of challenges abroad, as we know, as we really await the specific details on a deal to reopen the Strait of Hormuz. We have yet to see What exactly has been agreed to?
Yeah, still the president out on social media saying ships are starting to move, many loaded up with oil out of the Strait of Hormuz. He continued, quote, "They are going along the Southern Highway, which is totally safe, secure, and pristine. There are other areas of travel." Also, the president out on social media earlier today. That was just a little after 9 o'clock this morning.
All right, so that was earlier today. A lot going on. For more on where we are, what we know, what we still need to know, we head to Geneva and to Bloomberg News Washington correspondent Tyler Kendall. Tyler, good to have you here with Tim and myself. Rather gorgeous behind you. There does seem some optimism in the marketplace as well over progress, or what seems to be progress between the U.S. and Iran. What exactly do we know has been agreed to, and what is still yet to be known?
Well, Carol, at this point, a senior administration official has outlined that the main contours of the deal are the ones that we've been tracking at this point for a few weeks, right? This is going to be an extension of the ceasefire with 60 days. Then we are going to see the Strait of Hormuz prioritized to be reopened and the U.S. lift its naval blockade. That will then kickstart this second phase of negotiations that are more formalized around potential curbs to Iran's nuclear program. The thing is, even within these parameters, we're already starting to see some differences emerge, particularly when it comes to the future of the Strait of Hormuz. We heard President Trump earlier today say that the long-term goal is that it's going to be a free and open strait without tolls. And while Iran has confirmed that for that first 60-day extension, there will not be tolls, we got some indications from Iranian state media earlier today that Iran does plan to impose fees after that 60 days related to what they say would be navigational services, insurance services, and environmental services, and also seem to indicate that Oman would play some sort of role alongside Iran in the administration of the strait. These are conditions, of course, that we wouldn't expect the U.S. to get behind. So perhaps we'll get some further clarity once this memorandum of understanding is released or after this 60-day negotiating period. Another big thing here is, what are those curbs on Iran's nuclear program going to look like? We do expect those discussions, Tim and Carol, to come in this later phase, but there has been some reporting that maybe we could be looking at some firmer commitments actually written in this agreement from Iran, including when it comes to their stockpile of highly enriched uranium and potentially a moratorium on uranium enrichment. Of course, these would be rather significant if they really are included in that agreement.
Tyler, it looks like certainly markets are really loving what they're hearing right now. We're going to talk more about that in just a minute. But I wonder specifically about the military assets that are in the region. They're just going to sort of be there for at least 60 more days. And to me, it would seem like, okay, well, this thing is really over when those assets and those people start to return to the United States or wherever they were based before.
That's a really good point, Tim. And actually, a senior administration official briefed us reporters within the last 2 or 3 hours or so and was asked directly this question. And they said that for now, U.S. military assets are going to remain in place. This actually was one of the sticking points that Iran said that they wanted to see included in the deal. You remember last week when there was a lot of speculation, different sides were saying different things. In the draft memo leaked from Iran's side, one of the components was that the U.S. would withdraw forces from the region. But so far, this administration is saying that that's not going to happen and that they do remain poised and ready just in case there is an escalation. That has long been the Trump administration's point of view here. I think it's fair to say that they have prioritized diplomacy. They want to see a deal get done, but also there is that threat and that risk of escalation after last week marked the worst flare-up in fighting since the ceasefire was announced back in April. But looks like we've gotten this close to maybe getting this deal really over the finish line with a potential signing this Friday here in Switzerland.
Hey, Tyler, the devil is in the details, and again, we're waiting to see exactly what has been written down and agreed to. But having said that, some folks were saying that a lot of what's been agreed to is very similar to what President Obama did during his term and tenure in the White House with Iran specifically. Is that true, or what do we know?
We're waiting to see where the curbs on Iran's nuclear program are going to fall. And it seems like, according to reporting, first reported by the New York Times a couple of weeks ago, that they're zeroing in on 4 aspects that could make a difference. One would be if there is a permanent moratorium on uranium enrichment. That's something President Trump has said that he wants to see. It appears the reporting indicates maybe the sides will land around 15 years. That would be longer in duration. There are also questions here about what an inspection regime would look like, and perhaps that could be different from the last deal. A senior administration official last week said that they do expect Iran to pledge in this memorandum of understanding to dismantle their nuclear program. What that actually means in practice goes to your point about the devil being in the details. Would that mean actually shutting down the 3 nuclear sites that we saw the U.S. target in last June's operation against Iran? Those are the areas that we're watching really closely here to see where those differences really do remain, and if this deal that gets over the finish line is substantially different.
Yeah, it's tricky, and we know it's complicated, and everybody said that getting this finally brought to an end would be difficult, and we know there's a lot to be yet known. Tyler, thanks so much. We didn't even talk about Israel, which we know has continued to strike Lebanon, so there's a lot of issues that are out there. That is, of course, our Tyler Kendall, Bloomberg News Washington correspondent. She's following the president at the G7 meetings overseas.
Hey, let's get a market read on today's news. This week's Fed meeting, which, yes, it's the first coming from Kevin Warsh.
Yeah.
With us in studio, Jason Draho, head of asset allocation at UBS's chief investment office. It's got close to $6.9 trillion in assets under management. I want to start with the war, Jason, and the optimism that we're seeing in today's trade. As we just heard from Tyler, a lot of the devil is in the details, but it sort of seems like, and seemed like this since the end of March, markets are looking past this conflict.
That was certainly since the end of March, and then kind of got an extra boost around Memorial Day when there was first reports that there could be a deal. It's obviously taken a few weeks to get to this point where both countries sort of acknowledge it. I think the markets and investors were already kind of ready to move past the story. The details certainly matter for the geopolitical element, but for the markets, what matters is how many ships are going through the Strait of Hormuz. Like, that's the bottom line. And if those are going to start flowing later this week and sort of normalizing, say, by the end of summer, that's what the markets care about.
Yeah, so they just want to see it open, right? And things moving around again.
Exactly.
Energy markets, though, will still take some time to get back to where they were pre-war, right? I mean, we've talked about this. We look at futures contracts when it comes to oil, and prices still have stayed, elevated. It will take a while to build up reserves, get back to where we were, though. And so we'll still feel that higher energy price impact?
We'll still feel it, but you think about in terms of inflation. The impulse for inflation, in some way, the May data we got last week for CPI, that might be the peak year-over-year measure. And so if oil just stays where it is, or even goes a little bit lower, gas prices go lower, then inflation shock has a one-off level, and then it starts to sort of dissipate.
So is that why you think the Fed, the next move will be a cut? You think they're going to cut not next week?
No.
On Wednesday?
No. So we're calling for 2 cuts in 2027,
okay.
March and June.
Okay.
I want to go back to what you said about oil, because I think from what Tyler just told us, there's a chance that even after 60 days, there is no sort of back to normal with the Strait of Hormuz, or the back to normal is some sort of tolling feature. And Tyler shared with us the details that are known now. We obviously don't know what will happen in the future. Is there always going to be, from this day forward, some sort of risk premium on oil as a result of this?
There's likely to be some geopolitical risk premium. Like, how much is that going to be? All else equal, suppose this not ever happened, is it incremental $5 more? That's the markets will determine that over time. From an economic perspective, you think of other risk markets, fixed income markets. I think a key point to distinguish is that oil right now, this is a spot market, and so there could be a lack of supply and demand. Equity markets are pricing on future cash flows, even bonds. And so even if it takes 60 days to sort of normalize, I think the key thing is that the upside tail risk of oil going much higher, that's been truncated. It already was, and this kind of further takes it down. It also means then the risk for inflation, further rising or getting stuck, that also goes down, which also means that's why you see the market expectations for the Fed shift. That's the key thing. Maybe if it's a month, 2 months, 6 months, but if it doesn't get worse and the general path is getting gradually better, I think that's the key thing for equity markets. And the difference between ultimately for the U.S. economy, between let's say it's $70 a barrel for Brent or WTI versus 75. That's not going to be the key thing that's going to drive the equity markets. So I think if it's an extra $5, not great, but that's not a game changer for the overall outlook.
What about Israel? Is it still, though, the possibility? I'm just looking at some of our stories from earlier, President Trump telling Israel to stop as Lebanon attacks risk the Iranian deal. We've just seen a lot of reporting, and just when we thought we were making some progress, Israel's certainly on its own path. And we understand everybody's got its own mission and its own goals, but is that still a risk here?
Look, it's certainly a risk, and I'm not going to, trying to put a probability on like how things could escalate. When I think of, like the U.S. and Iran, certainly for a while the thought was the Iranians would be willing to kind of wait longer. They have greater incentive. The Trump administration would maybe have a more incentive to reach a deal sooner. Just from a political perspective, domestically, it's not as popular. But the fact that there is a deal, and sort of, geopolitical experts that I will talk to, they say the Iranian regime also, is under some stress. So both sides, those parts, I think, do want to reach some sort of deal. Mm-hmm. The fact that the details have not been worked out, but they're willing to publicly acknowledge it, to me says they're both trying to get there. How they deal with Israel, that's a different matter.
I think also how they deal with the nuclear material is the really challenging part of this. And we're going to spend a good portion of our 3 o'clock and 4 o'clock hours talking about this, Jason. But just from your view, I mean, something that has to come essentially has to be better than the JCPOA, because that's the agreement that the president at this point walked away from. How do you get better than that?
Well, that's a political question. I think from the market's perspective, I'm not sure it has to be better or worse.
Oh, okay.
Like not necessarily materially. If this leads to lingering, ongoing uncertainty, if the risk is that at any point in time Iran has demonstrated they can shut down the strait, if that is something they're willing to, to have in the back of their pocket, then that is certainly a kind of an ongoing, lingering risk. But unless that happens, like the markets oftentimes price on a base case, not the risk case, mm-hmm. and so it's extra risk, it's extra downside risk, But the details of that, I'm not sure that specifically would matter for the markets in great detail.
So are we really safe to say and smart to say it's going to be a different Iran going forward? I mean, Iran, of course, has been, the catalyst for so many different terrorist groups, or supporter, if you will, right? I mean, do we truly think that this is now a different way forward for the region and for Iran specifically?
I think the only thing I would say with any sort of confidence is that there's a change in leadership, given what's happened over the past few months. Anytime there's any change in leadership in any country, you often see some sort of policy shifts. Now, whether this is incremental change or does it lead to some sort of more fundamental shift within Iran, that is, again, your time will tell. But the fact that, again, there's negotiations, what I hear from sort of, more experts in the space is that there's a little bit more pragmatism, among the Iranian leadership, maybe less ideologically driven, but again, time will tell how this plays out.
Well, let me just throw you, there's a great story in the Bloomberg. I loved it. I kind of freaked out when I read in this morning. Wall Street gets access to catastrophe models for the age of war. The number of countries engaged in external conflicts has nearly doubled since 2008. The economic impact of violence now stands at almost $22 trillion, and that risk experts are adapting methodologies used to predict natural catastrophes and other threats to help investors, blah, 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 blah. We know that this is a part of what any financial entity does, but it does seem like it's amped up. Do you guys talk about war and more war potentially than you ever did, maybe in the last 5-10 years? And forgive me, just about 30 seconds.
I would say, generally speaking, like we're in a world that's gone from sort of unipolar, U.S.-led to multipolar, where there's geopolitical conflicts, there's conflicts and tensions regarding trade, access to resources. There'll be tension points regardless. I think that's the reality. So politics and geopolitics have to factor into how we think about it, because it's not just sort of purely economic decisions. In the 2010s, for the last 20 years, it's been central bank sort of driven markets. Yeah. Now I think it's much more policy driven markets.
Yeah, it does feel that way. Kind of Hunger Games on so many different levels.
A lot of stuff for us and our guests to consider right now.
Yeah, and we consider, you're a great guest. Thank you so much. Glad you could be here. Jason Draho over at UBS, the Chief Investment Office.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We're off session highs, still looking at substantial gains for the Dow, the S&P, and NASDAQ. Dow Industrials on track for a record close right now at 51,815 on the Dow, up more than 600 points, up 1.2%. We've got the S&P up 130 now, up by 1.8%. NASDAQ, the composite index, up by 3%. Likewise with the NASDAQ 100 index, full of big tech names, up now by just about 3%. We have got the 10-year currently yielding 4.46 against the backdrop of the VIX, just above 16. The SOX, by the way, the Philadelphia Stock Exchange's semiconductor index, surging by 5.4%. The 2-year, 4.06%, with the 30-year at 4.96%. Gold up $107 the ounce to $43.26, up by 2.5% right now. West Texas Intermediate crude, major sell-off there, down 5%, $80.65 a barrel. Brent crude, $83.20, lower now by 4.7%. Deal news, American Express has agreed to buy TripAdvisor's reservation management platform, The Fork, for $700 million in cash, bolstering its operations in Europe. Shares of American Express up today on word of that deal, advancing now by roughly 3.5%. TripAdvisor up by 5.6%. And Salesforce has agreed to buy Fin. It's a firm that develops AI-powered customer agents for about $3.6 billion as the software company works to win new business for enterprise AI. Shares of Salesforce down 0.4%. Recapping, S&P up 1.7%. West Texas Intermediate crude $80.64 a barrel, down now by 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that's a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Carol Massar, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. Having said that, it's interesting. We're obviously watching the war, and we just kind of covered all of that in terms of the market enthusiasm that's playing out. Also playing out is, again, we're focusing on what is the world's largest IPO. We're talking about SpaceX. Successful launch on Friday. We continue to see the stock shooting higher today. Shares jumping in their second day of trading, adding to gains following a blockbuster debut that instantly vaulted this company into the ranks of the world's most valuable public companies. Now, keep in mind the offering syndicate for the IPO included several lead underwriters, including JPMorgan Chase. The list, to be fair, though, of all the banks involved reads like a who's who of Wall Street's biggest and best-known banks.
We got a couple of voices joining us with an inside look at how all of this played out and continues to play out at this point. Bailey Lipschultz is Bloomberg News IPO reporter. David Bauer joins us too, head of Equity Capital Markets Americas over at JPMorgan Chase. They both join us here in the Bloomberg Business Week studio. Dave, good to see you. Bailey, I feel like we
usual, yeah. It's like I badge in, I badge out.
we are always seeing you, and we're lucky. SpaceX, of course, the largest IPO ever. I'm just curious from your view how you think market participants right now, Dave, should be looking at this in the context not just of other potential IPOs in the future, but really in the context of everything we're seeing out there right now. The talk of people taking money from other assets, selling that, getting into SpaceX. Just your view.
Yeah, I think, I mean, first of all, for somebody in the ECM world, what a time to be alive. Like these are great times for the markets. And I think unlike other cycles we've seen where IPO issuance has been extremely active, you have a real catalyst forming the investment thesis behind this. This is the reindustrialization of America. We're creating new ecosystems, new economies. I mean, you think about what space could become, what AI could become. These are investment theses that many people haven't been able to invest behind before. And so I think seeing this euphoria in the IPO market is warranted and appropriate.
What's the signal to the market and market participants specifically?
I think right now you're seeing that the IPO worked, and you saw Friday a very strong trading with the stock, finishing up 19% from the IPO price. And I think today you see, broader markets rallying on the news with Iran peace treaty, and you're seeing just more enthusiasm coming in. So I think
SpaceX up another 15% today.
Exactly. So I think it's all systems go, to make a pun intended for SpaceX. But I think if there was any hesitancy of should I continue to buy up 20%, I think the answer is yes. And if you look long enough, there's this is a business that could be generationally transformational.
But thinking about the generational transformation, Dave, when I look at the pipeline or the kind of group of companies that could be coming public, they don't look like SpaceX. When you're meeting with people, maybe at your former employer, KKR, talking about something in their portfolio, a number of other private equity firms, what are they looking at? Obviously, this is a big win for IPO buyers, but does that translate to someone who owns, say, software companies or other companies in other industries?
Look, the mega IPOs are getting the headlines right now, but there's been a very active and very accommodative equity market in general throughout this year. And putting SpaceX aside, new issuance volumes are up almost 2x this time from last year, and the vast preponderance of that has been other sectors. And we've seen healthcare coming back, we've seen biotech issuance coming, we're seeing industrial, energy. So the markets are working at large.
But aren't all those themes still off of AI in some capacity? If the bottleneck is power and I'm a power company, then I at least have an AI pitch. Because when I look at it or talk to folks, it's kind of like your TAM is either infinite because you have AI behind it, or it's zero because your software, and the worry is that your kind of total market could be at risk. How do you think about kind of other industries and how that fits into that?
Yeah, I don't think the market is shut out for certain issuers. I think it does come down to price and having the right starting point in the public markets. And I think there is a bid for those other businesses. You mentioned sponsor-backed businesses. It's a good time to, what I would say, get the puck on the ice, start it. And, we always say when we're advising our clients and our issuers, proof points in the public market are worth even more than in the private market. And so getting out there, starting it, and you can see how your valuation can expand as you perform. You can get your share price to a level that you might be more interested in selling at, but getting started can be helpful.
What is it about this moment right now, Dave, that is compelling so many of these companies, not just to go public, but also to look into going public? And I am going back to sort of the companies that, when they do go public, will become mega cap companies.
And just to tag on to what Tim's saying, opportunistic or fundamentally based?
I think this is a more fundamental based market, and you look back to 2021, which felt a little bit more technical. It was like rates were zero, and so therefore equities were attractive, and you had a very different dynamic that drove that. I think this is much more of a fundamental. I think the market is looking at what the next 3 to 5 years could be, and potentially looking past some of the near-term volatility. And it's not saying they're ignoring downside risk, but I think saying there's certain businesses right now that are very much worth investing in. There's a whole slate of new issuance that is different than the portfolio I've had in the past, and I'm going to take that opportunity to invest in it.
I am thinking, though, about those mega IPOs, be it Anthropic or OpenAI. Should we make any assumptions about their market reception just because of what happened with SpaceX?
I think, SpaceX is an N of one of itself from the fact that no one else is doing space at this scale, at this velocity.
But it's an AI play.
But it is an AI play. But where I was going with that is, I do think, this bodes, if you're Anthropic and OpenAI, you're applauding that this type of market reception happened. And, the size of the deal getting done, having it trade as well as it did, to me, that gives even more confidence that the next wave could get done in a very positive way.
Well, when we look at what the next few months can look like, back to the broadening out, is AI still the flavor of the day? If we look at some of the reports that are out there, and SK Hynix or other large companies in the AI space looking to tap the market, like Carol was mentioning, because of these tailwinds, and kind of what does that mean for this July, this August class?
Yeah, I think we're going to have a very active summer. Even the SpaceX period of time. A lot of people thought coming in we'd have a dearth of issuance and you'd have a real quiet period. We did $10 billion of equity capital outside of SpaceX last week. And so, the market was still working. There were still a ton of deals getting done. I think this CapEx cycle, to your point of AI, people still want to invest on it. And that's across equity, debt, all those facets of capital here. And so the public markets are helping that, but it's also the private capital markets as well. We're seeing capital formation in almost every corner of the capital markets.
You oversee ECM. I come back to the point that Google, Alphabet, however you want to call them, raised close to $90 billion across a suite of products. Is that something we should expect from all these hyperscalers who need capital to attack the equity market? And is there any risk that gets oversaturated?
I think the speed at which Google is able to raise in the public markets shows the depth and the capacity for the capital markets. And I think as long as companies are showing an ROI and a good use of proceeds to raise that equity capital, the markets will be there for them.
How do we know when it becomes uncomfortable, crazy, exuberant?
Frothy?
Well, think back to 20 and 21. It's easy now to say that these were companies that were advantageous, but in the moment, did it feel that way?
I go back to when you look at fundamentals and you look at valuations, we're not terribly stretched and we're not at a new point in time. And you go back and you look at, for example, software valuations in 2021, those were hitting new highs and they were hitting kind of new records of where the market was trading at. We're not seeing that writ large in the public markets.
But SpaceX isn't profitable.
No, it's not. But it's being valued on a sales multiple for 2025 sales, and I think that some people have come and sat here and said, it's starting to feel like, when we're valuing IPOs on sales multiples, it's starting to feel a little bit like the .com boom. Why is this time different?
Well, one, I think that's unique. One, SpaceX, I think, is its own animal. And I think when you're thinking about the space economy, you have to look at that in a very different way. I don't think you're seeing the rest of the market being valued aggressively on a sales multiple or other metrics where people are trying to extend and get comfortable with it. I think these are based more on fundamentals. It's based on growth right now, and people are seeing where the capital being laid today has a return in the future, and I think you can pull that forward, and that's what's going on.
But the circular financing doesn't worry you guys? Or we have this conversation a lot. Are we stupid to have that conversation about a company that seems to buy from another part of its properties or invests in a chip maker because they need to, you know what I'm saying? What's the conversation you guys have about that circular financing?
What keeps me sleeping well at night about this is the fact that we're having the conversation. And I think if people are acknowledging it, we're talking about it, you're dissecting it, you're diligencing it, I think this cycle has room to continue and to grow. I think it's the unknown risks, not less the known risks that I think could derail the cycle.
And when we look at this market, is there a risk in kind of just thinking about the difference between a hyperscaler who has historically been the best cash flow cows in the history of mankind? They can at least turn off spending. How do you think about companies that are spending and need to spend but don't have hundreds of billions of dollars annually or biannually in terms of free cash flow?
Yeah, I think you have to look at the fundamentals of the contracts. What is a contract? What is contracted from the demand build that they have today, and get comfortable that what they're investing in right now has the right economics to yield a return in 3 or 5 years. And I think you're right. They might not have the free cash flow spigot today, but you look at what is contracted and what could be come to fruition in a high quality way in the next 2 to 3 years. You can bridge to that free cash flow.
We got 30 seconds left here. You've been covering this market. What do you want to ask Dave?
Do we see more private equity IPOs in the second half, or is that still an area, broadly speaking, that's touch and go?
I think definitively yes. I think the market would be accommodative for that, and our backlog suggests that we will have a number of those in the second half.
In about 10 seconds, how much does leverage ratios matter for those companies?
It matters. I think you want to get it to a comfortable starting point, but I think for good free cash flow stories with solid, predictable revenue and growth, the market can get comfortable.
So welcome to our regular weekly segment. We'll see you both here back on Monday. Bailey Lipschultz, of course, Bloomberg News IPO reporter, Dave Bauer, head of Equity Capital Markets Americas over at JP Morgan Chase. When we come back, what may determine whether stagflation becomes a real risk? We'll explore that when Bloomberg Business Week Daily continues.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. California Governor Gavin Newsom is accusing President Trump of ordering the U.S. Department of Justice to investigate him and his wife. In a video statement, Newsom said the Trump administration is targeting him because, quote, he's considering running for president.
One by one, anyone who has challenged Donald Trump has ended up on his hit list. And today, I proudly join that list.
California Governor Gavin Newsom. Stocks are higher. We are, however, off session highs. The Dow Jones Industrial Average on track for a record close right now at 51,800. This after the U.S. and Iran agreed to reopen the Strait of Hormuz. That word sending oil lower. Stocks are rallying. The S&P at 7563, up 131 points now, up 1.8%. We've got NASDAQ up 778 for the NASDAQ Composite Index, a gain of 3%. The NASDAQ 100 Index doing slightly better, up 3.1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, now higher by 5.6%, and the VIX holding right around 16. 10-year 4.46%, with the 2-year currently yielding 4.06%, and the 30-year yield 4.97%. Gold up 2.5%, 43.25. West Texas Intermediate crude selling off by 4.7%, 80.88 a barrel. Brent 83.27, down now by 4.6%. SpaceX shares surging again now, up by 16.1%. You recall Friday, IPO day, they were up by 19.1%. Recapping, S&P 500 index up now by 1.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masterton, Stanovic, live here at Bloomberg headquarters in New York City. Yes, indeed, it is Monday, and there's a bunch of things we're watching. Obviously, the developments regarding the U.S. war in Iran, and it does seem like there's market enthusiasm, although as we just heard from Charlie, we're definitely off our highs of the session. We've also got a Fed meeting, the first one with Kevin Warsh residing over.
Yeah, I mean, we're going to be flying to Las Vegas.
We're kind of bummed about it.
We've got a show on Thursday.
I love watching the tick by tick of a Fed.
Yeah, I kind of have a little FOMO, I'll be honest.
You and me both.
Yeah,
Especially
we'll see if the plane has Starlink and we can actually tune in. If not, we'll land. We have no idea what's going on.
Right, exactly.
That's fine.
Surprise.
That's healthy too, though.
Yeah, it is.
Occasionally.
Kind of tying it all together, our next guest is watching the 3 Ds, duration, devastation, and disruption from the Iran war. She notes that these indicators will inform whether stagflation becomes a real risk rather than a headline. So we want to get into it with Rebecca Humkes.
She's lecturer at the London Business School, faculty at Duke Corporate Executive Education. She previously served as a fellow at the White House's President's Council of Economic Advisors. She's also the author of Survive, Reset, Thrive, Leading Breakthrough Growth Strategy in Volatile Times. Sentiment shift yet again in global markets because of the U.S. war in Iran. Does the recent action around what people are calling a ceasefire right now feel like, in your view, we are indeed nearing the end of this conflict?
Hi, Carol, Tim. Great to see both of you again. You know, I think we are all, most CEOs and executives are looking at today's news with some healthy skepticism. We've been a couple of days away from a deal basically over the last 100 days. So there is hope that we will see a deal on Friday. But until some details are announced, it's very difficult to do anything more than just wait and see what details we get.
So if an executive or leader's calling you, you're going to say, you got to wait here.
It's a wait and see. Now, I think we already knew what was going to happen in the Fed meeting this week. It's very unlikely that the Fed makes any moves. I mean, doing nothing is doing something, as we've spoken about before. This really just further puts pressure that we will see maybe a little bit less talk of putting a potential rate change. So I think that kind of just solidifies what we already were expecting for this week's Fed meeting, but any other decision making is absolutely wait and see. We don't just need details. We need to show that this deal will actually go forward and be acted upon. There's just been too many false signals signals over the past couple of months. Now, remember, companies and executives, they've built this preparation in. So uncertainty is the new certainty. Shifts are something that are just part of the normal course, but no changes are being made based on the anticipation of a deal.
I want to table that just for a minute. I mean, if we do talk about the deal, the context of that is oil prices and the inflationary elements around energy prices, fertilizer, and everything that we've been talking about over the last 3 months that go through the Strait of Hormuz that can affect prices. The other side of the Fed's dual mandate, labor and the labor market. I'm just wondering what you're hearing from executives right now. Sometimes we hear anecdotally about a low hire, low fire environment. We see all the same data that you and the executives see, but what are they telling you about the environment?
So on a macro level, no hire, no fire, it roughly describes the situation, but frankly, I think that headline is disguising a much more nuanced storyline. If you wipe away kind of month to month, what we're seeing is, first of all, we unequivocally did get a good jobs number earlier this month, and we shouldn't take away from that. You know, over 170,000 jobs is great and signals, you know, it's a relatively healthy economy. But digging in, really the only sector that's added jobs in the past year and a half is healthcare. And the majority of the boom that we got in June was in leisure and hospitality, which we expected with the World Cup bump coming. So it's difficult to see whether or not those will stay forward. Now, certain talent, yes. You know, one of the number one strategic bottlenecks for most organizations is still hiring the talent that they need, but there are not a lot of open positions right now, linked very much to economic uncertainty and very much to potential AI gains in the future. When there are layoffs or retirements, there's a lot of these positions just aren't replaced. So that's why we're still seeing this roughly no hire, no fire, Tim. So I'd say 3 good months is good, and let's not take away from that, but we're not really seeing a shift in what we're thinking about the macroeconomic comedy right now.
So wait a minute, you just said there's open positions, folks are having trouble, Rebecca, finding people.
Yeah, it's a bit more nuanced. So there's certain talent positions that are always a bottleneck.
Okay.
So very skilled workers in our manufacturing sector, kind of very talented digital employees in certain aspects. Carol, those few positions that are always a critical bottleneck, those will remain a critical bottleneck. But most organizations are not doing the overall replacement. So when there's the normal turnover and the normal retirements, a lot of times those positions aren't opened back up again. So the one in, one out that might happen, opening strategic priority, hire several new people. Yeah. There's a lot more pause put on hiring right now. Again, economic uncertainty, number one reason. Potential gains from AI in the future coming in is the number two.
Leaders aren't being as forthright as they need to be when it comes to the impact AI is going to have on the labor force and what they need.
So as of right now, there has been almost no replacement of jobs with AI. There's a little bit of macro data that maybe some entry-level roles are being replaced, but the data we're coming in from this summer maybe is wiping that away. When we are seeing layoffs due to AI, it's less about replacement, it's more about reallocation. So to move cash flows to different areas of the business to justify this AI investment spend, it's more of reallocation. A lot of us are also seeing is restructuring. So organizations tend to get bloated over time. They tend to add functions, they tend to add teams, they tend to add layers. We're seeing a real push to kind of de-layer a bit. So think it's less about replacement, much more about reinvestment, reallocation, and restructuring, and partly just a rectification versus maybe lack of discipline that's happened over the past couple of years. Now, we are in early days, and it's possible those things will happen, but inside organizations right now, gains are still very much held for a productivity and efficiency level at the team or individual level. There's very little cross-team and definitely organization-wide efficiency gains that could justify any sizable level of job replacements.
Hey, since we promised and teased that these 3 Ds that you're looking and you know what it says about stagflation, I want to just save the last minute or so. You know, is stagflation still a possibility here in your view?
I don't think stagflation ever removes completely from the situation. Here's where we have a different story in the U.S. versus the Eurozone versus the U.K. 3 months of a healthy jobs number does take a little bit of pressure off. What we're also really looking for is not just this month's PCE, which is going to be a bit backward-looking, but going into July. If we see 1 or 2 months where that core inflation number doesn't move much, and we can see that this was very much a supply shock, and we always hate to use the word transitory again, but it was there, then yes, those fears would be taken down. So I think, Carol, less so than we might have said 2 or 3 months ago, but we still need to see, A, if the deal is signed. But again, even if the deal is signed, it doesn't mean that oil prices drop down and that translates to consumer gas prices. We need to have a lot of understand what's going to happen to the strait. Are there going to be tolls charged? How do potential different waterways around the world? What's happening reserves?
Right.
There's about another 8 to 10 data sets that we would need to make that decision.
All right.
But as of right now, we're looking at a stronger economy than we were about a month ago.
All right. Good end on some good news. Rebecca Humkes, lecturer at the London Business School, faculty at Duke Corporate Executive Education. Previously, she was a fellow at the White House's President's Council of Economic Advisors.
When we come back, a check on trading and stocks on the move.